एवरीवन, गुड आफ्टरनून, गुड मॉर्निंग, गुड इवनिंग टू ऑल ऑफ यू वंस अगेन। आज है 22 अप्रैल 2025। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। फिलहाल के लिए देखोगे नेचुरल गैस को सपोर्ट पर ही है, कल भी सपोर्ट पर ही था। क्लोजिंग होते होते एग्जैक्टली सपोर्ट पर ही क्लोज हुआ था, फिर हल्का सा एक गैप अप है, वापस नीचे आ गया। एक बाइंग वहाँ पर वापस प्लान करेंगे। क्रूड ऑयल में भी देखो एक बाइंग यहाँ पर करी हुई है, देखते हैं थोड़ा और ऊपर चला जाता है। अगर यहाँ चला जाए ना एक बार इस लेवल के आसपास, यहाँ से वापस सेल कर देंगे। बीच में अगर नहीं जाता है तो फिर नीचे एसएलईटी करने आएगा पक्का। सो इम्पॉर्टेंट है। बाकी बैंक निफ्टी को देखोगे, एज यूजुअल बैंक निफ्टी बुलिश ही कंटिन्यूएशन है। अभी भी कोई भी सेल ऑफ कहीं से भी नहीं दिख रहा है। मार्केट इज सुपर बुलिश। आज भी बैंक निफ्टी फ्यूचर देखोगे 450 पॉइंट 500 पॉइंट पॉजिटिव ही है। मॉर्निंग पे ओपन फ्लैट ओपन, उसके बाद कंटिन्यूएशन कंटिन्यू है। सेम फॉर निफ्टी। थोड़ा सा उतना पॉजिटिव नहीं है, मतलब है तो पॉजिटिव ही टेरिटरी में, बट उतना कुछ बुलिश हुआ नहीं है। तो बैंक निफ्टी अपने ऑल टाइम हाई को ब्रेक करके कल से एक नए ऑल टाइम हाई की ओर जाता हुआ। बाकी क्रूड ऑयल में तो एक्सपायरी हो गई है फ्यूचर की, तो अब हम नेक्स्ट मंथ के चार्ट में आ चुके हैं ऑलरेडी। जिन लोगों ने लाइक नहीं किया, लाइक भी कर दो गाइस। डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। नेचुरल गैस में कर सकते हैं बाइंग, बिल्कुल सपोर्ट पर ही है। ओवरऑल व्यू तो बेरिश ही चल रहा है, बट अभी सपोर्ट है, लेट्स सी होल्ड करता है या फिर नहीं। क्योंकि इसके नीचे के फिर लेवल भी शो नहीं कर रहे हैं 15 मिनट में, उतना पीछे चार्ट जा भी नहीं रहा है। अगर नीचे निकलता है तो फिर नेक्स्ट 30 मिनट आई थिंक, या फिर 1 आवर टाइम फ्रेम का चार्ट ही यूज़ करना पड़ेगा, और ऑप्शन नहीं है वहाँ पर। बाकी डेटा की बात करें, डेटा शेड्यूल है आज। कल तो कोई डेटा शेड्यूल नहीं था, बट टुडे इज डेटा शेड्यूल्ड। ठीक है, डेटा की बात करें तो इम्पोर्टेंट डेटा एट 7:30। तो अभी 12:30 न्यूयॉर्क सेशन, माफ करना, लंदन सेशन ओपनिंग रहेगी। देन 5:30 न्यूयॉर्क सेशन, 7 PM यूएस मार्केट, और 7:30 रिचमंड मैन्युफैक्चरिंग इंडेक्स डेटा गोल्ड और सिल्वर को इम्पैक्ट करता है थोड़ा बहुत। बाकी नेचुरल गैस में ये कि यहाँ पर थोड़ा बहुत बाइंग का प्लान है। India's banking stocks on a tear after RBI eased liquidity norms. एक भी करते रहो गाइस। क्रूड ऑयल यहाँ पर थोड़ा बहुत रुक रहा है। रीजन बिहाइंड दैट, वहाँ पर एक छोटा सा एफईजी बना हुआ है एक्चुअली। कल भी रुका था इसी एफईजी पर, आज भी इसी एफईजी पर रुक गया है नीचे ना। तो मेरे अकॉर्डिंग अगर एक सिंगल कैंडल क्लोज हो जाती है अबव, 5380 के ऊपर एक सिंगल कैंडल भी क्लोज जाती है तो ये चला जाएगा ऊपर। इसके ऊपर कैंडल क्लोज नहीं होती है तो फिर थोड़ा सा प्रॉब्लम है, फिर ये और ऊपर जाने के मूड में होगा नहीं उस केस में। सिंगल कैंडल भी क्लोज हो जाए तो फिर पुल बैक भी ठीक हो जाएगा। नीचे निकलता है प्राइस 5300 के नीचे, फिर 5200 225, वो एक लेवल रहेगा जहां पर वापस बाइंग के लिए जा सकता है। दैट इज ऑल्सो गुड लेवल, पहले भी डिस्कस किया हुआ है। 200 220। डज सिंगल कैंडल क्लोज 5380 और मोर अपसाइड। 5380 ब्लू कलर की लाइन के ऊपर क्लोजिंग आ जाती है तो बढ़िया है। भाई कल तो साइडवेज ही हो गया था, लेट्स सी आज भी साइडवेज ही रहता है या फिर क्या मूव करता है। नेचुरल गैस कल बेरिस ही था, क्लोजिंग सपोर्ट पे आई थी, कैप अप हुआ, वापस सेल ऑफ में आ गया है। ओवरऑल व्यू बेरिस ही है बट है सपोर्ट पर ही। लास्ट सपोर्ट कह सकते हो एटलीस्ट जो दिख रहा है फिलहाल 15 मिनट में। 1000 नीचे और दो सपोर्ट है नीचे एक्चुअली नेचुरल गैस में, बट वो लास्ट ही है। उसके नीचे एक चार्ट ही नहीं दिख रहा है तो बना भी नहीं सकते। चाहो तो कंबाइन कर दो, अदरवाइज एक साथ भी लगा सकते हो। ऐसे दो कंबाइन करके लगा सकते हो या फिर अगर एक ही करना है तो दोनों को मिक्स कर दो, कोई सुनिए। वहाँ पर दो सपोर्ट है, दोनों को मिक्स करके ही यूज करना। कंफ्यूज हो रहे हो तो ऐसे भी लगा सकते हो दोनों को। यहाँ पर दो सपोर्ट है, मैंने मिक्स कर रखे हैं, ध्यान रखना। अलग अलग भी लगा सकते हो, एक साथ भी लगा सकते हो, ठीक है। क्रूड ऑयल देखो ट्राई तो कर रहा है, कैंडल क्लोज हो जाती है तो बढ़िया है। अगर कैंडल यहाँ पर क्लोज हो गई ना इस लेवल के ऊपर एक सक्सेसफुली सीधा चला गया तो ऊपर एक सेलिंग का प्लान करेंगे। अगर नहीं जाता है सीधा क्लोजिंग के बाद, तो अगर पुल बैक आता है तो वापस बाइंग हो जाएगी। ठीक है, क्लोजिंग आने के वेट करना, लेकिन क्लोजिंग नहीं आई तो फिर कुछ फ़ायदा नहीं है। फिर 12:30 होता है तो फिर देखते हैं न्यूयॉर्क यूएस मार्केट से पहले लंदन सेशन ओपन होगा उस समय।
As a student of innovation and studying what is happening in China right now, we're astonished at what's happening from an innovation point of view. When the government here put out an objective,
yes,
the entrepreneurial zeal of the people.
The economy's in a pretty precarious place, but we're starting from a really strong base.
We need to be ready for some chaos along the way.
If we're in it for the long haul, then we have to accept the fact there will be implications to the economy.
We regard it as 45% chance of a recession in the US over this next year. That's because of all this volatility and all this uncertainty.
This is a really highly uncertain time. This is an uncertain journey to an uncertain destination.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your trading week started live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Monday with Fed independence under siege.
On Jerome Powell, you said that the termination of Jerome Powell cannot come fast enough. He says he won't leave it even if you ask him to.
Oh, he'll leave. If I ask him to, he'll be out of there. He's too late, always too late, a little slow, and I'm not happy with him. If I want him out, he'll be out of there real fast, believe me.
President Trump putting the pressure on Fed Chair Jay Powell and his economic advisors on pushing back.
And the obvious runaway spending from Joe Biden was textbook inflationary, and we didn't see anybody warning about that. And then they cut rates right ahead of the election. And so if you think that it's unacceptable for President Trump to be frustrated with the policy history of the Fed, then I think that you got to some explaining to do.
So, is removing Powell an option? The president's top economist saying the president and his team will continue to study that. The public feud is hitting the US dollar weaker against every single G10 currency so far this morning, reinforcing the message from the Treasury Secretary, who has reportedly cautioned that firing Powell would destabilize markets. And according to the New York Times, the president is, for the moment at least, persuaded by that argument. The key words there, for the moment.
And that's the reason why people are trying to get ahead of that and maybe diversify away from dollar assets. You're seeing this pretty much across the board. Here's the key question. You can make whatever argument you want. Is this president willing to roil markets at a time where the likes of Chicago Fed President Austin Goolsbee over the weekend came out and said that countries that lost their Fed independence, their central bank independence, were challenged by a higher inflation rate, slower growth, and a worse job market?
This feels like a fluid conversation within the White House right now. It was just a week ago when I sat down with the Treasury Secretary Scott Bessent, and he said to me that monetary policy is a jewel box that needs to be preserved. Then, just 5 days later, we hear from Kevin Hassett saying that this remains an option, basically keeping the door open to conversations that are going on behind the scene, and him saying that they're looking at the legal avenues available to this president.
There's another Kevin in the mix here. Some fantastic reporting over the weekend. The Wall Street Journal indicating that even Powell's possible replacement, the former Fed Governor Kevin Walsh, has advised the president against firing Fed Chair Jay Powell. So the pushback coming from all corners.
And it even is coming from some Republican Congress members who went on the shows over the weekend to say this is probably not the greatest idea. Look, there needs to be at least a perception of Fed independence. And what happened to Scott Bessent's discussion with you, saying that, yeah, they're going to start interviewing later this year. They're not even thinking about it at a time when it seems like they're meeting every week to have lunch. I mean, come on, how much can they really hate each other?
Exactly, breakfast. And Bessent said last week it was an away game. He was at the Fed. This week he's going to be at Treasury because they meet every week for breakfast. I imagine this week is going to be a very interesting breakfast between Jay Powell and Scott Bessent. I was also struck by Kevin Hassett. In 2021, he wrote about in his book that the Fed independence needs to be preserved. The impact it could have on financial markets, the dollar, would be very terrible, according to Kevin Hassett in 2021. Now he's saying maybe his thinking has changed.
We'll see if breakfast gets cancelled. Equity futures on the S&P 500 negative here by 1 full percentage point. Coming up this hour, we'll catch up with Marvin Lowe of State Street following the S&P 500's 7th down week in 9. Terry Haynes of Pangea Policy on why Chair Powell's not going anywhere. And Jeremy Jansen on Wells Fargo on the impact of tariffs on supply chains. We begin this hour with rising concerns over the Federal Reserve's independence. Marvin Lowe of State Street writing, it's reasonable that stocks can remain in a range for the moment. Incoming information will guide us if we need another leg down from a valuation perspective. Marvin joins us now for more. Marvin, we have some incoming information. Threats to Federal Reserve independence. What would happen if the president fired the chairman of the Federal Reserve?
I mean, ultimately, we're already starting to see the tremors of that discussion make its way through the market. Every day, it seems there are more and more reasons to really pare back, if you will, what's been an overweight position across U.S. assets. This just adds to another one of those walls of worry. I think longer term, one of the keys to the U.S. financial market is the independence of the Fed and their ability to operate the way they see the world's biggest economy needs to operate. And you really are on very shaky ground if you go down that route.
Marvin, we're discussing the optics of all of this. The legal constraints are another issue. And then the operational independence. If you look at the Federal Reserve, away from just the Federal Reserve chair, it takes more than just one man to make a move of that institution. Do you have any confidence in that at all?
You know what? I do. I mean, the Federal Reserve Act is a wonderful structure, one that was based on the fact that the country didn't really trust a broad monetary authority through a specific administration. The 2-year periods, the fact that the chair has to come from the existing board, I think all of those are brilliant approaches to it. But in going down this route, in terms of trying to replace the chair, the administration is looking to break down all of those really long-standing held strengths that have kept that institution isolated from the administration.
Mr. Market certainly has been having a bit of a difficult time recently, and seems like the anxiety levels are very high. And this morning, maybe they're accentuated by the fact that it's pretty thin liquidity. How much can you get a sense of what's noise from markets in terms of the magnitude of a shift away from U.S. assets, and what's actual signal about how much large asset allocation away from the United States is actually going on?
Yeah, Lisa, I mean, it is very, very hard. And, you know, the analyst community, myself included, we're always trying to curve fit and get an explanation of what some of these moves are doing. I do think that when we kind of look at how valuations have stabilized within a very, very volatile range over the course of the last week, it kind of shows that there was an adjustment period associated with it. But one of the takeaways that I have is around the dollar discussion that you led the hour off with. It is around how Treasury yields are responding to this. And these are the purest forms of expression of the U.S. economy. And, you know, I'm not comfortable just saying that we should ignore that because there's an adjustment associated with it going on.
And if you just look at the technicals, and the Treasury market hasn't yet opened because a lot of people are on vacation. We're not. But I know that London is on vacation and some other places as well for the Easter holiday. There is this question about that yield curve steepening and whether we could see that steepness at the highest levels going back to 2022 persist and extend. At what point would you come in and fade that versus just lean in and suggest that this is the path ahead?
So one of the things that I've been, really, I guess, on a soapbox to a certain degree, and I've discussed it on your program, is the term premium that's kind of associated with the market, how much additional compensation one needs to go out the curve. I've targeted in the past somewhere in the range of 90 basis points, upwards of 120 basis points of term premium, kind of based on certain measurements. We're at about 60, 65 basis points at this point, which is also a multi-year high. So I do think that there's a bit more pain. I've talked about a 5% 10-year for a while, and that still seems like, a thing to keep in one's mind, depending on how all of this evolves.
Marvin, however this evolves, the discussion is already out there, and it's going to be hard to put that genie back in the bottle. Is the discussion itself damaging enough for financial markets?
It certainly is. We do need calmer heads to prevail within this discussion. And again, I'm reading the news that ultimately you folks are putting out there. It does seem that there are a lot of different voices within the administration that have a fairly significant seat at the table, which have opposing views. And we really need to get a sense of which one of those are louder and are guiding policy, whether it's around monetary policy, whether it's around the trade discussions, whether it's around deficit funding. All of that does come down, in my mind, into how the 10-year reacts to this. So, yeah, it's hard to put it back, but not all of the damage is completely irreversible at this point.
NEC Director Kevin Hassett, though, when he was asked about this and asked about his 2021 book, which he seems to be making a bit of a U-turn, he said, I think at that time the market was in a completely different place. Was the market in a different place that now would be acceptable to fire the Fed chair as opposed as it wasn't in Trump 1.0?
Yeah, thank you for that information, because actually I hadn't heard that before this morning. So that's a great data point. A weakening of the dollar is one of the discussions that has emerged in terms of one of the goals of the administration. So certainly, potentially somehow threading that reserve currency with a weaker dollar without giving up the ghost on the treasury market, in my mind, is still something that we as investors have to watch in terms of a potential goal of the administration, because the treasury market is at the center point of those, if you will, ideological approaches to how one would want to reorder global finance and global trade.
Hey, Marvin, appreciate your time and your input this morning. Thanks for catching up with us. Marvin Lowe there of State Street. If you're just joining us, some real dollar weakness across G10. A new low for the US dollar, new high for the euro dollar 115.44. There is clearly some operational and institutional resilience of the Federal Reserve that we should probably talk about on a morning like this morning, but front and centre, just the slow decay of US assets over the years so far. The context here is really important. It's the timing of this conversation that counts. Only a few weeks ago, we were talking about the erosion of the safe haven status of US assets, and I think that weighs on that even more.
It just builds the narrative that already had been in place, and what you can see right now is diversification away from dollar-denominated assets. Japanese super long bonds just had their biggest inflow ever from foreign investors last month. You're seeing even emerging market bonds do better in local currencies than the US dollar.
Dollar weaker. Equities sliding. We're down 1% on the S&P 500. With an update on stories elsewhere, let's get your Bloomberg Brief with Danny Berger. Hey, Danny.
Hi, John. We begin with breaking news from earlier in the morning. Pope Francis has died at the age of 88. According to a statement from the Vatican, Francis passed away at 7:35 a.m. in Rome. He had been the spiritual leader of the world's nearly 1.5 billion Catholics since March of 2013. Francis hailed from Argentina, making him the first pope from the Americas, as well as the first Jesuit to hold the position. Elsewhere, the Trump administration considering a sweeping proposal that would reshape the State Department. The document says the changes to be made by October would eliminate dozens of positions and departments, including those dealing with climate, refugees, democracy, and Africa. In a post on X, Secretary of State Marco Rubio called the report fake news. And Tesla's planned rollout of its cheaper cars, including a lower-cost Model Y, has been delayed by at least 3 months. Reuters didn't cite a reason for the delay. Tesla is due to report earnings tomorrow. Investors looking for guidance on how it intends to turn around its shrinking market share. And that's your brief, John.
Hey, Danny, thank you. Appreciate it. More from Danny later on this hour. Up next on the programme, the Fed's credibility.
The only thing that's gone up, actually, is interest rates, because we have a Federal Reserve chairman that is playing politics. If I want him out, he'll be out of there real fast, believe me.
That conversation up next with Terry Haynes of Pangea Policy, live from New York City this morning. Good morning.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends.
Get ahead of them. And so many more.
Coming off the back of a weekly loss on the S&P 500, and the losses resume following the long weekend. Equity futures down by 1% on the S&P, and the Nasdaq 100 down by 1.1. In foreign exchange, more dollar weakness. The XY of the year so far, negative 9.5% and down 1 full percentage point on the session. Under surveillance this morning, the Fed's credibility.
The only thing that's gone up actually is interest rates, because we have a Federal Reserve Chairman that is playing politics, somebody that I've never been very fond of, actually. But he's playing politics. Interest rates should be down now. If I want him out, he'll be out of there real fast, believe me.
So here's the latest this morning. Dollar weakness gaining momentum following President Trump's threats to fire Fed Chair Jay Powell. Joining us now from the nation's capital, Bloomberg's Tyler Kendall. Tyler, the pressure keeps building.
Yeah, hey, John, good morning. Particularly after NEC Chair Kevin Hassett on Friday suggested that the White House is seriously looking into potential pathways to remove Powell, saying that they will continue to study the issue. Now, Jerome Powell himself says he doesn't think President Trump has the legal authority to fire him and that he wouldn't step aside if asked to. And in theory, he's supposed to be shielded from being fired without cause by the Federal Reserve Act of 1913. But we're already starting to hear questions swirl about whether or not that would apply to removing him completely or potentially just removing him from the chairmanship. We should say there's a few legal battles brewing that we are watching very closely for their impacts here when it comes to any potential removals, including that this administration is asking the courts to weigh in on a legal precedent known as Humphrey's executor, which should shield federal independent regulators and agencies from being fired for political reasons. Now, that doesn't deal directly with the Federal Reserve, but is expected to potentially impact any future moves here. There's one case that is very likely to be decided by the Supreme Court. We don't have the exact timeline yet, but has to deal with a recent firing from a National Labor Relations Board member that could give us some clues into what this administration is looking for here when it comes to a legal pathway forward. John, we should say that ultimately we still don't have exact clarity on what President Trump meant when he said that the termination couldn't come fast enough, but you heard him double down on his criticism in the Oval Office as he tries to say that lower interest rates would offset his tariff policies.
Well, when it comes to his term ending, Tyler, we do know it's going to be May of next year. So who's on the short list right now that the president, the Treasury Secretary are thinking about potentially to fill that role?
Right. Well, we should get more clarity later this fall, as Treasury Secretary Scott Bessent told you that that's when that process is really starting to pick up here. We know that some other potential names that have been floated, including former Fed Governor Kevin Walsh, is on the short list, as well as we try to glean more information from the administration on exactly what they would like to see. There's already been some other positions that President Trump has floated some potential replacement for, including that Michelle Bowman is now up to be a Fed Vice Chair of Supervision after we saw her predecessor, Michael Barr, step down amid speculation that he would likely be removed or asked to be removed under this Trump administration. No doubt, though, it will take a Senate confirmation for whoever is confirmed, but with both chambers being controlled by Republicans, it's very likely that that will happen.
Tyler, appreciate the update. Tyler Kendall of Bloomberg down in Washington, D.C. Always interesting that Kevin Walsh's name is in the mix all the time when he's widely regarded as a hawk on Wall Street, but yet is still in the mix every single time this conversation comes up.
If you're trying to find economic logic behind this, good luck. And when you do figure it out, you can let us all know. Nonetheless, loyalty, I think, is number one. And the perception of loyalty seems to be front and center. A key question, though, what is the process going to look like, given the fact that Jerome Powell, if you remember, was a Trump nominee? So this is going to be a very difficult path ahead, both in understanding who would be selected and what their policies would be.
To extend the conversation, Terry Haynes of Pangea Policy joins us now for more. Terry, welcome to the programme. A lot of bark here. How strong is the potential bite?
I think not that strong, John. Thanks. My summary of this really comes down to about three things. One is that Trump is trying to pass the buck to Powell for whatever market problems exist. Markets aren't going to bite on that, of course. They're very fixed on Trump. Secondly, you got a situation where, as you've been reporting, the Wall Street community is already reacting this time to the possibility of Powell's removal in a way that they haven't before. So that's a real concern. And finally, as Lisa mentioned earlier, you had the folks in Congress on the Sunday shows all basically providing a little bit of subtle pushback. So there's, I think there's at least three reasons why the bark is worse than the bite.
Terry, I'd love to get your thoughts, though, on what Kevin Hassett said, the NEC director, when he said that they're studying that option. He basically left the door open.
Well, I think he should, right? He's a lot of things, but fundamentally he's a staffer. And if he publicly dissents from whatever the president's doing, he's going to be out of there pretty quickly. So, I look at that as a matter of staff loyalty and not much else. They've been studying this since 2018 or 2019, by the way. So I welcome their continued study.
I want to get your thoughts. What I also asked Marvin Lowe, the fact that we're having this discussion out loud, the fact that the president didn't make clear what he said last week, which talking about his termination, is that enough to do damage?
To damage to Trump or to Powell?
To Trump, to the position, as well as to financial markets.
I think it doesn't help financial markets. I certainly don't think it helps the president. I mean, you can parse the statement that you all have been running in the bumpers, and if I want him out of there, he'll be out of there. Well, he's not out of there, and you don't like his policies, so. So he's staying. So you must like his policies. So there's that kind of circularity. And number one, and number two, the last thing that Trump needs right now is Wall Street fleeing on him when he's in the middle of the tariff fight. Firstly, and secondly, when tax cuts, which are still very, very likely at 80%, haven't come online yet.
It feels like President Trump is playing good cop, bad cop with markets right now. Bad cop, I don't know about Jerome Powell. Good cop, let's make a deal. All of a sudden, all of these deals potentially are on the table with Japan, with EU. And that's the upside that people are looking for. What if this actually leads to some sort of resolution? How much do you expect that to really take the brunt of oxygen this week?
Well, I think this week the White House would be smart to continue to bring out the prospect of deals being done, and I think they were reasonably effective at that the last couple of weeks, and that's all to the good. The better it is for what's best for the White House and what's best for the markets at this point are really the same thing, which are to see progress being made on the tariff deals and to clarify what I always think of as kind of the descent ascendant role here, which is that these things are supposed to be path dependent. And if we do deals, tariff barriers and ex-tariff barriers come down for the United States and for others, benefiting markets. That's all good. By the time you get to next week, what you're going to see is more progress being made on tax cuts with the idea of a third quarter, fourth quarter deal. And, hopefully that helps them get through this patch.
Terry, should and will are two very different things. And it seems like you believe that markets do have some sort of, I don't want to say veto power, but certainly weight in the president's mind. What gives you that concrete sense, given the fact that there have been a number of occasions where President Trump has come out and pushed back against caring whatsoever about the move in the markets?
I think it's really this. I was one of the first, maybe the first, to say that I didn't think Trump cared about markets on tariffs with respect to imposing them. Tariffs, in my view, have always been part of a much broader economic plan that includes tax cuts and some other things. They've been, I think, very clear about that. But at the same time, it is not in the president's political interest at all to have markets go seriously wobbly on him at a time where he's trying to impose a lot of those things. So I think that market pressure actually helps define the situation a little bit better politically as well as economically.
Terry, you keep mentioning tax cuts. The market is pricing an extension of TCJA. What cuts are you talking about?
No, I'm talking about the extension of the 2017 cuts, and then you're going to see a bunch of tweaks to that, not just the taxes on tips thing that the president keeps talking about and other things. But I think you're also going to see a restructuring to really favor increased U.S. manufacturing and including reshoring, among other things.
Terry, appreciate your input as always, sir. Thanks for catching up with us this morning. Terry Haynes there of Pangea Policy. Neil Dutter of Renmac making the point several times over the last several months that the tax bill, in the way that he expects, is just removing a potential headwind as opposed to providing a potential tailwind.
Right, because basically what everyone is pricing in is current policy, an extension of Trump's first term. Cutting of the taxes, that extension is basically the votes they have for right now. Maybe one other sweetener. Everyone talks about no tax on tips. The Treasury Secretary thinks that it's the most underreported story in Washington, D.C., and they're going to get all these extras. The problem is, how do you do that already when the market is starting to push back on some of your other policies, like tariffs, as well as this potential Fed independence question?
If you are just joining us, welcome to the programme. Let's talk about that Fed independence question. Equity futures down and down hard, off by 1 percentage point on the S&P 500. And if you check out foreign exchange this morning against G10, Lisa, weaker against absolutely everything.
You don't want to hear your country named with Turkey when talking about the potential for central bank independence. And really, there's just one economist after another coming out and saying it tends to lead to higher inflation, a really devalued currency, and then potentially weaker growth. You know, Anne-Marie brought up a really interesting point. How much, I don't want to say by design, but the idea of a weaker dollar actually benefiting some of the reshoring efforts. Is this part of the policy objective, at least up front, to try to bring some activity home? I don't want to say this is 3D, 4D, 5D chess. I'm just saying that is one question people are postulating this morning.
It's a pretty messy way of achieving that outcome, isn't it?
Very messy. It's also the reason why people rejected the idea of torpedoing the economy. And, you know, this is sort of the discussion, though, that people are trying to understand and wrap their heads around.
The DXY is negative this morning by 1 full percentage point. The conversation will continue. Coming up in just a moment, Neela Richardson of ADP looking ahead to the week ahead with lots of economic data and earnings as well. Equity futures near session lows. We're down 1% from New York City this morning. Good morning to you all. You're watching Bloomberg TV. Equity softer here, down across the board. On the S&P 500, negative by 1%. On the Nasdaq, down by 1.2%. On the Russell, the small caps are negative by 0.9%. 3 hours away from the cash open. Let's get you some morning movers this morning. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. It's going to be a heavy week of earnings. Something like a third of the S&P reporting a buy market weight. Tesla, one of those companies, reports tomorrow, and the sell-side analysts coming out for it ahead of that. Shares down nearly 4%. Dan Ives of Wedbush warning of a code red as he has for some time if Elon Musk doesn't refocus his attention to Tesla. Barclays also cutting their price estimates and adding insult to injury. Reuters out with a story this morning that their lower-cost Model Y will be delayed, the launch of that, by at least 3 months. Meanwhile, we have some earnings to catch up on from last week, Netflix being one of them, reporting Thursday after the market closed a record profit. Those shares up 3.33%. Not only that, but the CEO saying, we've looked at the macro condition, we've looked at customers, and we're not seeing any change. Investors are hungry right now for a company that seems to be impact-free of tariffs, so flooding to that stock. Meanwhile, rounding things out with some M&A. You wanted a more loose regulatory environment, allowing for deals. Here you go. We finally got that. Capital One getting the nod from the regulators to go ahead and acquire Discovery Financial would make one of the largest credit card providers. Those shares are up 5%. There was some concern that the DOJ might last minute try to block it with the concerns of competition, but regulators over there saying that there wasn't enough evidence to do so. John.
Danny, thank you. More from Danny a little bit later. Some bankers in this nation, at least, hoping that's just the start for 2025. Danny, thank you. On our radar this morning, Chicago Fed President Austin Goolsbee warning against efforts to curb the central bank's independence.
There's virtual unanimity among economists that monetary independence from political interference, that the Fed or any central bank be able to do the job that it needs to do, is really important. I strongly hope that we do not move ourselves into an environment where monetary independence is questioned, because that would undermine the credibility of the Fed.
It's certainly been questioned over the weekend.
And it's really been explained by Kevin Hassett when he came out and said that they are studying it and looking at previous potential political decisions that this Fed chair made. Remember, the Fed chair was nominated by President Trump during his first term. A real question here about how much any decision by Fed members and any utterance by them will be questioned as political, even if they're not, right? I mean, how much this type of rhetoric really puts a tinge on all actions coming out of the FOMC.
The Supreme Court's going to be really important here, and the Fed chair actually said that they're monitoring this case closely, even though they think they're insulated from the Supreme Court decision. This was Trump that fired officials at the FTC and some other independent agencies. That is going to be heard at the Supreme Court, and that should put this, help put some of this to rest. The issue is, of course, the executive branch, the way Donald Trump sees it, he thinks he should have power over these agencies. And depending on how the Supreme Court comes out and rules, this could potentially be a massive fight between the Fed and President Donald Trump.
Playing out quite clearly in the equity market right now. Equity futures down across the board. On the S&P, we're down 1%. And in foreign exchange, just weighing on the US dollar, that's where you're seeing it. In foreign exchange, the dollar's down against everything. To see the euro back up to 115. Only a few weeks ago, we were talking about parity. Wasn't that long ago at all.
People are looking at diversification, and whether this is truly the U.S. is a loss of some sort of gold and reserve currency status, the narrative can get ahead of the actual moves. Nonetheless, there is clear diversification, particularly from countries that might be looking at less trade with the United States.
Let's talk about the trade story. TSMC warning of the limits of its ability to keep its AI chips from China. The company writing in its annual report that its role in the supply chain, quote, inherently limits its visibility and information available to it regarding the use of its final products. We're getting a read on what's happening to the data, what's happening to trade. The data out of South Korea showing how President Trump's tariffs could dent shipments of export-reliant economies. South Korean exports falling 5.2% from a year earlier in the first 20 days of April, with shipments to the United States down 14.3%.
Yeah, and down to China just 3%. So you can see where the trade fissures really are. This comes at a time when there's not only concern about potential export restrictions, what happens to the ships that are coming into the harbor if they're going to suddenly get tariffed, how that works. It also has to do with just less demand, right, domestically and elsewhere. I just want to point this out. After Smoot-Hawley was passed, in those 5 years, international trade declined by 66% from the 5 years from 1929 to 1934.
What's interesting about the data, too, if you look more into it, auto exports, those really dropped. And guess what? We still have a 25% tariff on autos coming to the United States. But the Trump administration so far has not put the walls up on semiconductors. Those shipments actually increase. So you can see actually where the tariffs are hitting when it comes to Korea's export. Also interesting, South Korea, their trade delegation will be in town this week. So those conversations will be happening. A key question that they're starting to mull about in these South Korean officials is whether or not Trump himself will appear as he did with the Japanese negotiators.
That's a meeting to watch a little bit later this week. They're the stories on our market radar. Away from the markets, this is the top story worldwide this morning. The Vatican has announced the death of Pope Francis at the age of 88. He was known as the People's Pope for advocating for the poor and those fleeing war and hunger. Joining us now from Rome is Bloomberg's Flavia Rotondi. Flavia, welcome to the programme. Easter Monday turning to a day of mourning for Catholics worldwide. Walk us through what happened early this morning and what happens next in Rome.
Good morning. Good morning, Jonathan. Yes, has been shocking news, I must say, for all over the world, particularly here in Rome, as you can imagine, as the Jubilee is absolutely ongoing and many tourists flocking just to, to go to the churches, to see St. Peter's Squares. Hearing this news in the morning has been really an incredible shock all over the world. And it's still hard to believe, to be honest, given the fact that just, yesterday, the Pope was meeting with the Deputy U.S. President Vance here in Rome. It's been a very, very short meeting, as you know, a very short conversation, an exchange of gifts, but has been seen as a sign of a kind of, recovery for the Pope that has been also attending a lot of meetings, attending a lot of celebrations in the last few weeks. Immediately after leaving the hospital, he just rested for a few days and then was out there meeting with, with other cardinals, having all over of other engagements. So everyone was kind of hoping that this could be a sign that, it was kind of back on track. The whole thing was kind of back on track. And now, of course, the shocking news this morning. And as you know, now what's next? Well, of course, there will be the funeral and the conclave process that is supposed to start in 20 days before the death or the resignation, as was last time, of the Pope. The whole process hasn't started yet, of course. This is not the right time, but I'm sure that it will be in the next few days, a few technicalities to be resolved, and then the whole thing will actually start. So we can imagine that probably we are looking at possible date for the conclave. I would say probably the first or second week of May, Jonathan.
Flavia, that will be the time to talk about the future. Let's reflect on the past. From Pope Benedict to Pope Francis, can you walk us through the change in leadership we witnessed in the Vatican?
Yes, absolutely. Quite a legacy for Pope Francis, seen as more liberal than his predecessor regarding a lot of topics, issues from abortion to immigration to, of course, civil rights has been quite the paladin of all people around, all people all over the world, all the minorities, all the fragile members of the society. So, of course, the question is, what's next? What's next? Shall we have a pope that is basically as liberal as him, or we'll have someone that is more traditionalist, so back to the more strict interpretation of the doctrine? This is quite a big question, and we will probably discuss it in the next few days. Yes.
Flavia, appreciate your time this morning. From Rome, Flavia Rotondi, Bloomberg's very own. Flavia, thank you. The sad news of the Pope's passing, Pope Francis dead at 88. We'll turn back to markets now, where investors are awaiting a slew of economic data this week. Nita Richardson of ADP writing, in a week full of backward-looking company earnings reports, data on big-ticket items like housing and durable goods provide a peek into the near-term growth outlook of the economy. Nita joins us now for more. Nita, good morning. It's good to see you. A lot of this data flattered by the pull forward that we're seeing from consumers. When do we start to get a clean read on some of the damage that's been done?
I don't think it'll be this week. I think we're still looking at a Main Street economy that hasn't yet felt the dent of anything that markets are talking about. So we're going to get this week, we're going to get some housing reports. Housing is really important, not just because it's the most optimistic thing you can do on the planet, economically speaking, which is to buy a house and take out a 30-year mortgage at these prices. You're saying I'm guaranteed income for at least 3 decades, but also because housing is an indicator that is consistent with the economy going into and out of recession. So what I think you'll see today and this week is strong new home sales, strong existing home sales, and pretty good durable goods sales, which all point back to a pretty resilient consumer economy.
At this point, can you say, or at what point can we say, that the soft data and the hard data have diverged meaningfully in a concrete way, and they're not going to converge in any kind of material way, that people can feel really bad, especially when they answer online surveys, but still go out and spend, but still have a job?
There is a huge time lag right now that we're all confronted with in this time of uncertainty, a time when we intellectually can process what's going on, but our spending behavior, our production behavior, our manufacturing behavior has not changed. And maybe this is a time when there is some circularity, that the real economy is so solid, it changes our sentiment. We haven't seen that yet, but it could happen because what we're seeing in the data, when you look at the labor market, initial jobless claims, housing, durable goods from last month, you're seeing a sense of resilience. You're seeing actually some dry powder sitting on the sidelines. When it comes to even small business formation, those numbers are still strong. People are starting new businesses at record highs still. And that is consistent with a strong Main Street economy, despite the level of elevated uncertainty.
Is there any sign that we're going to see a stop to that, given the fact that banks had a really positive outlook during earnings season and talked about how a lot of those mergers and acquisitions and other deals were just delayed but not put off entirely?
You know, again, timing matters here. How long is the delay? Because we thought that kind of financial activity would have happened months ago. and it has yet to pick up. So there's no certainty here, and I think the financial markets are really ruling the mergers and acquisitions activity right now. Not so true with the homeowner trying to buy a house. I mean, you're led by the baby crying in your 2-bedroom apartment more than you are on mortgage rates right now. And that is what's driving consumers, what they're seeing on the street, what they're seeing on that ground. But why it's important is consumer spending is what drives this economy longer term.
When it comes to consumer spending, though, a lot of this is likely stockpiling. My sister this weekend, I saw her. She's going out and getting a new car. She actually showed me the gifts she bought for Christmas because she's worried about price hikes that are coming down. Do you expect a softness on the back half of the year?
That is the biggest concern. I think you've really hit the nail there because, you know, toy manufacturing, a lot of these goods come from other countries. They come from China. This is the last place that a consumer wants to see the tariff hit when they are buying toys for their kids. So it could be that pull forward. The same with durable goods. You know, I checked my email. My car dealership is, you know, advertising tariff-free cars, which I thought was an interesting sales opportunity there. But yes, that is showing up. Definitely, it showed up in the trade volumes we saw earlier this year. So timing is everything in this economy, and we're still not seeing the timing work out between the policy and the behavior.
Everything Anne-Marie just said, we saw in retail sales. It was there in the data.
And so now the question is, how long is that going to last? And to that point that you both were making, at what point does that lead to weakness? How organized are people? Christmas gifts?
I really hope my nephews aren't watching. But if they are, the Legos are hidden underneath the steps.
90% of ornaments come from China into this country.
Oh, yeah.
So,
and they were taking the price tag off.
if you want to decorate the Christmas tree, anyway, there you go. Neela, thank you. It's good to see you.
Good to see
Neela
you.
Richardson there of ADP. Could just reuse the decorations, of course.
I was just going to say, I mean, don't you have the same decorations that you put in storage and you take them out every year, right after Thanksgiving?
Something
Make
different.
sure.
You do things on trend. OK, it's too early to talk about this. Months away. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. We begin with the breaking news out of the Vatican, which announced the death of Pope Francis at the age of 88. He assumed the papacy in 2013 and became known as the People's Pope for advocating for the poor and for those fleeing war and hunger. On Sunday, he had met with U.S. Vice President J.D. Vance. Elsewhere, U.S. Defense Secretary Pete Hegseth is said to have shared confidential military details in a chat on third-party app Signal for a second time. The New York Times reporting that Hegseth created and sent sensitive information to a group that included his wife, brother, and personal lawyer about strikes in Yemen in March. Meta's Mark Zuckerberg and JP Morgan CEO Jamie Dimon were among the top insider sellers ahead of President Trump's sweeping tariff announcements. Zuckerberg sold over 1 million shares of Meta that amounted to $730 million in the first 2 months of the year. Dimon sold over $230 million worth of his company's stock. And that's your brief, John.
Not bad timing. Not bad timing. Danny, thank you. Up next on the program, tariffs trigger panic buying.
Consumers are actually starting to feel the tariff impact now, trying to pull forward some purchases, but the weakness will come, once we see the other actual effects.
Jeremy Jansen of Wells Fargo joins us next, live from New York City. You're watching Bloomberg TV. Equities here negative across the board. We're down 1% on the S&P. We're down by 1.1 on the Nasdaq. The Towns in the FX market. The dollar getting absolutely hammered. New lows for the dollar for 2025. We're down by 1%. The dollar is weaker against everything in G10. Kevin Hassett, the National Economic Council Director, the top economist to the President of the United States, asked about whether they could remove the Fed Chair Jay Powell, and the response was basically, we're looking at that.
We're studying it. And as we heard from Terry Haynes, they've been studying it for a while, so keep on studying and maybe it won't have any consequence. Nonetheless, he didn't push back, and he had an opportunity to, even with understanding what the market was doing in response to this suggestion.
As they study that, euro-dollar climbs 115.27. Under surveillance this morning, tariffs trigger panic buying.
Consumers are actually starting to feel the tariff impact now. I think you could see much more of this, in the data ahead. Until consumers start to see that, they won't They're not exactly changing their behaviors yet. They're trying to pull forward some purchases, but the weakness will come, once we see the other actual effects.
So here's the latest this morning. Consumers pulling spending forward as inflation expectations soar to multi-decade highs. Jeremy Jansen of Wells Fargo writing, the supply chain overall logistically remains very healthy. US trade policy is expected to remain dynamic for quite some time. That is a diplomatic way of putting it, Jeremy. Welcome to the programme. You oversee supply chain finance, so help us understand what you see across companies right now, how they're managing things from Mexico to Canada to China and elsewhere.
Yeah, hey, good morning. Thank you for having me. Our data here at Wells Fargo does suggest that Chinese imports into the U.S. or us purchasing receivables from those suppliers, it has seen an increase in Q1 of this year versus prior year. We did not see a similar increase when we look at other countries in our portfolio.
How much, Jeremy, do you see this pull forward as not necessarily being predictive of the future, but really a sign of how much weakness there will be going forward in the months to come?
Yeah, I think it was planning on behalf of our clients, and we'll continue to watch the data on a weekly and monthly basis and see how that shift or what shift occurs now that the tariffs are more in place there with China.
Jeremy, how much are the companies who you work with taking a page from the pandemic playbook when it comes to managing their supply chains and trying to get ahead of any kind of fissures in how they get their goods?
Yeah, I think significantly, right? The fact that we have been here before in 2018, 2019, our clients do have a playbook specifically around shifting that distribution channel away from China. I think we saw it in 2018, 2019, where roughly 22% of the supplies coming into the U.S. or imports were from China. That shifted drastically to low teens. So our clients are understanding how to do this. Certainly the announcements on April 9th helped to pull forward that strategy a little bit. So that certainly that playbook does exist. I wouldn't say our clients had to dust it off, right? They keep it fresh in what is a dynamic global supply chain.
But what makes this different than 2018 and 2019? Is it just the uncertainty that you're never quite sure where the end destination is going to be?
I think that's a great way to think about it. There is more uncertainty here than there was in 2018 and 2019.
What are your clients most hoping to hear from policymakers in Washington?
Yeah, I think certainty, right? Back to that word. Where does this land? Again, our clients are vigorously working on many different strategies on how to manage the increased costs that come along with tariffs. And typically, what we're hearing is that's a threefold approach. How much of that increase can be borne by the suppliers? Corporate profit margins are higher than they were in 18 and 19, so that will allow our clients to absorb some of that tariff impact. And then last but not least, how much of that is ultimately passed on to the U.S. consumer?
How much, Jeremy, do you see a risk that the economic consequences of some sort of ongoing uncertainty in trade could end up being similar to what we saw during the pandemic? I mean, I was looking at Torsten Slock over at Apollo, and he said that if the tariff rates are maintained where they are currently, he expects a 90% chance of a U.S. recession.
Yeah, I'm not an economist for Wells, right? So I don't want to get into chances of recession. I like to speak directly to the impact to the supply chain and the impact to our clients. Certainly the news on April 9th decompressed our universe a bit, because our clients can point back to the playbooks that they had in 2018 and 19, where they were extremely effective at distributing that supply chain globally.
Are you saying, Jeremy, that we're not going to see the same kind of disruptions maybe in just how quickly some of the goods can get on the shelves because of just how quickly they can ramp up those playbooks?
I would also point to the fact that the supply chain overall is incredibly healthy, right? When you look at key supply chain measures relative to pre-COVID, whether that's shipping costs, whether that's inventory availability on the shelves, those metrics that we watch are very healthy and, again, very similar to where we were pre-COVID.
Hey, Jeremy, appreciate the take. Jeremy Jansen there of Wells Fargo. A more constructive take on where we are at the moment. I think it's important to point out, based on what Jeremy had to say there is a resilience this time where there wasn't before, except this time the test is much bigger than it was back in 2018, 2019.
Which is the reason why people are having a hard time figuring out how to wrap their heads around this. There's a resilience on a couple fronts. There's a resilience when it comes to their balance sheets, and there's a resilience when it comes to their experience already of the supply chain disruptions that we saw back in 2020.
We kept talking about this playbook and the fact that they're using that same playbook. I would say what's different, though, from COVID is there was always this idea that we're going to snap back and go back to normal, whatever normal was before COVID. Now, the destination is changing, and the goalpost keeps changing on what this administration wants to see when it comes to trade. Maybe it's deals, or maybe it is tariff walls go up to bring in revenue and reshore back to the United States.
COVID was a temporary shock to the system. This could be a very long-lasting shock to the system, and we're still trying to figure that out. How much longer, I don't know. The focus at the moment is on deals. We'll see if we get some deals. 90-day pause. The clock is ticking. Let's see if we get those deals. But ultimately, this feels something like a really prolonged shock to the system that we still have quite fully internalized.
Just to build on that, this idea of any kind of analog to 2020, it's very different. Where is the safe country to import from? Where are the havens that you can go to where you can have a concrete sense that the tariffs are going to be substantially lower? And then how do you price for that in a fungible moment when it comes to just what those rates will end up as?
If you are just joining us, welcome to the programme. Equities here. Session lows were down by 1% on the S&P 500. This dollar is a whole lot weaker. In the next hour of Bloomberg Surveillance, we'll get a take from Barbara Doran of BDA Capital, Scott Lincecum of the Cato Institute, Leland Miller of China Beigebook, and Tom Sitsouris of Strategas from New York City. This is Bloomberg.
There's so much noise out of this administration.
You can suddenly have all sorts of other things questioned about the Fed if it's in direct conflict with the White House.
So the Fed, on that basis, will, I think, continue to hold fire.
I think that the Fed will do as much as it can to do as little as possible.
We're still in a world where all boats will be moving together.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to all. The second hour of Bloomberg Surveillance starts right now. Here's a snapshot of the price action. Your scores look like this. Equity futures down across the board. On the S&P, we're down by 0.9%. In foreign exchange, the dollar weaker. New lows for 2025 for DXY, down by 0.97%. And in the bond market, take a sneak peek of 2s, 10s and 30s. Yields down at the front end, up at the long end. This line right here from the NEC Director Kevin Hassett, rocking this market. The President and his team will continue to study that in response to a question about whether they could push Chairman Powell out early.
So right now what you're seeing in markets is essentially traders pricing in the prospect of a Fed motivated to cut rates more quickly and then allowing the long end to actually become a little bit unmoored. The idea that people will be less confident in Fed independence over a longer term and are going to demand an extra premium to own longer-term U.S. debt. You are also seeing diversification away from U.S. assets into, say, Japanese bonds, into emerging markets bonds, elsewhere to just get some sense of diversification.
That confidence is being damaged slowly. You see it in stocks, you see it in bonds, you see it in foreign exchange.
And what's so interesting about this is because of what we're seeing play out in financial markets right now and this concern about the credibility of the dollar, the concern about the credibility of U.S. Treasuries is exactly why in his book in 2021, Kevin Hassett said firing someone like Jay Powell was not something we would want to do because of that damage and the concern that damage that could happen now. What he said over the weekend was it's an option that they are weighing, and he basically is saying that they think that the legal parameters or how they're viewing the legality of this has changed.
This is the public feud. Let's talk about the private one. Behind closed doors, based on reporting, Politico suggesting that the Treasury Secretary Scott Bessent is leaning on the president and warning him of what would happen to financial markets. The New York Times suggesting that the president is listening to him. And that's why he's not pushing forward with this. So I would say the discussion in public sounds quite different to the discussion in private based on the reporting over the weekend.
Yeah, how much is this a way of expressing displeasure? And he has a right to express displeasure. He is a U.S. citizen versus actually engaging with action, which is the reason why Kevin Hassett's commentary was what got people's attention, because it suggested maybe there was more behind it. There's a bigger question here. How much is the market an ultimate check on what President Trump does? How much does President Trump take a look at any kind of disruption in markets and change course as a result? We have seen that. Is that going to be a guiding light? Still unclear.
We've seen it twice now, most recently with the Fed chair, with Secretary Bassett, according to reporting, trying to tone down the rhetoric and trying to make sure that the situation remains that Fed chair will leave when his term is up in May 2026 and not be ousted before. And also the reprieve, the 90-day reprieve on tariffs. The Treasury Secretary saying this is doing damage to financial markets. This is what the Treasury Secretary has to think about Powell. Monetary policy is a jewel box that's got to be preserved. You can voice your opinion, but you can't oust someone.
New data of Renmark just publishing another Fire Powell higher wash cycle. While firing Powell is bad, replacing him with Kevin Warsh is not much better. The take from Neil Data this morning.
The Warsh, Kevin Warsh, tends to be a hawk, as you mentioned earlier. So he'd be more inclined in keeping rates higher for longer, which is more akin to exactly what this president does not want to see. Look, President Trump nominated Jerome Powell. This was
गैस क्रूड ऑयल को देखोगे नहीं जा पा रहा है इस ब्लू कलर की लाइन के ऊपर 5380 ऊपर सस्टेन करना है तो 5380 के ऊपर क्लोजिंग बहुत ज़रूरी है 5380 के ऊपर क्लोज नहीं करता है तो फिर रेंज बाउंड हो जाएगा या तो ऊपर का नीचे का एसएल जाएगा या फिर ऊपर मोमेंटम होगा ही नहीं रेंज के अंदर रह जाएगा वेरी इंपॉर्टेंट अगर थोड़ा और ऊपर जाना है तो 5380 के ऊपर एटलीस्ट एक कैंडल ये ब्लू कलर की लाइन के ऊपर 15 मिनट की क्लोज हो आगे नीचे आएगा तो फिर नेक्स्ट सपोर्ट हमारे पास 5227 का है नेचुरल गैस भी सपोर्ट पे है यहाँ पर ही बाइंग कर सकते हैं ऊपर एक रेजिस्टेंस रहेगा वहाँ देखेंगे सेलिंग का प्लान बाकी कोई डेटा तो है नहीं एक डेटा है 7:30 उसके अलावा और कोई डेटा है नहीं 12:30 पे न्यूयॉर्क सेशन ओपन होगा माफ़ करना लंदन सेशन ओपन होगा उसके बाद शायद मार्केट और मूव करे लाइक भी करते रहो गाइस जिन लोगों ने लाइक नहीं किया स्ट्रीम को क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते हैं निफ्टी बैंक निफ्टी को देखोगे बैंक निफ्टी स्पेशली फ्यूचर इंडियन मार्केट की अगर मैं बात करूं एज बुलिस मॉर्निंग से बना ही हुआ था थोड़ी बहुत प्रॉफिट बुकिंग आना शुरू हो गई है ओवरऑल बुलिस ही है स्टिल बट कैंडल देखोगे 15 मिनट की एक शार्प सेलिंग है बट कोई बहुत ज़्यादा बेरिश नहीं है नीचे अगर आता है अगर बैंक निफ्टी फिर से किसी को बाई करना है अगर नॉर्मल कैंडल बनती है फिर से बाइंग का प्लान करेंगे अगर थोड़ा सा और फॉल करता है करंट लेवल से।
News when you want it with Bloomberg News Now. I'm Doug Krisner. U.S. markets were shaken today by President Trump's continued verbal attack on Fed Chair Jay Powell. Trump has also suggested that he has the ability to remove the Fed chair. Now, we've seen how Trump's tariff policy has been a major negative for financial markets. So has his undermining of the Fed's independence. Shana Sissel is the president at Banrion Capital Management.
It is a very, very bad precedent to allow political influence in Fed decisions. The Fed is supposed to be independent. We need it to be independent. We do not want a Fed that is influenced by the political leanings of the president, no matter what.
That is Shana Sissel from Banrion Capital Management. Now, economists are widely expecting Trump's tariffs to boost inflation and slow growth, even if just temporarily. Earlier, the president claimed there is virtually no inflation due to lower energy and food prices, and he went on to blame the Fed chair for not lowering interest rates. Giving Powell the nickname Mr. Too Late on social media, Trump warned that inaction by the Fed may lead the American economy to slow. Tesla will be among the most closely watched first-quarter earnings reports on Tuesday after the closing bell. We have a preview from Bloomberg's Charlie Pellet.
Looming over everything in Tesla's report will be CEO Elon Musk's role in the White House. Dana Hall follows Tesla for Bloomberg News.
I think for Tesla shareholders and employees, the big question is, when does Musk step back from Doge, and does he come back to Tesla full-time or not?
The report comes as Tesla faces questions about volume sales for 2025, progress on autonomous driving, plans for a robo-taxi network, and how tariffs will impact profitability. In New York, Charlie Pellet, Bloomberg Radio.
Thoma Bravo is in advanced talks to buy Boeing's navigation unit, Jeppesen. We are told a deal could be announced later this week. Jeppesen provides interactive flight plans. The unit is profitable and commands a broad customer base from airlines to amateur pilots. Boeing acquired Jeppesen back in 2000 at a price of $1.5 billion in cash. President Trump says he and First Lady Melania Trump will be attending the funeral of Pope Francis in Rome. The 88-year-old pontiff succumbed to a cerebral stroke, coma, and subsequent irreversible heart failure. Harvard University has sued the Trump administration. The school is fighting back as the White House threatens to slash billions of dollars from the school's research funding. This is part of a crusade against the nation's top colleges. Harvard's president, Alan Garber, accused the government of trying to wield unprecedented and improper control of the university. Garber said the consequences of the government's actions would be severe and long-lasting. Vice President J.D. Vance held trade talks today with Indian Prime Minister Narendra Modi in New Delhi. India is looking to strike an early trade deal with Washington that spares it from President Trump's additional tariff hikes. Now, the White House said the talks yielded significant progress in negotiations for a bilateral trade agreement. The statement also said the two sides finalized a roadmap for a possible deal to reduce the tariff burden. Now, Modi is planning to visit Washington later this year. That would be his second such visit since Trump returned to the White House. The president expressed support today for his defense secretary, Pete Hegseth, saying he's doing a great job despite criticism from, quote, disgruntled employees. Now, Hegseth is facing scrutiny over sharing sensitive plans for military attacks on Houthi rebels in two unsecured Signal chat groups, including one with his wife and brother. Secretary Hegseth spoke to reporters earlier at the White House.
This is what the media does. They take anonymous sources from disgruntled former employees, and then they try to slash and burn people and ruin their reputations. Not going to work with me. Because we're changing the Defense Department, putting the Pentagon back in the hands of warfighters, and anonymous smears from disgruntled former employees on old news Doesn't matter.
That is Defense Secretary Pete Hegseth there. Now, White House Press Secretary Caroline Leavitt denied an earlier report today from NPR that the Trump administration had begun a search for Hegseth's replacement. Meantime, Hegseth expressed confidence in his job security, saying he has spoken to the president and that they are on the same page. And that is news when you want it with Bloomberg News Now. I'm Doug Krisner, and this is Bloomberg.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
A deal is going to be made with China. Nothing's over yet.
There's been a lot of confusion up to now.
A 90-day pause is not an eradication.
Where is this leading to?
Trust Bloomberg Television for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case very quickly becoming the base case.
Nobody covers tariffs like Bloomberg Television. Context changes everything.
We see those yields on the rise, just a touch though. No big moves, it would seem, on those yields at this point. We'll wait for gilt markets to open in half an hour. That is the bond market this morning. Here's what some of our guests have been saying about credit in the current climate.
Where we sit here today, it's the uncertainty. You speak to CEOs, you speak to treasurers, you speak to CFOs. You can't plan. You can't do your budgets. You can't forecast what your spending needs are or your capex needs. Therefore, you don't know what your funding plans are. That uncertainty isn't fully priced into spreads yet. There will be better entry points compared to any other time in history, particularly at the high quality end. These balance sheets are solid. There's a lot of strong cash flow. So I think, again, it's about just being a little bit more patient.
Let's bring in Madeline Jones, Managing Director and Portfolio Manager at Oaktree Capital. Nice to see you, Madeline. I wonder how you would characterise the market sentiment and where we are right now, because we've had a lot of conversations with people in credit markets who've been talking to us about, yes, we saw spreads go out, but maybe they were too tight to start with, and characterising things as on the move, but not in a sort of sense of panic, apart from maybe a few days where new issuance seemed to go into pause. How do you characterise where we are right now, Madeline?
Well, yeah, I think what we've seen in the credit markets is quite rational and quite resilient, and you definitely put it against equities. Of course, equities is much more focused on and driven by expectations of future growth. Credit, you're looking at, and we're looking at companies. Standard practice is to assume a company will go through macroeconomic weakness at some point, stress testing the cash flow, seeing if it can still pay you. And there are lots of companies in Europe that will tolerate a recessionary environment, a change in the climate, and so we can assemble good quality portfolios. So I think the overall basis of the credit market is pretty solid. So there is an inclination to want to continue and want to invest, but investors are now being a lot more cautious, a lot more discriminating in what they invest in.
So more discrimination around which of those cash flows will be sustainable and which won't then, perhaps, Madeline. Are we starting to factor in a recession as some kind of base case for European credit, or is that not where we are?
I think a good analyst will always factor in a recession. If you're underwriting a 7-year, 8-year bond, you should legitimately want to stress test through a recessionary environment. So the great beauty of the asset class is that we can do that with cash flow forecasting and rely on the companies that are resilient and find their way to pay that current coupon and current yield and rest on that. So, you know, I think recession should be expected, or as one of the probable outcomes that an analyst should be dissecting. But there's much more, I think, today that the analyst has to focus on. The tariff environment is still in flux. I think we don't know what the retaliations are, what the second order, third order impacts of tariff are. Changes in the currency, you've just been hearing about what that means for companies. It really needs really focused analyst teams knowing their companies really well and knowing their supply chains, production facilities, you know, to the detailed fine points. Even companies themselves are struggling to make through and provide predictions. So there is quite a lot of detailed analysis, which will change as we get more information.
So given all of that, you want to focus on the companies with the clearest visibility, but there isn't much visibility. So how can credit teams make the kind of predictions necessary to make accurate investments, given the level of uncertainty you've just described? Like even the companies don't know what is going to happen next. How should a credit investor be informed?
Yeah, I think you go back to the quality of the company's balance sheet. What do they have available to them liquidity-wise? What kind of leverage? Have they really pushed the leverage really far that they're on the edge and they really need everything to go right? And that's certainly when you've seen the credit spreads widening out. Of course, you've seen tariff-exposed sectors widening, recession-exposed sectors widening, but you've seen the weak CCC or the over-levered balance sheet widening the most because those needed everything to go right, and they didn't have any cushion for failure. And what you're always trying to find is the company that has cushion for failure or cushion for recessions, weakness, periods of time, periods of volatility to ride it through.
Sure. But presumably, therefore, you got the credit spectrum. You want to move up, but presumably everybody's doing that at the moment. How does that change pricing further up? What does pricing look like further up into IG? Even IG seems to be having a few wobbles at the moment. We're not entirely sure. We don't have the visibility for companies there either. So what does pricing look like there?
Well, I think that investors everywhere are being cautious, right? So
Yep.
I don't think anyone's jumping in, and we're not moving back to the spreads that we saw prior to Liberation Day. And you're seeing that decompression filter through the market. So when we looked at the market prior to Liberation Day, we were very inclined to believe that there would be an event, who knows what it would be, there would be an event which decompresses the market, which means that, you know, the double B differential to the triple C would start widening out.
How far through that process are we?
It's always difficult to say, to pinpoint where, you know, the fair value
What
or
does your
where the
gut
price
tell you
is.
about how much further? Is this move got much further to go?
I think that the weak hands have already been identified by the credit market, and they've been identified for quite a long time, actually, that we know where those over-levered balance sheets are.
Right.
And they were quick to reprice in the scenario that things are not going to go perfectly. And they were trading quite tight before this, and so they did deserve to be widened out in respect of not having everything going their way to ride themselves through. We're just looking for places in the market which could be defaults of the future, and those are the potential defaults of the future.
And are you seeing any of those cracks starting to show already? It sounds like you've had a drop-off already, and then this happens in steps. It's like cliff edges. What's the kind of next cliff edge?
I think one of the great advantages we have in credit at the moment is that we've gone through a few, you know, tumultuous times. You've had COVID, you've had Ukraine invasion, you've had interest rate rises. So companies have been shoring up. They've been much more defensive. If you compare us to global financial crisis and exuberance into that market, it became quite quick that we moved into a difficult, challenging market. These companies have been more defensive, more conservative, inclined to de-lever rather than go for equity-friendly transactions. And so, by and large, they're in a really good place. But as I said, there are those weak hands. There still is quite a lot of liquidity on companies' balance sheets, to be fair. And so I don't see this being a substantial default rise year, and we're still expecting defaults to be in the range of, 3 to 4, maybe, above 4% in sub-investment grade credit. But over the years, when you start to see maturity wall rising, which is more like a 26, 27 period, if things don't improve for those companies, the weak ones, of which there aren't very many, we're talking 95% of the market is very good and very well structured and can ride through recessions. But those weak parts of the market will find it challenging to refinance.
Can I ask you about Thursday, in case we've forgotten about the ECB,
Oh, yes.
the Easter holiday? I haven't. It was a place that the European credit market was actually looking for a sense of direction, right? And what I heard was deliberate ambiguity from President Lagarde. Is that how you interpreted the messaging? What do you think about the path ahead for cuts?
Yeah, I mean, I think we don't spend a whole lot of time institutionally trying to second-guess what central bank policy is going to be.
But where does it leave the European credit market?
Well, the European credit market, one of the themes that we've been discussing is the previous view of US exceptionalism perhaps being unpicked now, and how does Europe look in its ability to respond and stimulate its economies? One of the advantages I think it has is an ability to, cut rates. I think the central banks have been more open to that than the messaging that we're hearing from the US, although, again, we can't predict that, and we have to go back to companies who can tolerate different economic climates, different macroeconomic environments, and make sure they can tolerate those kind of interest rate moves. But on the balance of what we've seen, Europe's starting to show a little bit more attractive place to invest for us, and we've heard that from investors as well. The positioning of European companies, of households, with lower leverage, more ability to withstand tariff pressure, countries with more fiscal latitude to respond to economic weakness, the plans to invest in defence and infrastructure, those things around the edges looking a little bit more favourable for Europe than in the past.
Okay, an optimistic note to end on. Madeline Jones, Managing Director and Portfolio Manager at Oaktree Capital. Thanks for joining us. Coming up on the programme, we'll take a look at the stocks to watch at the open, including L'Oreal. The company's ADR is soaring in the US after a sales beat. We'll bring you more details next. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends.
Get ahead of them. And so many more.
I fell in love with cricket. I started reading about cricket. You know, cricket is not a very simple game to follow. You need to understand it. And here I didn't know a simple thing like there are different kinds of bowling. Like there is a spin bowling and there's a pace bowling, and in spin bowling there is a different kinds of off spin and a leg spin. And in pace there is a swing. And so it took me some time to just start talking to all these boys of cricket. I spoke to Sachin, who is known as the god of cricket, and I would ask him such embarrassing questions. But yeah, today it feels very good to see Mumbai Indians doing so well. My son is leading it. But also I think the Mumbai Indians women's team is something that fills my heart.
Why?
With joy. I think these girls go through so much to get to where they are. Right from seeking permission from their parents who are not willing to let them follow their dreams. Financial issues. When you see them all coming together from these remotest villages of India and play for you and tell you these stories, it's just so inspirational to see our girls in sport.
Tuesday morning, 60 minutes to go until we welcome Europe back to the fray. Cash trade will be taking place. A little bit of weakness may be coming through. Certainly US futures have been bouncing around all over the place. The US session yesterday bouncing around all over the place. There's a lot to price in at the moment. Not only have we got tariffs, but now we've got Fed independence to worry about.
Yes, they do. Shall we talk about US case law? Feels appropriate. President Trump claimed last week that he had the right to fire Fed Chair Jay Powell. His claim has pushed into the spotlight a 90-year-old Supreme Court decision, which is seen as the biggest guardrail preventing Jay Powell's dismissal. The 1935 case is called Humphrey's Executor versus the United States. It had set a precedent for independent government agencies to deflect political pressure. Now its ruling may be in question as a new case makes its way to the Supreme Court. Valerie Teitel is here to shed light on what brings us to 1935 and Humphrey's Executor. So what is it? Remind us of that, Val. Why is it being brought into question now?
Okay, so Humphrey's Executor is basically the backbone decision behind the independence of U.S. agencies. When we say that the president doesn't have the power to dismiss a federal agent without cause, it's because of this decision back in 1935. It had to do with FDR wanting to dismiss the FTC chair at the time because he opposed the New Deal. So he fired someone purely for political reasons. The Supreme Court ruled that that was not allowed. Now, this new case that has reached the Supreme Court involves dismissals from Trump back in January of two officials who both sued, arguing the firings were illegal. And those appeals have now reached the Supreme Court. And why this is important is because these appeals cite Humphrey's Executor as its precedent for the decision. And the main concern for markets and investors alike is that this is a early test of the rule by Trump and his lawyers that can mean that the president could move to fire independent agents without cause for political reasons if this case is overturned.
So you've brought us up to the here and now, but how does the Harris and Wilcox case carry over to the Fed, or how does that work mechanically?
So it's very murky whether there'll be a one-for-one decision, whether if they are allowed to sit down these two officials at the moment, whether that has a pure one-for-one relationship to the Federal Reserve member. Now, if it's not fully overturned, it could still seem as a way to embolden the president, because these two officials have had to sit out of their jobs until the merits of the case have been assessed. So think about that. He can move to fire the Fed chair, Jerome Powell, and he'd have to sit out for a period of 6 months, 9 months.
So almost the damage is done.
Yeah, the damage is done in some way. Now, in some cases, if it is overturned, and Humphrey's executor is overturned, that 1935 ruling, there could still be some footnotes in the decision that could carve out the Fed as a special situation. Now, this was done previously last year by Judge Alito, who said that the Fed is a unique institution. It has a special arrangement with history. So in somehow applying, the Fed will be treated differently than other agencies when it comes to their independence. Powell himself has mirrored this kind of sentiment. He said that this case, which he highlighted last week, would not apply to the Fed, implying that the Fed is some special case within this.
The Fed was so important in the 30s as well in terms of what was happening then. So talk us through kind of, and the parallels I think with the 30s are fascinating. Talk us through the timeline as to how this could happen and how this could unfold quickly, slowly.
So the main decision, the merits of the decision, might not be ruled on until later in the summer, in the next Supreme Court term. But what could be pivotal and what could be announced this week is that the Supreme Court could tell these two women, these two officials, that they need to sit out until the final decision is reached. And that could be the next step in emboldening President Donald Trump. And that's the thing that we could hear from the Supreme Court in the next few days.
Valerie, thank you very much. Valerie Seitel with the latest on Humphrey's executor, everything you need to know that links the case is going to the Supreme Court now, how to reflect on that 1935 case law and what that means for the Fed. Let's bring things back to the here and now, although this is something that's weighing on market sentiment, of course. Joining us, our Markets Live executive editor, Mark Cudmore, with details on where we are on these markets in 3 minutes. Mark, let's talk about dollar weakness, shall we? Because up until a few moments ago, we had more substantial amounts of dollar weakness. That seems to have just flattened a little bit, but bring us up to date on your dollar thoughts.
Yes, on the show last Thursday, I warned that I thought we might get a short squeeze in the dollar in the low liquidity weekend. I was 100% wrong. My team was right here. I should have listened to the majority here. They said, you know, the dollar can't bounce much. And in fact, when we got that much more aggressive Trump attack on Powell, it's really seen, in fact, the dramatic squeeze in the low liquidity was actually for dollar weakness. We've taken out a bunch of barriers. We broke 140 in dollar yen. So in fact, the squeeze in low liquidity was the exact opposite direction of what I warned on Thursday. I still think that the long-term trends for this year are very, very clear. We've talked about this since January. It's the end of U.S. exceptionalism. It's going to be a long-term dollar decline, but these things do not happen in a straight fashion. I think it's going to be a large dollar depreciation we're going to see over the coming months and years, but yet this is mainly about a capital outflow story. There are trillions of dollars to come out of the U.S. and find new homes. There aren't obvious new homes. This story is going to play out over months, if not years, and therefore I do get worried when the move gets overextended. So at the risk of making the same mistake twice, on Thursday I warned that there could be a short squeeze into low liquidity. I am still worried that in the very short term the dollar weakness is slightly overextended, but again the long-term trade is very clear. Dollar will decline further, just maybe not in the short term.
Let's get another Cudmore call. Gold. Where next?
Look, that is a move that is extremely stretched and again very logical. I think this is the thing I'm going to keep on repeating probably all year. The long-term trends themes are extremely clear. It's how you trade short-term around them. I understand why people are rushing into gold, but the gold-silver ratio is just so extraordinarily extended. It is now at that point where you've got red flag to kind of look for when does this correct back. Now it can correct back either via gold retracing a bit or silver getting a bit of a boost. I think, in line with my views, that I'm a little bit worried that the dollar weakness has gone a bit too much in the short term, that maybe today that the extraordinary move we've seen in gold in the last few days might have been a little bit of a short-term blow off top, and we can actually see gold pull back a little bit here in the short term.
So if this dollar strength is going to continue, Mark, you've got lots of analysts saying that several of the dollar crosses are oversold. Which ones are they for you? You've got the euro-dollar 115 right now, yen back at 140. Where should we look?
So I think that dollar yen is one that's definitely ripe for a bit of a squeeze. And I think it's important to emphasize that the dollar yen story has been really about the dollar. It hasn't been driven so much by the Japanese side. I think the euro dollar story is much more structural. As you know, one of my long-term views is that euro dollar goes to 130 before 104, which we've been kind of talking about the last couple of months. But given it's done like 10 big figures recently, I think that can pull back a bit, but it will not pull back far. I think that the important thing here is that any dollar bounce won't go too far because there is a large part of the world waiting to sell into any bounce. Reserve managers everywhere will hit those bids if it bounces more than 1% or so.
OK, Bloomberg's Markets Live Executive Editor Mark Cudmore, we thank you. And remember, you can get up-to-date analysis and insight from Mark and the rest of his team. Just go to MLIV Go on your terminal. Now, let's get your stocks to watch with Joe Easton from our equities team. Joe.
Morning, Lizzie. So we're watching Novo Nordisk today because the stock is going to reopen for the first time in Copenhagen since we had data from Eli Lilly on their latest obesity drug. Now, the Lilly drug showed that patients lost around 7% of their body weight over a 40-week period, but this drug has the benefit of being an oral tablet rather than an injection. And we've seen Novo's ADRs over in the US absolutely slammed over the past couple of years, down close to 10% in the US. So this stock likely to be lower in Copenhagen. It hasn't traded since Wednesday last week, so therefore we're going to continue to see some losses in that stock today in Copenhagen. Then in terms of L'Oreal, we had numbers out of this one. Again, the stock hasn't traded since we got the update from the French cosmetics company. North America looking really weak, but the Europe and Asia looking pretty strong, making up for some of the weakness in North America. So North America weak, the rest looking pretty good on that one. We can see that stock had a pretty bad run. We did get those numbers out of LVMH, which weighed on the stock, and we can see actually 6 sells on the stock at the moment. So potentially some people already turned a little bit negative on L'Oreal, but watch that one. In the Paris trading, probably going to be higher. Looking at Ørsted and also Equinor over in the wind space finally. Now, Trump has halted a massive wind project just outside of New York, and that is expected to hit both of these stocks today. It's a project that's run by Equinor, but also Ørsted has a number of projects similar to that over in the US. And we've already seen a couple of analysts today downgrading Ørsted. Barclays, Bank of America going underperform or sell on Ørsted because of this news. Trump, of course, a long-time sceptic of wind, so those wind stocks set to be hit in Europe this morning.
Joe, thank you very much. Equities reporter Joe Easton, he'll be back with how some of those stocks have fared. Yeah, lots of companies have to react for the first time to news that has dropped whilst markets have been closed on Friday and on Monday, and in some cases, as Joe was saying, on Thursday as well. Let's have a look at where we are on US futures, though, because European futures do point down, but not by a huge amount. And actually, US futures proving to be pretty resilient this morning. They dropped a lot yesterday, US stocks, on the back of nervousness around tariffs and Powell.
And now they're coming back up again. It's so quite a decent bounce now in progress. So where S&P even if futures are up by a full %. And the story coming in over the weekend through into Monday's into the US session, quite negative, as you say. Is this just a reaction to yesterday, or is this a looking forward to some of the results that are going to be? I don't know, but it is definitely a kind of 2 steps forward or 2 steps back, 1 step forward kind of market at the moment.
Nasdaq futures at a session high.
Yeah,
it's all going to hold when you get those Tesla earnings.
Yeah. Well, is it possible for the earnings story to dominate, or will we be back to worrying about the Fed, its independence, and what we've heard on tariffs? We'll be back with the market open. That's coming up next. This is Bloomberg.
When you have drugs that are very, very popular, you often have people that make counterfeit or copycat drugs. What about for this? Do you have to worry about counterfeit drugs coming in that are trying to say the same thing?
It's a terrible problem right now, actually, because I think consumers don't really know the dangers or the difference. Today, the FDA and the government has allowed this to sort of grow. And of course, a weight loss medication that's effective would be a popular thing for people to go around the healthcare system and seek treatment on their own. But the data we have is that 80% of these medicines are coming out of China from unapproved and unregulated sources. We recently, with Borders and Customs, seized a big batch that was shipped in dog food. People then reformulate them and sell them locally in med spas and other outfits, but you really don't know what's in that vial. We buy them and test them. We find bacteria, plant material, viruses, fungus. You do not want to be using.
But how much more expensive are your drugs than the counterfeit ones? In other words, if somebody wants to use your product, Zepbound, how much does it cost a month?
You can buy Zepbound direct from Lilly for $3.99 for the starter dose.
$3.99?
No.
Okay. No.
This is a valuable innovation, David.
In case you missed it, on the China Show,
President Trump has called Wednesday Liberation Day, and that seems like liberation from the rules-based order on trade.
We're seeing a lot of orders being canceled, particularly on product being sourced out of China. There's a threat to seeing a shortage of certain products because, look, China's our #1 supplier of footwear. When I got this job 15 years ago, it was 88% of our volume to the U.S. It's now 56% of our volume. But the fact of the matter is, most of that volume is for price-conscious consumers here in the States.
One of the things you see here when you talk to suppliers and buyers is that this essentially gives Asia and Africa to Chinese supply chains an influence, because now as American firms have to focus more on the home market, the companies and organizations with the money to invest in new areas, that will be mostly Chinese money.
don't miss the China Show live every weekday.
Tuesday morning, good morning. So we've had a 4-day break here in Europe. America has had a shorter break, so we've got a bit of a timeline mismatch, which I think is something we need to kind of correct and talk about a little bit, just in terms of where it sets us up for this Tuesday session. This is a 2-day futures chart out of America, so it captures yesterday and it captures today. In aggregate, still in negative territory, which is interesting in light of what we're seeing in terms of European futures this morning. We priced in some of the pound negativity, therefore, yesterday. To this morning, we're climbing back a little bit. That's beginning to be reflected here in Europe, but it's just worth mentioning that the US has had a longer time to kind of progress all of to sort of process all of this, Lizzie.
Yeah, and Europe today has to process all that news today. So Euro Stoxx 50 futures down 0.1% now, clawing back, as you say, a bit of the optimism. FTSE 100 futures flat, but a rosier complexion it appears there will be for French stocks this morning. Maybe that's because of the L'Oreal numbers after market on Thursday. A lot of demand, it seems, for those pricier perfumes and makeup products. So that pushing up CAC futures in Paris, Anna. But what are you looking at in terms of the stocks to watch?
Yeah, lots of use of makeup. Nothing to do with us, Lizzie, obviously. Let's have a look at some of these stocks to watch. We've got L'Oreal in the mix, as Lizzie was mentioning. That could be crucial for Paris. Beating in terms of its sales numbers. That was after hours on Thursday, so when everyone here in Europe had already disappeared for the long weekend, we cast our minds back to that, and we have to factor that in. The ADRs did well over in the United States, so we know there's going to be some upside there. We're also watching Novo Nordisk. This one, a rival, Eli Lilly, had good results in tablet form, as Joe was pointing out. And so this is something that could weigh on Novo at the start of trade. And keep an eye on Orsted. Again, this is US action there around offshore wind projects, as Joe was mentioning. Guy.
So single stocks aren't going to have an impact this Tuesday morning, which I think is interesting. In a world that's been so macro-driven of late, we're beginning to fold that narrative back in. We'll look for Tesla a little bit later. SAP out with numbers too. So here we go. The opening trade Tuesday, the FTSE's a little negative, but not that negative, which I think is interesting. The IBEX is down by 0.7%. So some more negativity there. So some quite interesting dispersion beginning to be priced in, and that takes you back to this kind of difference between the market complexion of these various bourses around Europe. So the Stoxx 600 in aggregate down by around 0.3%. Some of these single stock names will have an impact. They are heavyweights. They are going to make their presence felt. The CAC 40 actually opening fairly flat this morning. We'll see what L'Oreal does as well. So that's a reasonably positive trade that we need to fold in as well. Think as well about what is happening with currency markets here too. You've got a 115 handle on euro dollar at the moment. Cable trading 134. The translation effect in some of these single stocks is also quite interesting and in aggregate for the market too. So that's the picture. We wait for the DAX. We'll see what happens there. We'll wait for the SMI. There's going to be an interesting roast trade as well, potentially as well this morning to factor in. Lizzie, what's happening with the sector story?
At the moment, you've got consumer products and services at the top of the basket. So that's up 0.7%. And that perhaps reflects, as you were saying, the L'Oreal story. That's up 2.2% off the back of those numbers on Thursday. More demand for pricey perfume and makeup. So that is going to perhaps boost Paris when we have those numbers. But sectorally...
Okay, guys, crude oil finally क्लोजिंग आ गई है लेवल के ऊपर. ग्रेट थिंग. फाइनल टारगेट है, यहाँ पर बुक करेंगे, फिर यहाँ पर एक सेलिंग का प्लान रखेंगे. वैसे कल यहाँ से एक बार सेलिंग आ गई थी, बट स्टिल क्योंकि मार्केट काफ़ी देर से रुका हुआ था तो मेरे अकॉर्डिंग ऊपर तक जरूर जाएगा. फिर वहाँ से एक सेलिंग का देखते हैं. 12:30 भी हो चुका है, लंदन सेशन ओपन है. वॉल्यूम ठीक ठाक आ रहा है लंदन सेशन से भी, कोई प्रॉब्लम नहीं है लंदन सेशन से. जिन लोगों ने लाइक नहीं किया एक बार लाइक जरूर कर दें. डोंट फॉरगेट टू लाइक द स्ट्रीम. बाकी इंडियन मार्केट देखोगे, इंडियन मार्केट भी ठीक ठाक ही चल रहा है. बैंक निफ्टी थोड़ा बहुत प्रॉफिट बुकिंग आई है हायर लेवल से. फिलहाल के लिए तो ये रेंज बाउंड हो चुका है. बैंक निफ्टी 15 मिनट टाइम फ्रेम पे नीचे 55,450 के अराउंड एंड ऊपर 55,800 के अराउंड. इट इज़ अ रेंज बाउंड राइट नाउ. मुझे लगता नहीं इस रेंज के बाहर कहीं निकल पाएगा आज के दिन. मोस्ट प्रॉब्ली इसी रेंज के अंदर रहना चाहिए. अगर डे हाई जो है या ऑल टाइम हाई जो है जो बना है आज 55,900, इसके ऊपर अगर कैंडल क्लोज होती है 15 मिनट की, देन इट इज़ सुपर बुलिश अगेन. अभी के लिए अभी भी सुपर बुलिश ही है, बट इंट्राडे की बात करें तो 55,800 700 रेजिस्टेंस, नीचे 55,400 500 सपोर्ट इन 15 मिनट. ध्यान रखना ये 15 मिनट में है. यूरोपियन मार्केट भी पॉजिटिव ही ओपन हुआ है, तो वहाँ से भी एक पॉजिटिव ही साइन दिख रहा है. क्रूड ऑयल के लिए कोई ऐसा डिस्कनेक्शन वहाँ पर है नहीं, फ्लैट हो या फिर हल्का सा बेरिस हो. पॉजिटिव ही ओपनिंग है. गाइस लाइक करते रहो सभी लोग. बाकी ऊपर से अगर सेलिंग का देखें तो ठीक है. वैसे देखो इसमें एक पुल बैक आता है तो वापस बाइंग भी हो सकती है, ठीक है, क्रूड ऑयल में. बट अगर डायरेक्टली ऊपर आ जाए तो सेलिंग मेरे अकॉर्डिंग ज़्यादा अच्छी रहेगी, सो दैट बाद में पुल बैक ना आए. क्योंकि बाद में अगर अभी पुल बैक आ जाता है और फिर सेलिंग बाद में आती है तो फिर वो सेलिंग उतनी स्ट्रांग होगी नहीं. समझ रहे हो. बाकी अगर ये ब्लू कलर की लाइन को मैं रिमूव कर दे रहा हूँ, इसकी ज़रूरत नहीं है, इसके ऊपर कैंडल क्लोज हो चुकी है। ऊपर हल्का सा रेजिस्टेंस है, नीचे अगर पुल बैक भी आता है तो वापस जो आज का फर्स्ट 15 मिनट की कैंडल है उसके अराउंड बाइंग कर लेंगे वापस से। अच्छा हो गया, ठीक है। टेढ़ा हो गया आई थिंक, अब सही है। बाकी नेचुरल गैस भी ठीक ही चल रहा है, वापस पुल बैक आता है नेचुरल गैस में ही वापस बाइंग हो सकती है। ओके, ठीक है। ठीक है, लगभग ये एक ट्रेड रहेगा, इससे बड़ा एसएल तो लेंगे नहीं क्योंकि ऊपर भी एक रेजिस्टेंस है, दोनों मिक्स हो जाएंगे नहीं तो। इतना एसएल ठीक रहेगा, 20 पॉइंट का छोटा ही एसएल है। बाकी ऊपर वाला रेजिस्टेंस भी स्ट्रॉन्ग है एज कम्पेयर टू दिस वन, बट ये भी है रेजिस्टेंस, दूसरी बार ही आ रहा है, ये भी अभी स्ट्रॉन्ग ही है, यहाँ पर अभी आया ही नहीं है प्राइस। बाकी वीकली टाइम फ्रेम पे वैसे बैंक निफ्टी को देखोगे बहुत ज़्यादा ही बुलिश हो रखा है, पिछले 3 वीक से देखोगे कंटिन्यूसली, इंक्लूडिंग करंट वीक जो 7 अप्रैल वाला वीक था, गैप डाउन ओपन हुआ था, बाइंग आई थी, उसके बाद नेक्स्ट वीक गैप अप बाइंग, इस वीक भी गैप अप बाइंग, 3 वीक से कंटिन्यूसली गैप अप के बाद बाइंग हो रही है। इवन ऐसा भी नहीं है कि प्राइस नीचे आके पुल बैक दे के बाइंग में जा रहा है। मेन रीजन इसके पीछे क्या है, टैरिफ। जो टैरिफ मेनली लगे हैं वो जिनका चीज़ों पे लगे हैं, अब तो 10% हो गए इंडिया पे, देयर आर वेरी हाई चांसेस जो आपका इकोनॉमिक सेक्टर है या फिर जो फाइनेंशियल सेक्टर है वो उसको इतना कोई प्रॉब्लम नहीं होने वाली, वो ऊपर ही जाने वाला है। आप एचडीएफसी बैंक देखो, आईसीआईसी बैंक देखो, मेजर प्राइवेट बैंक जो भी हैं इंडिया में, कंटिन्यूसली अपने ऑल टाइम हाई को ब्रेक कर चुके हैं, ठीक है। और भी ऐसा नहीं है कि वो जो ऑल टाइम हाई है वो रिसेंटली ही बस कुछ टाइम के लिए बना हुआ था, ठीक है। वो जो ऑल टाइम हाई बने हुए हैं वो काफ़ी पुराने ऑल टाइम हाई थे। जैसे आईसीआईसी बैंक का देखोगे तो ऑल टाइम हाई आपका पिछले साल 2024 का था, उसके बाद से सेल ऑफ आया था तो वो एक ब्रेक हुआ था, ऑलमोस्ट 1 ईयर का ब्रेकआउट। पुल बैक जरूर आएंगे बट ओवरऑल फाइनेंशियल सेक्टर अच्छा लग रहा है। मैंने आप लोगों को आईडीएफसी फर्स्ट बैंक बताया था, अगर इन्वेस्टमेंट करना चाह रहे हो याद होगा लाइव मार्केट में, तो अगर आप आईडीएफसी फर्स्ट बैंक को भी देखोगे हाई लेवल से काफ़ी गिर गया था, ऑल टाइम हाई पे जब पहुंचा था 2023 अक्टूबर में, वहाँ से कंटिन्यूसली सेल ऑफ आया था, ऑलमोस्ट 50% मार्केट ड्रॉप हो चुका था। बट वहाँ पर भी इस वीक देखोगे एक सार पुल बैक आया, इवन दो पिछले, इस वीक को अगर मैं रिमूव कर दूं तो पिछले 6 वीक से कंटिन्यूसली सेलिंग ही थी, बट इस बार जो पुल बैक आया है वो इतना आया है कि पिछले 6 वीक्स की जितनी सेलिंग थी वो ऑलमोस्ट कवर होने वाली है। तो वही 55 56 का लेवल था, लो बनाया था वैसे 52 तक का, बट वही 55 56 से मार्केट ने अगर 55 के अराउंड भी बाइंग किया हुआ है तो गिरा लगभग 48% था, रिकवर 25% कर गया इवन इन अ सिंगल वीक। देखते हैं और ऊपर जाता है तो ये, क्योंकि ऑल टाइम हाई तो शायद ब्रेक नहीं कर पाएगा, बट चांसेस हैं कि ऊपर एक अच्छा मूव कंटिन्यू हो सकता है। अगर ऊपर आया तो मेरे अकॉर्डिंग अगर ये पहुंचता है वापस 89 $88 $88 के आसपास, वहां पर फिर से शॉर्ट करेंगे इसको, क्योंकि ऑल टाइम हाई तो खैर आईडीएफसी फर्स्ट बैंक बुक नहीं जाएगा ब्रेक करने के लिए। बट अगर यहाँ से अगर 88 90 तक चला जाता है तो आप मान के चलो सीधा सीधा 64% का रिटर्न हो जाएगा, विच इज़ अ ह्यूज ऑब्वियसली। लाइक करते रहो गाइस, जिन लोगों ने लाइक नहीं किया स्ट्रीम को फटाफट से डोंट फॉरगेट टू लाइक द स्ट्रीम। ये 5:30 के अराउंड है क्या? हाँ ठीक है, अच्छा लेवल। निफ्टी या निफ्टी का अभी कह नहीं सकते इस वीक, वैसे मंथली टाइम फ्रेम की कैंडल देखोगे तो सपोर्ट ले लिया उसने, बट अगर वीकली टाइम फ्रेम पे देखोगे ना अभी भी निफ्टी उतना कुछ, जितना बैंक निफ्टी है उतना पॉजिटिव तो बिल्कुल नहीं है। बाइंग जरूर आई है निफ्टी में भी, लोअर एंड से अगर देखोगे तो ऑलमोस्ट 10% 11% रिकवरी कर चुका है, बट इतना स्ट्रेंथ में दिखता नहीं है निफ्टी भी बैंक निफ्टी के कंपैरिजन में। निफ्टी को निफ्टी 50 फ्यूचर की अगर मैं बात करूं, इसको बुलिस अगर होना है, जैसे बैंक निफ्टी अभी सुपर बुलिस है उसमें कोई डाउट नहीं है, निफ्टी को मैं बुलिस नहीं कहेंगे, प्रॉफिट बुकिंग रिकवरी कह सकते हो। बट अगर निफ्टी फ्यूचर को कम्प्लीटली बुलिस होना है, करंट मंथ की मैं फ्यूचर की बात करूँ, वैसे एक्सपायरी होने वाली है, फिर नेक्स्ट मंथ में लेवल थोड़े चेंज हो जाएंगे, बट अगर अभी इसको कम्प्लीटली बुलिस होना है तो मान के चलो 24,880 एटलीस्ट इसके ऊपर एक वीकली कैंडल क्लोज हो जाए, तब फिर इसको मैं बुलिस मान सकता हूँ कि यार ये फिर ऑल टाइम हाई को ब्रेक करके इजीली ब्रेक करने इजीली चला जाएगा। जब तक 24,880 या फिर इसको राउंड नंबर में कहोगे तो 24,900 बोल लो, 24,900 के ऊपर जब तक वीकली टाइम फ्रेम की कैंडल क्लोज नहीं होती तब तक आप कह सकते हो रेजिस्टेंस ऊपर सेलर बैठे ही पड़े होंगे। यहाँ पर मुझे लग रहा है अगर आप ऑप्शन चेन भी देखोगे ना, इस एरिया के आसपास हैवी कॉल राइटिंग है। अब ये सारे के साथ, और ये ऐसा भी नहीं है कि ये निकल लेंगे, परसों से मैं ट्रैक कर रहा हूँ इसमें, ये निकल ही नहीं रहे इस लेवल के ऊपर के जो कॉल राइटर्स हैं मंथली टाइम फ्रेम पे। नेक्स्ट मंथ का ऑप्शन चेन देखना, ठीक है, मंथली एक्सपायरी नॉट अ वीकली एक्सपायरी। तो जब तक ये निकलेंगे नहीं, मार्केट को या तो ये इसी लेवल पे रखे रहेंगे कुछ टाइम तक, या फिर गिरा भी सकते हैं, क्योंकि नॉर्मली क्या है, इन लोगों ने जब मैंने ट्रैक करना शुरू किया था यहाँ पर जो कॉल राइटर्स थे मंथली में, काफ़ी टाइम हो गया, तब ये यहाँ पर जो कॉल राइटर बैठे हुए थे 24,300 से ऊपर के मंथली टाइम फ्रेम के नेक्स्ट मंथ के जो कॉल राइटर्स थे, प्राइस नेक्स्ट वीक की स्टार्टिंग से मैं जब ट्रैक कर रहा था उतने निकले ही नहीं। आई थॉट कि मार्केट ऊपर जा रहा है, इन लोग पहले से ही कॉल शॉर्ट करके बैठे हुए हैं, अगर मार्केट ऊपर जाएगा तो इनको तो लॉस होगा। इवन लोगों ने कॉल शॉर्ट करी है इस लेवल के ऊपर, प्राइस नहीं भी जाता है, बट फिर भी मान लो किसी ने यहाँ पर 100 रुपये की कॉल शॉर्ट कर दी है मंथली में, और मार्केट पिछले वीक से ऊपर जाया जा रहा है, तो अगर पिछले वीक से देखोगे तो ऑलमोस्ट 4% ऊपर जा चुका है, तो 4% या 900 पॉइंट अगर ऊपर चला गया है फ्यूचर में, तो इनके जो इन लोगों ने 100 रुपये की कॉल शॉर्ट करके रखी होगी, जो ये सोच रहे होंगे जीरो होगी हो जाएगी, वो 100 की 200 300 400 चली गई होगी। तो फिर भी अगर ये नहीं निकल रहे हैं तो कुछ तो गड़बड़ है, कुछ तो ये ऐसा सोच के चल रहे हैं कि ये 100 रुपये की जो कॉल शॉर्ट करी है ये जीरो ही करके मानेंगे। जब तक ये निकलेंगे नहीं तब तक फिर यहाँ पर भी निफ्टी में ऊपर का लेवल और ओपन होता नहीं है, इसलिए निफ्टी को देखोगे इतना आज भी हाई लेवल पे रुका ही हुआ है। दो पॉसिबिलिटी है, या तो यहाँ पर साइडवेज रहना चाहिए या फिर सेल ऑफ आना चाहिए निफ्टी फ्यूचर में फ्रॉम 24,300 से लेकर 24,900 के बीच में। ये जो टोटल 600-700 पॉइंट की रेंज है बड़ी क्रूशियल है। बिल्कुल, अभी भी देखो, अभी भी कॉल राइटिंग ही हुई जा रही है वहां पर। लोग कॉल बाई नहीं कर रहे हैं, कॉल राइट ज़्यादा कर रहे हैं। इसका मतलब उन्हें कुछ तो लग रहा है ऐसा कि यहाँ पर प्राइस इसके ऊपर जाएगा नहीं शायद। आप उठा के देख लो 24,500 से नीचे की जितनी है, इवन 24,450 पर भी, उससे ऊपर के जितने भी नंबर है 24,450, 500, 550, 600, 700, 900, वहाँ पर कॉल राइटिंग बढ़ते जा रही है। मार्केट ऊपर जा रहा है लेकिन कॉल राइटिंग बढ़ रही है वहाँ पर। चेंज इन ओपन इंटरेस्ट देखोगे वो भी तो इंक्रीज ही है खैर। एंड वहाँ पर डेल्टा भी कुछ खास नहीं है, इवन तो वो थोड़ा सा आउट ऑफ द मनी है, बट डेल्टा भी कुछ खास नहीं है, तो एक तरह से बेनिफिट भी है। बाकी उसी कॉर्नर में अगर आप पुट राइटिंग देखोगे तो पुट राइटर थोड़े बहुत आ रहे हैं, बट कंपेयर टू कॉल राइटर इतने हैं नहीं। ठीक है, बात ये नहीं कि पुट राइटर आएंगे या नहीं आएंगे, बात ये है कि कॉल राइटर निकलेंगे नहीं निकलेंगे। क्योंकि कॉल राइटर नहीं निकले तो फिर मार्केट अगर नीचे नहीं भी जाता है तो साइडवेज हो जाएगा। फिर दोनों में से जो भी जीतेगा, कॉल राइटर पुट राइटर, उसी हिसाब से मार्केट चला जाएगा। पुट राइटर बहुत ज़्यादा आ जाते हैं, कॉल राइटर को अगर रिस्क लगा अगर वो निकालेंगे फिर तो खैर मार्केट भाग ही जाएगा सीधा ऊपर। बट अगर वो निकल नहीं रहे, क्योंकि नॉर्मली क्या होता है अगर कोई लेवल वीक हो जाता है वीकली टाइम फ्रेम पर, नॉर्मली वहाँ पर जो भी बैठा है कॉल राइटर पुट राइटर वो ज़्यादा देर वेट नहीं करता है until unless दे आर श्योर कि मार्केट इसके ऊपर जाएगा नहीं इस वीक, नेक्स्ट वीक या फिर नेक्स्ट मंथ। तो फिलहाल के लिए अभी देखोगे 30 अप्रैल की एक्सपायरी जो भी होने वाली है निफ्टी निफ्टी में, या फिर नेक्स्ट मंथ की जो एक्सपायरी होगी 29 में मंथली एक्सपायरी। बाकी देखते हैं, अभी इस वीक यहाँ पर एक पॉज कैंडल अगर बन जाती है नेक्स्ट वीक थोड़ा बहुत सेल ऑफ के बाद, विद अ वेरी हाई चांसेस फिर नेक्स्ट वीक शायद ट्राई करें बायर एक बार। तो एक थोड़ा सा यहाँ पर पॉज या थोड़ा सा सेल ऑफ कॉल राइटिंग करना बहुत अच्छा है यहाँ पर मेरे अकॉर्डिंग तो। 30 की भी कैंडल हो चुकी है क्लोज, लंदन सेशन ओपन है, वॉल्यूम ठीक है, न्यूयॉर्क यूरोपियन मार्केट भी ओपन हो चुके हैं। चल गैस को एक बार रिटेस्ट करने, सॉरी रेजिस्टेंस पे आना चाहिए। नीचे के सपोर्ट भी ठीक ही हैं, लाइक स्ट्रॉन्ग ही हैं, होल्ड कर तो जाना चाहिए। वैसे ओवरऑल व्यू देखोगे तो बेरिश ही है, बट लॉजिकली तो होल्ड होना चाहिए। कल की इन्वेंट्री कल आएगी, आज नहीं है। आज सिर्फ 7:30 पर रिचमंड मैन्युफैक्चरिंग इंडेक्स का डेटा, गोल्ड और सिल्वर को इम्पैक्ट करता है वो। आईएमएफ की मीटिंग का दूसरा दिन, बाकी तो नहीं है। ऊपर ही आ जाए अब तो बेटर है मेरे अकॉर्डिंग। नेचुरल गैस नेचुरल गैस वापस पुल बैक आता है तो वापस ले कर सकते हैं, बाई कर सकते हैं। कैंडल का ध्यान रखना बस। ये भी पेंडिंग है अभी, ठीक है। इंडिया ने कल न्यूज आई थी 12% स्टील इंपोर्ट पे टैरिफ कह सकते हो, टैरिफ जैसा लगा दिया। उसका भी चाइना पे इम्पैक्ट होगा क्योंकि चाइना सबसे बड़ा एक्सपोर्टर है स्टील का। तो इंडिया ने कहा है कि हम खुद ही स्टील प्रोडक्शन कर लेंगे। Under tariff pressure to give Amazon and Walmart's Flipkart full market access। ऐसा हो गया तो फिर तो ऑनलाइन सेलिंग की बाड़ी आ जाएगी मार्केट में। अगर इन्होंने पूरा ही एक्सेस दे दिया फ्लिपकार्ट और अमेजोन को। ऑलरेडी काफ़ी बड़ा फाइनेंशियल टाइम्स की न्यूज़ है ये बाय द वे। इंडिया अंडर टैरिफ प्रेशर टू गिव अमेजोन एंड वॉलमार्ट फ्लिपकार्ट फुल मार्केट एक्सेस।
force any kind of ceasefire, make sure neither side is taking up their weapons. It needs to be strong enough to deter Russia, Ukraine.
What do you think happens to the cost profile in the next few years?
I'm going to give you a prediction that will sound counterintuitive and surprising. I think in 5 years, the total cost will be 1% of today's cost.
Wow.
So 100 times cheaper.
Wow.
Live from Tokyo, this is Insight with me, Sherry-Ann, where we dive deeper into the stories that matter with crucial context and analysis. The dollar declining along with U.S. futures as investors assess President Trump's threats to remove Fed Chair Jay Powell. Trade talks also in focus, with China promising countermeasures to any deals harming its interests. We'll discuss market strategy with Robeco's Asia fixed income head Tu-Ha Chow, who expects tariff negotiations to be messier and more complicated than Trump hopes. Also ahead, the trade war hangs over Vice President J.D. Vance's trip to India, starting today with the Modi government hopeful for a quick deal to avoid higher levies. We'll get insights on India's trading position and the stock market's emergence as a relative tariff haven with Anand Rathi Wealth Mutual Funds head Shweta Rajani. President Trump's long-running dispute with Fed Chair Jerome Powell has reached fever pitch, with Trump openly musing about dismissing Powell for not cutting interest rates fast enough. The president's top economist, Kevin Hassett, says they're studying whether or not they can fire Powell before his term ends in May 2026. That's after suggesting that the Fed had acted politically to benefit Democrats. Meanwhile, Chicago Fed President Austin Goolsbee is warning against efforts to curtail the central bank's independence.
The fact is, the inflation rate is higher, growth is slower, the job market is worse. So I strongly hope that we do not move ourselves into an environment where monetary independence is questioned, because that would undermine the credibility of the Fed.
Speculation about the credibility of U.S. assets really hitting treasuries and also the dollar very strongly. We are seeing the Bloomberg Dollar Index at the lowest level since December of 2023. And this is just extending those 3 weeks of losses that we've already seen. On the other side of the trade, we're seeing trading partner currencies actually gaining ground. The Japanese yen now at the strongest level since September of last year versus the greenback after 3 weeks of gains already. So we're seeing the downside on Japanese stocks. The Nikkei and the Topix losing more than 1%. We're seeing also the Kospi really unchanged at the moment, as we're seeing the Korean won also gain ground against the greenback. But remember, we are seeing some thin trading today because Australia, Hong Kong, New Zealand are away on Easter holidays. But you're seeing mainland Chinese stocks seeing a little bit of upside in today's session as we keep a close eye on the offshore yuan as well. It's been trading within a tight range, but we're seeing that upside today against the dollar. For more, let's bring in Bloomberg M-Line strategist Mary Nicola. Mary, good to have you with us at a time when we continue to see this downside pressure on the greenback. And if you watch risk reversals, as this chart on the Bloomberg actually shows, we're seeing markets the most bearish in about 5 years. Will this downtrend continue?
As long as you get lots of rhetoric that threatens the Fed's independence and talk about trade, you're likely to see more pressure on the dollar. What is happening right now is that investors are losing confidence in U.S. assets, and we're seeing that with treasuries not being a haven flow, neither are the U.S. dollar. So a lot of the disruption is coming from the United States. And so if that disruption and that policy uncertainty is there, then investors are looking for opportunities elsewhere. But where are they finding it? They are looking at the Japanese yen, the euro. They're the two main that are benefiting, as well as the Swiss franc. So as long as those threats remain and they linger, that is likely to be the trend going forward. And of course, we have earnings seasons coming up, but a lot of the trade talks is just going to overshadow any positivity that comes out.
Yeah, we're expecting the Japanese finance minister to meet with Scott Bessent this week as well. They have said that the currency hasn't been discussed, at least in trade negotiations last week. But with the Japanese yen now, the forecasts have been that it could actually get stronger because of these negotiations, even to the 130s level.
Yeah, there's a lot of speculation right now going in terms of, is the Japanese yen really on the table? And of course, if it is, that becomes an even bigger issue. And of course, it puts much more pressure on yen appreciation. So even irrespective of what's happening in terms of, for example, that lots of price bets in terms of where the BOJ is going have been completely erased, but that's not going to take control. What really is going to take control is what happens with the trade negotiations. And if the yen, if there's any speculation that that is on the table, you're going to see further appreciation of the yen. And so I think what happens is that the BOJ is just put into a more difficult position in terms of how do they continue in terms of tightening, but in fact they don't really need to, because the currency is doing a lot of the work for them.
Could some of the alternative assets that investors look at be some Chinese shares? I mean, we have seen more spending coming from Beijing at a time when they didn't necessarily move on the loan prime rates today. What are you expecting?
Yeah, I think the key, especially for Chinese equities, given the punitive tariffs that are on China, I think investors are expecting a lot more stimulus. So we did see a strong surge in fiscal spending in Q1, but there needs to be more in terms of on the fiscal policy side, and of course on the monetary policy side, because of course you want to see that the economy, which was in a lull before, now has even more challenges that it has to go through. So before we were dealing with, and we still are dealing with deflation, we're dealing with weak consumption, and then add this on top of it, that just exacerbates the weakness. So we've heard lots of positive messages, but it's really all about the implementation of these measures that come through. So we've heard a lot about the talk in terms of an RRR cut and more policy rate cuts, but it really will be about execution in terms of fiscal and monetary policy that really drives Chinese stocks. And I think that's going to be the key measure in terms of how we see Chinese stocks unfold, how we see sentiment unfold towards China in the coming weeks.
Our M-Life Strategist Mary Nicola there with some of those trades that are in focus these days, especially as we continue to see the uncertainty over President Trump's tariff war. At the same time, we continue to watch treasuries. We continue to see the long-dated yields gaining ground, the steepening of the curve ongoing. Our next guest says the uncertainty introduced by the U.S. administration has undermined the status of treasuries and the dollar. Let's bring in Tuha Chow, head of fixed income Asia at Robeco. Tuha, great to have you with us. I mean, this whole narrative of the yield curve steepening in the U.S., the really confidence lacking when it comes to U.S. assets, has something fundamentally changed in the dynamics of the treasury markets now?
Yes, and I think the kind of the rhetoric around Powell's appointment or maybe the removal of him is actually again adding to this kind of institutional independence that I think that had actually been long been something that we actually look to the US for. And I think that and these kind of rhetoric continues to actually make investors increase the uncertainty, increase the risk premium globally, but actually also the relative risk premium between the US and the rest of the world is also changing at a rapid speed.
Do you expect to see continued steeper yield curves? Because on the other side, if we do actually see the speculation about Fed Chair Powell being replaced, the potential could be an outright flight to treasuries, in fact. Could we see the reversal of this trend happening?
I think at the long end, it's a bit harder because I think the risk premium will probably continue to increase if we're concerned about the Fed's independence. However, it could actually introduce very, much more near-term kind of economic downturn for the US, and therefore that could actually mean that, near term they may have to cut, but actually the long end is going to be something that the risk premium may continue to increase. Now, unless the Fed is able to try to control the long end by reintroducing quantitative easing again, or yield curve control at the long end.
We heard from Secretary Scott Bessent trying to calm investors, talking about the U.S. Treasury having a big toolkit if the bond market sees further signs of instability. What could these be, and what are your expectations for the gyrations that we've seen in this market?
Yeah, I think there definitely could be some policies to kind of allow U.S. banks to hold more treasuries. There could definitely say introduction of to ask the Fed to control the long end yield curves. But I think structurally that could probably basically move, foreign investors away from the U.S. and actually that to be forced into the hands of more U.S. domestics holding more treasuries than they had been. That shift changing over the long run.
In the meantime, we have seen this threat to perhaps what we've been calling U.S. exceptionalism actually give rise to emerging market local bonds rallying. We saw the best start to 2025 since 2022. So especially when it comes to dollar rivals, are you expecting this trend to continue? Thai bonds have rallied in the last few weeks as well.
I think so. I think given that some of these economies have more room, given that the more deflationary pressures that are happening to cut, and now with the economic kind of uncertainty allowing them to cut, so that there's and with the dollar no longer being that constraining kind of strong, the US dollar does allow some of these economies to actually have policies that actually more, especially if their economies are much more domestic focused, to be able to maneuver themselves a little bit better. Again, as I said, the relativity riskiness of these local markets versus the US has actually now be shrinking, with the US kind of increasing its risk premium relative to these countries.
And of course, at a time when we continue to see perhaps Asian central banks a little bit on the wait-and-see mode, are we expecting the easing to turn into an easing bias very soon? We have Indonesia, for example, this week expected to hold.
Indonesia is kind of a bit exceptional because it has some domestic issues in itself in terms of causing some risk premium to be added there. But I think for the rest of Asia, there is definitely much more easing bias because they have to defend the currency less. I think once the dust settles from all of these, we do think that actually over the long run that, diversification is going to be key. And therefore, investors will have a wider ranging of bonds and currencies that they would actually need to hold. And I think that one of the beneficiaries could be kind of emerging market and Asian currencies and bond markets that had been less in attention relative to the US.
What could those be across Asia?
I think India could be very interesting. I think we also think that the Philippines, which is very much domestic focus, could also be seen as interest. And other countries which have good surpluses, such as Singapore, could find their savers increasingly deciding to actually, reorientate their investment within the local markets as well.
We have seen actually the rupee outperform. We have seen also the Japanese yen outperform. What are the dynamics here at a time when the BOJ is also expected to continue hiking rates?
Yeah, I think the Japan story is very interesting. I think as you can see in Japan that, over the last kind of nearly 2 years now, they have been trying to improve both their capital markets, both in terms of the equity and the bond market, with the view that actually this would be an attractive market not only for domestic saving pools, but actually for others as well. And this could, mean that actually with the U.S. diversification away from the U.S., Japanese assets could be beneficiary once we get some sort of stability happening.
Yeah, we have heard from 2 Japanese life insurers already that they plan to buy more domestic notes. Is this a new trend?
I think it's a structural trend that actually has been kind of ongoing for some time, but actually now accelerated by the diversification away from the US. I think is to say these, obviously an increasing in yield levels within Japan was going to be helpful. And that's why, that normalization of policy. But I think even more structurally now is to do with the fact that actually the volatility within the US would also kind of validate savers to actually move closer to home in some of their domestic allocations.
And you mentioned, of course, the attractiveness of perhaps the rupee these days with its outperformance, given, of course, the perception that India might be more insulated from tariff news, from the trade war with the Trump administration. Could their bonds, especially when it comes to investment-grade corporate dollar bonds, look more attractive?
I think so. I think definitely, India is going to benefit from deflationary pressures, given that the commodity and energy prices are declining. So that's going to be very helpful. And again, they're not really the target of a lot of these tariffs, as well as the fact that they could be seen as one of those beneficiaries to that is extremely important to the U.S. administration in terms of its policy to aggression towards China, and India could be seen as one of those countries that it's good for them to kind of link those ties to.
India has been seen as a diversifier also away from China. What are you expecting in terms of some of the opportunities in this market at a time when we haven't necessarily seen any moves when it comes to loan prime rates in today's session? Are we expecting anything else coming from the monetary side of things?
I think there's definitely room for them to cut a bit more, but I think like everybody else, I think given the barrage of kind of news that people are having to digest, I think it validates to kind of wait and see how and when that gets trajectory. But the trajectory is very clear that actually that they can definitely have room to ease monetary conditions. I think it's still relatively restrictive in India at the moment, so that the trajectory, but timing wise, I think it's a bit harder because I said the amount of information and headlines that investors and policymaking are having to deal with, that does give them room to kind of think, oh, let's pause and act strategically rather than rush into actions.
That's the case for the PBOC as well?
Yes, I think the PBOC is already front-loaded. I mean, it's on fiscal-wise. I think it's been very clear, and I think this is the first time we've seen fiscal being quite aggressive. But in terms of monetary, I think for now they say they've left the LPRs on hold. I think they probably would decide to do a triple R cut before they decide to cut the loan rates.
And what would be the implications for the Chinese bond space?
I think that, we definitely see that is an area where, it could still be, quite positive on that side of things. I think the allocation to China bond has actually, not been very aggressive. I think the lower yield rates have been one of the issues relative to elsewhere. But I think as we see clarity in the policy trajectory that China is instituting, I think, there is still definitely more upside to go in Chinese bonds.
Are you seeing any clarity when it comes to the Chinese yuan and how policymakers are planning to use the weakness or strength of the yuan when it comes to trade negotiations?
I think they have an incentive to actually keep it relatively stable. I think it's weakened, more because of the weakness, versus other currencies already. So I think, stability is actually going to be very key. And I don't think that they feel like they will need to use, currency as a policy tool. And actually at this point to maintain stability is probably the best tool that they can actually institute to keep the yuan being a currency that people can have a bit more faith in.
That's been the speculation when it comes to Chinese treasury holdings as well, right? But what's been interesting is now Deutsche Bank saying that Chinese clients have reduced some of the treasury holdings in favor of European debt. Are you seeing already the moves in the private sector?
I think the private sector kind of really moved very early on in the year, and we think that continues. And I think the European story has been very interesting for investors because, again, it was the European story was such a negative story going into the year that, the allocations were relatively low. It was a very easy trade for private investors to move that way. But as the European story starts to pan out and as being, an alternative to the US, I think, again, as I said, diversification is key to private investors. And I think they'll be holding a much more diversified portfolio in the long run than they had been, until this point. And I think, all other assets could benefit from, this kind of diversification away from US concentration.
Tuha Chow, Head of Fixed Income Asia at Robeco. Good to have you with us as we continue to see the markets really move away from the U.S. dollar in today's session, the yen gaining ground, the offshore yuan gaining ground. And of course, we're seeing other assets also gaining in today's session. A little bit of thin trading given that some markets are still closed, including Australia, Hong Kong, and New Zealand as well. Still ahead, Anand Rathi Wealth joins us with her outlook on Indian markets as New Delhi prepares to welcome J.D. Vance for tariff talks. This is Bloomberg.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends.
Get ahead of them. And so many more.
You're watching Insights. Here are some of the top corporate stories that we're tracking. Boeing has begun returning 737 MAX jets to the U.S. that were refused by Chinese airline customers. According to data from Flight Radar 24, a jet intended for delivery to Xiamen Air flew back to Guam after arriving in China last month. Bloomberg reported last week that China has told state-run airlines to stop taking delivery of Boeing jets. Tesla's planned rollout of its cheaper cars, including a lower-cost Model Y, has reportedly been delayed by at least 3 months. The Reuters report didn't give a reason for the delay. Tesla is due to report earnings Tuesday, with investors looking for guidance on how it intends to turn around its shrinking market share. Elon Musk has revived his long-awaited plans to visit India after speaking with Prime Minister Narendra Modi. The Tesla CEO had been due to visit a year ago, but postponed the trip at the last minute, citing pressing issues at his auto company at the time. Tesla has long wanted to enter India, but disagreements over import duties and local manufacturing commitments have stalled progress. Take a look at how Asian assets are trading right now. We're seeing a little bit of a mixed picture as the Nikkei is falling more than 1.5%. The Taiwanese stock market also under pressure. The Kospi is holding steady. Of course, we're still digesting a lot of news around tariffs and trade. We continue to watch the U.S. dollar now trading at the lowest level since December of 2023. And on the other side of that trade, you have strength for the Japanese yen, strength for the Korean won as well. So you're really seeing the MSCI Asia Pacific not doing much at the moment. There's a push and pull happening across the markets right now. We do have a few markets also still away on Easter holidays, including Australia, Hong Kong, and New Zealand. But take a look right now at what's happening with U.S. futures, because we had seen stocks gain marginally last week, but it's going to be a week heavy on economic data, and it's really going to allow us to sort of parse out what happens when it comes to those tariff effects on the broader economy. We do have PMIs from Japan to Europe to the U.S. that we'll be gauging. And take a look at how U.S. Treasuries are also trading at the moment, because they're pretty mixed. The curve continuing to steepen. The long-dated Treasuries weaker. 2-year contracts still firmer. Of course, we continue to listen to those speculations around the confidence on U.S. assets, including Treasuries and the U.S. dollar as well. Coming up, Japan's Prime Minister thinks trade talks between Tokyo and Washington could be a model for the world. The latest developments on a potential deal next. This is Bloomberg. Welcome back. You're watching Inside. Take a look at how Chinese assets have been trading today, because, of course, we're also digesting the loan prime rates Chinese banks have kept unchanged in the month of April. We're also digesting Chinese policymakers coming out and talking about countermeasures against the U.S. that China firmly opposes any deal harming China's interests, according to the Commerce Ministry. We had already seen China's government spending rising at the fastest rate for any first quarter since 2022. So we have seen Beijing really trying to insulate the Chinese economy. As you can see right there, the CSI 300 gaining 0.2%, continuing a little bit of that strength that we saw last week as well. Although Hong Kong is away on holidays today, closed alongside Australia and New Zealand, the offshore yuan strengthening against the U.S. dollar. Take a look at how Japan is also faring, because we have seen that strength on the Japanese yen as well. The highest level since September against the U.S. dollar, continuing to extend those gains after 3 weeks of gains already. The Nikkei under pressure, down more than 1.4% for the Nikkei, and the yen really headed towards that 140 level. We continue to watch really JGBs on the long-dated maturity end, because we have seen those yields shoot up, of course, following treasuries as well. But we've also heard from 2 Japanese life insurers saying that they plan to buy more domestic notes. Of course, all of this in consideration of yields skyrocketing across Japan and really shifting away from foreign debt. All of this as we're watching, of course, the auto sector, the semi-sector, anything that will be really affected by trade negotiations. Those negotiations between Tokyo and Washington set to continue this week. And Prime Minister Shigeru Ishiba now saying that the outcome could be a model for other nations trying to avoid higher levies. For more, let's bring in Bloomberg's John Herskovitz. And John, of course, we have heard a little bit of the results coming from last week's trade negotiations. We have the finance minister and Secretary Bessent actually meeting this week as well. What can we expect to be on the table?
Well, Japan has kind of floated what they want to be on the table. They've talked, in local media, we've seen some talk about autos and agriculture. Japan is looking at doing some non-tariff barriers in terms of inspections, safety requirements, which the U.S. sees as preventing its cars from making it to the Japanese market. There's also been some talk about rice, decreasing tariffs here, and soybeans for purchases of more U.S. agricultural products. That's what Japan wants. What the U.S. wants may be a different matter. So we'll see what happens when they begin talks second round later this week.
It's really funny when we talk about the U.S. wanting their cars in Japanese roads, because if you think about it, those gigantic cars would not fit in these Japanese small roads. But it's not going to be popular among the Japanese public. I mean, especially when it comes to rice. That's a very sensitive topic here domestically.
No, exactly. You have, like, the rice farmers are a strong agricultural constituent for the ruling LDP and have been that way for years. It's also part of the culture, and the rice culture is ingrained in this country, and there's a matter of food security. Now, sometimes when Japan's been forced into these sort of things, they've used foreign rice for things like animal feed. And the idea of, like, U.S. rice getting on ships and coming and being sold in Japanese markets may be far off, but there could still be some more purchases of U.S. agricultural products and rice coming into Japan.
Prime Minister Ishiba saying that these negotiations could actually be a model for the rest of the world, and we know that South Korea could be next in the trade talks.
Exactly. And the first major trade talks were between, since the Liberation Day terrorists were
so-called Liberation
Day. Yeah, were between Japan and the U.S. And it's such an important trading relationship. And one with South Korea is also an important one. Now, if these talks go well, it bodes well for other countries who are trying to make their deals with the U.S. If these things get hung up, it could also be a model for the world of how things could go wrong. Japan is trying to do this as a way in which everyone wins, realizing there's some things that they could do to make more access to the U.S., and also looking at the U.S., which has been a source of Japanese foreign direct investment for years. Anyone in the U.S. knows about Japanese companies that are there, the automakers there that are turning out pickup trucks in Texas and other parts of the U.S. So, the relationship is there, and Japan is hoping that it's a win for both sides.
The relationship is there both for Japan and in South Korea, but I really do not want to be a negotiator on that table, because if you think about it, it's so difficult to sort of gauge what the Trump administration wants, right? What President Trump wants. I mean, he's been talking about so many different things that have been an issue for him, whether it's a weak Japanese yen or whether it's really supporting the U.S. military and the protections awarded not only to Japan but also to South Korea.
No, exactly. And it's whether they'll be bunched in. There are a lot of grievances that Trump has. He's called Japan a security freeloader, not exactly what you'd want to call one of your longest allies. And whether these are part of the trade talks or not is another matter. And Prime Minister Ishiba in Japan wants them separate. I'm sure South Korea does as well. South Korea actually reached an agreement, I think last year, for military funding. Trump wants to reopen it. He wants Japan and South Korea to pay more. And if this is part of the trade talks, it's really going to be a difficult non-starter for Japan and South Korea.
Yeah, it's going to be a very complicated set of negotiations. Great to have you with us, John Herskovitz here at Bloomberg, with those trade negotiations for those two trading partners for Washington. We're also watching Beijing because it's saying it's firmly opposed to any party reaching a trade deal at the expense of Chinese interests. That follows reports that the U.S. is looking to pressure other countries to curb trade with China as part of their reciprocal tariff negotiations. For more, let's bring in our China correspondent, Min Lo. So, Min, we continue to see this very defiant stance coming from Beijing.
Yes, and this is a clear warning shot from China that any other country that tries to cut a deal with the U.S. that in a way that undercuts Chinese interests is going to face some consequences. It didn't spell out what sort of countermeasures it's going to take, but it did say it is going to take steps to fight for its rights and interests. And this comes, as you said, South Korea, Japan, Vietnam, some countries in Southeast Asia are all heading into talks with the U.S. And it comes on the heels of President Xi's trip to Southeast Asia, where he left a consistent message in each of these countries, calling for the countries to jointly oppose U.S. hegemony. And there you can see on the screen this statement from the Ministry of Commerce saying the so-called exemptions at the expense of others' interests is equivalent to seeking the skin of a tiger, which will ultimately fail on both ends and harm others without benefiting oneself. And this is quite interesting because it kind of alludes to the idea that maybe the U.S. is not necessarily a reliable partner, that cooperating with the U.S. doesn't necessarily mean you could get lower tariffs. Just look at what happened with Canada. So China is really positioning itself as this counterparty that is stable, reliable. It's signed dozens of deals with the Southeast Asian countries. And of course, the question next is what these other countries, these U.S. allies are going to do, because we did see the Spanish Prime Minister, for instance, visiting Beijing in defiance of threats from Scott Bessent. We saw the Malaysian Prime Minister piling praises on President Xi as well. So we'll have to see how these other countries try to navigate and not to offend both sides, both the U.S. and China.
I mean, Beijing is really playing it very strategically, right? Beefing up its diplomacy, but also trying to beef up its economy. What government spending in the first quarter rising at the fastest pace in about 3 years.
Yes, it's risen by about 5.6% in the first quarter alone. So the government has been ramping up and accelerating the pace of implementing its budget. But we also heard from Premier Li Qiang on Friday calling on officials to have to think out of the box when it comes to implementing a well-coordinated policy mix. And all eyes are on that April Politburo meeting and what exactly the government is going to do. And we got a hint over the weekend where the Ministry of Commerce pledged to help companies, exporters in particular, to divert sales to the domestic market. And we saw all these big e-commerce platforms that are stepping up to do their part. Alibaba, JD.com, Tencent, for example. JD.com is one company that has said it's putting aside 200 billion yuan at least in the coming year to buy up goods from exporters, to hold on to them and to divert that to the local market in support of these exporters that are going to be hard hit by tariffs. So we'll have to see what sort of other innovative approach the Chinese government has.
Especially at a time when the U.S. continues to apply pressure, right? We are now seeing proposals to impose tariffs on Chinese vessels as well. So what will be the implications of that?
Yeah, so it's very interesting that we are actually seeing Korean shipbuilders today leading the Kospi down. Big drop after Nomura had downgraded the sector. And it's interesting because we saw these Korean stocks gaining at the expense of Chinese shipbuilders on Friday. But now we're seeing a different narrative here. Nomura is saying that even though it's going to be the Chinese shipbuilders that are paying the levies, it doesn't mean that Korean shipbuilders can then impose a premium on their products and services. And it's saying that because the tariffs are going to cause global demand to come down, it's going to affect the global sector, whether it's the South Koreans or Chinese. The Chinese are the largest shipbuilder in the world. The Koreans come second. And of course, importers are saying they're going to have to pass on some of this cost to consumers. It's going to lead to inflation. And this is still the beginning of this because the levies are being proposed by the U.S. It's not fully enforced yet. We haven't heard from China in terms of how they might respond. If China respond with retaliatory tariffs, imposing levies on vessels carrying U.S. goods to China, that could complicate things even further as well.
Bloomberg China correspondent Min Lo there with the latest on those trade tensions between Washington and Beijing. And coming up on the Insight, India now set to host J.D. Vance today as New Delhi seeks relief from President Trump's tariffs. A closer look at what's at stake next. This is Bloomberg. Welcome back. U.S. Vice President J.D. Vance is due to meet with India's Prime Minister today as Narendra Modi seeks to avoid a 26% so-called reciprocal tariff rate. Bloomberg's Shruti Srivastava joins us from New Delhi with the details. Shruti, so what is J.D. Vance hoping to achieve here?
So U.S. Vice President J.D. Vance would be on his first ever official visit to India. And he's on a 4-day visit where he would be meeting Prime Minister Narendra Modi and some of the key ministers and officials in his administration. Now, his visit, of course, comes against the backdrop of the ongoing trade war that the U.S. President Donald Trump has sparked. Now, Trump has slapped so-called reciprocal tariff on some 60 nations, including India, and those tariffs have been paused. So these talks are critical from India's perspective, which is negotiating a bilateral trade deal with the U.S. In a bid to narrow down the trade surplus it enjoys with Washington, and also to dismantle some of the high tariffs which Trump has criticized in the past, some of the high tariffs and non-tariff barriers both. So obviously, top of the agenda of Vance's visit would be trade talks. Officials in the Trump administration have named India as one of those several countries with whom the U.S. is prioritizing trade talks. And the 90-day pause is being viewed by officials in New Delhi as a window of opportunity to secure a quick deal with the US and get some reprieve from the reciprocal tariff. So Vance and Modi would definitely be discussing trade and tariffs. But of course, they would also be discussing about defense ties, regional security cooperation, energy security, and forging deeper ties in technology. During Modi's visit to Washington in February, the two leaders had agreed to forge deeper ties in these segments. So that is, of course, India has agreed to buy more American goods, more oil and gas, more defense equipment from the US. So, of course, that also would be on the table for discussion. The two nations have also agreed to, have a resilient supply chain in critical minerals and semiconductors. So I think we will see some of the discussions on that as well.
And another Trump administration official that could be visiting India is Elon Musk, but he would be dealing with other issues related to his own business. What are we expecting?
So yes, Modi and Musk spoke last week and they discussed technology, of course. Musk in return tweeted that he would be visiting India sometime soon. Of course, there is no date yet, but this has again raised hope among officials in New Delhi that maybe we would soon see Tesla entering the Indian market. Now, that is one of the long pending, demand of Musk. It has sought India to lower tariffs on electric vehicles. Its auto segment, something which India has chosen not to do specifically for one company. So I think we can see more progress on that front. Musk's Starlink has already entered into a partnership with two of India's leading businesses. So that also gives hope that some of the hurdles which Starlink has faced may be, reconsidered by the Indian officials.
Bloomberg's Shruti Srivastava, good to have you with us on that expected visit from Trump administration officials to India. Take a look at how the markets there are getting underway, because we continue to see that rally that have propelled Indian stocks to the highest level since January. And you can see the broad upside as we continue to digest every little bit of tariff news that we're getting, with J.D. Vance also visiting India this week. But it's been really about the optimism, about the muted impact of tariff-related volatility on the Indian markets that have propelled these stocks higher. And you're taking a look at these Indian banks also. With ICICI, for example, the second largest private lender there, beating analyst expectations. Same for HDFC. We continue to see some of these bank names trading at record highs, rising optimism again that agreements will be reached with the U.S. on those higher tariffs, but also just potentially a more optimistic outlook on the broader Indian economy as well. Joining us now is Shweta Rajani, head of mutual funds at Anand Rathi Wealth. Shweta, really good to have you with us. Do you buy into this optimism about the Indian markets?
Hello, good morning. Absolutely. If you see, this is clear-cut, a very good time to be in the Indian market. And the optimism that you're seeing right now is clearly because India is likely to be fairly resilient from this entire, tariff war situation and the global uncertainty which is there. The Indian outlook itself, the fundamentals are going pretty strong at this point of time. And that's what we've seen in the earnings season as well. That so far, it's almost 30% of the index which is declared results. But within that, banking and financial services have been most of the companies that have declared results there. And it's all been double-digit growth. So I think that's bringing back. We're also seeing, if I have to say just a green shoot, but the last 2-3 days, FI has been net buyers in Indian equities. So yeah, fundamentals being strong, sentiments turning positive, earnings coming in, very much positive is all leading to this optimism that you're seeing. And in my view, this is likely to continue over the medium term.
President Trump, though, has also threatened potential tariffs on the pharmaceutical sector. Of course, we know that drug makers are big across the Indian market. Is this a concern in perhaps some sectors of the Indian market that could get hit?
But absolutely. There would be certain sectors where, there could be a tariff hit and therefore there could be certain issues coming in there, earnings, taking a drag in those sectors, be it, pharma is, you said one, IT not directly hit, but then because of, lower cost, it could have an ancillary downside impact to it. Auto ancillaries could be another one. So yes, there would be a few sectors which would be negatively impacted. But a lot of your domestic-oriented sectors, could also benefit because we are expecting consumption to go up. Banking and financial services would be another one to be fairly resilient. Private capex is supposed to, there is an expectation that we could see some pick up in that space. So sectors related to that, call it, building materials, cement, all of that could be on the positive side. So if you see, there would be a mixed bag. But when I'm looking at Nifty, the weightage of the domestic-oriented sectors would be far more. And therefore, from an overall market perspective, we could see, markets to be on the positive side and earnings growth of, maybe a 10-12% over the financial year 26 looks like a possibility.
More upside if we continue to see easing coming from the central bank?
Absolutely, that would be, and we've already seen a 50 bips of rate cut right now. The expectation on rainfall is that monsoon could be normal. We're already seeing inflation softening, so inflation is not so much of a worry. At the same point of time, government is focused on boosting growth. So all this means that softening of rate cuts in India are very much a possibility. I think the bond yields have also reflected that another 50 bips of rate cut seems like priced in. That should come in. And if that actually happens, we could see sentiments turning positive. Sentiments have already turned positive, continuing to be positive, and it positively impacting the equity markets.
Results from banks have been pretty positive so far, but what happens if the central bank continues to cut rates?
So, like I said, from a bank treasury standpoint, some bit of this is already priced in the profits. Softening of the rates would work. I would say overall, if I look at the bigger picture, yes, we are also expecting the credit growth to pick up. The asset quality of the banks, we've seen a slight improvement over there. I'd say, stable to slight improvement across banks. So overall, it should be positive for the overall banking and financial services, whether it's banks, NBFCs. Yes, that's one positive sector.
Just a couple of years ago, Shweta, the exuberance over the Indian equity markets was really capped by the fact that Indian stocks were pretty expensive. What are valuations looking like today?
So, if we see from a 26,200 peak that we've seen in September to now where we are touching 24,000 levels, it's a 8-9% odd correction that we are sitting on. This is brought the valuations to what I would call as a fair value zone. If I'm looking at forward P, we are sitting at around 18.5, 19 forward P, which is very closer to the 15-year long-term average. If I'm looking at the trailing P, the trailing also at 21.5 is pretty much closer to the long-term averages. And given that you're expecting earnings growth to be slightly above your average long-term averages at 12%, I think this is clearly the fair value. Good time to enter into equity. Anybody, looking at building their equity positions right now.
When it comes to the strength and outperformance of the rupee that we've seen recently, will that have implications for exporters that need to do business overseas?
So in the short term, I would say, yes, that could be an implication. We could see increased volatility in the way the rupee is behaving.
गाइस सेलिंग का ध्यान रखना क्रूड ऑयल में, ठीक है। बायर्स निकल जाना, बायर्स का हो गया टारगेट डन एंड सेलिंग की एंट्री हो चुकी है यहाँ पर क्रूड ऑयल में। कितनी देर होल्ड करता है, अब दोबारा मत करना सेल, ठीक है। आना होगा एक ही बार में आ जाएगा नीचे। बाकी देखो टारगेट थोड़ा बड़ा रखा हुआ है, इसको दो पार्ट्स में डिवाइड करके रखना। फर्स्ट पार्ट आपका रहेगा टारगेट 5390 के अराउंड एंड उसके नीचे अगर सस्टेन करता है तब फिर जो नीचे वाला टारगेट रहेगा वो फाइनल टारगेट रहेगा, विच इज़ अराउंड 66 पॉइंट। वैसा तो आने को आ ही जाएगा, बट डिवाइड करके चलना ट्रेल करने के लिए, ठीक है। पहली ब्लू कलर की लाइन फर्स्ट टारगेट, उसके नीचे आता है तो ये सेकंड टारगेट। गॉट इट। अब दोबारा वापस आएगा तो दोबारा सेल नहीं करेंगे, ठीक है। फिर नेक्स्ट रेजिस्टेंस है, बायर निकल गए होंगे, बायर का टारगेट हो गया, अच्छा टारगेट मिल गया था लगभग 85 पॉइंट फ्यूचर में। कल की रेंज ब्रेक करी है तो बढ़िया है, कल की रेंज ब्रेक कर दी है ना, अब थोड़ा सा साइडवेज तो नहीं रहेगा मार्केट। Harry is yesterday missing levels, so I did not make more action. Can I have Nasdaq support and resistance? देख लेते हैं Nasdaq का। ओ मेरा नाम, उसको ट्रेड कर लेना, बुक कर लिया ना बाइक वाला। बाइक वाला तो बुक हो गया ऑलरेडी। सेलिंग में है फिटनेक्स, ठीक है। Nasdaq को देखोगे फिलहाल के लिए लोअर एंड से हायर एंड से सेल ऑफ ही चल रहा था, कल थोड़ी बहुत रिटर्न किया है मार्केट ने, रेंज तो ब्रेक हो गई है खैर। लाइक भी करते रहो गाइस, बीच बीच में रुकना नहीं है। यहाँ पर हो सकता है कहीं पर, हाँ ये ठीक है। हाँ क्रूड में सेलिंग का ट्रेड चल रहा है ऑलरेडी। नैस्डैक को देखोगे तो ऑलरेडी कल मार्केट ने मेजर सपोर्ट का ब्रेकडाउन कर दिया था, तो रीटेस्ट है, ऊपर सेल कर सकते हो यार। ऊपर 18,060 से लेकर 18,110 के बीच में कहीं पर भी सेल कर सकते हो। मेजर सपोर्ट ब्रेक हुआ है, रेजिस्टेंस बन गया है वो। वापस सेल किया तो वेल एंड गुड, वापस आता है तो 18,070 से 18,110 के बीच में कहीं पर भी सेल कर सकते हो। लास्ट एसएल 18,180 के आसपास ही रखना, उससे बड़ा एसएल मत रखना। बाकी नीचे सपोर्ट अगर देखो, ओवरऑल व्यू बेरिश ही है जब तक ये वापस अब 18,200 के ऊपर सस्टेन नहीं करता, एटलीस्ट इन 15 मिनट टाइम फ्रेम। नीचे देखो सपोर्ट कुछ ऐसा खास दिख तो नहीं रहा, ऊपर वही रेजिस्टेंस ही है जो रीटेस्ट ही है जो रेजिस्टेंस की तरह काम करेगा। बाकी और कोई रेजिस्टेंस सपोर्ट नीचे नहीं, यहाँ तो दिख ही नहीं रहा, कुछ भी नहीं है। ठीक है, बाकी देखो सपोर्ट कल का जो लो बना है वही कंसीडर करना पड़ेगा, उसके अलावा नीचे कोई और सपोर्ट 15 मिनट पे तो दिख नहीं रहा है। ठीक है, लोअर एंड पे मार्केट के पास 17,670 से 17,640 के अराउंड जो लेवल रहेगा वो एज अ सपोर्ट की तरह ले सकते हो। तो ये दो लेवल के तौर पे इनको रख लो एज अ रेजिस्टेंस एंड एज अ सपोर्ट। इन 15 मिनट आईजी ब्रोकर का चार्ट है ये। बाकी 7:30 पे एक डेटा भी है, उसका भी ध्यान रख लेना, इम्पैक्ट करता है रिचमंड मैन्युफैक्चरिंग इंडेक्स का जो डेटा है। नेचुरल गैस की कितना स्लो मूव है। लाइक रुकने नहीं चाहिए गाइस, लाइक सभी लोग करते रहे, सभी लोग जो लोग मुझे व्हाट्सएप पे मैसेज करते हैं प्लीज़ लाइव में पूछ लिया करो, मैं व्हाट्सएप पे नहीं रिप्लाई करता हूँ, देखता ही बहुत कम हूँ, व्हाट्सएप पे देख के रिप्लाई फिर नहीं करा जा सकता, स्पेशली अगर आप क्वेश्चन पूछ रहे हो रिगार्डिंग द योर ओपन पोजीशन। बेस्ट रहेगा लाइव में पूछ लिया करो, ऑन द स्पॉट आंसर मिल जाएगा। इंडियन मार्केट क्लोज जाएगा 3:30 पे, शायद थोड़ा और वॉल्यूम आ जाए, अभी तो लंदन सेशन से जितना वॉल्यूम आ रहा है, ओपन है आज लंदन सेशन तो वहीं से वॉल्यूम है। US says major trade progress made with India during Vance visit. की लाइन पे हाफ प्रॉफिट होकर के ट्रेल कर लेना भाई, ठीक है, नीचे आएगा फाइनल टारगेट फिर ट्रेल के लिए जाना। गॉट इट।
Taking a softer tone with allies over the last week?
I think it is fair, given the fact that he joined those negotiations yesterday, came out and said, I'm going to be part of the negotiations. I believe they sat with the president himself for 50 minutes before sitting down with Scott Bessent and Commerce Secretary Howard Lutnick. And then today, who do you have arriving in Washington, D.C. to try to have an olive branch? This whisper of Europe, Giorgia Meloni, the head of Italy, coming to town. She is going to try to help the European Union get over the finish line with some sort of deal for this reprieve that they're dealing with right now, these 90 days.
Some kind of deal, some kind of relief. The auto sector's looking for the same thing. What we saw yesterday in retail sales were consumers front-loading purchases, and you saw that in sales of autos as well, specifically. Purchases of autos up more than 5% in the month of March. Ford getting ready to raise prices on cars coming out of the factories as soon as May. That's how much time we've got here.
I think the issue you take with this, if you look at, say, Ford having to do this, Ford is looking at raising prices. Ford is the best positioned auto manufacturer in the United States because some 80% of their cars are made in the U.S. And even they're saying we are unable to withstand this 25% levy. And we're going to have to look at, and all these tariffs, we're going to have to look at potentially raising these prices. It also comes at a time the president insinuated earlier this week that he may give the auto sector a reprieve. Still, corporate America is saying we don't know yet. So guess what? We're going to have to put the prices higher on consumers.
This market whipsawed right now between trade talk hopes, trade talk fears. This morning, trade talk hopes. It's frustrating, isn't it? Futures are up by about 0.75% on the S&P 500. Later on this morning at 8:30 Eastern Time, you'll have jobless claims. Before that, an ECB rate decision. So a couple of things to look for going into the long weekend. Coming up this hour, we'll catch up with Sharon Bell of Goldman Sachs as the volatility continues. Tobin Marcus of Wolf Research as Trump signals progress in trade talks. And Angelo Zeno of CFRA on the latest tech sell-off. We begin this hour with stocks rising on positive signs from US-Japan trade talks. The team over at Goldman Sachs staying somewhat cautious, writing the following. We would argue that we are in an event-driven bear market triggered by tariffs. However, it could easily morph into a cyclical bear market given growing recession risks. Goldman's Sharon Bow joins us now for more. Sharon, welcome back to the programme. Let's sit on those recession risks. Is it fair to say that they're receding over the last week, or are they still elevated from your standpoint?
I think they're still elevated. Whether they're absolutely at peak, perhaps they've receded from those peak levels when there was no scope for negotiation on these tariffs. Now that clearly has started, but they're still relatively high. I think we regard it as 45% chance of a recession in the US over this next year. That's a relatively high chance versus a standard year, and that's because of all this volatility and all this uncertainty.
This market lost a lot of confidence in US policy at the start of this month, Sharon. In the eyes of the Europeans, can you talk to us about changing perceptions of US assets? Have they been damaged over the past few weeks, and how repairable is that damage?
So Europeans have loved US assets in the last 10, 15 years. You've absolutely seen Europeans pivot towards the US, and you see this in many different guises. For example, companies, corporates invested more in the US. They moved more of their divisions to the US, etc. over time because the US has had much better growth. But also investors as well have loved the Mag 7. They've loved the opportunity to invest in tech stocks. They've loved the fact the dollar's been very, very strong. So Europeans absolutely love the US market. They've been one of the reasons that the US has done so well. You've seen a lot of flows into the US over time. That is being questioned a little bit, yes. I mean, not completely. I still think that the US over the next few years will outgrow Europe, but perhaps the gap will narrow a bit.
Can the flows make a U-turn if we get deals done within these 90 days?
I don't know if they will make a complete U-turn because there's a lot going on here. It's not just the tariffs. For example, it's the dominance of US tech globally. Is that now being questioned a little bit with competition, lower cost models coming from elsewhere, the extra capex and investment these companies are having to put in? They're no longer capital-light businesses, for example. It's other issues in Europe itself. For example, fiscal spend by Germany boosting growth in Europe. So I think that there's a combination of things here, and tariffs are just one part of that.
When it comes to looking at the entire policy perspective from the United States, I talked to the Treasury Secretary about this, and he said his advice to the investment community would be you have to look at everything together, the entire stool, which is tariffs, deregulation, and tax cuts. Do you get more bullish on the U.S. as we go down the calendar?
Because you're starting to see some of those other things come through, maybe tax cuts, etc. I think most of the tax cuts that we expect to happen will just be extension of the ones that are already in place. And I think most expect that to happen. So, yes, there may be a little bit of relief on that side, but the more that's done on that side, because the tariffs, whatever ultimately comes through, are probably inflationary, whatever relief you give the economy on the fiscal side will probably mean less relief on the monetary policy side. So, no, I don't necessarily think that that means a huge boost to growth.
Sharon, can we just sit on monetary policy? What are you expecting from monetary policy on either side of the Atlantic? We heard from Chairman Powell yesterday. We'll hear from President Lagarde later on this morning.
Yeah, well, we do expect the Fed to cut rates 3 times this year. We're not looking at a recession scenario. If we were, it would be deeper rate cuts. But we think that the Fed has got room to cut rates modestly from here. Although it's a balancing act, as Powell has pointed to, because the tariff and the tariff uncertainty is really causing a little bit of inflation risk to seep through into the US economy, even if there is lower economic growth. For the ECB, I think the equation's much easier, as we've been discussing earlier. I think the ECB will cut this week. Today, you've also got, in our view, more rate cuts to come from the ECB, down to about a rate level of 1.5% this year. And the reason for that is economic growth in Europe is not that strong, but you've not got the inflationary impulse from the tariffs that potentially you've got in the US.
If anything, Sharon, they might face a disinflationary bust. Now, I'm not sure that's anyone's base case right now, but let's say the walls stay up in the United States and the tariffs stay on. China's got a lot of overcapacity and Europe might have to eat it. What does that mean for some of the earnings across the continent and the prospect of disinflation in the months and years to come?
Yeah, I mean, not all things about disinflation are good news for Europe. Europe has suffered under too much inflation in recent years, and that's been a hit to the consumer. So obviously, if there's more imports of low-priced China goods into Europe, it's great for the consumer. Also, energy prices have come down. That's good for the consumer. So there are plenty of good things, but there are also some risks for, say, European manufacturing if you see more imports from China. So I agree it's a balance. I actually think European earnings this year for stock 600 companies, for example, won't be that strong. The reason for that is weaker global economic growth, but also tariff risk, falling energy prices hitting the energy stocks, and the stronger euro hitting all the dollar earners in the index as well.
But when it comes to consumers, hasn't the euro appreciating actually helped them? Because right now the Commission hasn't retaliated against the U.S. tariffs.
I know, look, the European consumer has been very beleaguered in recent years, particularly around COVID, around the energy crisis, incredibly high inflation, negative real income, generally weaker European currencies and a stronger dollar. All of it's been bad news for European consumers. But actually now I think we're starting to see the reverse of that. So definitely some winners in Europe from this. Lower cost goods potentially coming in, but also lower energy prices as well, and a bit of a stronger currency, giving them more purchasing power. I couldn't agree more with that. But it's a bit of a balance here. Consumers do a little bit better, but then other parts of industry may suffer. Having said all that, not super negative on European manufacturing. Obviously, you've got the fiscal spend and the defence spend coming through in Europe as well, which will give a boost to that.
Sharon, let's just finish on earnings season. On this side of the Atlantic, the financials projected confidence. We saw that from JP Morgan and for the institution you're a member of as well. What are we hearing on your side of the Atlantic? Because what we've seen from the luxury players, LVMH, Hermes, maybe a struggling Chinese consumer. What do you hear on your side of things?
Yeah, I don't think this is going to be a brilliant season for European companies. I think financials actually will do okay. Rates are still generally relatively high in Europe. Even if rates start to come down at the shorter end, long end rates still being relatively high, so steeper yield curve, not such a bad thing for some of the banks out there, financials. They're also often quite hedged for rates coming down too. So I'm not too worried about that group of companies, but there are others that perhaps will see a weaker first quarter. Those exposed to China, you mentioned, energy, for example, given energy prices have fallen through the quarter. So there are aspects, for example, of European earnings which are probably not going to see a stunning first quarter. Another sort of element of exposure is the dollar having fallen over that period of time. That's bad news for dollar earners, and they're a big portion of those in the European index.
Sharon, appreciate your time. As always, good to catch up. Send our best to the team. Sharon Bell there of Goldman Sachs on the latest over in Europe and their views on what's happening right here in the United States. Euro-dollar at the moment, euro-dollar 113.68. We heard it from LVMH, Pernod Ricard, seen it from Hermes as well. Bit of a struggle over in China.
Absolutely. That Chinese consumer is not holding up when it comes to luxury space. You know what's interesting as well about Hermes? They're talking about the fact that they're raising their prices as of May 1 in the United States to deal with the tariffs, because there's still a 10% tariff. Even though there's a reprieve on the higher reciprocal level, there's still a 10% tariff for those European goods coming to the U.S.
Some companies can get away with it, and I would say that's a company that can get away with it. We'll talk about them a little bit later. Let's give you an update on stories elsewhere this morning. Here is your Bloomberg Brief. President Donald Trump sharing on Truth Social that trade talks with Japanese officials have led to big progress. A deal has not been reached, but preparations are underway for a second round of talks later on this month. Elsewhere, Ford is preparing to raise prices on cars if President Donald Trump doesn't deliver on tariff relief. The price increase would affect vehicles built in May, but wouldn't change pricing for those already in inventory. And finally, Nvidia in the crosshairs of US-China trade tensions. The CEO, Jensen Huang, is in Beijing after the Trump administration curbed the sale of its H20 chips to the country. Huang reportedly meeting with clients, including DeepSeek's founder. This is going to be very interesting today at a time when the Chinese leader is going around meeting with Asian allies, trade partners, talking about one big Asian family.
And it looks like Jensen Huang is trying to get ahead of what is going on in the U.S. The fact that they're looking to curb more of their exports to China, and also they're looking into potentially if any of those chips, Jonathan, were used when it comes to DeepSeek.
More on NVIDIA later on this morning. Equity futures so far in the S&P nicely elevated going into the long weekend. Up next, the art of the trade deal.
The tariffs are larger than forecasters had expected, certainly larger than we expected, even in our upside case. We looked at a range of cases. All of this is highly uncertain. That's why we're waiting really to see what the policies ultimately are.
Up next on the program, Tobin Marcus of Wolf Research, live from New York City this morning. Good morning. Equity futures on the S&P positive here by 0.6% as the president says we get closer and closer to potentially a deal with Japan. Talks making, quote, great progress. Equity futures elsewhere on the Nasdaq up by about 1 full percentage point. In the bond market, yields declining for 3 consecutive sessions, so a bit of stability returning to the bond market. This morning, though, we snapped that streak. Yields high by 3 basis points at the front end of the curve on a 10-year up by 2. And the euro in focus with an ECB rate decision just around the corner. Euro dollar negative by a third of 1% to 113.65. Good morning, Mr. President. Putting this out on social media this morning. The ECB expected to cut interest rates again, and yet too late. Jerome Powell of the Fed, who is always too late and wrong, yesterday issued a report which was another and typical complete mess.
So basically, he's once again jawboning Jay Powell, this time comparing him to Christine Lagarde. How come she's cutting rates and you're not? Too late, should have lowered interest rates like the ECB long ago, he goes on to say, but he should certainly lower them now. Powell's termination cannot come fast enough. I spoke about this with the Treasury Secretary. He says nothing to worry about right now, but in the fall, Jonathan, they're going to be interviewing candidates to take over when Powell is over in May 2026.
Do you think it's fair enough that Chairman Powell won't get an interview? Do you think that's fair to say?
I think that's fair to say at this point, especially when the president is literally saying in black and white to the world, his termination cannot come fast enough.
Termination's a very interesting word. Does that mean we allow the term to expire, or do we explore something else? I think people will be thinking about that this morning. What does that word actually mean?
I think people will be thinking about that. And I will say, before I sat down with the Treasury Secretary, because we were promoting it, I actually got asked. People were asking me, because of that Supreme Court decision that said the president at this moment was entitled to oust those top officials at 2 independent agencies, there was concern in the market about whether or not he would try to oust Jay Powell. We have to remember the independence of the Fed is a cherished pillar of why you invest in the United States.
It will be interesting to see how the market interprets those comments and what kind of clarification we get from the administration later on this morning. Equity futures still just about positive by 0.5%. Under surveillance this morning, the art of the trade deal.
The tariffs are larger than forecasters had expected, certainly larger than we expected, even in our upside case. We looked at a range of cases. Our role is to make sure that this will be a one-time increase in prices and not something that turns into an ongoing inflation process. All of this is highly uncertain. We're thinking now, really before the tariffs have their effects, at how they might affect the economy, and that's why we're waiting really to see what the policies ultimately are.
Here's the latest this morning. Chairman Powell isn't blinking, keeping the focus on President Trump, stating, quote, big progress was made in the latest round of trade talks with Japan. Bloomberg's Tyler Kendall joins us now for more. Tyler, encouraging on the trade front between the United States and Japan. But that headline that just crossed the Bloomberg terminal, those comments from the president on Truth Social referring to the chairman of the Federal Reserve, Jay Powell. Your thoughts on that this morning, please.
Yeah, hey, John. Well, President Trump saying that Powell's termination can't come soon enough. Of course, we know that he's expected to leave his post in May of 2026. And as Anne-Marie said, she asked Scott Bessent earlier this week, who said no need to worry right now, but that they are going to start to look at other candidates starting in this fall. President Trump has long suggested that he should have some sort of comments over input when it comes to FOMC decisions. And he's really linked this directly to his tariff policies, often saying that lower interest rates would go hand in hand with him upping tariffs on our trading allies. So while, of course, President Trump has continued this trend, this perhaps appears to be the staunchest rhetoric that we have heard from him when it comes to an actual termination. Of course, NEC Chair Kevin Hassett has repeatedly said that this White House will respect the Fed's independence, but it remains to be seen if the rhetoric's going to keep ramping up as President Trump tries to imply that Powell is behind the curve.
Well, Powell yesterday said the tariffs are even higher than their upside scenario the Fed was modeling. Tyler, we had the Japanese delegation in yesterday, and today we have Georgia Maloney visiting Washington, D.C. What does she come with?
Right. Well, Anne-Marie, this is largely seen as a test as to whether or not Maloney can use her affinity with President Trump to try to advance trade talks, particularly when it comes to the European Union. Of course, we know Maloney was here for President Trump's inauguration, considered to have a relatively good relationship with this White House, as President Trump says that he will be directly involved in all of the negotiations going forward. It's our understanding that Maloney is coordinating closely with European Union officials, which their negotiations haven't necessarily gone as well. Bloomberg News reporting earlier this week that the EU trade chief left talks in Washington with very little clarity on exactly what this White House needs to get a deal done. Now, our reporting does indicate that Maloney is expected to propose that all tariffs should be eliminated on bilateral trade between the EU and the U.S., essentially creating a free trade zone. Really remains to be seen whether or not that's something that this White House would entertain. One proposal, though, that might actually get a little bit more traction. Maloney is also expected to suggest that there should be a EU and U.S. trade summit where allies can come and talk directly with senior administration officials, both on trade but also defense, because, Anne-Marie, we know that this administration in particular is pushing for our NATO allies to boost their defense spending, and that likely will make their way into the talks today.
Tyler, appreciate the update. Tyler Kendall in Washington, D.C. I think we've got a new top story. This from the president this morning. The ECB expected to cut interest rates once again, and yet too late. Jerome Powell of the Fed, who is always too late and wrong, yesterday issued a report which was another and typical complete mess. The president goes on to say too late should have lowered interest rates like the ECB long ago, but he should certainly lower them now. Powell's termination cannot come fast enough. Joining us now to discuss, Tobin Marcus of Wolf Research. Tobin, I would love your response to how you're interpreting that post from the president this morning.
Yeah, termination is not really the word that you necessarily would want to read from the President of the United States about the Fed chair. I do think that as a matter of prudence, it's still not likely that Trump is going to make a move to actually fire Powell. You know, as a legal matter, I do think that there's no real distinction between the Fed and the agencies where he has tried to establish a new right to dismiss independent agency heads like the FTC. So there's going to be litigation about that. To the extent that the administration succeeds in that litigation, that would establish his right to dismiss Powell. But I think that they're just not going to do it based on the market reaction. I mean, similarly, in their executive order asserting regulatory control over independent agencies, they made a point of saying the FOMC is not covered by this when it comes to monetary policy. And I think we're going to see the same approach in terms of personnel.
Tobin, are your clients concerned about Fed independence?
I think there are enough other things going on in markets that are concerning institutional investors that this is, at worst, kind of a vague worry in the back of people's minds. There's so much noise out of this administration, as we've seen in the tariff roller coaster since Liberation Day, that I think for the most part, this is going to need to be seen to be believed in terms of markets, like really trading this like it's materially impactful for their portfolios.
Do you have a sense who some of the administration's top candidates are to replace Jay Powell?
I think there's a lot of overlap with the names that were in conversation for the Treasury Secretary job last fall. I think Bessent is certainly a possibility. We could see the old Dick Cheney move of sort of recommending yourself after interviewing various candidates. And then Kevin Warsh is a name that I think continues to be in the mix as well.
Toby, speaking of the Treasury Secretary, when he spoke to Anne-Marie earlier this week and she talked to him about the potential timeline for replacing Chairman Powell, he talked about interviews later on in the fall. There was a conversation on the campaign trail going into the election that maybe they'd select almost a shadow Fed chair, someone they'd select ahead of time who would go around making speeches and maybe the market would cue off what that individual was saying versus saying what Chairman Powell would say. Is your base case that they will not do that, or is that something you're still open-minded about?
So I'm not sure that they're going to formally designate a shadow Fed chair, and I recall that proposal came from Bessent, I believe. It was first anonymously sourced and then kind of reported from his own mouth. So obviously in a position to try and effectuate that plan from his current seat if they want to. So, I don't know that it's going to be that formal, but I wouldn't be terribly surprised to see them making a relatively early decision about who it is that they're going to put up for that job, trying to run the confirmation process essentially in advance, and, trying to turn attention to that person a little bit rather than the actual outgoing Fed Chair in Powell.
Tobin, appreciate your update and your reaction to this one as well. Thank you, sir. Tobin Marcus there of Wolf Research. If you are just joining us, these are the headlines that come from the president this morning. He's complaining about the Federal Reserve not doing enough to reduce interest rates. Looking at the ECB, who's about to cut interest rates again, and I imagine it's annoying the president this morning, and going on to say too late, which is a new nickname, I suppose, for Chairman Powell, should have lowered interest rates like the ECB long ago, but he should certainly lower them now. Powell's termination cannot come fast enough. Now, how this market interprets this story is important, and at the moment it's not interpreting it in a too negative fashion. Equity futures still positive by 0.6%, but that's a very loaded, powerful word to use on a morning like this morning.
The start of his truth, we've heard this before. He's annoyed with Jay Powell for not moving and cutting interest rates. It's that last sentence, this termination. Is he talking about May 2026 when Powell's term is up, or is he talking about doing something sooner, which would definitely unnerve investors because that would blunt the independence of the Fed?
As we look for clarity on that, equity futures right now still positive across the board. On the Nasdaq, higher by about 1 percentage point. Up next, Angelo Zeno of CFRA on the latest tech sell-off from New York. This is Bloomberg.
Welcome to the Red Sea Southern Dunes. This is my office. Our team members are connected to this land. They know the terrains, they know of the stars. When we start teaching how the Arabian people saw the sky, you're giving back to the culture and spreading that culture everywhere around the world. That's an honor by itself. Come to the Red Sea and regenerate your soul.
Interesting start to this morning. Equity futures still positive by 0.6% on the S&P. On the Nasdaq 100 up by 1%. The president saying they've made great progress with the Japanese in talks so far this week on the trade front. The president said just moments ago and on Truth Social, complaining about the chairman not reducing interest rates over at the Federal Reserve, unlike the ECB, which is expected to cut interest rates later on this morning. Should certainly lower them now. Powell's termination cannot come fast enough.
So I think market participants will say we've heard the president talk about the fact that he's allowed to have an opinion. He thinks he understands where the economy is better than anyone else, especially monetary policy. So maybe they understand why he's voicing his concern about being too late. What is going to unnerve investors is the fact that last sentence, he says his termination cannot come soon enough. Is the president willing to wait till May of 2026, or is he going to do something else that is going to make a lot of people very concerned because they want to see an independent Fed in the USA?
Mike McKee's in the building. We'll catch up with Mike a little bit later this morning to get his thoughts on all of this. I want to get to some movers just briefly. Nvidia down almost 7% in yesterday's session, bouncing back just a touch this morning, up by 0.6, down 22% on the year so far as the US slaps more curbs on chip sales to China. Interesting to note that Jensen Huang, the CEO, landing in Beijing today, so look out for headlines from that. I want to turn to Hermes and get you an update on luxury. Hermes this morning, negative by 2.5%. A rare sales disappointment from the luxury goods maker. Chinese shoppers reining in spending. Saw something similar from LVMH earlier this week. Plus, price rises coming in the United States at the start of May.
So you saw a lot of these luxury players actually double down in the U.S., say the U.S. is where we can make sure we have these luxury consumers, especially if China's looking a little bit weak. Now they have to deal with the fact that are these luxury consumers still going to buy when prices go up? And Hermes is saying prices are going up May 1st because of tariffs. The issue is they're in a league of their own. And I think if you can already afford a $20,000, $25,000 handbag, you could probably afford it if it's going to go up 10%.
Can you say the same thing about a Ford? We'll get to price hikes there in just a moment. On our radar this morning, President Donald Trump saying, quote, big progress has been made in trade talks with Japan. Japan's lead negotiator meeting with Trump for 50 minutes and U.S. negotiators for 75, with another round of talks expected later this month.
This is really important because Besson has said to me that the first mover advantage advantage potentially is the one that's going to get the deal at the start of the day. So you have to imagine those 70-plus partners are looking at how the Japanese are dealing with this administration. And if they are going to get a deal first, what are the contours of that deal? The concessions, the extraction, does it have to do with non-trade barriers, or is it really just about tariffs? That is going to be key for everyone else. They're really writing the pathway for success, potentially. We have to see what the deal comes in the end.
Auto's a big feature of this conversation. I mentioned Ford, so let's get to it. Preparing to raise car prices if President Trump doesn't deliver on tariff relief. The company planning to make adjustments for cars rolling off assembly lines starting next month, with the vehicles set to arrive in US showrooms in late June or early July.
This is what they said in the memo. We anticipate the need to make vehicle pricing adjustments in the future, which is expected to happen with May production. Why is this? Because right now, they still have the tariffs in place, some of these tariffs, even though, Jonathan, there is full court press lobbying from the automakers to the White House trying to get some more reprieve. At the end of the day, if they don't have clarity, what we've seen, whether it's Hermes, whether it's Ford, they are moving ahead and raising prices to make sure they're not impacted on their bottom line.
The stock is up by 0.6%. Elsewhere, Taiwan Semi keeping its growth outlook for 2025 despite tariff uncertainty. The company expecting AI revenue to double and reiterating a goal set in January for mid-20% growth this year. Staying on tech, Nvidia looking to recover from Wednesday's declines after the Trump administration restricted its chip sales to China. Angela Zeno of CFRA writing, we estimate that this development puts about 8 to 10% of the country's revenue tied to China servers at risk and could empower domestic China competitors, specifically Huawei. Angela joins us now for more. Angela, welcome to the programme. What was your reaction to that news yesterday? And what do you anticipate Jensen Huang's going to do in China later on this week?
Yeah, so thanks for having me, John. When I look about what happened yesterday, interestingly, I'd say about 2 or 3 weeks ago, we had an internal meeting, and my belief was probably at some point in May, we'd actually see a GPU ban into China. And I'd say that kind of really fell off the table really quick after, there were reports that Jensen had met with President Trump at a Mar-a-Lago dinner. And, essentially that was almost kind of put off the table, right? So you kind of sit here yesterday, you look at the 7% pullback in the shares. That's probably about right in terms of the risk exposure, in terms of from an earnings trajectory for NVIDIA here, as far as the H20 is concerned. When you start thinking about the lack of exposure now in China, that meeting that Jensen had in China. Again, I mean, what Jensen has done here over the last couple of years is he's fought really hard to stay into China. There's been a number of export restrictions out there. They've had to continue to temper the performance on those GPUs, and really kind of the H20 is a China-specific GPU. So really, I think the meeting there is for Jensen to kind of just continue to say, hey, listen, we're committed to China. We're going to have to try to do it maybe another way. But, it's an important market. It's the second largest market out there. You've got some major hyperscalers in the likes of Alibaba and Tencent out there. So Jensen wants to be out there in terms of the NVIDIA exposure.
Angela, the good news for NVIDIA is they don't have a demand problem. They've got a supply problem. Can you say the same about all the other chip makers?
You can't, in some respect, in the near term, I'd say, NVIDIA is best positioned, even when you kind of hear Taiwan Semi's call just a couple hours ago. They kind of alluded to the fact that they are still supply constrained on the AI side of things. So that does bode well for NVIDIA. But it isn't necessarily about NVIDIA's prospects here over the next 2 to 3 quarters. It's about the sustainability of demand as we go into 2026. And you do see some risk of that now, or increased risk, if you're not able to play in that China market, which again, potentially is about 8 to 10% of their current revenue, at least on the data center side of things.
Angela, do you think the company is thinking about developing a new chip that can go to China, given the fact that the H20 was manufactured and developed so that it was able to export to China, given the U.S. export controls?
Yeah, I mean, I think we have to see what those new export controls look like, and if there's any way that NVIDIA and AMD can circumvent some of these new restrictions or what have you. But when you start looking at this new administration here, there's a part of me that thinks that they don't want NVIDIA to have any exposure, at least kind of on the AI side of things in China. Again, remains to be seen. We'll see. They'll try to some extent, but I don't know if they're going to be successful this time around the way they were successful under the Biden administration.
How are you thinking about the sectoral tariffs when it comes to semiconductors that the president promises that we're going to see?
Yeah, I mean, and that's a good question. You know, you look at right now, there's a Section 232 investigation that's going on. We're expecting some sort of implementation at some point in the second half of the year. Our base case right now is the fact that you're going to see some sort of tariffs. That is going to be a permanent effect on the semiconductor industry and the broader hardware industry. But our view is the base case is somewhere along the lines of a 25% tariffs. Obviously, anything significantly above that is going to be a risk. And there is, some hope on our end that it's going to be less than that. But when you look at the semiconductor industry specifically, one area that does have pricing power is the chip industry. They've been able to kind of pass higher prices on over the last couple of years, obviously on the leading edge side of things specifically. So our view is any type of tariffs that are announced or put in place is going to get passed through to those hardware manufacturers, which ultimately, if you're a company like Apple, will push that down to onto the consumer themselves.
Angela, just before you go, how are you navigating earnings season so far? TSMC came out projecting some confidence, keeping their guidance basically unchanged. ASML, some disappointing orders from them. Do you put more weight on one versus the other at the moment?
Yeah, I mean, I think Taiwan Semi is the bigger play as far as kind of gauging the demand prospects across the broader semiconductor industry. I think, as far as going through earnings season is concerned, I think most of these companies will be relatively in line as far as semiconductors are concerned. I think the guidance also is going to be roughly in line. Most companies are probably going to keep a lot of their guidance in place, but most investors out there probably won't believe what the outlook is going to be, because it's more along the lines of what the second half in 2026 is going to look like. As you kind of go into the second half of the year, if the consumer doesn't show up this holiday selling season, you're going to start seeing inventories build, and that's going to end up being an issue for the semiconductor industry. So I think all eyes right now is going to continue to be on the policy side of things, and really that's really going to dictate how these semiconductor stocks move here over the next couple of weeks and months.
A tough 24 hours for the chip makers, that's for sure. Angelo, appreciate your time, sir. Thank you. Angelo Zeno there of CFRA on NVIDIA and a whole lot more. If you are just tuning in, welcome to the programme. Some very strong words coming from the President aimed at Fed Chair Jay Powell. This line right here, Powell's termination cannot come fast enough. With more, here's Mike McKee. Good morning, Mike.
Good morning, John. This does appear to be the first time that the president has actually threatened to fire Jerome Powell. He's criticized him since he returned to office, but hasn't said anything about terminating him. Now, the question is, of course, can he? Powell has said he won't leave if the president asks him to, and that he would fight any kind of termination. This all gets back to a case that's being fought over the head of the National Labor Relations Board, Gwynne Wilcox, whom the president fired. The argument is that under, you've heard the term Humphrey's executor, that the president can't fire somebody except for cause, the head of an agency, independent agency, except for cause. The administration argues it can. So the question is now before the U.S. Appeals Court for Washington, which has let Wilcox go back to work while they figure this out. But it's anticipated to go to the Supreme Court. Now, the question is, would it get to the Supreme Court and would they make a decision in time to really matter with Powell, whose term is up in May of next year?
Mike, Powell talked a little bit about this yesterday. What was his response?
Well, he was asked about it again, and he said no, he has no intention of leaving. He's going to serve out his term. The interesting thing, Anne-Marie, is that he hasn't defined what his term is, because he has two. He has the chairman's term, which expires in May of next year, but he's also a member of the Fed Board of Governors until 2028. If he were to leave the chairman's job right now, there would be no openings on the board, and the president couldn't appoint anybody. So it's going to be a very interesting situation, shall we say. I don't want to say it's a court case yet, but very interesting situation as this plays out.
Potentially. Mike, thanks for the update. We'll come back to you later on this morning. Mike McKee there on the president's words this morning. Language is important. That would be my question to the press secretary today. Termination. What did the president mean by that? Did he mean the expiration of his term as Fed chair in May of next year, or did he mean something else?
I think that's a great question, because he just said termination cannot come fast enough, meaning I'm waiting out these next 12 months, or I am prepared to take action because I'm annoyed that he has a new nickname for him. Too late, Jay Powell is taking too long to cut interest rates.
You probably want to know how the market is interpreting this morning. So far, OK, still just about positive on the S&P 500. The S&P is higher by 0.4%, but rolling over. If you check out the bond market on a 2-year, 10-year and 30-year maturity, yields just a little bit higher, up by 2 or 3 basis points on a 10-year at 4.30. I imagine if we were in a situation where the President of the United States fired the Fed chair, we'd have a very different market reaction to the one we've got right now.
Absolutely. I think the market's looking at this and they're saying this is the rhetoric we have heard from Trump in his first administration, and we've heard it from him again as he's president in his second administration. He jawbones. He likes to have an opinion about the Fed, where interest rates are going, and about the individual himself, Fed Chair Jay Powell. If he was to do something, I really think you will have a market reaction, because before I sat down with the Treasury Secretary, this was something individuals were messaging me about. Please ask Scott Bessent what he makes of the Supreme Court ruling that at the moment the president can oust of top officials at independent agencies.
Certainly giving up the gains this morning. Still positive, but only higher by 0.4% on the S&P. Let's get you an update on our top stories this morning. If you are just joining us, our top story. President Trump with strong remarks for Fed Chair Jay Powell this morning, posting on Truth Social, he's too late and too wrong, calling on the Fed to cut interest rates. Trump adding that Powell's termination cannot come fast enough. Elsewhere, United Health shares are down after reporting first quarter earnings below expectations. The health insurance giant cut its earnings outlook for the year. The company now missing targets for medical costs several quarters in a row. Their stock is down by 19%. And your final story, Meta CEO Mark Zuckerberg wrapping up 3 days of testimony in the FTC's antitrust trial. Zuckerberg responding to evidence suggesting Meta bought Instagram and WhatsApp to eliminate competitive threats, arguing the acquisitions did not harm competition. Their stock is just about positive in the pre-market. Up next on the program, the president sticking to his words.
People are looking for some amount of clarity. I look at this term of the Trump administration somewhat differently than the way we looked at the last one, in that almost he is sticking to his literal word when we're talking about tariffs and trade here.
In just a moment, we'll catch up with the former senior Trump trade advisor, Kellyanne Short. She joins us next, and we'll give you an update on the president's comments this morning on Fed Chair Jay Powell.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex, executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Equity futures still just about positive here, up by 0.4%. On the Nasdaq 100, up by 0.7%. Just got a message about the Dow. Why don't you quote the Dow? Because United Health is 9% of the index and hardly anybody owns the Dow. And if someone's screaming at you this morning talking about the Dow being down, seriously, choose a new TV network. The Nasdaq right now positive by 0.75%. That is why we don't talk about the Dow on this particular program. All right, rant over. Let's get to another rant from the President of the United States. This is what he's got to say. Powell's termination cannot come fast enough. What a line by the President of the United States.
I'm thinking he's the one that actually messaged you, because we do know that he is one of those individuals that actually likes quoting the Dow, and in his first term used to use it all the time, depending on how good his presidency was going. This line, Jonathan, is very hot, because it is not just saying, I can't wait for Jay Powell to not have that job anymore. His termination cannot come fast enough. Is the president talking about the end of his term as Fed chair in 12 months, May 2026, or is he talking about something a little bit more nefarious in terms of firing Fed Chair Jay Powell?
If you want to take the temperature of the bond market this morning, there's no freak out to this headline. I think that's important. How is the market interpreting that headline this morning? Yields are up by 2 basis points on a 10-year to 4.30. At least for now, no real drama.
I think so now the market participants, I think, are seeing this as just Trump rhetoric. Trump taking the truth, voicing his concerns. He probably saw what Powell said yesterday. Definitely different than, say, what Governor Waller was talking about in terms of where he's leaning on with the mandate, the concern he has about inflation and about tariffs. So the market right now is just viewing this as Trump's voicing his opinion. He's done this before. He'll do it again. But if this was to move into potentially a firing, I think you'd have a very different market reaction.
Mohammed Al-Arian, 11 minutes away. He's going to have his reaction to that story in just a moment on this programme. Under surveillance this morning, the president sticking to his word.
People are looking for some amount of clarity. I look at this term of the Trump administration somewhat differently than the way we looked at the last one, in that almost he is sticking to his literal word when we're talking about tariffs and trade here.
Here's the latest this morning. President Trump signalling big progress in trade talks with Japan, fueling Wall Street hopes that agreements can be reached to avoid higher tariffs on trading partners. Kellyanne Shaw, the former senior Trump trade advisor, joins us now for more. Kellyanne, it's good to see you.
Good to see you as well.
What are the prospects of making a deal in this smaller time frame with this many countries?
Well, I think the chances of making a deal with Japan seem pretty high, right? Like, you've heard Bessent talk about the fact that there are about 15 countries with whom they're close to making a deal. I don't foresee 90 countries in 90 days, but certainly with some of our major trading partners with whom we have some of these significant issues, I do think the administration is very optimistic.
Let's talk about the one that's a little bit harder, China. They came out this week with a number of demands they'd like to see a response. By the way, we should note this was a Bloomberg scoop, according to someone familiar with the CCP thinking right now. Do you think this administration is ready to appoint a point person for Beijing to deal with?
Well, I think both sides are looking to see if there is an off-ramp, right? Like last week, we backed ourselves into a trade embargo between the two world's largest economies. So there has to be a way to resolve this at some sort of political level. And I think appointing someone seems like a reasonable way forward. But that said, the president has said that he wants to negotiate directly with Xi Jinping. So there's going to be some negotiations behind the scenes to see if they want to back off that approach or if they're willing to delegate one level down.
Do you think the likely scenario here is that there's a call and then they appoint someone, and then who do you think that individual is going to be?
Well, of the constellations of actors who it could be Secretary Bessent, it could be Secretary Letnick, it could be someone like Jameson Greer. But I do think that in the last week or two, we've seen Bessent really take the lead publicly in terms of advancing some of the president's trade agenda points. So he would be a likely interlocutor with the Chinese.
When it comes to the other deals, and speaking of China, the secretary has insinuated he wants to shore up some of these other deals and then confront China together. Is that the kind of concessions they're looking for when they talk to Japan or the European Union or Vietnam?
Well, I think, like, taking a step back, this is existential from the perspective of the administration, that we are overly reliant on China, that the Western world has become overly reliant on China. And so it makes sense from their perspective to look at building alliances with other countries where they adopt some of the same measures that the United States does. And even from the perspective of third markets, if the United States and China are in this posture of not trading with one another, those goods are going to go somewhere else. They're going to flood other markets. And so I think that's what they're trying to get to. But the question for me is some of these Asian nations in particular, are they going to pick sides? Are they going to be willing to put up some of these barriers on China or not?
So when it comes to other investigations the administration is launching, we learned this week there is an investigation, a Section 232 on pharmaceuticals, on semiconductors, that was launched April 1st. Why did we learn about it this week?
Yeah, I have to say, I spent 10 years in government and have never heard of a secret 232, but that's effectively what we saw happen. Well, there is no legal obligation to notify the public that an investigation has been launched. There is a legal obligation to give the public an opportunity to comment. But some of this may have just been, there's so much going on that they failed to alert the public. Could be that they were just investigating and sort of got out over their skis. But for whatever reason, it's neither here nor there. We're in an active investigation, and the administration has 270 days to complete those investigations.
They have 270. How quickly can they wrap it up?
As soon as almost humanly possible. So that comment period is, I think it's going to be May 7th when all those comments are due. They could potentially announce the results as soon as May 8th. Now, I don't think it will be that soon. I think they'll give themselves another month to digest some of the comments. But we've heard Secretary Letnick say that within a month or two, we're likely to see some of those measures.
A couple of names in the mix right now. Who do you think's running the show at the moment?
I think Donald Trump. I think President Trump is running the show. He has always been his own trade advisor. But of the economic advisors who seem to be in the mix, Secretary Bessent, Secretary Letnick, Jameson Greer.
Does it surprise you that the Treasury Secretary has almost made a U-turn when it comes to these negotiations in the past 2 weeks? When I spoke to him after what Trump called Liberation Day, he said he wasn't part of the negotiations. He then clarified to me this week he meant he wasn't in charge or a part of the negotiations regarding the tariff rates on that big chart. How big of a disagreement was those reciprocal tariffs?
Yeah, in Trump 1, it was very clear that we had different advisors on different spectrums. So we had the free traders, we had the protectionists. In Trump 2, the difference between them is much smaller, right? So I think you have advisors who might have different perspectives, but their view is largely rowing in the same direction. So I don't see the same break in the same way, but I do agree that Secretary Bessent is much more active now in terms of driving some of the agenda, at least in terms of the public voice of the administration.
And this is certainly something market participants wanted to see, including Jamie Dimon at JP Morgan, who basically said that in a Financial Times interview earlier this week.
He said he's an adult in the room and he likes that he's now taking a louder voice when it comes to these trade negotiations and thinks he should be the point person. Neil Dutta has talked about this, the ascent of Bessent. And he said Trump has cracked a lot of eggs and now it's up to the secretary to make an omelet. So Wall Street is definitely...
We see 100 plus in crude oil. 100 plus what? में सेलिंग आई थी वही फर्स्ट टारगेट पर ही रुक गया प्राइस 40 पॉइंट के आसपास ही मूव किया नीचे कैंडल क्लोज होती तो सेकंड टारगेट ही मिल जाता बट नहीं मिला है तो अब कह सकते हो कि मार्केट रेंज के अंदर है दिस इज द रेंज और नीचे आना है या फिर ऊपर जाना है तो किसी एक साइड पे मार्केट को क्लोजिंग देनी ज़रूरी हो जाएगी तभी कुछ होगा लास्ट कैंडल देखोगे ओपन इक्वल टू लो बनी थी सडनली 215 की स्ट्रक हो गया बिल्कुल 230 के बाद देखोगे थोड़ी बहुत सेलिंग जरूर आई बट आफ्टर दैट इट इज ऑलमोस्ट स्टक गैस का भी वही हाल है बिल्कुल साइडवेज परसों की कल की तरह लगता है सेकंड हाफ में ही मूव करेगा अब सेलिंग का ट्रेड प्लान कर लेते हैं पॉसिबल है वापस से नेचुरल गैस में भी एक शॉर्ट ट्रेड प्लान कर लो इसमें वैसे तो ये है साइडवेज रेंज के अंदर बट एक सेलिंग का ट्रेड यहाँ पर ट्राई कर सकते हैं रेंज को प्ले करने के लिए और तो कोई ऑप्शन है नहीं क्योंकि इतनी स्मॉल सी रेंज है नीचे सपोर्ट है उस सपोर्ट के लिए प्ले आउट करना पड़ जाएगा कुछ इस तरीके से ठीक है मिडल ऑफ द लेवल कह सकते हो ट्रेड है बट इसके अलावा कुछ बन भी नहीं रहा है यहाँ पे थोड़ा सा नीचे आता तो वापस बाइंग कर लेते वो हो नहीं रहा है तो किसी को अगर स्कैल्पिंग करनी है तो ये ट्राई कर सकते हो, अदरवाइज तो फिर थोड़ा वेट ही करना पड़ेगा, क्योंकि नेक्स्ट रेजिस्टेंस, मेजर रेजिस्टेंस की मैं बात कर रहा हूँ, वो काफ़ी ऊपर है और सपोर्ट थोड़ा सा डाउन साइड पे बना हुआ है। तो अगर थोड़ा सा रिस्क ट्राई कर सकते हो तो ये छोटा सा ट्रेड यहाँ पर प्लान करा जा सकता है। बाकी है तो मार्केट रेंज बाउंड, नेचुरल गैस एज वेल। न्यूज़ तो थी नहीं फिलहाल के लिए जितना मैंने देखा था क्रूड में, बट वो कैंडल ही सडनली बनी है, कुछ तो हुआ होगा डेफिनेटली न्यूज़ की वजह से। लाइक कैंडल ओपन इक्वल टू लो नॉर्मली बनता नहीं है इस तरह से। इंडियन मार्केट भी क्लोजिंग पर है ऑलमोस्ट।
So I don't think this is.
नेस्डेक स्लाइडिंग हो रहा है, बताया था नेस्डेक के लेवल वही चल रहे हैं, थोड़ी देर पहले आप इन्हें पूछे थे। स्टिल देयर, सेम ही लेवल है, कोई चेंज नहीं हुआ है। यूएस 100 आईजी ब्रोकर, बाकी ऊपर वापस आएगा, वापस सेल कर सकते हैं। फिलहाल तो साइडवेज है, थोड़ा बहुत ऊपर से सेलिंग आई जरूर है, बट वापस सेल, यहाँ वापस बाई। कैंडल का ध्यान रखना, ओपन इक्वल टू लो हाई ना बने बाइंग सेलिंग के वक्त। लेवल दिखा दिए मैंने, देख लो एक बार लेवल अपने नैस्डैक के।
Carter moment with prolonged stagflation? Or is this going to be a Margaret Thatcher, Ronald Reagan moment where you rewire not just the domestic economies, but you rewire the global economy?
Isn't the Fed chair basically acknowledging that by saying we've got to wait for more clarity before we can decide what we need to do?
Yes, but he went much further. I mean, I have all that. He generally said we have to wait for greater clarity, but he kept on pushing on the challenges to dual mandate. He kept on pushing that inflation may be persistent. He hasn't said that in the past. 2 meetings ago, he reintroduced transitory. 2 meetings ago, he reintroduced transitory when talking about tariffs. And then last meeting, he walked it back. And now he's gone one step further and made a very strong statement.
So let's talk about the optimal outcome. What does it look like in the months to come?
I think I am in the same boat that everybody else is, saying this is a really highly uncertain time. You know, I think this is an uncertain journey to an uncertain destination. And the market has been swinging one way and the other. You said it this morning. Depending on the tariff news, it's either excitement or fear.
Yesterday, we did also hear Jay Powell talk out the Smoot-Hawley levies of the 1930s, 95 years ago. And he said there isn't a modern experience for how to think about this. Do you agree with him, or can you draw some modern experiences to deal with this time right now?
No, it's hard. I mean, by the way, that was a strong statement as well, something that he hasn't gone anywhere near before.
And that was the Ferris Bueller scene I was alluding to earlier.
Correct. And I remember that scene that he should have referred to in the movie. No, we haven't had this before. This is an attempt to rewire the global economy. And we haven't had this in an integrated, globalized economy.
Are you surprised by how different Powell sounds from Waller?
Yes, I do. I'm surprised how different Waller sounds from Waller a year ago.
Think he's running?
It's been quite a transformation, let's put it this way.
Do you know who did do a good job yesterday? Raghu Rajan.
Oh, he was great.
He was absolutely fantastic. And he asked this question, I'm pleased he asked it. He talked about the difference of a challenge to the cycle and a challenge to the system. And you and I have reflected on this too. The challenge to the system here, how are you thinking about that challenge at the moment?
So first of all, let me say Raghu was great because not only did he keep the flow going, but for those who are not very familiar with economics, he explained why he was asking the questions, and he did it really well. You know, we've put it slightly differently, is that normally advanced economies live in cyclical space and developing countries live in structural space. Now suddenly we have advanced economies living in structural space, so the boundaries to the cyclical fluctuations are no longer holding, or they are much wider than they were before. So you have a whole range of potential outcome. I love the United earnings call when they came out with 2 scenarios. It's a bimodal world. Amex today came out with a huge qualifier saying it's subject to the global macroeconomy. So companies are not only thinking internally about a range of outcomes, they're expressing it in their earnings calls.
Asset allocators need to do the same exercise. They need to work out what the future looks like. And Rajan talked about a change in US philosophy. So in the post-war system, as you know better than most, US assets are at the very heart of it. And the interpretation of this administration appears to be that their responsibilities are a net burden and not a net benefit. And they're trying to rebalance that. They look at the FX so-called distortions, that's what Stephen Myron called them, and they don't look at the benefits that come from this structural bid for US assets that deliver lower interest rates than maybe they'd otherwise get. What are the dangers of trying to rebalance that over the period of, say, 3.5 years?
So whether it is the US, whether it is the UK with the EU, this integration does 2 things to your balance sheet. It increases the gains and increases the potential losses. So you now operate at a higher level of both. And if you don't manage the potential losses, then people will focus on that and forget about the gains. We saw that in the UK with Brexit. So I think the more integrated economies come, the more you have to manage the downside risks. I say this because AI is really critical in this. We've got to manage the downside risk to exploit the enormous benefits that come from that.
Mohammed, you said when you look at developing economies, it's structural. And like the United States, we're cyclical. Is everyone just viewing this moment wrong? Should we be thinking about a developing economy when looking at what is going on right now in U.S. in terms of policy?
Well, some have tried to make that parallel when saying it's highly unusual to see the U.S. having higher interest rates and a weaker dollar. That happens in the developing world. That doesn't happen in advanced economies. I think that's a step too far. I think what we're seeing is a portfolio reallocation from an overweight to the U.S. to more balance globally. That is what we're seeing. And I thought Rick Reeder yesterday on the show was great with that.
Mohammed, you're going to be sticking with us, and pleased to say we'll be talking about the Federal Reserve and the ECB, that ECB rate decision, about an hour from now. Equity futures on the S&P 500 still just about positive by 0.3%, but rolling over well off session highs. That's the story in the equity market. Let's get you an update on our top stories elsewhere. Here is your Bloomberg brief. President Trump with strong remarks for Fed Chair Jay Powell this morning, posting on Truth Social that Powell is too late and wrong, calling on the Fed to cut interest rates. Trump adding that Powell's termination cannot come fast enough. Elsewhere, the president sharing on Truth Social that trade talks with Japanese officials have led to, quote, big progress. A deal has not been reached, but preparations are underway for a second round of talks later this month. And finally, Eli Lilly shares soaring after its latest weight loss pill met its efficacy goals, showing promise it could become the first approved oral GLP-1 treatment. Lilly saying trial users lost an average of 16 pounds at the highest dose. That stock is up by 13.5%. That right there is your Bloomberg brief. Up next on a program, Trump versus Powell.
People can say whatever they want. That's fine. That's not a problem. But we will do what we do strictly without consideration of political or any other extraneous factors. We're never going to be influenced by any political pressure.
The political pressure is climbing. Mike Zezas of Morgan Stanley joins us next for more. Live from New York City this morning. Good morning. Krishna Gua, Evercore, just nailing it. This line right here. If you like the tariff debacle in markets, you'd love the loss of Fed independence trade. Equity futures right now in the S&P. We'll let that one breathe a little bit. Positive by 1/3%. On the NASDAQ, up by 0.5. Under surveillance this morning, Trump versus Powell.
Our independence is a matter of law. Fed independence has pretty broad support across both political parties. Generally speaking, Fed independence is very widely understood and supported in Washington, in Congress, where it really matters. People can say whatever they want. That's fine. That's not a problem. But we will do what we do strictly without consideration of political or any other extraneous factors. We're never going to be influenced by any political pressure.
So here's the latest this morning. President Trump with strong remarks for Fed Chair Jay Powell this morning, posting on Truth Social that Powell is too late and wrong, calling on the Fed to cut interest rates. Trump adding that Powell's termination cannot come fast enough. Bloomberg's Tyler Kendall joins us now for the latest. Tyler, what do you make of that one?
Yeah, hey, John. Well, while President Trump has long been critical of Jerome Powell, this does appear to be an escalation. Of course, big interpretation questions, though. Is President Trump pointing to the end of Powell's term as chair in 2026, or is he threatening to fire the Fed chair altogether just one day after Powell said that the central bank would have less flexibility to cushion the economy amid tariff fallout, and also that he thinks market volatility is understandable because there's just so much uncertainty here when it comes to the tariff plans. Now, President Trump has long suggested that his tariff policy would go hand in hand, as he says, with lower interest rates. And we should keep in mind that up to this point, senior administration officials have largely brushed aside President Trump's prior criticism of Jerome Powell, saying that it's just his opinion and that they do respect the Fed's independence. But we'll have to see if we hear any stronger stances from administration officials today, particularly after Treasury Secretary Scott Bessent told Amory earlier this week that he thinks monetary policy is a jewel box that needs to be preserved, as he said. So really some big questions going forward. And you had mentioned earlier in the program that Bessent actually was the one that had floated the idea of potentially a shadow Fed chair on the campaign trail. Powell was asked about that back in December, 1 month before Trump took office, and he said that he didn't really think that was an option on the table, and also that he doesn't think President Trump has the legal authority to fire him. John, President Trump previously has said that he would let Powell serve out his term, but of course, big questions here in Washington about the future of independent federal regulators, particularly after last month 2 FTC commissioners were fired, they say, without cause.
Tyler, appreciate the update. Tyler Kendall in the nation's capital. To extend the conversation, joining us now, Mike Zezas of Morgan Stanley. Mike, welcome to the programme, sir. Not the news I imagine you thought you'd wake up to. What do you make of that last line by the president? The termination can't come soon enough.
Yeah, I mean, I can't parse precisely what he might have been talking about there, but I mean, listen, I think the issue of concern here for investors is one of whether or not you feel like you own too many U.S. dollar-denominated assets, and there does appear to be kind of this rebalancing trade going on where kind of the world was overweight this, and for very natural reasons, and there's probably some risk mitigation going on here. And so to the extent you see statements like this, or maybe you're concerned with the case in front of the Supreme Court right now, challenging whether or not President Trump has the authority to fire independent agency heads, you know, all of it suggests that there might still be some rebalancing, kind of getting more to a neutral stance with regard to global U.S. dollar-dominated assets. It's the type of thing that we think can still create some near-term U.S. dollar weakness.
When it comes to this potential that this is more than just Trump waiting out Powell's term and actually he wants to do something about it, if that were to happen, what would that mean for the dollar, for treasuries as these safe haven assets?
Yeah, I mean, listen, Powell's statement yesterday about broad legal authority, broad legal protections, that seems to be the consensus, and I'm not a legal expert, but that seems to be the consensus, and it seems to be pretty stable. So any action against that would sort of raise questions. Whether or not it's succeeded, I think you introduce that question into the market. Then if you already have a basis where investors are kind of overweight or over-indexed to U.S. dollar assets, then more of this risk mitigation trade that you're seeing probably continues.
So, Mike, let me just get more clarity from you on this. You said rebalancing to a neutral stance. How far along this journey are we, and what does the destination look like?
Yeah, I mean, I don't have a precise answer to that question because I think we're still collecting fund flow data and asset allocation data. I just know we're not all the way there, right? So, again, I think this is really about what you sort of assess the probability of institutional controls breaking down are. And I wouldn't say it's our central case that we're going to have a problem with institutional independence in the U.S., but statements like these, the existence of this case in front of the Supreme Court, obviously raise the question further. And so even if you're only partway through that trade, there can be more U.S. dollar weakness without there having to be an expression from investors of a general loss of confidence.
Mike, this builds on the conversation we started having last week in a much more material way when we saw Treasury yields higher by 50 basis points and the dollar weaker. And we asked the question coming into this week, what's the alternative? Where can you find the depth, the liquidity, the predictable issuer with dependable, credible institutions around it? What is the alternative?
Yeah, I mean, listen, your near-term alternatives are the yen's the most obvious one. Euro would kind of be second there. They are insufficient alternatives to the point that you just made. But this is why I think for the moment we can avoid this kind of more existential question and look at this as more of a rebalancing trade and say there's still potentially strengths to go in those two currencies relative to the dollar.
It seems that another alternative has been gold. Gold has defied every single correlation. Risk on, gold higher. Risk off, gold higher. Weak dollar, strong dollar, gold higher. And you get a bit of profit taking, but gold continues to go from record to record. How long can this process go on?
Yeah, I mean, I don't think we have a high conviction view there, but to your point, I mean, there is this sort of whether or not you want to view it as a kind of fundamental pressure, or kind of a mix of fundamental and technical pressures, which is the way I would describe it. It is sort of a pressure that sort of leads to demand for a broad array of assets. And again, I think like the yen, the euro, those are places you might look. Is there still positive pressure going into gold? Very likely, but I wouldn't say that we have as high a conviction there.
Well, every day it seems like gold is having this new record high. We had one just yesterday. Is that a place just to hide it out if you're unsure what to do in this moment, Mike?
I think for some investors it is. I'm sure we hear from some clients who are more sort of, true believers in this as store of value. But at this point in the debate, you don't necessarily need to pick whether or not this is just kind of a flight to safety or whether or not you have a more secular case for the breakdown of the U.S. dollar. So again, I think we're kind of in the zone of this trade right now where the uncertainty introduced by the fact that we're even having this conversation is plus the kind of let's call it the positioning that's been heavy for U.S. dollar-denominated assets, kind of allows you to not necessarily have to choose whether or not this is a technical trade or a fundamental trade. There's just more flow in the direction away from dollars.
Mike, appreciate your view. As always, Mike Zuzas there of Morgan Stanley. Gold coming up in that conversation. What a run it's had. So far, year-to-date, higher by 27%. And this rally, Mohammed, we've talked about this a few times, predates this trade tension. This has been building for quite a while.
It has, and it's gained a lot of momentum. And a lot of people have tried to fade it, only to see gold go higher and higher. I do think that central banks, foreign central banks, at the margin, are looking to diversify away from the dollar. And they're doing it slowly. And gold has been a recipient of this of flows.
Gold just pulling away from all-time highs. We're down about 0.5% this morning. Up next on the programme, we'll catch up with Alicia Reese of Wedbush, previewing Netflix earnings. Those results coming out after the closing bell. And we'll have more on these comments from the Federal Reserve, or rather at the Federal Reserve, from the President of the United States. Powell's termination cannot come fast enough. That conversation continues from New York. This is Bloomberg. Two hours away from the opening bell, equity futures positive here by 0.5%. On the Nasdaq, elevated as well, up by 0.7%. Encouraging words from the president on trade. Not so much on Chairman Powell. We'll get to that in just a moment. Some moves to look for. Taiwan Semi, TSMC, projecting confidence, keeping its growth outlook for 2025. Still looking for growth in the mid 20% for the year ahead. The CEO saying demand has remained resilient. The stock is up by about 3%. I want to talk about Ford, down about a third since the high of the last summer. It's positive this morning by 0.2%, threatening to raise prices. We anticipate the need to make vehicle pricing adjustments in the future, which is expected to happen with May production. Important move from them.
I think it's an important move, and I think it's a really important signal and significant because Ford builds 80% of the autos that they sell in the United States in U.S. factories. So Ford is saying, we have to come out and raise prices because it's so uncertain and we're going to be hit with some tariffs regardless, even though we're lobbying the White House. What does that mean for the others, like GM?
That's the latest on the autos. On our radar this morning, our top story, life moving pretty fast for Fed Chair Jay Powell.
As that great Chicagoan Ferris Bueller once noted, life moves pretty fast. For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance.
It's moving fast this morning. President Trump with these remarks, posting on Truth Social that Powell is too late and wrong, calling on the Fed to cut interest rates. Trump adding that Powell's termination cannot come fast enough.
Big question if he means the termination, the end of his term, May 26th, or the termination like he's going to do something about it. So I think we're waiting on some clarity. We have to, depending on what the president, I'm sure he's going to be asked about this today. Neil Dutta nailed it yesterday. He probably picked up on what Powell was talking about when it comes to tariffs, how he kept coming back to tariffs, how it's on the high end of the Fed analysis, and quote tweeted a Trump tweet from 2019 where Trump said, my only question is who is our bigger enemy, Jay Powell or Chairman Xi? And he wrote coming soon, question mark, meaning is Trump going to come into this fight and push back on Jay Powell? Well, he did this morning.
We mentioned this note from Krishna Gua over at Evercore, so let's go back to that note. If you like the tariff debacle in markets, you'd love the loss of Fed independence trade. Mohammed, can you just reflect on that a little bit? What would that look like if we did lose faith, confidence in Federal Reserve independence?
I want to say if, because I'm looking at the bond market right now, it hasn't moved. It has not moved. Yields were up 2 to 3 basis points. Yields are up 2 to 3 basis points. So the bond market has completely brushed aside this issue. But if, I say if, the people will go back to the 70s, and will remember what happened then, and there would be much bigger inflation premium in markets across the board. But I want to say if, because with the exception of the word termination, which is a very strong word.
True.
Nothing is surprising in that post.
We've said it repeatedly this morning. It's difficult to know how to interpret that word. Is that word basically referring to the fact that his term expires in May next year, or does it mean he's willing to go much further, do something far more drastic?
And I think that ambiguity is purposeful. I think the president is trying to have this debate and maybe have individuals that are renowned, like Mohamed El-Erian, come on and say, actually, maybe for the best of Fed independence, maybe Jay Powell should even consider stepping down. He is starting a debate now by just the use of this one word, and I think he knows what he's doing.
Well, let's explore the if. Let's explore that a little bit further. How do you think the international community, international investors would view that move? How would they treat treasuries and dollar-denominated assets if that happened?
What is the if? The if is really important.
If they fired him.
Without announcing the replacement immediately, who is credible like a Kevin Walsh?
Oh, you think the replacement's just as important here?
Oh, absolutely. You cannot replace something with nothing. Britain learned this during Brexit. We're learning this during the tariff thing, is if you don't have something credible to replace what you are bringing down.
But to extend it, Mohammed, because this is important, once you've fired one, it would open the possibility that the next one could be fired too, which opens the idea that they're just going to do whatever the president would like them to do. I think that's the issue really at play here.
It is, but it's the counterfactual. What if the Fed ends up in a Harvard situation, whereby every day there's a new attack coming from a different angle? So this is why I say this is a really difficult judgment. You've got to sort of guess what the counterfactual is likely to be, and then decide if your objective, which all our objectives should be to preserve the independence and integrity of the Fed, what's the better outcome?
Yeah, but the precedent this sets could be catastrophic. To John's point, it could be a domino effect where every single person can maybe get fired. True.
Alternatively, they could find different ways of eroding permanently and structurally the independence of the Fed. So this is a really uncertain time.
But to the rest of the world, doesn't it just look like the Fed chair now just does the president's bidding, and then we look like Russia or any other economy where there's that relationship?
That is certainly the risk. And I'm just saying, you know, I said during the break, I love this quote from Justin Fox, that uncertainty has never felt this uncertain. And that's the world we're living in, sort of uncertainty being even more uncertain than uncertainty normally is.
It's what the last couple of weeks has felt like, that's for sure. This story is going to dominate the conversation this morning, no doubt. I just wanted to fit this in as well, that the president's also saying his administration made, quote, big progress on talks with the Japanese so far this week. The lead negotiator saying preparations are underway for a second round of talks later this month.
So these talks with the Japanese are being closely watched. It's been insinuated by the administration they could be one of these first countries to get a deal. Scott Besson told me the first mover advantage is going to be that individual. Well, it does feel like they have the first mover advantage. They're the only ones that have gotten a sit-down with the president himself. But no deal yet, Jonathan. They still have another negotiation to go through. My question is, they only have 90 days. We're talking about July 8th, just after July 4th and that holiday weekend. Can they get even a dozen of these deals done? Usually trade deals take years to hammer out.
Clock is ticking, and certain companies are stuck between a rock and a hard place. The Infineon CEO, Jensen Huang, visiting Beijing at the invitation of the China Council for the Promotion of International Trade. His visit coming as Trump administration slaps China export curbs on Nvidia's H20 chip in the last 24 hours. Mohammed, we've had this conversation in the past. Choosing between one and the other. You wrote a piece a number of years ago. I forget the precise phrase you used, but it was the so-called fence-sitters. Certain countries that wanted the trade relationship with China but wanted the security umbrella from the United States. How sustainable is that now?
It is much less sustainable and it's much more expensive. I called it the dual option model, that you have an option on the US for national security, you have an option on China for economic prosperity, and the cost of that option was extremely low. Now the cost of that option is going up, and most countries are terrified of having to make a choice between the two. Some countries will remain swing states. Brazil, India, Saudi Arabia, UAE, they have something special that allows them to be swing states, that allows them to maintain that dual option at a low price. But others, Philippines, Japan, etc., will find it much harder.
When it comes to things like chips, though, you see the Trump administration doubling down even further than the Biden administration did when it comes to these export control and chips. This H20 was produced and manufactured just so they could go to China. But you're going to find bipartisan support for things like this. De-risking from China, making sure they don't have access to high technology. But I have to think, with Jensen Huang going over to Beijing, this feels like Tim Cook and what he does and goes over to Beijing. And when China comes out and says, we want a point person for trade, I wonder if it's these diplomats, these corporate executives.
You've got to think about what she's doing. And yes, corporate America have been great diplomats for the objectives of the Chinese over the last few years, and that's a very separate story. And the administration, quite rightly, has been unhappy with them on that front repeatedly. The Chinese are also doing their own diplomacy. She's been visiting various countries, speaking to various nations, Malaysia, Vietnam in the last week. Mohammed, as you know, this president would like our trading partners, allies, the likes of the Europeans, to put the walls up for the Chinese. They'd like the Vietnamese to do the same. Do you think that's possible in the year to come?
It is possible. I mean, there's two big games of chicken going on right now. One we've already talked about, the administration versus the Fed, and the other one's US versus China. And US versus China visibly is a tariff. Behind the scenes is trying to get a coalition of countries against the other country. So you've seen this in China. They are doing a lot of diplomacy, quiet diplomacy, trying to say we are the reliable, we are the dependable superpower here. Let's have more trade links. Let's talk about payments links. And then you have the US saying, let's unite all these countries, starting with the 17 we're talking to now, not only to ensure low tariffs, but to ensure that they put tariffs on China as a way to protect themselves from Chinese dumping. So it's fascinating to me that you have a very visible war going on, tariffs, and then you have a less visible war going on, which is for the other countries.
The Europeans certainly stuck in the middle here because they'd have to eat the overcapacity coming out of China if the wars stay up here in the United States. More on the ECB later on. That decision is about 35 minutes away from the European Central Bank. We need to talk about earnings later as well. Netflix reporting earnings after the closing bell, with analysts expecting it to weather the macroeconomic climate better than competitors. Alicia Rees of Wedbush writing, while massive subscriber growth was the primary driver in 2024, we expect price increases to drive revenue growth in 25 and the ad tier to drive revenue higher in 2026. Alicia joins us now for more. Alicia, welcome to the programme. There is some pressure on consumers. Sentiment is absolutely cratered. Alicia, as we saw in retail sales, though, they are still spending. But some of that spending is about fears of higher prices in the future. What do you think this will mean for discretionary growth on things like Netflix?
Well, I think for now, the key driver is content. There certainly comes a time where people will cull their budgets and stay home, skip a vacation, maybe buy a few less new items. And what they'll do instead is stay home and watch content on Netflix and other streaming services. And so whoever has the best content gets the most eyeballs, and whoever gets the most eyeballs can get the most advertising dollars. Netflix doesn't have a lot of people yet on their advertising tier, but they're certainly trying to grow that, and they will over time. But still, this year, they are not going to give subscriber numbers. And what they're going to do instead of giving subscriber numbers is, they increase their tier pricing. And so they're going to be able to give quite a bit of revenue growth still.
I understand.
On top of that, and it's going to be really positive for them.
Alicia, I understand people may stay home if they're worried about going out and spending in this time of uncertainty and tariffs and potentially prices going up. But advertisers, are they going to have the money in this uncertain environment to want to spend?
They're certainly going to cull their budgets and pull back pretty significantly. So they have to be more accurate. So they're going to want to move a lot of advertising dollars from linear TV that is less targeted to connected TV that is highly targeted, on par with or better than social media targeting. Connected TV has significantly more targeting capabilities, and that's really where the eyeballs are, especially in an environment where, people are staying home a bit more. And as sports continue to shift towards connected TV from linear channels.
Today, the Pope's final hours, and who could take his place in the Catholic Church. Trump's attacks on the Fed chair rattle traders. And what to expect next in US-Iran talks. It's Tuesday, April 22nd. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Tara Oakes in Liverpool. From St. Peter's Square in Vatican City to Buenos Aires and to Cape Town, South Africa.
Although we will miss him, we know that he is with Jesus.
Yo no quiero pensar quién va a estar en su lugar.
His last words were, "Happy Easter to everyone." Isn't that unbelievable?
Billions of worshippers are mourning Pope Francis, who died on Monday of a stroke and heart failure. The 88-year-old had spent more than 5 weeks in hospital for a bout of double pneumonia. The Pope defied doctors' orders for rest and instead kept working until the end of Easter Sunday. The Vatican has confirmed that his funeral will take place on Saturday at St. Peter's Basilica. Francis will be buried in the Basilica of Santa Maria Maggiore in Rome, according to his wishes. Joshua McElwee is our Vatican correspondent. Joshua, what do we know so far about the Pope's final hours?
We know that after returning from hospital, the Vatican said he had the help of a 24-hour care nurse. We don't know if that nurse was in the room with him when he died at his residence, the Casa Santa Marta. His doctors had asked him to take 2 months convalescence after returning back to the Vatican on March 23rd. But the Pope, who is someone who enjoyed working and took his job as leader of the world's Catholics very seriously, the last words the Pope had spoken in public on Sunday was to wish everyone in St. Peter's Square a happy Easter. You saw a Pope who looked okay, but certainly limited and perhaps straining to make a public commitment.
So who's seen as a leading candidate right now who might become the next Pope?
The scenario of a conclave when the cardinals meet behind closed doors to check to elect the new Pope is not for at least a few weeks at this point. Some names that are often floated are Cardinal Pietro Parolin, who has been the number 2 official at the Vatican during Pope Francis's tenure. He's been the Vatican Secretary of State. Another top official at the Vatican who is often mentioned is Cardinal Luis Antonio Tagle. He's originally from the Philippines. He's a former Archbishop of Manila, but Pope Francis asked him to come to the Vatican a few years ago to take on a job as the Vatican's leading evangelism official. There are 135 cardinals who we expect will vote in the conclave, and often, as it was with Pope Francis, the cardinal who becomes Pope is one a lot of people weren't expecting.
How will Pope Francis's selection of cardinals across the world possibly impact the outcome of the conclave?
At his death, he had appointed about 80% of the cardinals who will elect his successor, but that doesn't quite mean that, his successor will look a lot like Pope Francis. Francis really emphasized that he wanted people who had been pastors and people who were coming from different parts of the world who had never been cardinals before to be cardinal. And so it's hard to say, exactly who the cardinals will be looking for. And of course, these 135 men are coming from very different parts of the world. Some of them probably only met each other in brief passing, and now they will come to Rome and need to talk to one another and decide who should be Pope.
Harvard is suing the Trump administration in an attempt to block the freezing of billions of dollars in federal funding. The lawsuit comes after the university rejected a list of White House demands that it said would undermine its independence. The White House says it's seeking to combat anti-Semitism on college campuses. US President Donald Trump says he's standing behind his defense secretary, Pete Hegseth, after reports that Hegseth texted sensitive US military strike plans from his personal phone to his wife, brother, attorney, and others. The White House has denied an NPR report that the Trump administration had begun searching for his replacement. Russian President Vladimir Putin says he is open to direct peace talks with Ukraine. Ukrainian President Volodymyr Zelensky says Kyiv is prepared for any discussion to halt attacks on civilian targets. And Trump's approval rating has dipped. That's according to the latest Reuters Ipsos poll. Is now at the lowest level since his return to the White House. US stocks suffered steep losses on Monday as Trump ramped up his attacks on Federal Reserve Chair Jerome Powell. Trump, on social media, calling his own Fed appointee a, quote, major loser, and Mr. Too Late, demanding that he lower interest rates immediately. The continued attacks have investors worried about the central bank's independence, even as they grapple with the effects of Trump's erratic trade war. Dan Burns is our economics editor. Dan, what would happen if Trump really tried to fire Powell?
Trying to fire Powell would create a genuine crisis, and in moments of crisis, it means extensive uncertainty, and uncertainty is never the friend of investors. So, in all likelihood, an attempt to fire Powell would mean a fall in stock prices, quite possibly a fall in U.S. Treasury prices, as we've already seen, and a further weakening of the dollar. And it would be a significant assault on the independence of the U.S. Federal Reserve. And that's important because the Fed is seen widely as the most important central bank in the world. And its credibility through that avenue of independence is really central to the stability of key U.S. assets like U.S. Treasuries and to the value of the dollar.
There's a case pending before the Supreme Court on whether Trump can fire Democratic members of 2 federal labor boards that's being closely watched as a potential precedent for whether Trump can remove Powell. But at this point, can he?
It's probably a little bit more complicated than that in the case of the Fed, given just how much higher the stakes are. But that is a starting point. The firing of those Democrats from the labor board are what people are watching right now. It's not clear is the unsatisfactory answer. The Federal Reserve Act of 1913 that established the Fed specifically says that the Board of Governors members, including the chair, may not be dismissed for anything other than cause, which effectively means committing a crime while in the chair, while in the role. That's not what's happened.
Iran and the US will hold another round of talks this week in hopes of reaching a possible deal over Tehran's nuclear weapons program. Deputy Foreign Affairs Editor Humaira Pamuk lays out what's next in the rapid-paced negotiations.
A U.S. official described the Rome talks as yielding very good progress. So that's really important. Now, next phase is expert-level meetings will begin on Wednesday in Oman. That means that basically they're going to sit down and start to go into the specifics. And we'll see how that goes, because that's when the negotiation actually gets much more heated. We're going to have to see if there is going to be breakthrough on important points.
So where does this leave Israel?
The American position so far has been a little bit confusing because we have seen from Trump's top negotiator, his special envoy, Steve Witkoff, say in one instance that it's okay that if the Iranian government would continue enrichment to a certain extent, he had a specific percentage, only to have to walk it back less than 24 hours later saying, no, Iran has to completely dismantle its all nuclear program. So we're going to have to see what is the bottom line for the United States. And that's going to be 100% up to President Donald Trump, how much he wants to have this deal. What is he prepared to give up for it? What is he prepared to say okay to?
And for today's recommended read, a collection of photos from Pripyat, Ukraine, near the Chernobyl nuclear power plant. They show a region frozen in time after the nuclear disaster. There's a link to the pictures in today's pod description. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favourite podcast player, and we'll be back tomorrow with our daily headline show.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
President Trump's demands on Fed Chair Jay Powell to act on rates are renewing concern about the president meddling with central bank policy. Claudia Sahm, a former Federal Reserve economist, says it is a real concern.
I take it very seriously. And this administration has taken steps, whether it's with the tariffs or with downsizing the government, that really were beyond expectations. So the unthinkable is thinkable with this administration.
Claudia Sahm is currently chief economist at New Century Advisors, and concerns about Fed independence also have gold on the rise again this morning. Earlier, it topped $3,500 an ounce for the first time. Right now, it's at $34.60, 70 cents.
Well, Nathan, the S&P 500 is down by 9% since Trump unveiled sweeping tariffs earlier this month on most U.S. trading partners. The chief economist of Apollo Global Management, Torsten Slok, says a recession is the most likely scenario if the current tariffs take place.
Maybe it will take a few more weeks, maybe in the worst case a month or two, but we will eventually begin to see the net effect if these tariffs stay in place. And that's why we think there's a 90% chance of a recession if these tariffs stay at these current levels.
Apollo Global Management's Torsten Slok says foreigners own $19 trillion of U.S. equities, $7 trillion of treasuries, and $5 trillion of U.S. corporate bonds, accounting for about 20 to 30% of the total market. He says the unwinding of those holdings could cause substantial pain.
And Karen, Bloomberg Economics estimates President Trump's tariffs would shave about $2 trillion off global output by the end of 2027. We get that part of the story from Bloomberg's Amy Morris in Washington.
Analysts find that the president's so-called Liberation Day tariffs will mean a historic shock to the world GDP. Bloomberg economics analysts find that for the U.S., Trump's tariffs act like a massive tax hike and is considered a major shock. They say one casualty could be Fed independence. Whether President Trump attempts to fire Fed Chair Jay Powell or waits until the end of his term, it now does look likely that the next Fed chief will be picked at least in part based on alignment with Trump's policy preferences. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thank you. President Trump met with major retailers at the White House as executives sought relief from tariffs that have destabilized global supply chains and rattled U.S. consumers. Jordan Fabian is Bloomberg News White House editor.
That China 145% tariff looms large over this conversation, and you start to do work across purposes when you have these companies coming in asking for relief, and you have, not to mention these Southeast Asian countries who have higher rates as well, questions about transshipment, et cetera. These are a lot of issues to untangle, and so it's unclear where this is going to end up as a result of this meeting.
Bloomberg's Jordan Fabian says the meeting included representatives from Walmart, Home Depot, Lowe's, and Target.
Yeah, and the tariffs are already starting to hit some firms in Japan, Karen. A survey of more than 500 companies by Japan's Ministry of Finance shows about 10% of them say the measures have affected their businesses. The CEO of Japanese beverage giant Suntory Holdings says tariffs could make companies reluctant to invest in the U.S.
Current tariff situation is losing the appetite from other countries to the United States. So this is really, killing the appetite from the world to the United States. So we are losing the appetite to invest in the United States.
Suntory Holdings CEO Takeshi Ninami warns U.S. tariffs could reduce Japan's GDP by as much as 1.2%.
Well, Nathan, one of the hardest hit stocks during the recent market sell-off has been Tesla. And this afternoon, the EV giant will report its first quarter earnings. And we get a preview with Bloomberg's Tom Busby.
It's been a tough start to the new year for Tesla. Shares have lost about 45% of their value so far in 2025, and it posted weaker than forecast Q1 sales earlier this month. The reasons? An aging lineup, few details about more affordable EVs to come, and a lot of backlash against CEO Elon Musk for ties to President Trump's cost-cutting DOGE task force and support for far-right politicians in Germany. Consensus calls for adjusted earnings per share of 44 cents, total revenue of $21.43 billion. Tom Busby, Bloomberg Radio.
Time now for the Bloomberg Sports Update, and we bring in John Stash Hour. John.
Thanks, Karen. A couple of wins by the road teams in the NBA playoffs. The Pistons beat the Knicks in New York 100-94. That's Detroit's first playoff victory since 2008. The Clippers beat the Nuggets in Denver 105-102. Both those series are tied at 1. Alex Ovechkin, who just recently became the leading goal scorer in NHL history, scored a big one in overtime, giving the Capitals a Game 1 3-2 victory over Montreal. Also in overtime, Dallas beat Colorado 4-3. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager.
Saying tariff negotiations are going well as he continues attacking Fed Chair Jay Powell and calling for lower interest rates. Joining us from the nation's capital, Bloomberg's Tyler Kendall. Tyler, doubling down on the Fed Chair and also coming out repeatedly suggesting we're getting closer and closer to trade deals. How close are we?
Yeah, John, good morning. Well, that's one of the big
cheaper.
Wow.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
And a sell-off into the close here, live from Studio 2 at Bloomberg World Headquarters in New York. I'm Alex Steele.
And I'm Scarlett Fu. We're kicking off to the closing bell here in the U.S. Going to be a momentous last hour of trading.
Oh, momentous indeed. Volume is light, but the price action's anything but. You're looking at the S&P off by over 3%, just continuing to slide to the downside, led in part by tech. So what do? You go to the safety a little bit against the front ends, but that sell-off in the back end continuing. You're looking at that spread, the 210s, the steepest since 2022. Bloomberg Dollar Index, 3-year low. Gold, yet another record high, Scarlett.
All right. The Sell America trade really showing up in a big way. U.S. stocks, longer dated treasuries, and the dollar all feeling the heat with the Bloomberg Dollar Index at one point falling to a 15-month low. Havens are now limited to shorter dated treasuries, gold, which set yet another record, and the Swissy climbing more than 1% to its strongest versus the dollar in 13 and a half years. Now, at the center of it all is President Trump, who is waging a pressure campaign on Federal Reserve Chair Jay Powell. Trump sounded off on social media saying there is virtually no inflation, at least in food and energy, and that the U.S. economy may slow if Powell doesn't preemptively cut borrowing costs. There are also multiple reports that Trump is looking into forcibly removing Powell before the end of his term. And then you've got the ongoing trade war. Trump says he'll meet with Walmart and Target executives to calm tariff anxieties, while a new note from Goldman Sachs predicts China's economy will likely slow sharply this quarter because of U.S. tariffs. Beijing is digging in as well, warning trading partners against striking deals with the U.S. that could harm Beijing's interests. Now, Scott Lincecum of Cato Institute says the back and forth between China and the U.S. could be a long-term irritant.
Trade deals typically take around a year and a half to complete. It still seems that both sides are not ready to get down to talking.
All right, so long-term risk that needs to be priced in and is increasingly being priced in.
Right, and I guess the question is, where is it priced in? You can see it pretty much all across U.S. assets, whether it's the long end of the Treasury market, the dollar, or U.S. stocks. This is obviously the S&P, but I want to draw your attention to this. It's the correlation of the Bloomberg Dollar Index versus the S&P. Now, if it goes into negative territory, they're moving inversely, right? Stocks up, dollar down, stocks down, dollar up. What we've seen recently, though, is increasing positive correlation. Now, we get to 1, and it's really correlated. We're clearly nowhere near there. But the idea is as the dollar sells off, so do equities. And is that sort of a push into selling the majority of U.S. assets, particularly if you look then and you add in the long end of the curve? And Scarlett raises the question, where does the buck stop? Where do equities stop? How do we find this bottom?
Well said. All right, let's kick things off right now with Zachary Griffiths. He is head of U.S. investment grade and macro strategy at Credit Sights. Zachary, welcome to the program. Let's pick up right where Alex left off. Where does the buck stop? Where do stocks and which asset class is leading the way here? It's kind of hard to kind of separate the different asset classes, but what's seeing the most pressure at this moment?
Yeah, thanks, Scarlett. There's been a big shift, and correlations and betas seem to be evolving on a daily basis. To us, it seems like you're seeing investors move out of U.S. assets, and so that would be selling equities, and that's hurting the dollar. And that's something that we're really concerned about. When we look at the bond market, I think the biggest thing to focus on is the big steepening of the curve that we're seeing today. When you think about the pressure on the Fed, what does it mean for a market reaction if he were ultimately removed? I think you're seeing a small portion of that today with equities down, the front end yields lower, and back end selling off.
I mean, so I hate to ask the question, but how steep can we go, right? Like, how much can yields rise on the back end?
It's a great question, and it's tough because our base case is that the curve finishes the year flatter than where we are today, and we're really focused more on the idea that inflation is going to remain sticky. Tariffs are not a one-time price level adjustment. You're going to see sustained inflationary impacts of the proposals from the Trump administration, and that leaves the Fed unable to cut as much as the market is currently priced for. Now, if we're wrong and Fed chair is ultimately removed, I think you could see the curve steepen another 50 to 100 basis points, no problem. If you go back and look at historical norms, the curve has been very flat recently relative to historical norms, especially considering where the budget deficit is today.
So the White House would say that they're focusing on moving forward with the rest of their pro-growth agenda, whether it's tax cuts, whether it's deregulation. How do you see that getting mixed in with the outlook right now of 90% odds, according to Torsten Sluck of Apollo, a recession here in the U.S., and this overall concern about U.S. assets being not a great place to be?
It's tough. I think coming into the year, the focus was on deregulation and tax cuts, and that's really what led to market exuberance. We saw that as overdone, whereas the Trump administration and President Trump himself has the most direct influence over tariff policy, and that's what we've seen as the priority. So looking ahead, if we do get deregulation, if we see tax cuts extended and maybe deepened, I think that stems off the worst case scenario from an economic growth or demand perspective, but we could be seeing supply side constraints of tariffs. So it's very difficult to balance. Our base case is a below trend economic growth environment in the U.S. this year.
So what does this mean then, say, for the credit market? The narrative is that the credit market was holding in on a relative basis versus other assets. Obviously, spreads have widened, but still nonetheless. Does that stress, though, really start to appear?
It's tough, Alex, when you think about where we are today relative to our base case. So our calls coming into this year were 110 basis points on IG and 350 on high yield in terms of our year-end 2025 targets. We're essentially there in IG, and we're still a little bit wide of that in high yield. When we think about what's going to drive markets in the second half of this year, it's going to ultimately come down to, are we in a recession or not? If not, we think spreads could probably widen from these levels, but there's a soft ceiling on spreads because there still is a lot of cash in the system looking to get put to work. And when we think about what drives demand really over the past year and some of the conversations we've had with clients is elevated yield levels. And so we think of that as spreads getting bought back down as long as we don't get into this recessionary or even slower growth environment than what we're anticipating for this year.
What are the conversations like with your clients right now in terms of how willing are they to go out on the risk curve? What's their thought process in terms of investing for the rest of the year?
Risk appetite certainly has come down a fair bit, and I think positioning a little bit more defensively, whether that be moving up in quality or shorter in duration, certainly resonates with clients today. But at the end of the day, our clients need to stay invested. And so picking your spots is really important. We had identified several sectors coming into this year, financials, capital goods, in terms of the investment grade market as a decent place to be, as those sectors typically have exhibited defensive characteristics. Overall, I think the receptivity to remaining defensive holds, but the idea that yields remain attractive and could remain attractive for the remainder of this year keeps people a little bit more optimistic than all of the volatility might suggest.
I gotta say, Zachary, though, it's really hard to understand what is safety right now and what is defensive.
Yeah, even as we were going through the assessment of tariffs and what sectors are most at risk, what could outperform, and even looking at the spread moves that we've seen since Liberation Day, since peak volatility on April 9th, it's hard to come up with a cohesive strategy. And so to us, from a broad global fixed income perspective coming into this year, we had a defensive positioning recommendation across the globe. We think that kind of looks like moving closer into cash and maybe within the U.S. overweighting mortgages relative to credit. That's typically been a good play when you expect credit spreads to widen, especially from an excess returns perspective historically.
Yeah, and if you're in cash, maybe not the U.S. currency as well. Zachary, before we let you go, what's the next pain point for risk assets?
The big thing we're focused on is the Treasury's X date and how the debt ceiling negotiations could get lumped into tax cuts and longer-term plans in terms of budget reconciliation. And so I think all the focus has been on trade policy. We don't have a tax deal yet. And if we see more brinksmanship trying to tie in the debt ceiling to those negotiations, I think you have an additional overhang of volatility that could persist into the end of the summer of this year. And so we think that volatility remains elevated. We think the Fed's hands are tied, and that's kind of a difficult backdrop for assets broadly.
All right, Zachary Griffiths, a really pleasure speaking with you today. Zachary is head of U.S. investment grade and macro strategy at Credit Sites. Now, coming up on The Close, a look at technicals in today's stock market action with Todd Stone. He is senior ETF and technical strategist at Strategas.
All right, plus a look at financials after the big banks kicked off a busy earnings season with Tom Michaud, CEO of KBW, a Stifel company.
And speaking of earnings, we're going to look ahead to some of the biggest names in tech with Tesla due out tomorrow. Sarah Kunst, managing director at Clio Capital, tells us what she'll be on the lookout for with those results. We've got all that and more coming up. This is The Close on Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
All right, the S&P is down over 3%. We are around the lows of the session here as we're about 40 minutes away from the closing bell. Todd Stone is senior ETF and technical strategist at Strategas Securities. Todd, do we get back to testing that intraday low of like 48.53?
Yeah, historically, I would say more often than not, you do retests, right? 3 out of 4 corrections you retest. Most recently, 2018 and 2020 did not have that retest scenario. So I think that's kind of fresh on investors' minds. But what we're looking for on the retest, let's assume it does happen the way things are going right now, is what do volumes look like? Is it less intense than it was a few weeks ago? And how many stocks are making new lows? Because indices, especially when you have super concentration like we do today, mask what's going on, right? So it masks weakness on the way up. Can it mask improvement now on the retest? That's going to be very important. If you do not get less intensity, more improvement under the surface, that's going to be troublesome, I think, for the longer term.
How much do you read into today's sell-off? Because we still have a lot of overseas markets closed. There are a lot of people not in the market
Volume's
today.
super light,
because of the Easter holidays. So we know that that's exaggerating some of the moves.
Yeah, I think what was interesting to us is that the average bear market rally, right? And I think we're in a bear market. I think, well, by all means measured, right? We didn't hit 20%, but let's just consider a bear market. It was about 15% over 30 trading days. We basically hit that in one day the other week. And so now you're just getting that kind of reverb retests now. And so I don't love how there's very distributive price action today, But it's just part of the painful process here, and you're seeing a lot of tactical folks go very defensive in the near term.
The longer that we're below that 200-day moving average, how much more damage then can be done on the downside?
So if you think about trend systems, right, we're in a downtrend. We've had the 50-day cross below the 200-day. That's a warning shot. And what's interesting, when you get a 50-day cross below a 200-day moving average, where we are now, the forward returns in the near term are messy. Right? You can get a 2000, 2008 type scenario where things continue to decline. We're going to rely on credit for that, which we'll see how that evolves. But 1 year out from this type of scenario, you actually get pretty decent forward returns. And so it almost makes you wonder if we're closer to the end than the beginning of this correction. But the key is going to be how much does the economy get affected by whatever is going on out there? What does the credit backdrop look like? Because that's when it turns into a secular bear market like the tech bubble and like the financial crisis. Those are the extremes.
And these are unanswerable questions because we don't know what's going to happen. When you look at the different sectors, and we've seen some of the more defensive sectors perform a little bit better in that they're not falling as much, right? Whether it's healthcare, whether it's consumer staples. How do they look technically, some of those defensive sectors that everyone tends to flock to?
Yeah, staples haven't worked in ages, and now they finally are, because if you had to have that exposure, you're going to want to go super defensive. I think it's interesting that utilities are the only sector that have seen ETF inflows since the market peak, and it's much more defensive utilities. It's not the Constellation Energy, the Vistras that were more AI and nuclear thematic plays. It's the Con Edison, the ones that you need actual electricity for. And then healthcare, we can't quite put our finger on healthcare. Healthcare has been so bad for so long. It's had a mass exodus in terms of ETF outflows, but it's struggling because it's so diverse. Managed care doesn't work, biotech doesn't work, equipment has some signs of life, so I like that area. But in the near term, you go strictly defensive consumer staples. The rally is a little extreme for my liking there, but it can persist in really bad environments.
Let's talk about extreme for their liking. The dollar, Bloomberg Dollar Index, right? It's down to a 3-year low. Where's the bottom? Technically.
Dollar super oversold.
Yep.
You're going to mean revert just because of trading mechanics. But there's just no trend there for us. There's a meaningful dollar unwind going on. Whatever that reason is, we can make up all sorts of reasons. I think you can get a dollar bounce, but I'm more paying attention to what dollar yen is doing. That's really risk off. You have 140 on yen. That's a meaningful change from the last 10 years, right? And then dollar won also trying to test new highs there, too. And I think that's more reflective of geopolitical tensions as well.
What are you seeing in ETF flows in regards to the idea that for so long people were trained to buy on the dip? And that was happening throughout the downdraft, but probably less so this past week.
Right. So there's two items I have in my mind now, right? There's always a passive drip into low-cost index funds. That's always there. What I cannot square on my mind is the massive amount of volume and flows going to levered long ETFs, right? Investors, specifically perhaps retailers, so conditioned to a Fed put, a presidential put, whatever it might be, to buy the dip. And yet it's not really working just yet. So that's a strange corner. On the other side, in terms of tactical flows, you're seeing a massive amount of money go to Treasury bill ETFs. That is basically the only thing that's safe right now outside of, say, utilities and staples. But we know that they can get caught up in volatility as well. So a ton of money going to Treasury bills and a lot of money going to gold, too. Yeah. For some reason, gold flows were agnostic for a while. And then it hit a 5,000-year high, whatever it might be, and all of a sudden everyone woke up and said, oh, we got to buy gold. So I don't love how gold's going parabolic here in terms of flows and trend.
I was going to say, how overbought is gold right now?
You're getting super extreme, historically extreme. So I'd be a little bit careful buying new allocations to gold right now.
All right, Todd, always a pleasure. Thank you so much. Todd Stone is Senior ETF and Technical Strategist at Strategas Securities. Coming up on the close, is there any magic left in the kingdom? Wolf Research says yes. Up next, we're going to speak with Peter Supino about his decision to upgrade Disney to an outperform rating. This is the close on Bloomberg. It's time now for our top calls. We'll look at some of the big movers on the back of analyst recommendations. And we're going to start with Tesla. Wedbush maintaining its outperform rating and price target of $315. But analyst Dan Ives says the EV maker faces a code red moment before Tesla's earnings tomorrow. Though Ives remains bullish on Tesla, he says he believes Elon Musk should step back from his work at Doge to focus on the company. Shares down almost 7%.
Really looking forward to that call tomorrow. All right, up next, Amazon. Raymond James downgrading the big tech giant to outperform from strong buy and slashing their price target to a street low of $195, now from $275. And the move comes ahead of Amazon's upcoming earnings report, which the analyst believes will be impacted by the U.S. trade war and the company's continued investments. Shares are down almost 4%.
And last up is Disney. Wolf Research upgrading the stock to outperform from Pure Perform, setting a price target of $112. The firm says the media giant's cruise expansions and password sharing crackdowns are helping Disney de-risk downside in the event of a macro downturn. The shares outperforming the market in that it's only down 1.4%. And those are some of our top calls. Joining us now to discuss is the analyst behind that call, Peter Supino. He is managing director and senior analyst of media and entertainment at Wolf Research. Peter, good to speak with you. To what extent is Disney unique among the big media companies or entertainment companies in what you say is some resilience here in the event of a macro downturn?
Yeah, what a way to win today with the stock only down 1.5%. Disney's unique in a couple of extremely important ways. A client asked this morning how we value Disney relative to what, and we answered that it's hard to benchmark Disney to any one company because its business is really first and foremost experiences. It's theme parks and cruise ships. And after that, it's the production of film and television and the distribution of that across many different channels, the largest of which is its own distribution channel. And in that way, Disney looks a lot like Netflix. But Disney's price doesn't look very much like Netflix. The stock trades for about 15 times earnings.
So why has it traded so poorly, Peter?
Well, Disney's got some real problems. We've had a neutral rating on Disney for the last 2 years. And part of the reason has been that the monoculture is under attack. Children and young people and young families their attention is competed for by a dynamic and rapidly changing, supply side of the media industry. Disney used to have a much less competitive stage. The other reason, of course, is streaming is a very, very competitive business, and Disney doesn't make any money in streaming right now. They have about $23 billion of direct-to-consumer streaming revenue, but that contributes just barely any profit.
You mentioned in your note that cruise expansion is something that can help it de-risk downside. Where else should Disney, or do you think Disney is best positioned to kind of keep investing in its business rather than, kind of being really mindful of costs and perhaps even cutting expenses?
Yes, that is exactly the right way to ask the question. Disney has been under the leadership of Hugh Johnston, who became CFO less than 2 years ago. Disney has been extremely focused on efficiency, and it needed to be because the media segment at Disney was barely profitable, and the streaming business was hemorrhaging cash. And your question was, where is Disney investing in expansion in the future? And the answer is in plenty of places. So first and foremost, that DTC, that streaming business, by virtue of being a $23 billion revenue business with a break-even profit margin, it means they're spending $23 billion against that streaming opportunity. And there are very few businesses on earth with that much revenue and expense that don't make money. And so we think there's plenty of investment in the future in that streaming P&L. And then the cruise ships. Disney is launching 3 new cruise ships over the next 2 years, which we think will generate $800 million of incremental profit, not just revenue. And in doing so, ensure that there's growth in that experiences business while the economy is shaky.
But at the same time, Peter, then you take a look at their parks business, and didn't they lower the price for its theme parks, which was like a never-before-seen moment when it comes to its theme park in Florida? So what's our read-through then on the consumer as it relates to Disney?
The biggest risk in this upgrade is clearly the risk of being early, and maybe we are. We've been trying to start the conversation about Disney at $83 a share with clients based on the assumption that the country is heading into a recession, but also based on our forecast that the earnings this company would produce if we had a moderately harsh recession for a year would be in the 450 to 470 range. And with the stock in the low 80s and the history of this company having a reasonably market-like multiple, we think that's pretty well priced in. So near-term volatility notwithstanding, we think the range of outcomes is kind of 120 to 140 on the upside over a couple of years, and maybe 70 in a very tough downside scenario.
Peter, lost in all of this is talk of who's going to replace Bob Iger when he finally is done leading Disney. We know James Gorman is the chairman of the board, and he, of course, engineered a successful transition over at Morgan Stanley. How much pressure is the company under to come up with an answer to that?
Well, plenty of pressure. The board of directors is, of course, interviewing outside candidates because that's what large companies do in a moment like this. We think Dana Walden is the lead candidate for the job. She's a well-respected internal candidate. And we probably won't know until at the soonest second half of 25, if not 2026.
All right. Well, obviously, you keep us posted on that. Peter, thanks a lot. Really appreciate it. Peter Supino, Managing Director and Senior Analyst over at Wolfe Research. Bloomberg Intelligence had a really great note out that talked about how discretionary categories like an AT&T or Verizon or Disney might be subject to discretionary spending cuts, but they have the war chest, right? They can manage it.
Yeah, and for some people, it's a staple. Our senior producer was just at Disney over the weekend or over the last week, and they had to spend, and there are plenty of other families also spending out there.
That's right. And also, Netflix, is that discretionary anymore?
Or
is that like you have to spend? It's utility. All right. Next, we're going to speak to the CEO of KBW, his outlook on the banking sector, and how the uncertainty caused by tariffs impacts the markets.
It's about 3:30 p.m. in New York. This is the countdown to the close. I'm Scarlett Fu.
And I'm Alex Steele. Taking a look at the market, we're still to the downside here. Volume, though, very light as it's a holiday in most of Europe. But, Scarlett, we do have an extremely busy earnings week. It's the second busiest week for earnings. About 24% of companies are reporting from the S&P.
$10.7 trillion worth of market cap, and it's kind of the lead up to the big one, which will be the following week, where almost $20 trillion worth of companies will be reporting results. But we do get more of the big tech names coming up. Alphabet of the Mag 7 will be reporting, as well as Tesla. Tesla will be super interesting.
Yes,
because,
so many layers there.
Yeah, Elon Musk just kind of looms over everything.
Yep, and we get some airlines, as you were mentioning. Also, we get some industrial companies. And last week, of course, we got some of the big banks. And then we get the regional banks. And the difference is sort of how the regional banks will address the uncertainty and what they're seeing from their customers and consumers as well. Well, joining us now to discuss is Tom Michaud. He's CEO of KBW, a Stifel company. Tom, good to see you.
Good to see you as well.
Help us make the transition from the big banks to then the regionals, right? Big banks are going to be more exposed to capital markets versus, say, the regionals, right?
Absolutely. And so far, the story has been somewhat as expected. So investment banking has been weak due to the fact that the turmoil and the volatility in the markets has pushed a lot of M&A activity and capital markets activity out onto the horizon. But the core business of banking has actually been very good. Mainly, we think, in the area of deposit cost control. So deposits have been very steady and have been coming in a little bit better for banks. And so that's been improving the net interest margin, which really is the core business in banking. And then credit has been extraordinarily benign, which I say what's surprising is not that it's going to go up one day, but for how long it's been benign. So still another great quarter in terms of credit. And then trading has been very good for Wall Street. And that's been a big part of the story.
So I want to ask you about deposits. What's driving the increase in deposits? Is it the market volatility? Is it the idea that rates are going up, so people are putting money in there?
It's the lack of loan demand, which is a whole nother story getting to where things are today. So the economy was slowing before Liberation Day. So remember, the Fed had raised rates to slow the economy, so it was working, right? Now we were in cutting rate mode, and so they were getting ready to cut again because the economy was slowing, and that's what the market had been looking for. So sure enough, the first quarter was a very slow quarter for loan growth. We expected slow, and it ended up being even slower than we expected. So I think that says something about what's happening in the economy.
Wouldn't this then all be bad for regionals that don't have exposure to capital markets in the same way and are dependent on loan growth?
Well, our earnings are still, so the good news on the longer term picture is that the yield curve is no longer inverted. So banks can regional banks can operate and work their way around here. So net interest margins are expanding. They'll continue to expand because the yield curve is no longer as adverse as it once was. So the core business of banking is continuing to grow as long as credit remains under control. If we get a shift in the credit outlook, that can change the earnings profile quickly. But right now, we're still calling for earnings per share growth for this year for the banks. And remember, they're not the first derivative of tariffs. What happens in the economy certainly drives what happens for them, but they're not big importers or exporters.
Right. They're not directly impacted.
Correct.
By tariffs
but the economy matters, of course, a lot.
Certainly. So how do they position themselves in this defensive environment, in this, environment where people are sitting on their hands, whether it's consumers or companies?
You know what? I've been listening to some of the conference calls, and they're on offense. And, look, they've been under attack by non-banks. And what's interesting, if you look at the non-banks today, they're down over 5%. You think of companies like KKR and some of the bigger alternative lenders. There are a lot of moving parts because this will be the first real cycle for them possibly since they've gained so much market share in the private credit market. I mean, these are very good companies. I'm not saying they're not. But banks had kind of been on defense in this inverted yield curve world. Now they're actually flush with cash. They've got room to lend. They stand ready. And as long as we don't have a hard landing, that's what I'm really saying. We have a soft landing. Everything will be pretty good in the banking industry. We have a hard landing. Let's get together and talk about that again. But it's a chance for them to take some market share back from the non-banks because of the strong position, and their capital hasn't been better in dozens of years.
So 2 weeks ago, we had that yippee, quote unquote, trading in the Treasury market, right? And some of the conversation was, look, if you roll back some of the supplemental leverage ratio for the big banks, where they can more freely add Treasuries to their books, that would really help smooth the system out. Do you think that's going to happen?
I do think it's going to happen. I think that this is one of the quiet surprises. So much talk about
क्रूड ऑयल का व्यू फिलहाल के लिए तो साइडवेज हो रखा है. रेजिस्टेंस है ऊपर नीचे, यहाँ पर फंस गया इस रेंज के आसपास. थोड़ा और नीचे आता तो बेटर था, यहाँ से बाइंग कर लेते हैं वापस से. मॉर्निंग पे सपोर्ट पे था, बाइंग आई, फिर रेजिस्टेंस पे था, सेलिंग आई, अब उसी पे अटक गया है. या तो ऊपर नेक्स्ट रेजिस्टेंस को हिट करे या फिर अब नीचे आए इस लेवल पे, नीचे वाले पे 5360 के अराउंड. बाकी नेचुरल गैस भी सपोर्ट पे पहुंचने वाला है गाइस. बाइंग वापस कर सकते हैं जो लोग सेलिंग में है, ध्यान रखना. ठीक है. बाकी इंडियन मार्केट तो हो गया क्लोज, तो अब सीधा यूएस मार्केट ओपन होगा 7 बजे. उससे पहले 5:30 पे न्यूयॉर्क सेशन की ओपनिंग. वॉल्यूम भी डाउन ही हो गया बिल्कुल, टू मच लो. India US can work together for a win-win partnership, Vice President JD Vance says. बाकी बैंक निफ्टी को भी देखोगे तो वही रेंज एक्सपेक्ट करी थी, उसी रेंज के अंदर क्लोजिंग दे दी मार्केट ने। नीचे 55,300 टू 500, 400 टू 500 और ऊपर 55,700 टू 800 के बीच में। कल की ओपनिंग इंपॉर्टेंट रहेगी कहाँ होती है। थोड़ा सा नीचे आया ना क्रूड तो यहाँ पर वापस बाइंग का एक प्लान रखेंगे, नहीं तो फिर ऊपर का रेजिस्टेंस है नेक्स्ट वाला इसका। लाइक भी करते रहो गाइस, जिन लोगों ने लाइक नहीं किया स्ट्रीम को, कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ लेना। 15 मिनट में चैनल बना रहा है, ब्रेक कर दो फिर चैनल को। यार वो तो बोले सी है बिल्कुल। गोल्ड आज भी देखोगे अर्ली मॉर्निंग फॉरेक्स चार्ट में मार्केट ओपन हुआ था हल्का सा गैप अप, उसके बाद बुलिश मोमेंटम होता हुआ ही चला गया। एमसीएक्स में देखोगे थोड़ा सा लगेगा फ्लैट है, बट ओवरऑल बुलिश ही लग रहा है फॉरेक्स में। 7:30 की न्यूज़ है, थोड़ा इम्पैक्ट कर सकती है, बाकी अगर डेटा बता दिया, एक ही डेटा है 7:30, वो भी थोड़ा बहुत इम्पैक्ट करता है गोल्ड एंड सिल्वर, डॉलर इंडेक्स, रिचमंड मैन्युफैक्चरिंग इंडेक्स। बाकी अभी 5:30 न्यूयॉर्क सेशन की ओपनिंग होगी, 7 PM यूएस मार्केट ओपन। $500, यस $3,500 भी हिट हो गया था आज तो। एग्जैक्टली वहीं से सेल ऑफ आया है $3,500। कुछ हुआ हो 1 मिनट में एक बार 11:30 से 11:45 11:30 की कैंडल है 11:44 11:45
You can see in Europe or Asia could make people feel more excited about, moving money out of the U.S. Secondly, valuation support definitely is there for international markets, because the margin of safety from a valuation perspective is there. And also, if you think about, potentially tailwinds being created because these countries now will have to invest and pay more for their defense, and therefore that will provide investment opportunities which will not exist in the U.S.
Okay, so yeah, it's going to be one of your top picks, Ellen, outside of the U.S.
So the stock that, I want to share with you today is Deutsche Bank. It sounds scary, investing in a bank. However, first of all, valuation very compelling. Secondly, they've really fixed their returns from a, return perspective. And thirdly, they're exiting out of a penalty fine situation. They just need to follow the playbook of a lot of European banks that have been successful, like the UniCredit and also some of the Spanish banks. So we think the backdrop is more favorable. And again, the fiscal situation is way better there than here.
Yeah, Deutsche Bank shares up about 24% in euro terms so far this year. And banks, in fact, up 14% for the best performance in the stock 600 so far this year. Ellen, you are responsible for investment research in the global consumer sector. All global consumer companies are affected by the tariffs that President Trump is imposing or threatens to impose. What kinds of companies, based on management, do better, fare better in this kind of uncertain environment? What do you look for in the management teams?
Management teams that are using conservative estimates and also managing the balance sheet conservatively. And also in this time, I think definitely having more diversified footprint in terms of their global presence will be good. Because right now, if you are too heavily weighted in the U.S., a lot of management are concerned that they have concentration risk. Mm-hmm. So the companies that could do well are maybe, companies like Anheuser-Busch, has significant operations in the U.S., but also globally diversified where they can benefit, if other markets outperform the U.S.
Ellen, if you haven't sold yet in terms of U.S. stocks, is it too late?
Oh, that's a tough question. I think, we don't really make calls based on geographies. I would look at company specifics, but there are U.S. stocks that we're currently buying. So I wouldn't say we would do indiscriminate selling of all of U.S.
Ooh, okay. Ellen, what do you anticipate? What do you most want to hear from the companies when they are reporting earnings this earnings season?
I think I would like for the companies to be able to have, pricing power. For companies that have pricing power, they will prevail because it is also, going to be an inflationary environment. So the companies that have that will be able to maintain their earnings. The other aspect of it is also companies that are able to diversify into different markets and different opportunities, have a price ladder of products where they can sell to different kind of consumers and different kind of environments.
All right, Ellen, thanks a lot. We really appreciate you. Ellen Lee, Portfolio Manager at Causeway Capital Management. Great roundup there of market picks. All right, taking a look at the S&P, we are off by 2.36%. So we are off the lows of the session, Scarlett, but volume is quite light. But talking about earnings season, 24% of S&P companies are going to be reporting this week. It's going to be a big one. And we have a real variety of, right? It's not just big bangs. It's a little bit of Netflix. You got Tesla. You have some industrials. It'll be really interesting.
Yeah, Tesla and Alphabet are the big ones from the Mag 7 that will be reporting this week. But General Electric, Lockheed Martin as well. So the industrial side of the economy is also going to show up in a big way.
Gina Martin Adams of Bloomberg Intelligence was telling me that 65% of companies that have reported missed on sales. And that's extreme. And you have to see if that actually filters out as we continue through earnings season.
If they're giving any kind of outlook, it's probably not very robust
or like
either.
A fan outlook at the end of the day, right? Like it might be this, it may be that. All right, 10 seconds away, or I should say 2 minutes away from the closing bell right here in the U.S. We got you covered, full market coverage right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, I'm Alex Steele, and alongside Scarlett Fu, we're going to take you through the closing bell in a global simulcast. We're joined now by Carol Masser and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. Guys, I haven't been on air for about 5 whole days, 5 whole trading days,
Welcome
and it
back.
feels like it's the same deal. We're just selling here, selling, right?
You're welcome.
Thank you.
We had some updates last week, though, at the beginning of the week.
Long
Alex,
forgotten right now.
Yeah, but it's like, no, we're just going to still stay into the selling mode. Yeah?
I will say, interesting to see some buying into the close. We talked earlier with our Eric Wiener, though. He said that volume was kind of low here. But nonetheless, to see in the last few minutes of trading that there are some investors finding some opportunities, even though broad-based selling and a lot of names are down. I think that's a little bit of a positive sign, but little one. Okay, all-time high for gold. We knew that. Have you guys seen what Bitcoin is doing? This is a little wild. Bitcoin's at its highest going back to the end of March. It's up another $2,200 today. The moves counter to what's happening in other risk assets today.
Yeah, well, short-term treasuries are also up, and short highly rated credit is also up. So those are your havens today.
You know, it's down, the dollar. We're at a 3-year low when it comes to the dollar. It still feels like it's sell equities, sell the dollar, sell the long end of the curve. So it's still that sort of push to selling U.S. assets. And I just wonder kind of how much that theme has to go.
Yeah, exactly. Right. That's what we're trying to figure out. Where do we bottom out? And you keep thinking maybe earnings are going to help us. But we talked with our Gina Martin Adams, and it feels like people continue to, reduce those earnings estimates for this year as well as into next year.
Ooh, great timing, guys. There is the closing bell on this Monday. You're looking at S&P closing off about 124 points. That's about 2.3% off the low. So a little bit of buying into the closing bell. The Dow Jones Industrial Average, guys, off by about 2.5%, and the NASDAQ off by 2.5% as well. That was the big underperformer, guys, but it feels like now we're pretty much on par. And I'm just taking a look at the Russell, the small caps closing right in line. 2.1%, Carol.
All right. And as we've been saying, broad-based selling, though, on this Monday. So if I look at the S&P 500, roughly 463 names to the downside, and you've got about 39 holding on to some gains here.
All right, let's take a look at the IMAP. Pretty simple today. There's no cheese, there's no pesto. It's just all red sauce and maybe some pepperonis in there. Everything is down across the board. 11 sectors all in the red. Even when you slice it into 24 industry groups, Carol, all 24 groups are falling as well. The better performing groups, food, beverage, and tobacco, consumer durables, and apparel. So that gives you a sense of where some of the safer places to hide might be.
It's like a super bad sunburn. That's what it looks like. All right, let's get to some of the individual gainers. Cross my fingers that they're holding on to it. Netflix, up as much as 4.7% today, closing with about a 1.5% gain. This is a top gainer in the NASDAQ 100, saw it higher too in the S&P earlier. Some momentum. I forgot, like earnings on Thursday before the long weekend. It feels like a lifetime ago. We did get that. The company did come out and it did forecast revenue for the second quarter that beat the average analyst estimate. And analysts are seeing the company's business as resilient amid a tougher macro environment. So the expectation is that, maybe Netflix is one of those things that you don't.
Well,
really
here's my
cancel.
question, Carol.
Yeah.
Is Netflix discretionary anymore?
Well, exactly. I mean, there's been a lot of research, right, where folks are saying, or, that maybe it is, you got to have this. Like, it's a cheap
it's a utility.
luxury, right?
If you cut the cord, then you probably have Netflix.
That's what I'm saying. Like, there's no way that I would let that go. I would let go other apps before Netflix. Anyway, I digress.
All right, consumer staple then. All right, Discover Financial, number one gainer in the S&P 500, up about 3.5%. It was up more than 7% during its highs today, but still holding on to about a 3.6% gain. Capital One receiving approval on Friday from U.S. regulators to buy Discover, and this creates the nation's biggest credit card issuer by loan volume. Capital One, we also saw trade higher in today's session. Analysts kind of weighing in. They say maybe we could see some more consolidation, and they do say the deal creates significant value for shareholders. So that's a pop here in today's session. And Fidelity National Information Services, FIS is the ticker. This went up about 2.4%. This is your number three gainer in the S&P 500. Payment services company raised to buy at both Citi and TD Cowen following recent deals with Global Payments, sale of a stake in WorldPay, and purchase of an issuer solutions business, making the company's business model steadier. That's according to TD Cowen. So some decent gainers in today's session.
Some decent decliners in today's session is another way to put it.
Embarrassment of riches for you.
It really is. I mean, look at Tesla right here, down 5.8%. It was down as much as 7.7% earlier in the session. Questions remain over Elon Musk's role within the federal government and uncertainty over the company's plans to introduce a lower-cost EV. Dan Ives over at Wedbush out with a note over the weekend that said Musk should step back from his government work and focus on Tesla, citing brand damage and a potential 15 to 20% permanent demand destruction. Here's what he wrote. Musk needs to leave the government, take a major step back on Doge, and get back to being CEO of Tesla full-time. Tesla is Musk and Musk is Tesla, and anyone that thinks the brand damage Musk has inflicted is not a real thing. Spend some time speaking to car buyers in the U.S., Europe, and Asia. Once again, Dan Ives over at Wedbush out with that note. Shares are down more than 50%, though, from those highs back in December. Moving on to another mega cap name, Amazon.
मिनट लास्ट 3 आवर्स से रेंज में घूम रहा है हाँ कॉस्ट ओवर रख लो ई में मैं चेक नहीं करता हूँ ओनली सपोर्ट रेजिस्टेंस तो ई में के बारे में कुछ कमेंट नहीं करूँगा बाकी लेवल बताए थे उन लेवल को फॉलो कर सकते हो 15 मिनट टाइम फ्रेम पे Those are the support and resistance in 15-minute time frame in Nasdaq. 15-minute time frame. Guys, almost 45-minute left. 5:30 candle, 5:30 New York session opening. Again, more volume expected after 5:30. Here we can get live goods in natural gas of US. Live code about what? You're talking about live commentary, or can you please elaborate? जी आप इतना पैसन कैसे बनाते हो? पैसन कह रहे हो या फिर पेसन कह रहे हो? वर्ड गलत तो नहीं लिख दिया? Trading view is not late. You can subscribe for paid version. Without paid version, you will get 5 second delay data actually. All the data is 5 second delay if you are using free version. If you are using paid version, it is up to date. No any kind of late data on trading view. Otherwise, you can use other brokers chart as well. They also provide free of cost. But as per my view, trading view is the fastest, one of the fastest platform which can give us the accurate data. Or else you can use investing.com. They have also free version as well as paid version. You can use that investing.com. I don't know about USA if there is any specific platform, but I hope there is other platform as well. But TradingView as a TradingView, it is famous worldwide. Yeah, there is many application available. बहुत सारी application available हैं. You can use those application as well. Like एक वो बहुत famous application है US में, जैसे इंडिया में जेरोदा है, धन, उसके अलावा और भी बहुत सारी वेबसाइट्स हैं फॉर ट्रेडिंग पर्पस ओनली. ग्रो है, अपस्टॉक है. सिमिलरली वहाँ पर भी बहुत सारी हैं. एक है वो बहुत फेमस हुई थी 2020 के बाद, नाम याद नहीं आ रहा मुझे उसका. उस पर एक मूवी भी बनी है एक्चुअली, शॉर्ट फिल्म. नहीं नहीं, फर्स्ट टारगेट 266 नहीं होगा. फर्स्ट टारगेट ये ब्लू कलर की लाइन होगी 260. इसके ऊपर कहीं क्लोजिंग बेसिस पे जाएगा 262 के ऊपर, तब फिर सेकंड टारगेट रखना 266. पहला टारगेट इतना ही है. डायरेक्टली 266 जाएगा चांसेस कम है उसके लिए. 262 के ऊपर क्लोजिंग चाहिए 15 मिनट की, एक मिल जाती है तब एक पॉसिबिलिटी है. सो डिवाइड कर सकते हो दो पार्ट्स में. फर्स्ट 260 61 एंड देन क्लोजिंग आई तो 266, नहीं आई तो वापस नीचे फिर से बाई कर लेना वापस. क्रूड भी देखोगे इतना स्लो हो गया है, मोमेंटम ही नहीं है बिल्कुल. रेजिस्टेंस पे बिल्कुल ही साइडवेज ऐसा हो गया बिल्कुल, सो कॉल्ड. नीचे आए फटाफट से या फिर ऊपर ही निकल जाए. नीचे आ जाता थोड़ा सा तो यहाँ बाइंग कर सकते थे, बट वो भी नहीं आ रहा है. तो पॉसिबिलिटी वही है, तो थोड़ा नीचे लो एंड के आसपास यहाँ से बाइंग करेंगे या फिर ऊपर जाए और नेक्स्ट रेजिस्टेंस पे हिट करें। बाकी ये नीचे वाला रेजिस्टेंस तो वीक हो चुका है, तो इसके तो मुझे लगते नहीं चांसेस हैं। यहाँ पर थोड़ा बहुत रुकना चाहिए, रुकता है तो। सेम इन नेस्डेक। नेस्डेक में तो आ जाएगा मूव खैर, 5:30 के बाद आ ही जाता है उसमें। रेजिस्टेंस पे था, उसके बाद से थोड़ा बहुत सेल ऑफ आया, साइडवे चला गया। दो चीज़ कर सकते हैं ट्राई, एक नीचे वापस प्राइस को फॉल कराने का या फिर वापस रेजिस्टेंस पे हिट करके वापस सेल करने का। प्रॉब्लम 5:30 की कैंडल ही शायद कुछ मूव कराएगी, आधा घंटा है, उसी का वेट करते हैं। 5:30 के बिना तो मुझे लगता नहीं मूव होगा।
Likely slow sharply this quarter because of U.S. tariffs. Beijing is digging in as well, warning trading partners against striking deals with the U.S. that could harm Beijing's interests. Now, Scott Lincecum of Cato Institute says the back and forth between China and the U.S. could be a long-term irritant.
Trade deals typically take around a year and a half to complete. It still seems that both sides are not ready to get down to talking.
All right, so long-term risk that needs to be priced in and is increasingly being priced in.
Right, and I guess the question is, where is it priced in? You can see it pretty much all across U.S. assets, whether it's the long end of the Treasury market, the dollar, or U.S. stocks. This is obviously the S&P, but I want to draw your attention to this. It's the correlation of the Bloomberg Dollar Index versus the S&P. Now, if it goes into negative territory, they're moving inversely, right? Stocks up, dollar down, stocks down, dollar up. What we've seen recently, though, is increasing positive correlation.
half an hour from the open in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Avril Hong in Singapore.
And I'm David Ingles here in Hong Kong. Let's get to your top stories today. The dollar dropping against most, if not all of its peers, in fact, as traders fret about tariffs as well as the risk of President Trump looking for a way to axe Fed Chair Jay Powell. Now, Beijing stepping up government spending as concerns balance over China's ability to hit its growth target this year amid Washington's trade war. And Ukraine and Russia trade accusations of violating an Easter Sunday ceasefire. That's after the U.S. warns it could walk away from peace efforts if a deal is not reached soon. Good morning and welcome to the show. We're starting things off today with some breaking news. Loan prime rates are out, 1 and 5 year. We were largely expecting to see a reduction in the loan prime rates. What we're getting is not a reduction. Unchanged here for both tenors, 3.1%. It remains on the 1 year, 3.6% on the 5 year. Marginal reaction there, as you can see. It's really about dollar weakness today, which has taken dollar China back below the 730 handle. Maybe you could make somewhat of a reaction with a little bump up you see bottom of your screens. But that being said, a broader story has really been on melt up in yields and the weaker U.S. dollar as we get underway, of course, this week. We'll revisit the China story in a moment. We'll be talking, by the way, fixed income in a few minutes here with Maybank Asset Management and why they think fiscal and monetary policies may not be enough, Avril, for growth and the global outlook.
Yeah, and I think things are getting even further complicated with this threat from Donald Trump against Powell, right? In the meantime, we have Chicago Fed President Austin Goolsbee warning against efforts to curtail the central bank's independence. And of course, the U.S. president questioned the Fed's decision-making. He also criticized Chair Jerome Powell.
The fact is, the inflation rate is higher, growth is slower, the job market is worse. So I strongly hope that we do not move ourselves into an environment where monetary independence is questioned, because that would undermine the credibility of the Fed.
Meanwhile, President Trump's top economist says he's studying if he's able to fire the Fed chief. Kevin Hassett called on Jay Powell to lower interest rates and suggested that under his leadership, the Fed had acted politically to benefit Democrats. Last week, Trump reiterated his call for the central bank to cut rates and said he could remove Powell if he wanted to, David.
Yeah, and really we're seeing that expressed quite clearly in the FX markets today, really. On your left side coming up on your screens, it's a gap lower we're seeing in the dollar index. We're now trading at about we took out 99. In the Bloomberg Dollar Index, we are now, in fact, at about, if not lower than the low that we hit back in 2024 September. So that now takes us to within really a sliver of trading at levels last seen about 2 years ago on the Bloomberg Dollar Index. Euro's trading at 115, give or take here. Dollar Swissy, dollar Japan, now at the strongest level here on the Japanese currency going back to about September of last year. That's a fairly important technical level as well, the 140, 141 handle, too. The read across equity markets is, well, for one, when you look at Japan, there is a stronger yen story playing out there as far as the factoring goes in the equity markets. Just keep in mind, and we'll get to some of the other markets that are not up and running today. So volumes are on the thinner side of things. We're off by about 1%, as you can see. U.S. futures and European futures are also being offered up right now. Taiwan is opening up 0.3%. That takes us into the approach to the Chinese Open today. And we're looking at the A50 futures trading. There we go. And we are called slightly to the upside. Dollar China, we talked about this. And Chinese 10 yield at 165. Right. Kind reminder that you have markets here in Hong Kong, so no Stock Connect. No equity market, no cash trading in Hong Kong, along with derivatives. Also no Australia and no New Zealand markets today. And, of course, things reopen, Avril, of course, tomorrow.
Yeah, and it's business as usual in Singapore. I have with me now Bloomberg's Asia Markets Executive Editor Paul Dobson to kind of talk us through what we're seeing in the FX complex that's this expression now of the concerns of Fed independence. Talk to us about, the implications overall.
Yeah, so that seems to be the latest reason to sell the dollar that we're seeing kind of feeding through into the price action today. The idea being the challenges to the independence of the central bank in general is not good for the reputation of the US. And, the Trump administration has done a series of sort of moves that the market hasn't liked in terms of that trustworthiness, in terms of the reliability of the currency. And so people have been looking for reasons to diversify some of their investments outside of the US. This idea that there'd been so much flowing in for so long, both in the fixed income and the equity space. And now that's slowly unraveling bit by bit. But each different piece of news that we get seems to provide another catalyst. And you can see it not just in the FX markets, where the moves have been really interesting, but also in gold, which is adding more than 1% again today, continuing to pile higher.
Yeah, Paul, David here. I mean, if you could talk a little bit more about the other side to the equation, and I think you underscored the point. It's not just about tariff concerns. It's not just about, well, it is a big factor, of course, the uncertainty over central bank independence on the Fed. There are alternatives right now to dollar assets. I think Japan is emerging as perhaps a yield story now for some big players.
Yeah, absolutely. We're hearing from the Japanese insurers on their investment plans at the moment, and more of them seem to be talking about the appeal of longer-dated Japanese government bonds, the idea of repatriating some of their money from abroad now that they're finally able to get a reasonable yield. And we even saw positive real yields on longer-term Japanese government bonds as well. So that is one factor, but it's not just that. We also heard at the end of last week Chinese investors looking to move money out of the US and into other markets, looking for opportunities in Europe, looking for opportunities in Japan again. And even in this, the emerging market space, I think really interestingly, you have local currency, emerging market bonds, already with lower yields than treasuries, but still in favor from investors, thinking about those currency dynamics and thinking about the idea that they can still get more capital appreciation there because the local or the emerging market central banks are likely to cut interest rates more aggressively than the Fed will be doing. And so flows out of the dollar assets, every which way you look at the moment, people looking for opportunities elsewhere.
Paul, you alluded to this a short while ago about how investors are seemingly dumping all things US. How is that complicating, given what we're hearing from Trump towards Powell, potentially the curve steepening we're seeing and the safe haven qualities of treasuries?
Yeah, I think that's also being challenged, right? And particularly it's being expressed at the back end of the yield curve, where you have seen more of a sell-off, more pressure. And again, I think this morning we're seeing higher yields on the 30-year securities. So there's a little bit of consternation out there. And I think that it's not new, right? I think that it's been coming for quite a long time. People have been increasingly worried about the US debt burden through the Biden administration into Trump as well. People have been worried a little bit about that credibility in the Federal Reserve, and that's still going as well. People thinking about, whether treasuries in general carry a little bit of a risk premium now. So we heard, the U.S. administration has been looking at ways to maybe encourage banks to hold more treasuries on their balance sheets, potentially lightening that load a little bit. But there are those concerns out there just a little bit. I mean, I wouldn't over-exaggerate it. Treasuries, still generally are the first place that people go when they're looking for safety and liquidity, but there are question marks.
Paul, thank you. Paul Dobson there, our Asia Markets Executive Editor in Singapore for us. Now, let's have a look at the other side of the story. And we have some developments coming out of Beijing right now. Responding to certainly this ongoing story, Beijing says it is firmly opposed to any party reaching a trade deal at the expense of China's interests. That follows reports that the U.S. is looking to pressure other countries to curb trade with China as part of their reciprocal tariff negotiations. Let's bring in Min Lo, our China correspondent, covering the China story for us today. Let's start with that response coming through.
Yeah, so this is clearly a warning from China that it's going to watch these trade negotiations very closely. Anybody that undercuts China's interests is going to face retaliation from China. And of course, we are watching very closely. The first to go is Japan, heading into that second round of trade negotiations with Trump. It comes after presidency just finished his Southeast Asian trip with a consistent message calling on all of these countries to jointly oppose U.S. hegemony. And I want to read you that quote from the MOFCOM statement. It says, to seek so-called exemption exemptions at the expense of others' interests for one's own temporary selfish interests is to seek the skin of a tiger, which will ultimately fail on both ends and harm others without benefiting oneself. So this is interesting because China is kind of alluding to the idea that the U.S. is not a very reliable partner. Cooperating with the U.S. may not necessarily lead to lower tariffs or benefits for those countries. So it's trying to just counter that idea and warn other countries to tread very carefully here. So I guess it's a turning point in a way because it threatens to shift this tariff war between U.S. and China into a global one that involves many other countries.
And Min Min, amid all this, China's been trying to provide a buffer for its economy domestically. And we're seeing how the government accelerated spending in the first quarter, fastest pace in 3 years. How much of a buffer, that extent, is it providing really?
Yeah, so the first quarter spending was up by about 5.6%, the fastest since 2022. And we know that the local governments, for example, has been ramping up the issuance of these local government special bonds to increase their cash flow. The government is clearly trying to ramp up support for the economy. Premier Li Qiang as well on Friday calling on local officials to think out of the box when it comes to these injection of stimulus policy. And he said timing is very critical. Officials have to act swiftly and early with a well-coordinated policy mix. And what does thinking out of the box mean? I think that's what we are all watching for. And we got a glimpse of that over the weekend as well, because the Commerce Ministry is saying it's going to help companies that are exporting to expand to the domestic economy. And we saw all these big e-commerce platforms that are being called to the rescue. JD.com, Alibaba, Tencent, all unveiling plans to help these companies expand to the domestic economy. JD.com is one that says it's pledging to spend at least 200 billion yuan to buy up products that are meant for export to be sold to the domestic economy.
Now, we're starting this new week, but just a reminder of, the President, she was completed his trip of some parts of Southeast Asia. How do I need to be thinking about how that story evolves this week? Key takeaways from the three-country trip.
Yeah, I think if you just look at his stops in each country, the message has been very clear. In Malaysia, for example, he promoted this idea of the Asian family, calling for regional solidarity. And then in Vietnam, he called on the country to jointly oppose this unilateral bullying from the U.S. And in Cambodia, he penned this commentary also calling for joint opposition to this global hegemony. I think what's interesting to take away is how President Xi is received in all of these three countries. So yes, there are joint statements for each leg of his stop, but clearly in Malaysia, Prime Minister Anwar was piling praises on President Xi. But in Vietnam, we saw a difference in the readouts between the Chinese and Vietnam readout of the meetings of the leaders. The Vietnam readout had omitted the phrase of jointly opposing unilateral bullying from the U.S. And that shows you how some of these countries are really trapped in a very difficult position, with the likes of Peter Navarro, for example, saying that Vietnam is essentially a colony of the Chinese Communist Party for being an extension of Chinese manufacturing. So some of these countries that are seeking deals with the U.S. will really have to think about how to, not offend both sides.
Yeah, to your point, the Vietnamese Prime Minister called the relationship with the U.S. this unique bond that they have with the Americans just days after that visit. Min Min. Thank you so much, Min Min Lo, our China correspondent there. Right, as we go into the first session of the week, there are a couple of markets, of course, shut here in the region today, so no trading in Hong Kong. We do have Shanghai and Shenzhen coming online amidst really this drift lower across regional equity markets. It doesn't seem like China will be joining that for now. The big story across markets, though, 16 minutes away, is the dollar is falling out of bed this Monday morning. This is the China Show.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Good Monday morning from the Asia Pacific. The renminbi fix today is out. You're getting a 720.55 handle here. That's again certainly the US dollar. That's your sort of the midpoint of the playground today, plus minus 2% there. Juxtaposed against really a dollar that is massively on offer this Monday morning. In fact, just on that very note, Dixie gap lower. Bloomberg Dollar Index is now flirting with the lowest since 2023. I think we're within a fraction of a point from the low that we hit back in September. Below that, we basically take that low out, and we're now at levels of 2023. Bloomberg Dollar Index coming up on your screen shortly, if not already. The Euro 115, dollar Swissy, dollar Japan. Oh, wow. Dollar Japan now 141. Extremely close to that. So we don't normally see moves like this in the early going. So idiosyncratic issue with the dollar today. Let's bring in Rachna Mehta, Regional Fixed Income Co-Head at Maybank Asset Management. Good morning, Rachna, and again, pleasure to have you on the show. FX and rates tied at the hip. Dollar assets seem to be on offer. I need to ask you what you think what the impact likely will be on dollar assets amid this uncertainty over, let's call it central bank independence around in the U.S.
Yes, I do believe that. I think central bank independence is being questioned, but our personal view is that it will still be maintained, and this has been happening over the last couple of years also. So I do believe that U.S. will maintain the central bank independence. But I think the dollar is falling because of a couple of other reasons also, not necessarily because of central bank independence. One of them is tariffs. And actually the other thing, I believe that there's a lot of dollar deposit in all of these Asian countries because dollar interest rates are much, much higher than the rest of the world. And now with tariff uncertainty and a lot of dollar deposits, so people are worried that anyway, dollar interest rates are still higher, but the other countries like Japan and Europe are still giving me better interest rates. So I want to move some money given the geopolitical risk. And that is one of the key reasons I feel the dollar is falling also, not necessarily because of central bank independence. I think a lot of dollar deposit within the region, they are worried about this war, and I think they are trying to convert some of this, and they are trying to diversify the reserves. So I think there are a couple of reasons for dollar falling. And the most important reason is I think that U.S. administration still wants a weaker dollar. I know because they've been saying that weaker dollar is very, very, though they keep talking about strong dollar, but I think weaker dollar does help U.S. companies because if you look at a lot of U.S. companies, 60% of their revenues are generated outside U.S. So that will cushion their tariff kind of tariff impact. So frankly, they cannot revenues and all these currencies strengthen. So when they bring back their earnings, doesn't get impacted. So I think long term, I do believe that US still wants a weaker dollar over the next 1 to 2 years.
But might that mean a lower Treasury yield? So the 10-year, do we get down to 4%? Is this a good entry point as far as US Treasuries go?
Yeah, I do believe that the current administration is very clear. If you look at Scott Bessent's talking about 10-year Treasury, is the yield level they are looking at. So yes, I do believe that at 5%, of course, we will buy. But at this level also, because yes, we went as low as 370, now back to 4.4, 4.5. So I think it's attractive to buy 10-year Treasuries, or increase duration by using high quality credits. So definitely, I think we cut duration and now we are back to going long duration, but at the 10-year part of the curve rather than 30-year part of the curve.
Rachna, Avril here. I mean, what is all this going to mean for direction of the dollar? Because I think you have the view that short term it could strengthen. Why?
Okay, the only thing I feel that it will strengthen if people start pricing in recession risk, because generally in a recession risk, it's flight to quality, flight to safety. So there's a chance because generally because US is the biggest in terms of economy, in terms of consumption, they are the biggest, correct? So if US have a recession, generally rest of the world will have a recession because we are so closely connected. So that is one of the reasons I was thinking short term, if there's the recession chances increase. As of now, people are pricing in 50 to 60%. So if people think that it's going to be 70 to 80%, then their dollar may strengthen short term. But eventually, I do believe that all the local economies will start converting dollars to their own currencies or say Euro and JPY. But I feel that there is a chance if the recession risk is increasing in the US, then the rest of the world will get impacted. And that's why I was thinking there is a chance that the dollar may strengthen short term if the recession risk keeps increasing. And there is no bilateral agreement in terms of trade, correct, with different countries, which US is doing. If that doesn't happen, then definitely there's a risk.
You talked to us earlier about part of your strategy, potentially entry point on the 10-year treasuries. But what about for Asia credit? What do you think still looks attractive at this point?
For Asia credit, I do believe that India looks very attractive, given that India is not that much impacted in terms of export to the US. So I feel Indian credits look attractive. And some of the high-quality IG credits like Australia, I feel because they are pretty highly rated. So we stick to investment grade. Mainly, we prefer BBB plus and above single A, double A. So if you really want to look at high yield, maybe we should look at some of the domestic companies which are not impacted by this tariff part. So when you're looking at high yield bonds, you focus on domestic companies which doesn't get impacted by this. So we do prefer IG high quality bonds in the 5 to 10 year sectors in Australia, in Japan, in India. And if you want to buy high yield, we prefer like high yield bonds which are domestically oriented companies.
What type of yield is an offer right now as far as high yield goes? Maybe let's end on that good note. If we're looking for income, for example, where do you think that best fits into, again, to your point, deteriorating global growth outlook?
Yeah. So generally, if you look at high yield bonds in India, is roughly giving a yield of about 7 to 8%. So not bad, correct? And overall, where US Treasury is about 4.5%. So you are getting for a 3-year paper, especially most of the high yield bonds are 3 to 5 year paper. You're not taking a duration risk, and these companies are very domestically driven. So you're getting a yield of 7 to 8%. So not bad for those kind of yield. And I do believe that Asian high yield will outperform in terms of US high, given the lot of uncertainty in the US. And Asian high yield, we have a domestic bias. So a lot of Asian private banks and investors buy their own bonds. So I think that also cushions the downside in Asian high yield bonds.
All right, Rachana, thanks so much for sharing your insights with us. This ever-evolving situation. Rachana Mehta, Regional Fixed Income Co-Head at Maybank Asset Management. Now, let's take a look at China futures. We are seeing earlier a bit of firmness, so just checking in again how the equities performance today might shape up. Indeed, we're seeing very, very, very slightly a bit of a positive that gain also in China's 10-year bonds. And of course, the renminbi, dollar China sitting below the 730 handle, and all this against the backdrop of the slump in the dollar that we're seeing in the early goings this Monday. Plenty more ahead. This is Bloomberg.
Welcome back. You're watching the China Show. Not a lot of risk appetite out there, as you can see. Sort of, we're looking at this drift lower across most futures right now. 52.77 in S&P. The dollar is also massively on offer right now. Asia off by about 0.25%. A couple of markets are not up and running, of course, today. We'll talk about that later. Avril.
Yeah, we're talking about Hong Kong, of course, that is shut, along with the likes of Australia and New Zealand. But it's interesting amid all this that there is relative outperformance on mainland stocks. And I think part of it is got to do with, this trade war, the idea that there could be more domestic support, maybe in the fiscal sense as well, despite loan prime rates being kept unchanged today. And of course, dollar China still sitting below the 730 handle.
Right, welcome back. Counting down to the open of trade. The agenda today going into the Monday session. 3 things to note here. There is a briefing later today, 3 p.m. local time, on China looking to expand the services sector. Number one, a couple of markets are shut here in Hong Kong, including, of course, the Stock Connect. Within the mainland markets, we're looking at robotic stocks, perhaps as a mover here after that half marathon in Beijing. Suffice to say, the most didn't make it to the finish, but it's certainly a massive leap for robotics kind, if you will, given that first event there. But yeah, going into the open today, we're looking at turnover, Avril. I think because things were shut on Friday, turnover on the mainland was the lowest of the year so far. We are expecting the same today, Avril.
Yeah, a bit more of that follow through, and of course with Hong Kong shuts as well. But overall, let's take a look at how things are shaping up, looking a bit softer on the mainland. And of course, all this is against the backdrop of what China might do in order to support not just the stock markets, but the economy as it faces off with the U.S. We're hearing about how Securities Times reporting Chinese brokerages are helping to boost share buybacks, and a lot of reporting underway as China tries to figure out any form of support for equities. We are seeing, though, a bit of softness in some of these consumer-related names as well as the banks. But what's doing well today, it's the China bonds, whether you're looking 10-year or 30-year. Interesting that we're seeing a bit of firming up when it comes to commodities. And among the sectors that we're watching today, David, you mentioned this a short while ago. There's that briefing underway later today for expansion of the services sector. And a couple of these names, remember, last week when we got wind of this briefing, some of them jumping by 10%. This is the picture you're seeing at the start of trade today. Really interesting in terms of the sectors that we're going to be watching out for. And let's bring in our Asia Equities Managing Editor, Lian-Ting Liu, for all this. We're seeing how these sectors are, of course, in focus, but bigger picture, what are we expecting in terms of Chinese authorities kind of stepping in the way of stimulus or support for the economy?
Yeah, I think one big event everybody's watching out for is the Politburo later this month. The expectation is some economic policies will be discussed, maybe even some more front-loading to stimulus infrastructure. Of course, the other aspect of the stock market is on national teams' participation. We saw last week for 3 straight sessions, national team was there to bolster the market in the last 20 minutes of trading. And the gains were in the end quite small, but it also showed that national team wants to make sure at least the session ended in the green. So yeah, I think that's one thing. And then sectors, as you mentioned, I think consumer sector is actually quite interesting right now. We've heard from the likes of Fidelity swooping in during the market sell-off to say that consumer is, especially consumer staples, is actually quite resilient in this overall sort of risk-off environment. And we've got UBS saying similar things. It's a top fund manager telling us he also buys some consumers. I think in this overall sort of protectionist world, people are really looking locally to see and spot areas where demand will still be resilient.
Yeah, the kind of insulated sector.
Exactly.
So when we look at the sectors we're watching out for in terms of earnings as well, we have the likes of Luxshare, for example, later in the week. Yeah. How do you think some of these Chinese companies are going to be responding to these U.S. tariffs or giving us hints of what they might do?
It's really hard, right? It's just I think it's a whole thing globally. The companies may tell you that there's probably very little visibility. It really depends on what China and Donald Trump are going to hash out how the final deal will look like and when that deal will come through. One thing people are watching out for is capex. I think that's something to show the kind of planning for whatever information the company has. They can plan forward. And then not just about Luxshare, I think there's also a few other names in Asia that are reporting earnings this week, including SK Hynix. Now, that's also a very interesting one because it's in the chip sector, it's in the AI sector, and it can really tell people about AI demand, but also export tariff or export controls, I should say, that has the impact on the chip sector.
It's interesting you raised chips because over this past weekend out of China, what's garnered a lot of attention is the robotics sector after the terms of investor appetite and how this sector is being seen as a kind of tool in the US-China rivalry.
Yeah, I mean, the sector has already had a huge rally. It was I think, the best performing sector before DeepSeek that shocked the world in late January. So I think a lot of money has already gone into the sector. That was before the tariff kicked in as well. The idea for this sector is it's, these robotics can be used to address the aging population in China. So it is relatively resilient with or without tariffs. China will have aging population because because nobody is really having kids right now in China. So robotics can help with that. Of course, there is also the competitive side of it with the US. But that part, as you guys reported, these robots didn't really do well, did they, right? So I think it still needs to see what kind of technological advancement will be had in that space.
Yeah, you know, with these frontier technologies, the proof, as they always say, is in the pudding. But really interesting to see how they fared in these races. Lian Ting, to our Asia Equities Managing Editor. Over to you, David.
Yeah, and I mean, just to borrow Lian Ting's, you know, how I think 4 out of the 21 robots managed to finish. I think one effectively tripped at the start of the race. It kind of looks like the dollar chart you see on your screens right now, just to the downside there. Bottom of the screens is DXY 14-day RSI, and as you can see, that momentum has drifted lower substantially. We're now trading in the low 20s as far as momentum goes. We've also formed a death cross recently, which effectively shows you that momentum is really to the downside. Suffice to say, though, and just to caveat this, you know, a lot of people that we've spoken to recently do expect a short-term dollar bounce because it is looking like it's getting slightly one-sided to move right now. Certainly, it doesn't help the news flow coming out of the U.S. on the Feds and Jay Powell, and might his job be at risk, and certainly adding a little bit further to the risk premium already baked into dollar assets right now. We are flirting with the lowest level here since 2023, which, if you're curious what the level is, it's the level you see on your screens right now, 12.18, thereabouts there, against the U.S. dollar. Right, now, certainly the dollar conversation, the appeal of dollar assets will feature very highly in a lot of the, I guess, conversations this week. You know, Monday is the IMF, the World Bank meetings, and, you know, what does the global economy look like? And, you know, will the Fed need to come in at some point, not with a put, but really to sort of support the economy with a lower interest rate? That's certainly what the White House wants, just to tie those two things together. Now, back this side of the world, we have the Shanghai Auto Show. We have that covered for you, of course. In terms of data points, you have, I think, towards the end of this week, and I'll tie this into the market conversation. Tokyo April CPI is a very good bellwether and leading indicator of nationwide CPI in Japan. And as you can see, this melt-up in long-dated yields on the JGB space is really now acting as a catalyst to suck money back into Japan. Insurers have talked about that, so we'll see what that looks like. BI rate decision, of course, also coming through midweek. So that's a look at the agenda this week, plus, of course, earnings. Avril, as I think you and Lian Ting were just talking about there, not so much about results themselves, but CapEx and forward guidance, and really how CEOs in the corner office frame, you know, how visible the outlook is for revenues, given the many moving parts across the macro at this point. Avril.
Yeah, how to provide clarity where there isn't a lot of it coming from the top, the decision makers. And certainly amid all this, we've been seeing these various sectors just being drawn into US-China rivalry. And among some of the corporate stories that we're following this morning, Boeing has begun returning 737 MAX jets to the US that were refused by Chinese airline customers. According to data from Flight Radar 24, a jet intended for delivery to Xiamen Air flew back to Guam after arriving in China last month. Bloomberg reported last week that China has told state-run airlines to stop taking delivery of Boeing jets. Meantime, Tesla's planned rollout of its cheaper cars, including a lower-cost Model Y, has reportedly been delayed by at least 3 months. The Reuters report didn't give a reason for the delay. Tesla is due to report earnings Tuesday, with investors looking for guidance on how it intends to turn around its shrinking market share. Plenty more ahead. This is Bloomberg. You're watching The China Show, and as we keep watch on these various geopolitical confrontation and fronts that have opened up, certainly both Ukraine and Russia are in the spotlight. They've each accused the other of violating a short-term Easter Sunday truce declared by President Vladimir Putin, which Kyiv is offering to extend for a month. For more, Bloomberg senior editor Bill Ferries joins us now in the studio. So, Bill, what do we know about either side, kind of pointing fingers that the other violated the truce.
Yeah, so Russia's proposal for basically a 24-hour Easter Sunday ceasefire took a lot of people by surprise. But the Ukrainian government is saying that Russian forces never abided by that proposal from the very beginning. They say they recorded thousands of violations of that proposed ceasefire all across the front line. Russia as well saying that Ukrainian forces were attacking throughout that period. Ukraine has pushed back and said that they would like to see Easter Sunday be the start of a 30-day proposal, 30-day ceasefire. Russia hasn't responded to that. You may remember Ukraine had earlier agreed to a U.S. proposal almost a month ago now for a 30-day ceasefire. They say they're still willing to go forward with that, and Russia has yet to respond.
And Bill, speaking of the U.S. proposal, we understand that, if you could give us more detail on this, it might include the U.S. recognition of Crimea under Russian control.
Yeah, that would be a huge diplomatic coup for Vladimir Putin. This U.S. proposal that was apparently circulated with European partners late last week that the U.S. is hoping to discuss at a meeting in London this week would include U.S. recognition of Russian control of Crimea. Of course, Russian forces took Crimea in 2014, but Ukraine has objected ever since to them having any sort of formal recognized control of that area. It would also effectively leave Russian forces in control of the areas where they have troops now in Ukrainian territory. So the total would be almost 20% of Ukraine's territory, including Crimea, under Russian control. That's something that's going to be very hard for Ukraine to stomach. The U.S. proposal also calls for ending any discussion of Ukrainian membership in NATO. That's something that has been largely delayed at this point, but it's also something that Ukraine will be reluctant to see completely taken off the table.
Yeah, and Secretary of State Marco Rubio, I think it was late last week going into the weekend, did suggest that the U.S. might be, I think, losing patience. Is that a good way to describe this? It might start walking away from a potential deal. In other words, Bill, is a deal looking further and further away at this point?
But it is looking like the U.S. is losing patience and that a deal is going to be hard to follow through on. The U.S., President Trump said at one point that he thought he could solve the Ukrainian war in a matter of days and 24 hours at one point. This seems to suggest the U.S. really is ready to move on. There are expectations that the U.S. and European allies will discuss this week. But looming over this is not just whether the U.S. walks away from a proposed peace deal, but if they do so, what that means for intelligence sharing with Ukraine or continued weapons deliveries and things like that. So the U.S. threat here is much more than about working on a peace agreement. It's about whether support for Ukraine entirely is at risk.
Yeah, and certainly that's something that we're going to be keeping a close watch on. But it does seem like increasingly the U.S., as you say, is kind of losing patience as we see a lack of progress. Bill Ferries, our Bloomberg senior editor for us there. And amid all this, we're also keeping track on some of these trade discussions underway with the U.S. and some of the countries that have been trying to get perhaps concessions on the tariff fronts. The latest we're hearing, South Korea and the U.S. are set to hold trade talks on April 24th, and this is according to Yonhap News. And meantime, tariff negotiations between Tokyo and Washington are set to continue this week. We have the U.S. ambassador to Japan, George Glass, saying he's optimistic that a deal can be reached.
The Secretary of Treasury, the Secretary of Commerce are both people that I know and have spoken with and are brilliant in their fields. And they're also very creative, out-of-the-box thinkers. And when I saw that President Trump then decided he was going to get involved and has now named this his top priority, that's why I have a lot of confidence that we'll get something done.
NHK is reporting that Finance Minister Katsunobu Kato is scheduled to meet on Thursday in Washington with Treasury Secretary Scott Bessent. And for more, let's bring in Bloomberg's John Herskovitz. John, it's interesting because amid all this, the car safety rules of Japan seem to be drawn into a potential tool with Trump in negotiations, according to reports. I mean, what's the significance of this? What is the odds that it will play out in this way?
Yeah, we're heading into the talks which are scheduled for this week. Japan has floated a couple of things in local media that could be points for negotiation. One is this auto safety measure. The U.S. has contended for years that Japan's market isn't open to U.S. automobiles. The effective tariff rate for U.S. imports of cars is about zero. But there are things like safety measures that and inspections that are seen as non-tariff barriers. So by saying that this is something that is open for discussions could be something that opens the door for a possible deal. The other thing that was mentioned this week are Japan's tariffs on rice. Japan has kept high tariffs, has tried to keep foreign rice out of its market as a matter of food security, part of its culture, protecting its farmers. This was also floated in the local media as a point that could be brought up in trade talks for a round that could happen as early as this week.
Yeah, and speaking of this week, I think Avril just mentioned there, too, we now understand that there could be a date for the South Koreans and the Americans to start talking. April 24th, I believe, is the date that Yonhap just gave a couple of minutes back. What could be on the table there as far as that specific exchange is concerned between South Korea and the U.S.?
Yeah, I mean, with the South Korea talks, which would probably be which would be number 2 after Japan for the big Asian partners. South Korea has gone into these talks saying they're looking for a big type of agreement, things that will address like an Alaskan pipeline for natural gas, perhaps cooperation in shipbuilding. And also, South Korea has a little bit more exposure on certain things. When it comes to auto sales in the U.S., South Korea's percentage of cars that it brings in to the U.S. market from abroad is a little bit higher than Japanese makers. So there's a little bit more exposure there. So that's part of the thing that we're going to be looking at. South Korea has this. But the other thing to consider with South Korea is that it has presidential elections in June. The front runner for the elections, Lee Jae-myung, is a progressive. He's a little bit more China-friendly than the conservative government that has been in place up until the impeachment of President Yoon. So this could be a little bit problematic for the U.S. and also in its negotiations with South Korea. The people that they are talking to now may not be the same people in a few weeks or a few months.
John, thank you so much for getting us up to speed what to watch this week as, again, the progression, really, as far as trade talks go. Let's get to some other geopolitical stories we're following at this point. A draft presidential executive order circulating among U.S. diplomats proposes a sweeping reshaping of the State Department. Now, the document says the changes to be made by October would eliminate dozens of positions and departments, including those dealing with climate, refugees, democracy, and Africa. In a post on X, Secretary of State Marco Rubio called the reported overhaul fake news. Now, Elon Musk has revived his long-awaited plans to visit India after speaking with Prime Minister Narendra Modi. The Tesla CEO had been due to visit a year ago, but postponed the trip at the last minute, citing pressing issues at the auto company at that point in time. Tesla has long wanted to enter India, but disagreements over import duties and local manufacturing commitments have certainly stalled the progress there. Yep, want to watch this week? We'll leave you with a look at markets. Equity markets are largely on offer. U.S. futures off by about 0.5%, along with other dollar assets coming up on your screen shortly. The dollar is on offer. Bloomberg Dollar Index now trading at the weakest or lowest level since September of last year. Plenty more ahead. This is The China Show. Yeah, just an update here. So the loan prime rates came out this hour and unexpectedly unchanged here in the 1- and 5-year rates, kept on hold. We were expecting a reduction in certainly the best rates available to prime banking clients today. Now, the initial reaction coming out of Bloomberg Economics, and again, just
We're half an hour from the open in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Avril Hong in Singapore.
And I'm David Ingles here in Hong Kong. Let's get to your top stories today. The dollar dropping against most, if not all of its peers, in fact, as traders fret about tariffs as well as the risk of President Trump looking for a way to axe Fed Chair Jay Powell. Now, Beijing stepping up government spending as concerns balance over China's ability to hit its growth target this year amid Washington's trade war. And Ukraine and Russia trade accusations of violating an Easter Sunday ceasefire. That's after the U.S. warns it could walk away from peace efforts if a deal is not reached soon. Good morning and welcome to the show. We're starting things off today with some breaking news. Loan prime rates are out 1 and 5 year. We were largely expecting to see a reduction in the loan prime rates. What we're getting is not a reduction. Unchanged here for both. Tenors, 3.1%. It remains on the 1 year, 3.6% on the 5 year. Marginal reaction there, as you can see. It's really about dollar weakness today, which has taken dollar China back below the 730 handle. Maybe you could make somewhat of a reaction with a little bump up you see bottom of your screens. But that being said, a broader story has really been on melt up in yields and the weaker U.S. dollar as we get underway, of course, this week. We'll revisit the China story in a moment. We'll be talking, by the way, fixed income in a few minutes here with Maybank Asset Management and why they think fiscal and monetary policies may not be enough, Avril, for growth and the global outlook.
Yeah, and I think things are getting even further complicated with this threat from Donald Trump against Powell, right? In the meantime, we have Chicago Fed President Austin Goolsbee warning against efforts to curtail the central bank's independence. And of course, the U.S. president questioned the Fed's decision-making. He also criticized Chair Jerome Powell.
The fact is, the inflation rate is higher, growth is slower, the job market is worse. So we really, I strongly hope that we do not move ourselves into an environment where monetary independence is questioned, because that would undermine the credibility of the Fed.
Meanwhile, President Trump's top economist says he's studying if he's able to fire the Fed chief. Kevin Hassett called on Jay Powell to lower interest rates and suggested that under his leadership, the Fed had acted politically to benefit Democrats. Last week, Trump reiterated his call for the central bank to cut rates and said he could remove Powell if he wanted to, David.
Yeah, and really we're seeing that expressed quite clearly in the FX markets today, really. On your left side coming up on your screens, it's a gap lower we're seeing in the dollar index. We're now trading at about we took out 99. And the Bloomberg Dollar Index, we are now, in fact, at about, if not lower than the low that we hit back in 2024 September. So that now takes us to within really a sliver of trading at levels last seen about 2 years ago on the Bloomberg Dollar Index. Euro's trading at 115, give or take here. Dollar Swissy, dollar Japan, now at the strongest level here on the Japanese currency going back to about September of last year. That's a fairly important technical level as well, the 140, 141 handle, too. The read across equity markets is, well, for one, when you look at Japan, there is a stronger yen story playing out there as far as the factoring goes in the equity markets. Just keep in mind, and we'll get to some of the other markets that are not up and running today. So volumes are on the thinner side of things. We're off by about 1%, as you can see. U.S. futures and European futures are also being offered up right now. Taiwan is opening up 0.3%. That takes us into the approach to the Chinese Open today. And we're looking at the A50 futures trading. There we go. And we are called slightly to the upside. Dollar China, we talked about this. And Chinese 10-year yield at 165. Right. Kind reminder that you have markets here in Hong Kong, so no Stock Connect. No equity market, no cash trading in Hong Kong, along with derivatives. Also no Australia and no New Zealand markets today. And, of course, things reopen, Avril, of course, tomorrow.
Yeah, and it's business as usual in Singapore. I have with me now Bloomberg's Asia Markets Executive Editor Paul Dobson to kind of talk us through what we're seeing in the FX complex that's this expression now of the concerns of Fed independence. Talk to us about, the implications overall.
Yeah, so that seems to be the latest reason to sell the dollar that we're seeing kind of feeding through into the price action today. The idea being the challenges to the independence of the central bank in general is not good for the reputation of the US. And, the Trump administration has done a series of sort of moves that the market hasn't liked in terms of that trustworthiness, in terms of the reliability of the currency. And so people have been looking for reasons to diversify some of their investments outside of the US. This idea that there'd been so much flowing in for so long, both in the fixed income and the equity space. And now that's slowly unraveling bit by bit. But each different piece of news that we get seems to provide another catalyst. And you can see it not just in the FX markets, where the moves have been really interesting, but also in gold, which is adding more than 1% again today, continuing to pile higher.
Yeah, Paul, David here. I mean, if you could talk a little bit more about the other side to the equation, and I think you underscored the point. It's not just about tariff concerns. It's not just about, well, it is a big factor, of course, the uncertainty over central bank independence on the Fed. There are alternatives right now to dollar assets. I think Japan is emerging as perhaps a yield story now for some big players.
Yeah, absolutely. We're hearing from the Japanese insurers on their investment plans at the moment, and more of them seem to be talking about the appeal of longer-dated Japanese government bonds, the idea of repatriating some of their money from abroad now that they're finally able to get a reasonable yield. And we even saw positive real yields on longer-term Japanese government bonds as well. So that is one factor, but it's not just that. We also heard at the end of last week Chinese investors looking to move money out of the US and into other markets, looking for opportunities in Europe, looking for opportunities in Japan again. And even in this, the emerging market space, I think really interestingly, you have local currency, emerging market bonds, already with lower yields than treasuries, but still in favor from investors, thinking about those currency dynamics and thinking about the idea that they can still get more capital appreciation there because the local or the emerging market central banks are likely to cut interest rates more aggressively than the Fed will be doing. And so flows out of the dollar assets, every which way you look at the moment, people looking for opportunities elsewhere.
Paul, you alluded to this a short while ago about how investors are seemingly dumping all things US. How is that complicating, given what we're hearing from Trump towards Powell, potentially the curve steepening we're seeing and the safe haven qualities of treasuries? Yeah, I think that's also being challenged, right? And particularly it's being expressed at the back end of the yield curve, where you have seen more of a sell-off, more pressure. And again, I think this morning we're seeing higher yields on the 30-year securities. So there's a little bit of consternation out there. And I think that it's not new, right? I think that it's been coming for quite a long time. People have been increasingly worried about the US debt burden through the Biden administration into Trump as well. People have been worried a little bit about that credibility in the Federal Reserve, and that's still going as well. People thinking about, whether treasuries in general carry a little bit of a risk premium now. So we heard, the U.S. administration has been looking at ways to maybe encourage banks to hold more treasuries on their balance sheets, potentially lightening that load a little bit. But there are those concerns out there just a little bit. I mean, I wouldn't over-exaggerate it. Treasuries, still generally are the first place that people go when they're looking for safety and liquidity, but there are question marks.
Paul, thank you. Paul Dobson there, our Asia Markets Executive Editor in Singapore for us. Now, let's have a look at the other side of the story. And we have some developments coming out of Beijing right now. Responding to certainly this ongoing story, Beijing says it is firmly opposed to any party reaching a trade deal at the expense of China's interests. That follows reports that the U.S. is looking to pressure other countries to curb trade with China as part of their reciprocal tariff negotiations. Let's bring in Min Lo, our China correspondent, covering the China story for us today. Let's start with that response coming through.
Yeah, so this is clearly a warning from China that it's going to watch these trade negotiations very closely. Anybody that undercuts China's interests is going to face retaliation from China. And of course, we are watching very closely. The first to go is Japan, heading into that second round of trade negotiations with Trump. It comes after the presidency just finished his Southeast Asian trip with a consistent message calling on all of these countries to jointly oppose U.S. hegemony. And I want to read you that quote from the MOFCOM statement. It says, to seek so-called exemption exemptions at the expense of others' interests for one's own temporary selfish interests is to seek the skin of a tiger, which will ultimately fail on both ends and harm others without benefiting oneself. So this is interesting because China is kind of alluding to the idea that the U.S. is not a very reliable partner. Cooperating with the U.S. may not necessarily lead to lower tariffs or benefits for those countries. So it's trying to just counter that idea and warn other countries to tread very carefully here. So I guess it's a turning point in a way because it threatens to shift this tariff war between U.S. China into a global one that involves many other countries.
And amid all this, China's been trying to provide a buffer for its economy domestically. And we're seeing how the government accelerated spending in the first quarter, fastest pace in 3 years. How much of a buffer, that extent, is it providing really?
Yeah, so the first quarter spending was up by about 5.6%, the fastest since 2022. And we know that the local governments, for example, has been ramping up the issuance of these local government special bonds to increase their cash flow. The government is clearly trying to ramp up support for the economy. Premier Li Qiang as well on Friday calling on local officials to think out of the box when it comes to these injection of stimulus policy. And he said timing is very critical. Officials have to act swiftly and early with a well-coordinated policy mix. And what does thinking out of the box mean? I think that's what we are all watching for. And we got a glimpse of that over the weekend as well, because the Commerce Ministry is saying it's going to help companies that are exporting to expand to the domestic economy. And we saw all these big e-commerce platforms that are being called to the rescue. JD.com, Alibaba, Tencent, all unveiling plans to help these companies expand to the domestic economy. JD.com is one that says it's pledging to spend at least 200 billion yuan to buy up products that are meant for export to be sold to the domestic economy.
Now, we're starting this new week, but just a reminder of, the President, she was completed his trip of some parts of Southeast Asia. How do I need to be thinking about how that story evolves this week? Key takeaways from the three-country trip.
Yeah, I think if you just look at his stops in each country, the message has been very clear. In Malaysia, for example, he promoted this idea of the Asian family, calling for calling for regional solidarity. And then in Vietnam, he called on the country to jointly oppose this unilateral bullying from the U.S. And in Cambodia, he penned this commentary also calling for joint opposition to this global hegemony. I think what's interesting to take away is how President Xi is received in all of these three countries. So yes, there are joint statements for each leg of his stop, but clearly in Malaysia, Prime Minister Anwar was piling praises on President Xi. But in Vietnam, we saw a difference in the readouts between the Chinese and Vietnam readout of the meetings of the leaders. The Vietnam readout had omitted the phrase of jointly opposing unilateral bullying from the U.S. And that shows you how some of these countries are really trapped in a very difficult position, with the likes of Peter Navarro, for example, saying that Vietnam is essentially a colony of the Chinese Communist Party for being an extension of Chinese manufacturing. So some of these countries that are seeking deals with the U.S. will really have to think about how to, not offend both sides.
Yeah, to your point, the Vietnamese Prime Minister called the relationship with the U.S., this unique bond that they have with the Americans, just days after that visit. Min Min. Thank you so much, Min Min Lo, our China correspondent there. Right, as we go into the first session of the week, there are a couple of markets, of course, shut here in the region today, so no trading in Hong Kong. We do have Shanghai and Shenzhen coming online amidst really this drift lower across regional equity markets. It doesn't seem like China will be joining that for now. The big story across markets, though, 16 minutes away, is the dollar is falling out of bed this Monday morning. This is the China Show. Good Monday morning from the Asia Pacific. The renminbi fix of the day is out. You're getting a 720.55 handle here. That's again certainly the US dollar. That's your sort of the midpoint of the playground today, plus minus 2% there. Juxtaposed against really a dollar that is massively on offer this Monday morning. In fact, just on that very note, DXY gap lower. Bloomberg Dollar Index is now flirting with the lowest since 2023. I think we're within a fraction of a point from the low that we hit back in September. Below that, we basically take that low out, and we're now at levels of 2023. Bloomberg Dollar Index coming up on your screen shortly, if not already. The Euro 115, Dollar Swissy, Dollar Japan. Oh, wow. Dollar Japan now 141. Extremely close to that. So we don't normally see moves like this in the early going. So idiosyncratic issue with the dollar today. Let's bring in Rachna Mehta, Regional Fixed Income Co-Head at Maybank Asset Management. Good morning, Rachna. And again, pleasure to have you in the show. FX and rates tied at the hip. Dollar assets seem to be on offer. I need to ask you what you think what the impact likely will be on dollar assets amid this uncertainty over, let's call it central bank independence around in the U.S.
Yes, I do believe that. I think central bank independence is being questioned, but our personal view is that it will still be maintained, and this has been happening over the last couple of years also. So I do believe that U.S. will maintain the central bank independence. But I think the dollar is falling because of a couple of other reasons also, not necessarily because of central bank independence. One of them is tariffs. And actually the other thing, I believe that there's a lot of dollar deposit in all of these Asian countries because dollar interest rates are much, much higher than the rest of the world. And now with tariff uncertainty and a lot of dollar deposits, so people are worried that anyway, dollar interest rates are still higher, but the other countries like Japan and Europe are still giving me better interest rates. So I want to move some money given the geopolitical risk. And that is one of the key reasons I feel the dollar is falling also, not necessarily because of central bank independence. I think a lot of dollar deposit within the region, they are worried about this war, and I think they are trying to convert some of this, and they are trying to diversify the reserves. So I think there are a couple of reasons for dollar falling. And the most important reason is I think that U.S. administration still wants a weaker dollar. I know because they've been saying that weaker dollar is very, very, though they keep talking about strong dollar, but I think weaker dollar does help U.S. companies because if you look at a lot of U.S. companies, 60% of their revenues are generated outside U.S. So that will cushion their tariff kind of tariff impact. So frankly, they cannot revenues and all these currencies strengthen. So when they bring back their earnings, doesn't get impacted. So I think long term, I do believe that US still wants a weaker dollar over the next 1 to 2 years.
But might that mean a lower Treasury yield? So the 10-year, do we get down to 4%? Is this a good entry point as far as US Treasuries go?
Yeah, I do believe that the current administration is very clear. If you look at Scott Bessent's talking about 10-year Treasury, is the yield level they are looking at. So yes, I do believe that at 5%, of course, we will buy. But at this level also, because yes, we went as low as 370, now back to 4.4, 4.5. So I think it's attractive to buy 10-year Treasuries, or increase duration by using high quality credits. So definitely, I think we cut duration and now we are back to going long duration, but at the 10-year part of the curve rather than 30-year part of the curve.
Rachna, Avril here. I mean, what is all this going to mean for direction of the dollar? Because I think you have the view that short term it could strengthen. Why?
Okay, the only thing I feel that it will strengthen if people start pricing in recession risk, because generally in a recession risk, it's flight to quality, flight to safety. So there's a chance because generally because US is the biggest in terms of economy, in terms of consumption, they are the biggest, correct? So if US have a recession, generally rest of the world will have a recession because we are so closely connected. So that is one of the reasons I was thinking short term, if there's the recession chances increase. As of now, people are pricing in 50 to 60%. So if people think that it's going to be 70 to 80%, then their dollar may strengthen short term. But eventually, I do believe that all the local economies will start converting dollars to their own currencies or say euro and JPY. But I feel that there is a chance if the recession risk is increasing in the US, then the rest of the world will get impacted. And that's why I was thinking there is a chance that the dollar may strengthen short term if the recession risk keeps increasing. And there is no bilateral agreement in terms of trade, correct, with different countries, which US is doing. If that doesn't happen, then definitely there's a risk.
You talked to us earlier about part of your strategy, potentially entry point on the 10-year treasuries. But what about for Asia credit? What do you think still looks attractive at this point?
For Asia credit, I do believe that India looks very attractive, given that India is not that much impacted in terms of export to the US. So I feel Indian credits look attractive. And some of the high quality IG credits like Australia, I feel because they are pretty highly rated. So we stick to investment grade. Mainly we prefer triple B plus and above single A, double A. So if you really want to look at high yield, maybe we should look at some of the domestic companies.
गाइस 5:30 भी हो चुका है 6 PM ऑनवर्ड क्रूड ऑयल वहीं का वहीं साइडवेज स्टिल साइडवेज रेजिस्टेंस पे आया था 1:15 पे अभी हो चुके हैं 6:15 होने वाले हैं घंटे से रेजिस्टेंस पे ऐसा कंसोलिडेशन हो रहा है पता नहीं नीचे एग्जैक्टली सपोर्ट पे आ पा रहा है और ना ऊपर ब्रेकआउट करके जा पा रहा है बाकी नेचुरल गैस अच्छा मूव कर गया है लेट्स सी फाइनली जाता है ऊपर टारगेट जोन के अराउंड बाकी देखो सेलिंग आनी है क्रूड ऑयल में जल्दी आ जानी चाहिए इतना देर रेजिस्टेंस पे रुकने का मतलब नहीं है ज़्यादा कंसोलिडेशन हुआ फिर ब्रेकआउट भी अच्छा हो जाएगा नेचुरल गैस थोड़ा और ऊपर आ जाए 270 72 के अराउंड यहाँ सेल कर दें इसको वापस से भी करते रहो गाइस
Over here after that half marathon in Beijing, suffice to say the
we actually feel that India has much more to gain from its continued defense partnership with the United States, and let me sketch that out a little bit. We, of course, want to collaborate more. We want to work together more, and we want your nation to buy more of our military equipment, which, of course, we believe is the best in class. American fifth-generation F-35s, for example, would give the Indian Air Force the ability to defend your airspace and protect your people like never before. And I've met a lot of great people from the Indian Air Force just in the last couple of days. We believe your nation will benefit from American energy exports and expanding those exports. You'll be able to build more, make more, and grow more, but at much lower energy costs. We also want to help India explore its own considerable natural resources, including its offshore natural gas reserves and critical mineral supplies. We have the capacity and we have the desire to help. Moreover, we think energy co-production will help beat unfair competitors in other foreign markets. But India, we believe, can go a long way to enhance energy ties between our nations. And one suggestion I have is maybe consider dropping some of the non-tariff barriers for American access to the Indian market. I believe that the technological collaboration between our countries is going to extend well beyond defense and energy. The U.S.-India Trust Initiative that President Trump and Prime Minister Modi have launched will be a cornerstone of the partnership in the future. It'll build on billions of dollars of planned investments that American companies have already announced across India. In the years to come, we're going to see data centers, pharmaceuticals, undersea cables, and countless other critical goods being developed and being built because of the American and Indian economic partnership. And I'll say it again, I think that our nations have so much to gain by investing in one another. America investing in India, and of course, India investing in the United States of America. And I know that Americans, our people, are excited about that prospect, and that President Trump and I are looking forward to stronger ties.
Walmart-backed Flipkart plans to relocate holding company to India from Singapore. Great news. Its holding company back to India from Singapore, Flipkart spokesperson confirmed to MT Newswire in an email Thursday. This move represents a natural evaluation along aligning our holding structure with our core operation. US market open होगा 7 बजे. Thomson gave mission of expanding government user community to list. $1,370 के अराउंड आना चाहिए था इसको अभी तक. गोल्ड को भी देखोगे तो जिस लेवल पर रुका है एक छोटा सा एफईजी है, अगर ये ब्रेक हो जाता है 3440 के नीचे तो नेक्स्ट सपोर्ट इसको 3410-11 पे मिलेगा। मेरे अकॉर्डिंग गिर जाना चाहिए एफईजी, काफ़ी देर से रुका हुआ है करंट एफईजी पर। रेजिस्टेंस था 3460 8 टू 70 के बीच में, वहाँ से सेलिंग ही आ रही है, दो बार सेलिंग आ चुकी है। एफईजी पर नहीं रुकता है तो फिर गिरना चाहिए। 54 पॉइंट टोटल ओवरऑल, एफईजी पर रुकता है तो वही 22 पॉइंट पे रुक जाएगा। लाइक रुकने नहीं चाहिए गाइस, कम ऑन 40 people are watching.
Banu, I mean, look, there's quite a lot going on, not on only tariffs and the fact that certainly here in the UK they feel deflationary for the moment, but the focus is now on the Fed and what Donald Trump will do with the Fed chair. How concerning is that for markets?
Look, I mean, if it really comes to pass that he does compromise the independence of the Fed, we don't think that will happen, but if it does come to pass that that does happen, it's going to make this the tariff saga look like a picnic, right? That's a serious problem. You're compromising the exorbitant privilege of the U.S., you're compromising interest rates in the U.S., you're compromising the risk-free rate of the world, the cost of capital of the world. I think they're quite sensitive to the bond market. I mean, the last time when the bond market rebelled against them, it was the bond market, not the stock market, that got Scott Bessent to put a word in Donald Trump's ear saying we really should back off, and he did back off, right? There was a pause on the reciprocal tariffs. So I think they do care about the bond market, and that's why you have to believe, your rational mind really has to believe that they will not go so far as to compromise the independence of the Fed. It's a low probability event. The negative payoff from that is just so high.
Yeah, but Banu, is it just trying to find, a boogeyman, basically, someone to
yes. I
pin
mean,
it on
I think that's exactly what it is. I think they understand that this is going to be difficult for growth. They understand that they believe in tariffs philosophically, and if they believe in tariffs philosophically, they are also saying we're ready to take a hit on growth, but of course it will be nice if you could pin it on someone, and so I think that's the context in which they're talking about it. I don't think you'll seriously compromise the independence. By the way, the markets don't either. So yesterday the stock market was down, but if you look at inflation break-evens, break-evens were fine. I mean, the 10-year inflation break-even is sitting at 2.3, which is close to the long-term average of the Fed, and there's no real volatility in it. If you're compromising the independence of the Fed, inflation break-evens will go much, much higher. So not just real yields, which are already high because of legitimate fiscal concerns in the US, but if you compromise the Fed's independence and you start...
Okay, breakdown हो गया है, होने वाला है। गोल्ड एफईजी का नीचे नेक्स्ट सपोर्ट 3410 के आसपास ही है, 10 to 14 के अराउंड। ऊपर से सेल किया हुआ है रेजिस्टेंस से, तो बने रहो हाफ प्रॉफिट बुक करके। नीचे आया तो 50 पॉइंट का करेक्शन है कंप्लीट। इसके नीचे फिर 3370। ये कैंडल बड़ी क्रूशियल है। क्लोजिंग अगर आ गई ना 5420 के ऊपर तो हाई चांसेस ब्रेकआउट के, नहीं आती है तो अभी भी रेजिस्टेंस इंटैक्ट है। आधा घंटा और यूएस मार्केट की ओपनिंग में 5300 पे
the table, but the U.S. is definitely trying to make a U.S.-India trade deal something that they can really go back to other countries and say, look, this was hard from the outset, but we got through it.
Banu, what's priced in the markets right now? Because again, there's a lot of maybe deflationary. I don't know whether it's happy talk or because growth actually is really being hit across the world, but the markets are still quite cool about it.
So the markets, I think, are pricing in these tariffs coming straight back down, right? So I mean, if you look at the effective tariff rate in the U.S., it is still 24%. What was announced on April 2nd was 24 to 25%. Today, it is still 24%, and it's distributed completely differently because it's China's 145%, and you've taken down the reciprocal tariffs. But if you look at the dollar amount of tariffs, or if you look at the effective tariff rate, it's still very, very high. Is the market pricing anywhere close to that? No chance. The market's not pricing that because I mean, if you look at earnings expectations, there's still low double digits earnings expectations over the next 12 months. Right? That's unlikely. I mean, if you're going to see this kind of tariff hit, or even if China tariffs reduce from 145% to 60%, the kind of hit you're going to see on domestic demand, right? GDP may be the wrong lens, Francine, because imports are going to collapse, and as import collapses, it reduces the hit to GDP, right? But if you look at domestic demand, that very likely will be in a recessionary state. That very likely will go negative in the second half of this year, and that could mean an earnings stall. So I don't think that's priced.
But so why the mismatch? Again, and there does seem to be a belief, and I've been told, by people that are close to President Trump, that actually people just don't believe what he says at face value.
So this is exactly it. I think the markets, they sleptwalk into these tariffs because they fundamentally didn't believe that this was an ideological position, and they also fundamentally believed, and I think there is a little bit of inertia in that belief. The market still believes that when push comes to shove, Trump will back off. So they do not expect these tariffs to go through. I don't think these tariffs are priced, or even a much lower level of tariffs like China at 60%. Even that, I don't think it's priced. If you look at global assets, are they pricing in global growth at 2.2, 2.3%, which is where it will be if you have even 60% tariffs in China? No, you're pricing in close to 3.5% growth, so slightly below trend, but trend growth is what is being priced, nowhere close to sort of a domestic demand recession.
Brendan, where are we with China?
Well, the talks are going nowhere. Basically, the two leaders can't agree on the conditions of any sort of beginning of any discussions, and so we're at a stalemate. And at the moment, the U.S. is trying to line up its trading allies. China is warning other countries, don't go against our interests with those alliances. So they're just kind of drifting apart, and that's going to be a real focus, especially this week with the IMF World Bank meetings in Washington. This is going to sort of dominate the headlines from the talks that will take place on the sidelines and in the main discussions among the finance ministers and central bankers.
And Bennett, does this put the Fed actually in a very awkward position? Because even if they cut rates, is there going to be a reticence to show that they're independent?
Listen, whether you compromise their independence or not, the Fed is in a really difficult position. And remember, we haven't seen this in a long time. Growth and inflation going completely in opposite directions. I mean, this is the kind of stuff we used to see in the 1970s or the 1980s. We haven't seen this. And again, you asked me earlier if the market's priced this. No, the market's not pricing in these stagflationary pressures. What does the Fed do? Well, the textbook answer, and this is what I think the Fed will do, is that when you get a supply-side shock, you do nothing to begin with and then turn very dovish, right? So you are going to see, starting the June print in US CPI, you're going to start seeing some serious numbers, and you're probably going to be at 4.5%, maybe higher core PCE from Q4 of this year to Q2 of next year if these tariffs don't come down significantly. The Fed's going to be, it's going to be difficult for the Fed to move until it sees the whites of the eyes of the labor market slowing, which again should happen from Q3 of this year. So we think the most likely time the Fed begins to cut, despite high inflation, is September. So, Trump's been putting pressure that they should go right now. I don't think the Fed is ready to go right now. I think they will have to wait for inflation, or the peak of inflation, to be seen, labor market to weaken. So I think they begin in September and then they go hard.
What's hard?
So hard is through neutral, right? Over the next 2.5 years, we think the Fed, so we're at 4.5 right now, the Fed gets to 2.25 by 2027. So really a halving of cuts. But what's important is that although the Fed's going to cut, I don't think the long end's going to come in that much because of the degree of fiscal supply and the lack of demand from the rest of the world. The long end actually really lags. So 2.25 decline in Fed rates, probably a 60, 70 basis points decline in the long end.
As a student of innovation and studying what is happening in China right now, we're astonished at what's happening from an innovation point of view. When the government here puts out an objective,
yes,
the entrepreneurial zeal of the people takes over and they accomplish incredible things.
Good morning from our global headquarters in New York. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. Feeling the pressure, sell America sees stocks, bonds, and the dollar sell off in tandem. Futures attempt to rebound this morning. Finding a scapegoat, President Trump continues to blast Fed Chair Powell's policy. And as analysts warning stack up and sales slump, Tesla report earnings before the bell. So we do attempt to rebound. After maybe what was the quietest sell-off, again, that toxic mix of stocks down, yields up, and a dollar weaker. We're up by more than 1% across the major indices this morning. Relief for the NASDAQ after slipping into yet again a bear market yesterday, down 21% from the highs. The thing that continues to lead us lower, you can see gold at the bottom of your screen at one point hitting 3,500 for the first time on record. It's hit 22 all-time highs so far this year. When it comes to the bond market, it was a sharp steepening of the yield curve yesterday. The 2s, 10s, and 230 slope saw their steepest levels since January of 2020. We're a little changed this morning, but slightly higher on the front end by about 3 basis points, 3.78 there, 4.41 for your 10-year yield, and the dollar at its weakest level since 2023. Let's look at some stocks underneath the surface with your stocks to watch this morning. Here is Bloomberg's Joe Easton. Good morning, Joe. Great to have you back.
Morning, Danny. So Boeing in focus today is the company potentially going to be selling its Jeppesen navigation unit to Thoma Bravo, the private equity company. Now, Bloomberg has previously reported that this business could be worth around $8 billion, so it isn't a small unit by any means, but Boeing shares only up around 0.5% in the pre-market. Then here in Europe, Novo Nordisk absolutely slammed at the open of trading in Copenhagen following that data from Eli Lilly, which showed their weight loss drug, which is a pill, saw users lose around 7% of their body weight in 40 weeks, and that is a huge competition concern for Novo. The Danes had a nice 5-day break for Easter, but that stock getting hit as they come back following the holiday. And then finally, keep an eye on solar stocks. We are seeing some small moves higher in some of those shares as Trump slams 3,500% tariffs on some of the goods produced out in Asia. I had to read that headline twice when I saw that. And as usual, this is all on the Before the Bell opening wrap on the terminal, written by yours truly today, so have a read of that one.
I'm sorry, Joe, did you say that the Danes get 5 days for Easter?
5 days, yeah, absolutely fantastic. Right. I think I might be moving to Copenhagen.
I was going to say, you and I will have a word with the bosses and put in our notice to see if we can be moved out there. Joe, thank you so much. Bloomberg's Joe Easton with the stocks to watch. And we have a great hour coming up for you. We're going to be catching up very shortly with Max Kettner of HSBC, and later in the hour, Lori Calvasina of RBC Capital Markets. Now, President Trump has been doubling down, putting the pressure on Fed Chair Jay Powell, posting on Truth Social yesterday, quote, with these costs trending so nicely downward, just what I predicted they would do. There can almost be no inflation, but there can be a slowing of the economy unless Mr. Too Late, a major loser, lowers interest rates, now, of course, referring to Fed Chair Jay Powell. And equities selling off yesterday in reaction to the pressure. Joining us now is Max Kettner, Chief Multi-Asset Strategist at HSBC. Max, really great to see you this morning. Look, it is a market that had been dictated on the different machinations of trade policy. How do you even begin to price this in? Not necessarily even Trump trying to fire Jay Powell, but just continuing to talk about it.
Yeah, good morning. I think what it does is it really leaves sort of the position indicators, the sentiment indicators, really a bit in flux and a bit in question actually at the moment, because when we look at our framework at the moment, actually the last 3 weeks it's been sending some buyer signals, but we haven't really followed that. It's been really the first time in, I would say, years that we've not followed our own sentiment and positioning indicators and have argued against any sort of technically driven, at least technically driven rebound, because precisely like you say, you just don't know, right? You don't know whether the next day there's going to be some more volatility coming, something more unexpected. The truth of the matter, I think, is for us, it doesn't really matter what happens next with the tariffs, what happens, what kind of rate is being slammed on country A or country B, how the negotiations will go with Japan or with Canada or the EU. What matters most and what really mattered most in the last few weeks for us is that kind of uncertainty, is the level of elevated uncertainty. Is that truly going to go away? What is the potential that will completely dissipate? And that, I think, continues to be utterly low, and that keeps really risk assets pretty vulnerable, I think, at this point.
But Max, I mean, we're talking about the next 4 years then, aren't we? If this is the feature of Trump's policy, is this uncertainty, what are we talking about for equities, not just this year, but for the entirety of Trump's term?
No, I don't think so. I mean, number one, we've got the midterms next year, so let's see how those will go. I don't know, but let's see how the midterms will go. Maybe that will change things, for example, number one. Number two, I think there will come some point also in terms of fundamentals and in terms of what is being priced in, where things really will look like, okay, now there's enough pessimism in the price. We're just not at that level yet, right? Everything's good at price. Everything's for sale at some certain price. It's just not that the price is quite right at this level. When we look, for example, at a couple of our fundamental indicators and we compare them with cyclical against defensive equity performance globally at the moment, there is still almost a double-digit gap between those indicators, those fundamentals, and what cyclicals against defensives are pricing. So clearly, there is still too much hope priced into cyclicals. I think once that comes down, once you see a bit more pessimism priced in there, then to us, the price is a bit more right, and then that's really time to go back in.
And what does that look like, Max, to have an appropriate level of pessimism priced in?
Yeah, I think so. The level that we're looking for between the fundamental indicators that we track, sort of the forecast revision, top-down forecast revision and revision momentum, when we plot that against cyclicals, against defensives, at the moment we've got an almost 9 percentage point gap between those two. So once that is closed, right, so once we see perhaps cyclicals underperforming another sort of 8-9 percentage points, I think that's enough pessimism. When we've got, for example, in perhaps already in May, some evidence of the April data, the hard data disappointing. Again, that would be a sign of really, enough weakness already being in the economy and being already in the data. Because so far, let's remember, the narrative, the widespread narrative is really, don't worry, it's all the soft, it's all the survey data, it's just a slowdown, it's not a recession. I think once we do see some evidence that the hard data is indeed slowing, again, that is, I think, enough of a sign of, okay, it's not just a slowdown, we've got to price in more in. Once that a bit more pain is in, I think that's the right price to go back in then.
And Max, you're very much talking about the fundamentals of the economy here, but I wonder if there's a degree, and you even just look at the move higher in yields, that it's been led by real rates, not necessarily break-evens, that the real concern is about less credible policy, means that kind of the huge privilege that the U.S. has in order to run these twin deficits goes away, and the foreign appetite for buying U.S. assets goes away with it. Should there be a concern less about where the economy goes and that sort of flow and that sort of structural shift in how we view American assets?
Yeah, I think we are seeing that to some degree already, right? When we look at the dollar, actually, it is mostly a dollar move. Look at things like Euro Yen or even Euro Swissy, that they are not moving nearly as far or are actually flat over the last 2-3 weeks relative to the dollar. So it is largely a dollar move. But again, I think once we see particularly also position indicators, sentiment indicators, a bit too stretched on the dollar side, I think that will also then at least give us a technical rebound in some of the US assets, particularly then also in the dollar, but also in US equities. I think we're going to get, I think, to the point in the next 2-3 months where it's going to get really consensus to be rest of world overweight over the US, and where you'll probably start to see some sort of rebound. Because I totally appreciate, yes, we've got this policy uncertainty, we've got this political uncertainty. But let's remember, why do we buy the US? We buy the US but because the return on equity gap is now 4 times as high compared to the rest of the world than it was 15 years ago. We don't necessarily only buy it because, it's the Republicans or the Democrats in power. No, we buy it because of the earnings power, because of the margin superiority. And I don't think that really is going to go entirely away.
Well, to that point, Max, we're getting into the thick of earnings season. What are you looking out for? Because it's been very uneven as to what companies say about what their future will be and whether they're actually willing to give a forecast or even willing to give just one forecast.
Yeah, I think that's precisely actually what we're looking for. What we are looking for not only is on the top-down side, the first sort of hard data disappointing, but also from the bottom-up side, from the corporate earnings, really corporates telling us either, look, we cannot hold the full-year guidance, we need to cut full-year guidance, and or pulling guidance overall. And that is precisely what we're seeing at the moment, right? We are seeing more and more companies saying, look, we are unable to give you guidance, or they give you some sort of widespread fan chart where you're saying, well, if it's a recession, it's this. If it's not a recession, it's that. So, I think it's this kind of elevated level of uncertainty where really investors then at the end of the earnings season in 2-3 weeks will say, look, well, what do I do with this? With that level of uncertainty, cyclicals will have to take another beating. Once you've got that, I think then, again, it's time to go back in.
Hey, Max, just quickly before you go. So on a day like today where you do see a rebound and you're calling for no technical rebound is going to be happening, do you want to sell into those moments? Is that what you should be doing?
100%. 100%. I think moments like today, but also the last sort of hour and a half yesterday, they do tell us there is very little panic so far. In fact, when we look at our indicators, real money positioning, long-only sentiment is still pretty elevated, right? So far, it's really been systematic selling. It's been hedge fund selling. Long-onlys, on aggregate, at least on our measures, are still overweight in equities. They've trimmed in credit, both in IG and high-yield credit, but in equities, still overweight. So to me, I think perhaps even retail buying, long-only, still this buying the dip behavior is in there. As long as we've got that, I think any kind of rips, any kind of, or any evidence where really people are buying the dip, you want to use that to trim exposure even further.
Yeah, I go back to my favorite earnings headline of yesterday, of last week, Schwab saying that our clients want to buy the dip and want to buy equities, but are asking.
Okay, guys, crude oil finally नीचे आना शुरू हो गया काफ़ी देर के बाद यूएस मार्केट भी ओपन हो जाएगा आधे घंटे में तो उससे पहले अगर आ जाता है टारगेट देने तो बढ़िया ही है बाकी गोल्ड का भी होने वाला है टारगेट गोल्ड भी अपने टारगेट जोन को हिट करने वाला है 3410 टू 13 50 पॉइंट गिर गया रेजिस्टेंस से रिसेंट हिस्ट्री में इतना इंट्राडे में मोमेंटम देखा नहीं है विदाउट न्यूज़ नॉर्मली मोमेंटम वैसे 20-25-30 पॉइंट का होता था डॉलर का सॉरी अभी फिलहाल देखोगे तो सीधा $51 का मोमेंटम फ्रॉम रेजिस्टेंस 3465 0.05 लॉट भी अगर सॉर्ट किया है तो बहुत अच्छा है उससे कम भी किया तो भी सही चल जाएगा $50 इज टू मच बाकी अब देखते हैं यूएस मार्केट के बाद थोड़ा और मूव करता है तो क्योंकि यहाँ पर अगर नहीं रुका 3410 टू 15 के बीच में तो फिर नेक्स्ट सपोर्ट सीधा 3370 के अराउंड है ऐसे रुकेगा यहाँ पर थोड़ा बहुत तो डेफिनेटली वापस ऊपर आ गया रेजिस्टेंस पे आ गया वापस अब तो यूएस मार्केट ओपन होने वाला है उसी का वेट कर लो फिर ट्रेड करना वापस रेजिस्टेंस पर ही है रेजिस्टेंस जोन के अराउंड ऊपर आ ही जाए अब ये एग्जैक्टली लेवल को हिट भी तो नहीं कर रहा रेजिस्टेंस को थोड़ा सा ऊपर आके एग्जैक्ट रेजिस्टेंस को हिट कर देता तो बेटर था थोड़ा सा ऊपर 18,120 को हिट करके फिर गिरे नीचे, एग्जैक्ट रेजिस्टेंस को हिट हो जाएगा। कैस भी देखोगे तो इसका भी क्या कहें, ये बिल्कुल क्रूड की इन्वेंट्री है, ऐसा ना हो आज साइडवेज ही हो जाए पूरा इन्वेंट्री की वजह से। वापस नीचे आने पे वापस कर, हाँ बिल्कुल, नेचुरल गैस वापस डे लो पे आके अराउंड आता है तो वापस बाइंग कर सकते हैं। सपोर्ट ठीक ही है वो नीचे, बस बाइंग ही नहीं आ रही है, नथिंग। कैंडल भी ओपन इक्वल टू हाई है, बिल्कुल नेचुरल गैस कैंडल भी ओपन इक्वल टू हाई। क्रूड इन्वेंट्री हाँ वेनेसडे को ही आती है, कल, आज तो ट्यूसडे है, कल ही आएगी इन्वेंट्री क्रूड ऑयल की भी। शाम को 8 बजे। अभी फोरकास्ट भी नहीं दिया इन लोगों ने तो। अभी एक 7 PM पे यूएस मार्केट ओपन है, फिर 7:30 पे रिचमंड मैन्युफैक्चरिंग इंडेक्स का डेटा गोल्ड और सिल्वर के लिए। आईएमएफ की जो मीटिंग चल रही है वहाँ पर 2-3 न्यूज आई हैं जिनका शायद थोड़ा बहुत क्रूड पे भी और नेचुरल गैस पे भी इम्पैक्ट हो रहा है। फर्स्ट वन इज़ दैट आईएमएफ की मीटिंग है, सब लोगों को पता होगा, 3 दिन की, 3 से 4 दिन चलती है, आज सेकेंड डे है। तो वहाँ पर उन्होंने यूके यूनाइटेड किंगडम का जो जीडीपी का फोरकास्ट है उसको लोअर किया है, पहले 1.4 था, ओ सॉरी 1.1 किया है फॉर 2025 एंड 1.4% फॉर 2026। और जो इन्फ्लेशन रहेगा वो 3.1% तक रह सकता है 2025 में। यूके के लिए तो अच्छी बात तो नहीं है, वहाँ की इकोनॉमी के लिए। इसके साथ साथ चाइना की बात करें तो चाइना का जो 2025 का जीडीपी का प्रोजेक्शन है, पहले 2025 के लिए 4.6 लगाया था, अब कम करके 4% ही लगा दिया है, 0.6 परसेंटेज पॉइंट का रिडक्शन है। एंड इकोनॉमिक चैलेंज हैं इसलिए कह सकते हैं वर्ल्ड इकोनॉमी के सामने। तो क्रूड पे भी शायद थोड़ा बहुत, नेचुरल गैस पे भी थोड़ा बहुत इम्पैक्ट हुआ है। कैंडल ओपन इक्वल टू हाई, ठीक है। बाकी वापस क्रूड ऑयल उसी लेवल पे, सुबह भी उसी लेवल से रिटर्न किया था। लेट्स सी अब थोड़ा सा आ जाए और इस कैट के नीचे निकले। बाकी थोड़ी देर पहले पहलगाम में एक टेररिस्ट अटैक भी हुआ है, देखना पड़ेगा उस पर और कोई न्यूज़ आती है तो। इंडिया का जो पहलगाम का एरिया है जम्मू एंड कश्मीर के अंदर, टूरिस्ट पर एक आतंकी हमला कह सकते हो। द वीडियोज़ आर शॉकिंग, जो भी फिलहाल देखने के लिए मिल रही है।
I sort of struggle with this growth value debate in the U.S. because on the one hand, we know the growth stocks are overheated. We know that those earnings growth expectations are decelerating. But for value to really work, you typically need a hot economy. And everything that seems to be hitting the market and pushing people out of the U.S. makes me think we're set up for kind of a sluggish economy for a while. So I'm really struggling with that, kind of idea of shifting into value. The geographical rotation makes more sense to me.
And we're getting some clues into what companies are thinking about and how they're thinking about. And for a lot of them, it feels like we have no idea. Here are various scenarios, or here's no scenario. We're not sure what's going to happen. I know you and your team are really, really good at looking through these various earnings statements. Are there any takeaways you've had so far? I know it's mostly been the banks so far.
Yeah, and to be honest, like last week was all about the banks, a little smattering of other stuff. Previous to that, we were actually reading conference transcripts in addition to earnings transcripts across the whole Russell 3000. And I think that idea of uncertainty, it's out there, right? I mean, you're having companies actually, I don't want to beat them up for saying they don't know. I think that's a valid response in here, and I applaud them for talking. I think that over the last couple weeks, we've finally gotten a lot more detail about what's going on and how they're thinking about their outlooks. And companies with tariff exposure are finally starting to really disclose some of those exposures, even though they may not be giving us, kind of the neat and tidy bow with, how it all bakes into guidance. I'm okay with that. The street can do that work to figure out the impact if they give us sort of the raw materials by which to go out and do the analysis. So that's my number one takeaway. So there's just more discussion, and that's really, really healthy in here. I think the other thing, I've noticed from the banks last week, and I sort of chuckled. I'm an equity research analyst, right? And I saw a couple of these big banks giving some shout outs to their equity research department. So I appreciate that on behalf of the sell side. But they were referring to this idea, and I think I've sort of settled into this as well, that we know that the adverse impacts are going to be there on growth and inflation, pushing growth down, pushing inflation up. Can we quite call a recession? It's not clear to me. People were so adamant we were going to have a recession back in 2022 and we didn't. Are we sort of setting up for something similar this time around? So I thought that they were sort of dialing down the temperature a little bit on the recession risk, which I think is appropriate at this point. I think the banks were really interesting in that they're like, look, we're indirectly impacted by tariffs, but we're going out and we're talking to all our customers and trying to figure out what's going on. One bank said, I forget how many companies they'd talked to, but they said nobody brought up layoffs. That's a really interesting, helpful data point. But what we were seeing is, some of these companies were saying, look, our companies are going to have to attack this through pricing. They are going to have to defend their margins. And we are seeing a pause on things like CapEx and M&A and activity in general. So it's a really, really messy situation. And I commend the banks that came out last week. I thought they gave a lot of really good, important detail.
I do wonder for the tech players, because one of the kind of booming animal spirits that we had to start the year in last year was this immense amount of CapEx coming out of big tech, that they're going to be spending on AI, that they need data centers. You have Wells Fargo reporting this morning that it looks like you might have Amazon pulling back on some of their data centers. Does that CapEx also bleed into the tech players? And what does that mean for what was a pillar of the bull market?
I think it's TBD. Look, I will say I feel like I haven't been reading all that much about AI lately, which is interesting. We have some transcript tracking charts, and I think the AI conversation is actually off peak, like still, up there, but has come down a bit.
Which, by the way, is crazy because it was all we were talking about not that long ago.
Right. I will tell you, every macro discussion, by the way, in last week's earnings calls was tariff, tariff, tariff. There was really no difference between the two, which made my job a little bit easier. But look, I do think that as companies are evaluating business decisions and investment decisions, everything is on the table, right? So we're going to have to keep an eye on that. This is more of a stale data point, but last year when we would sort of look through companies and their AI commentary, if you put aside the big tech players who are really experts and knew what they were doing, kind of everybody else, my team would sort of laugh because we felt like we were getting like all these, we called it small potatoes, like how many, text summaries and chatbots are companies going to talk about. Things for AI to really be impactful, right, it's got to progress beyond that. So is some of that going to be cut back on? We'll see. But it's something we can certainly keep an eye on.
I got to say, it feels like a different world than 4 months ago. Lori, so great to have you on. Thank you for helping us navigate it. It's always such a pleasure to have you on the show. That is Lori Calvasina of RBC Capital Markets. Okay, let's get you some other top stories that are trending on the terminal this morning. The U.S. is imposing tariffs of over 3,500% on solar imports from Cambodia, Vietnam, Malaysia, and Thailand. A year-long investigation found that solar manufacturers from the countries were unfairly benefiting from government subsidies that helped them sell to the U.S. at rates lower than their costs. And Nomura agreeing to buy Macquarie's U.S. and European public asset management business. The price tag on that is $1.8 billion. It's Nomura's most significant overseas acquisition since it bought Lehman Brothers in 2008. The all-cash deal will allow the bank to scoop up about $180 billion in client assets. All of that according to a company statement. Harvard is escalating its showdown with the Trump administration. It sued several U.S. agencies and top officials for freezing billions of dollars in federal funding. Lawyers argue that the government unlawfully suspended the funding after it refused to comply with unconstitutional demands to overhaul hiring policies and diversity programs. Coming up, Amazon eases off the AI spending, as we were just discussing, pausing some data center leases. We're going to have more on tech next. This is Bloomberg. It's your Bloomberg Brief. Danny Berger in.
गाइस 7 PM होने वाला है. यूएस मार्केट इज गोइंग टू ओपन. क्रूड ऑयल में जिन लोगों ने सेल किया अपना एसएल ट्रेल कर लो गाइस. ट्रेल द एसएल इन क्रूड ऑयल ऑन सेलर्स. यूएस मार्केट में देखते हैं क्या मूव करता है अभी या नहीं. रिटर्न ना हो ऊपर की ओर. ट्रेल द एसएल गाइस. ट्रेल द एसएल इन क्रूड ऑयल. ओके, क्रूड ऑयल में ट्रेल कर सकते हो अपना एसएल. सेलर्स ध्यान रखना, थोड़ा सा नीचे और टारगेट है. यूएस मार्केट ओपन होने वाला है नेक्स्ट within 1 minute. US market open now. US market हो गया open. Morning bell started. At open है crude oil की कैंडल तो. डाउ फ्यूचर देखोगे पॉजिटिव ही लग रहा है. 1% ऑलरेडी पॉजिटिव है. S&P 500 भी. US market open and US market will close in next 6 hours 30 minutes. 6.5 घंटे के बाद close भी हो जाएगा. This is a bell.
Morning after we continued to see selling on Monday morning. You can now see that stocks are starting to recover just a bit in the morning trade here. You've got your S&P 500 moving to the upside. You've still got a little bit of pressure on some of those tech names. I do want to quickly check on gold, hitting another record high this morning, over $3,500 an ounce here. If you take a look at gold this morning, you can see still moving to the upside as gold continues to be the haven trade amid a little bit of confusion and digestion of whether or not America is the safe haven asset class and asset holder moving forward here. We're going to talk about that a little bit more, but I do want to do a check on some of the sector action as you are seeing the S&P 500 and your tech-heavy NASDAQ moving to the upside this morning. All eyes will be on Tesla later today. Earnings coming out here, the first of the Mag 7 to report. You can see the Mag 7 firmly in the green this morning. Broadcom under just a little bit of pressure here, but a welcome reprieve for some of these big tech names as they've continued to see a lot of selling, especially over the course of Monday's trade. Brad?
The so-called Sell America trade is top of mind for investors navigating uncertainty from trade to the Federal Reserve. Here to track where the trade stands, we've got our own Alexandra Canal. Hey, Ali.
Hey, Brad, that's right. Risk-off investments like the U.S. dollar and long-term bonds, typically viewed as historical hedges against volatility, they aggressively sold off on Monday. We saw the 10-year yield surge back above 4.4%, while the U.S. dollar dropped to its lowest level since 2022. Early trading on Tuesday saw a bit of a reprieve, but not much. The yield on the 10-year continued to trade around 4.4%, while the U.S. dollar index also wavered below the critical 100 level. That's a key psychological and technical milestone. Now, these types of moves are pretty unusual. Instead of flocking to safe havens like U.S. bonds or currencies, investors appear to be pulling back. That's something Wall Street strategists have described as the sell America trade. And we've seen this shift in sentiment really accelerate as traders make strong moves into commodities like gold. The precious metal rallied to yet another record on Tuesday, a clear signal that investors are seeking non-dollar denominated, globally accepted stores of value. Now, the exact catalyst for all of this, it remains unclear as investors continue to react to a U.S. economy already under pressure from tariffs, slowing growth, and escalating geopolitical tensions. We also now have the added risk of a potential political interference in monetary policy. That seems to have been one of the main drivers when it comes to Monday's sell-off. But it's not a good spot to be when the U.S. trade loses its luster. According to J.P. Morgan, U.S. equity ETFs saw net outflows of $3.6 billion last week, while developed international markets attracted above average inflows totaling around $3 billion. And that is a notable shift considering how heavily U.S. markets rely on foreign capital. If we look ahead, we have heard from some experts that say the long-term prospect of safe havens remains intact, but in the short run, it's likely we will continue to see this volatility until we get some firmer updates on U.S. trade deals and also see an improvement on the fundamental side as earnings continue to trickle in as well. And we have Tesla coming up after the bell this evening. That's going to be the next big catalyst to watch there. Maddie, Brad.
All right, Ali, thank you so much. Appreciate it. It's time now for today's strategy session. U.S. stocks rising this morning despite the Sell America trade gaining traction on Wall Street. So is now the time to buy into U.S. stocks. Joining us now, Ken Mahoney, Mahoney Asset Management CEO. The big question for me this morning to you, Ken, do you buy the dip or do you sell the rally?
Sell the rally. I mean, we have so many things coming out. Just the report, that 2 minutes there of everything that's going on in the world. Like, we want to be heroes. This reminds us of 2022, not the political side of it, but, raising rates, 75 basis points. And our goal is to get through the other side of it unscathed as much as possible. So we're actually say sell into rallies. Again, like we had the 2,968 point Dow Jones rally, sell into it, try to wait for a better setup. Right now, there's way too many forces upon us. I mean, we have Hurricane Donald that, it could tweet just moments from now and watch everything come undone again. And the problem really is, this finger pointing with the president. And yesterday, we saw with Powell. Look, we have not been the biggest supporters of Powell back in 2018, talking about, increasing rates, only do emergency rate cut, transitory. That didn't work out so well. But here, it's actually Donald Trump is the one with, spill in aisle 6, spill in aisle 9, spill in aisle 9. Oh, here, Powell, clean this thing up. And it doesn't work like that. So really, the president really needs, in short order, to get a deal. We keep on hearing like, oh, we're close to a deal, It's like a used car salesman telling his boss like, oh, I almost got him. I almost got them. He needs to get a deal done. Otherwise, this is going to continue to unravel. So the short answer to your question, we would sell into rallies. By the way, some of the biggest rallies you'll have, the biggest rip your face off rallies, are in bear markets, which we're in.
It also raises the question, which deal? I mean, we're talking about multiple countries that still have tariffs, and China, of course, having the large and lion's share portion of those tariffs, the second largest economy in the world and one of our largest trading partners. So all of that considered, which deal is the market actually going to look to say, okay, this starts to set some precedent for us to see how the negotiations are going to go forward elsewhere? Oh, yeah, and by the way, other countries are going to catch wind of the deals that are being made for some of the other counterparts that are waiting for tariffs to come off the table.
Yeah, there's a lot to untangle there, but I would start off obviously with Japan. And look, this is done incorrectly to start with, right? There's a big Cannon approach and that little list that he showed everybody. We were thinking like rational, maybe 10% tariffs and kind of work from there, but instead 47%, 104%. It's just like, you might as well just, ban imports from China. I'd like to see a deal for Japan. I'm not sure that can happen or not, because at least that kind of solidifies Asia. The way to do this, though, obviously in hindsight, but it should have been thought about, is kind of moving up. You know, the lowest hanging fruit would be, let's say, Argentina or Mexico or maybe one of our trading partners, and then, you know, eventually get to China. But instead, this big blast has really put us in a big way. So all the things that investors are feeling right now, unfortunately, they shouldn't really feel like this. But hey, 72% of Americans that voted for Trump own stock directly or indirectly, and they feel like just get passed along, especially Treasury Secretary's comments, Treasury Secretary comments like, "Oh, don't worry about it. You have to have some pain," and so forth. They're furious. They really feel they got stabbed in the back. They did not ask for a world trade war out of this Trump administration 2.0. They wish they had Trump 1.0 is what I'm hearing.
Well, that's interesting because I'm also hearing a little bit of a different narrative from the politician side of things. But having said that, I want to talk about at what point you turn more long-term bearish on the U.S. specifically. At what point do you start to say, okay, we really have to get out?
Well, it'd be earnings. You know, right now we're looking at probably an economic recession and earnings recession. And again, we've seen, by the way, this morning, I thought it was pretty good. General Electric, 3M, you noted here. I was kind of surprised, but maybe, it's this kind of thing become limping into earnings and the bar is so low. That's probably a better spot to be with earnings. But the visibility, I don't know how they're going to do it. I know UAL, United Airlines, last week broke it out two different ways, the earnings expectation, their guidance. Well, if we have tariffs, it's going to be this, we have this, that. So again, it's really difficult, especially a lot of companies tell me they finally got over cleaning up these supply chains, right? 2020 with COVID messed up all supply chains. And here, self-inflicted, that's the hardest part I hear from business owners time and time again, is that the vendors are now hoarding things, suppliers are hoarding things because prices are going up. And the unintended consequences of this is more severe. And there are things that other dominoes are going to fall that we're not even thinking of. I don't think we came into this year on a bingo card thinking that a pro-business administration and less regulation would turn into this zoo that we have here. But then again, he surrounded himself with people that are really tariff hawks, and here we are.
And nobody in the checks and balances that Henrietta Trays was bringing up with us earlier, nobody seemingly kind of pulling in the reins as well. And so I guess with that setup in mind, if you did see, because of the kind of self-induced juncture we found ourselves in, does that also mean that on the backside of this, if all of a sudden there are deals that start flowing through that allows the president to say, see, I did it again, is that enough? Is relief enough for it to kind of lead to a conviction trade that everyone would say, all right, rally's back on?
It's hard because, I try to always separate the personality of Trump and the policies, but they're one and the same, right? The way bombastic he goes against our allies makes it very difficult to get behind it. So maybe put a Band-Aid on it like we did with Paul's 90 days and you get those one-day rallies. Those will be sold into. Again, I think you better set up down the road when the VIX settles down at, 30-something? That implies like 2.5% intraday movement. Good for traders, not good for investors. We'd like to see higher highs. I mean, we're so far off of actually putting any meaningful dollars to work. We'd have to see, again, I know buyers live higher, so to speak, but you'd have to start seeing the trends go higher, above the 200-day moving average, volatility decrease, and we're not seeing any of that. As you mentioned also, too, about gold and all and the dollar being devalued. This is a real mess. And when we call it Hurricane Donald, the only question is this a hurricane category 2 or is this a hurricane category 5? And it's starting to look like a 5. I mean, just, run for the hills, evacuate type of thing, unless somehow they can get some deals very quickly. This can't last for weeks or months. He's got to really try to find a deal, and it's on him. It's not on Powell, obviously.
I knew I should have used my parents' Costco membership to get some gold bars. Ken, thanks so much.
Those hot dogs, too.
Well, of course, you gotta load up on those. Thanks so much, Ken. Good to see you.
Thank you. Bye-bye.
A stock we're watching at the market open, Boeing, announcing a $10 billion deal this morning. The company agreeing to sell portions of its digital aviation solutions business to private equity firm Thoma Bravo for nearly $11 billion. The CEO, Kelly Ortberg, saying the deal is an important component of its strategy to focus on its core businesses and supplement its balance sheet to prioritize an investment-grade credit rating. The deal comes ahead of Boeing's earnings results this week. Shares are moving higher during today's session.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free child alerts to the rescue, so you cancel on time. From Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free child alerts to the rescue, so you cancel on time. From Yahoo Mail.
Shares of home builder Pulte Group up over 5% this morning after the company reported a first quarter earnings beat and slightly lower than expected home sales revenue of $3.7 billion. While average home prices rose 6% to an average of $570,000, total homes sold fell 7% from the same time a year ago. Pulte Group crediting affordability challenges for home buyers as one of the reasons behind the decline. Here with more on the housing market and home builders, we've got Alex Barron. He's the Housing Research Center president. Alex, great to speak with you. I want to zero in on that affordability challenge that we heard about from Pulte, and that, of course, comes before any impact of tariffs. Where do you see affordability heading for home buyers over the course of the next year?
Well, affordability has been challenged, ever since the pandemic. First, because home prices rose significantly when interest rates were low, and then when interest rates went up, 2022 to 2024. That was kind of the thing that really hurt most consumers. I'd say close to 80% of American households can no longer afford to buy even the cheapest entry-level home. Where it goes from here is going to be dependent on where interest rates go. So if the Fed starts to cut interest rates, that will help. If they don't, then I think affordability will remain challenged. Most of the builders have guided to maintaining incentives really high, so obviously they don't think any help is on the way.
And so how does that impact some of the backlogs? Because we know for some of the new home builders, they're just trying to make sure that as they're increasing supply, it's at a level that it's still profitable for them, but also one that is not leading to further market deterioration. And that has been a larger issue in the affordability crisis that we've seen play out.
Well, most of the builders were getting gross margins of close to 30% about 3 years ago. And if you were to back away most of the incentives they're currently offering, to some degree, they're still close to that level of profitability. But longer term, gross margins have always been in the 18 to 22% range, which is kind of where they're drifting to right now. And yet many builders are still significantly above, like Pulte, I believe, is at 27, 26% range. So there's still room for the builders to make plenty of money, even if they have to adjust pricing or offer higher incentives, they're still making plenty of money.
Something that's, of course, of concern to home builders, home buyers, is the status of the 10-year yield, which is, of course, tied to mortgage rates. This administration wants a low 10-year yield, regardless of any sort of policy outcomes outside of that. From where you sit, is a low 10-year worth it, regardless of any other economic pain that these policies might cause?
Absolutely. You know, home ownership, I believe, is the bedrock of American prosperity. And for homeowners,
even if it pushes us into a recession, Alex, it's worth it to have a low 10-year?
Well, I don't see how it's going to push us into a recession. Usually low interest rates drive investments, and certainly it's going to drive activity in the housing market, which is one of the biggest drivers, you know, of economic activity. So I'm all for low interest rates, and I believe obviously most homeowners probably would be too, because they'd love to buy a home. I believe there's lots of
They can
pent-up.
buy one in a recession, yeah. Go ahead.
Well, I mean, I guess the other additive here, Alex, is of course, if we do have lower interest rates, then that's typically in response to a deteriorating economic condition, which would then suggest that it is more difficult, not just for people to get approved to buy a home, but also the capital that would be required. That it's largely seen, because of previous instances in historical data, that the home buying could sputter or decline significantly at that juncture. So what would the home builders then need to do in that instance if they're already giving buy downs, if they're already giving concessions, and then you have a broader collapse of the home buyer sentiment?
Well, that's not necessarily how it works out. You know, if you look at the last recession that was pretty long, from 2000 to 2002, the home builders were growing through those years and were making plenty of money. So it's not necessarily true that because we're in a recession that less people are going to buy a home. If the mathematics works in terms of a payment, that will drive people to buy a home. And that's what low interest rates would do, which is why I believe the Fed needs to cut right now. And I believe that that will drive home ownership to very strong levels. Right now, the housing market is not weak and it's also not strong. It's kind of in the middle. But I believe we should be, due to fundamental demographics, we should be doing close to 1 million new home sales, not around 600,000.
Yeah, I guess the thing, though, that we did jump over and going from 2000 to 2002 is clearly the great financial crisis, where home buying did become significantly more difficult between 2007 to 2009, and because of a combination of factors. So there's a lot to continue to discuss with this. Alex, we got to leave it there for today. Thank you for joining us.
Thank you.
We've got all your markets action ahead. Stay tuned. You're watching Morning Brief.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Catalyst. I'm Madison Mills. 30 minutes into your U.S. trading day. Let's get you the three catalysts that we are watching this hour. First up, we break down the outlook for international equities amid growing calls on Wall Street to sell American assets. Plus, we discuss the state of Fed independence as Trump reignites his fight with Powell to cut interest rates. And we'll look at the catalysts needed to boost Tesla shares as the company gears up to report first quarter earnings while the stock has been under pressure. Half an hour into the start of U.S. trading, let's get you a check on the markets. Taking a look at the major averages here, you got a little bit of a rebound this morning, if we can even call it that. You got your S&P 500 up about 1.5%. Your tech-heavy NASDAQ up about 1.8%. All of the Mag 7 names currently up. The question is, will that momentum be able to continue as we kick off the Mag 7 earnings cycle with Tesla reporting after the bell today? But let's take a look over at the bond market as we have seen that Sell America trade happening in the market, putting pressure on the dollar yesterday. We're now seeing bonds catching just a bit of a bid. You've got your 10-year yield down about 3 basis points, your 30-year down just about 5 basis points right now. Finally, let's take a look at Bitcoin moving to the upside, up a little over 3.5%, holding over 90,000. I want to bring in friend of the show, host of the Trader Talk podcast and chief market strategist at Slatestone Wealth, Kenny Polcari. Kenny, great to have you as always. I loved in your recent note to us, you say investors have not given up.
So that was referring to capitulation, right? Mm-hmm. Capitulation happens when everybody is just giving up. They're throwing everything out the window, including the kitchen sink. They've just had it. Mm-hmm. Yesterday's action, while it was uncomfortable and kind of anxious, there were no signs of capitulation. There was no panic in the market. So that suggests to me that, investors are kind of, while it's uncomfortable, they're riding this. They have not given up. And so therefore, they're still finding opportunity.
So then what do you make, though, of, just humor me for a second with the Sell America thing, right? Dollar down, sell off in bonds, sell off in U.S. stocks. It's not supposed to happen.
No. So they're creating a lot of angst and chaos in the market just because there's all this uncertainty around Trump and around trade and around tariffs, around China. Oh my God, China is creating all this angst, right? And so therefore what you have is you have investors fleeing into gold. Look what gold has done. It's now trading at 3,500, I think, this morning. Mm-hmm. It ticked up through 3,500. Mm-hmm. And that's just a sense to me that people are just flocking to the ultimate safe haven trade. And so what that means is that they'll sell a dollar, they'll sell stocks, they'll even sell bonds just because there's more safety in gold. Period, the end.
And it's interesting, too. I want to get to some of your stock picks because I remember thinking after the back-to-back double-digit rally, you really got to be a stock picker to beat the averages. You still have to be a stock picker in this environment, correct?
Yeah, you do. You absolutely still have to be a stock picker. But look, the market has had a dramatic move lower. Mm-hmm. There are some great names, mega-cap names across a range of industries that have really suffered a dislocation in price. Not because their thesis has changed, just because when people get nervous, they sell what they can and they sell it really quickly just because they want their cash, which then presents an opportunity. So you look at names like, large cap, mega cap names across the space. Walmart, Costco, Coca-Cola, Johnson & Johnson, IBM, Procter & Gamble. Those are all names that are core holdings for a lot of portfolios, and that if those names go on sale, like in this recent downdraft, then you can buy some of those names at a discount. There's absolutely no reason as a long-term investor that you wouldn't buy those names because nothing has changed for those names.
No recession concern for some of those names?
So I'm not in the camp that we're going to have a recession. So part of that reflects me, right? If I was in the camp that thought we're going to have a recession, then I would be more cautious, right? Mm-hmm. Or I'd be waiting a little bit longer. Mm-hmm. I'm not in that camp that we're going to have a recession, right? We don't have 2 quarters yet of negative growth. Mm-hmm. Unemployment is still at historic lows at 4.1%. Mm-hmm. Incomes are still rising. At least that's what they tell us, right? So none of that points to a recession.
And when it comes to tariff exposure for some of those large cap names, you've got Amazon on this list.
Yeah, but I think the whole tariff thing is going to, I think there's some short-term pain because we're going through that, but I don't think the tariff thing is going to last, 6 or 8 months. I don't. I think, we probably have another couple of months of kind of this turbulence. Look, J.D. Vance tells us that we're supposedly getting a deal with India, or at least the framework of a deal with India today. If we get that, that will be a positive, right? We just need some balls. We need some not home runs, but some base hits, right? We need a first base, a second base, in order to get the market to settle down. You don't necessarily need a home run in every one. And if J.D. Vance is right, and we get the framework of a deal with India, then others will look at that. Investors will see what that looks like. And then they'll start to extrapolate on what it could look like for other countries. And I think that's really what we need to get the market to settle down, which doesn't mean it's going to go straight back up. It just means it'll settle down.
Yep, and we're going to talk about exactly that, the movement in India later on in our show. Kenny, you're going to stick with us. Thank you so much. Appreciate it. Let's continue the conversation. Stocks and the dollar moving to the upside today, looking to recover from Monday's rout. The currency, usually considered a safe haven asset, sank to 3-year lows as the so-called Sell America trade intensified. Given the volatility, where can investors find opportunity outside of the U.S.? Joining us on that, Paul Eidelman, Russell Investments Chief Investment Strategist for North America. Paul, great to speak with you this morning. It's been interesting to watch the flows because we have seen outflows from the United States, inflows to international equities. Where do you continue to see opportunity in terms of international exposure that's not already starting to be a little bit overdone?
Yeah, I mean, global diversification has been a big focus for us in 2025. And so I'd say two regions that stand out as being attractive here, in our view, are Europe and Japan. I think in the case of Europe, it's certainly been a performer year to date relative to the United States. But even with that outperformance, relative valuations on a forward price to earnings basis are trading at still a 30% discount to the U.S. market. That's about as cheap as Europe has been since 2001. And I think we've started to see some incremental cyclical catalysts for European fundamentals here as well. Obviously, the ECB has been cutting interest rates, which is a positive. There's been increased fiscal spending from Germany. We're starting to see a credit impulse creep in through the banking system in Europe, which correlates pretty nicely with GDP growth. And that combination or recipe of cheaper valuations and improving cyclical dynamics is often a positive one for investors. I mentioned Japan as well. I think that's another area where on the back of corporate governance reform, we're starting to see better usage of cash from Japanese corporates towards buybacks, improving margins, improving return on equity. And Kenny was talking about a potential trade deal with India earlier. I'd say Japan's also towards the front of the pack towards a possible trade deal with the United States in the coming days. And if we get a positive there, that could be a kicker for both Japanese equity market performance, but also global equities at large if we start to hit some of those singles that Kenny was talking about and start to improve risk appetite in the market again.
And also just curious how you're thinking about declines in the U.S. dollar, currently on track for its worst month since 2009. How does that frame your investment decisions, particularly when you do look at asset classes that might be impacted by those currency moves?
Yeah, I mean, as a U.S. investor, that obviously improves your all-in dollar returns for non-U.S. equity market exposure. So it's a consideration. We've seen pretty unusual dynamics in the dollar recently, a bit stronger today, but I think some question marks around U.S. exceptionalism and the soundness of U.S. institutions after the attacks on the Federal Reserve yesterday that have just, raised some questions around the U.S. over the short term. But again, if we can start to change this tone, no news is good news around attacks on Fed independence today. If we start to get some trade deals as well and improve the tone on trade policy, I think you could see some stabilization in dollar dynamics, and again, that broader risk appetite for global markets.
And Paul, my guest host Kenny has a question for you. Kenny?
Hey, Paul, how are you? Good morning. Let me ask you a question. Just like when the dollar is strong and it rises and we come to earnings season, everyone gets concerned because that the whole dollar and they transfer foreign profits back, then it's less money and blah, blah, blah. The reverse is true. As the dollar is weaker and U.S. large multinationals transfer those profits back, it's actually a benefit to them. Correct? Yep. And so what do you see? So that will take some of the sting out, I think, in terms of all this nervousness, because having a weaker dollar certainly benefits them. What's your view on that?
Yeah, absolutely. That's a big dynamic for multinationals if you're thinking about the outlook for S&P 500 earnings over the coming quarters. Roughly speaking, every 10 percentage points of weakness in the trade-weighted dollar would map onto a boost call it 1 to 2 percentage points for S&P 500 earnings growth. So there's a lot of push and pull here, some potential headwinds from trade policy, some potential offsetting positives from the dollar. I'd say on balance, our expectation is that corporate earnings growth is likely to moderate from very strong run rates at the end of 2024. But I think as long as we can avoid a recession, which at the margin is our base case here, that's an environment where S&P or earnings growth can probably deliver, call it mid-single digit positive results, which I think would be rewarded into this market after the significant sell-off that we've already seen here today.
Right. I think that's exactly true. Let me ask you one more question based on kind of your conversation with Madison when you came in. Given this environment, are you suggesting that the investors should now overweigh their exposure to the foreign markets? Or because typically for me, when I think about foreign markets, I think about 10% of the portfolio should be in foreign markets. Are you suggesting in this environment that people might want to raise their weighting in their foreign exposure?
Yeah, I think there's two layers to that conversation. Number one, we do think that strategic global exposure is really important from a diversification perspective, and that's certainly been a theme and feature of the market so far in 2025. And I'd say at the edges, a modest overweight to areas like Europe and Japan could be appropriate, and that's a theme that's a part of some of our global equity strategies here.
Really quickly, Paul, when you think about barbelling strategies, do you barbell using U.S. Treasuries in this moment or cash?
Well, I think the front end of the curve is looking most attractive to us in terms of valuation. It's still a pretty shallow and flat curve from a historical perspective, and you're getting that safe yield in an environment where tariffs directionally could be stagflationary. I think they would protect portfolios in a recession scenario, but those inflation consequences could possibly challenge the long end and would make points of the curve like the 2-year point or the cash potentially a little bit more attractive for that sort of diversification and ballast.
All right, Paul, got to leave it there. Thanks so much. Appreciate it.
My pleasure.
And Kenny Polcari is going to stick with us. We've got all your markets action ahead. Stick around. You're watching Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
We're looking at some of today's trending tickers. CoreWeave, defense stocks, and GE Aerospace making some of the biggest moves today. First up, we have CoreWeave. Wall Street analysts initiating coverage of the cloud provider following its IPO in March. Among the 5 major brokerages covering the shares, Goldman Sachs setting the highest price target at $54, while JP Morgan has the lowest at $43. Jefferies has a buy rating and a $51 price target, while Barclays has an overweight rating and a $48 price target. The stock was priced at $40 in its IPO. You can see those shares moving to the upside here, but still below where they were at on that IPO day. Kenny, how do you think about a stock like CoreWeave in this environment?
Listen, I think CoreWeave is going to play a major role in the middle of the AI space, right? So I think it's a name, while it's relatively new in terms of its IPO, I think it's a name that you should have some exposure to. And I think when you look at the different ratings that the firms have, and Jefferies just came out today with their rating, right? That the stock is a name that you want to have exposure to, you want to have it in your portfolio. Not a ton of it necessarily, but I think it's going to benefit certainly in this AI environment.
All right, something else that we are watching in this environment, defense stocks getting dragged by tariff uncertainty today. RTX issuing disappointing guidance, warning that President Trump's tariffs could pose a significant risk to operating profit. Meantime, Northrop Grumman missing first quarter expectations and cutting its earnings forecast for the year as costs mount for its next generation B-21 stealth bomber. Meantime, Lockheed Martin reporting a higher first quarter profit and reaffirming its full year forecast boosted by resilient demand. And Kenny, something that's been keenly a focus over the course of the administration so far is government spending, obviously something that impacts a lot of these defense names. How do you keep up with that?
So listen, it's like anything, right? You pay attention to what's going on. You see what these companies are guiding on, where their expertise is. Look, they're all in the same space. Northrop Grumman and Lockheed are in the same space. Lockheed came out with great earnings. Northrop was a little bit cautious. I think you have to see what the differences are in terms of the role they play within the aerospace and defense sector, which I actually like as a sector in general. And then you have to go from there. I think the negative guidance from the two companies this morning certainly is what's causing the pressure on that. It's just that investors are not sure if they're giving negative guidance and they're still not they feel unsettled about it. Then the first thing investors are going to do is hit the sell button.
Yeah, absolutely, and something that we will likely see throughout this earnings cycle. Finally, though, GE Aerospace topping first quarter earnings expectations. The jet engine maker seeing gains from its defense businesses and commercial engines and services unit. The company says it is working to offset the impact of President Trump's tariffs with price increases, cost controls. This does come after the CEO met with the president earlier this month to explain how a, quote, tariff-free regime has benefited the aerospace supply chain. You can see those shares moving up. This is exactly what we were just talking about,
exactly,
Kenny.
Right, right.
Kind of, no, just an ability for a company to come out and say, we have the ability to withstand the impact of these
Correct,
tariffs.
and they just did, and look what's happening, right? Investors will reward that.
I think it'll be interesting to see whether or not investors reward companies that prove that they can offset these tariffs versus those that say we've got two potential options.
Yeah, and so I think that'll be. Look, United Airlines came out and said it, last week. They gave two different scenarios. If this happens, then this is what our guidance could be. But if this happens, then this is what our guidance is going to be, right? So it's very interesting. But companies that come out and say, just like GE said, they have the ability and they can do it, and they're sticking to their forecast, that's going to be rewarded.
Absolutely. And by the way, you can scan the QR code on your screen to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Just want to quickly do a
नेचुरल गैस फिर से आ गया सपोर्ट पे, फिर से बाय कर सकते हैं, ठीक है, नेचुरल गैस को यू कैन बाय नेचुरल गैस अगेन। क्रूड ऑयल तो बिल्कुल ही साइडवेज हो गया, मोमेंटम ही नहीं हो रहा है। मार्केट भी ओपन हो गया, डेटा भी आ गया, बट नो मोमेंटम सच इन क्रूड ऑयल, ठीक है। 2-3 फोरकास्ट किए गए थे, वो मैंने आपको बता दिया था। एक इंग्लैंड यूके के बारे में, उसके बाद एक फोरकास्ट आईएमएफ ने किया है चाइना के बारे में, वहाँ की इकोनॉमी के बारे में। बाकी इंडिया की इकोनॉमी के बारे में भी उन्होंने फोरकास्ट किया है, और एज पर द आईएमएफ जो भी मीटिंग चल रही है, इंडिया का जो ग्रोथ का फोरकास्ट रहेगा 2025 के लिए, वो उन्होंने 6.5 ही रखा हुआ है, कोई चेंज नहीं है। इसमें रिसेशन आने के चांसेस उन्होंने 40% कहे हैं, वेल बिलो 100%, so still below 50% तो still अभी भी under control है. यूएस ने अभी कुछ फ्रेश ईरान रिलेटेड सैंक्शन प्रपोज कर दिए हैं, तो उसका भी क्रूड ऑयल पे इम्पैक्ट पड़ा है. लास्ट कैंडल देखोगे ओपन इक्वल टू लो, वो उसी कैंडल की वजह से बनी थी. हाँ, मुझे लग रहा है काफ़ी देर की रेंज है तो ब्रेकआउट हो सकता है, चांसेस हैं. स्टिल ऑन रेजिस्टेंस, लेट्स सी ब्रेकआउट होता है या नहीं. न्यूज़ थी ईरान पे सैंक्शंस का एक इम्पैक्ट है. Expected militant attack in Indian Kashmir kills 5 tourists, police sources say 8 hurt. चांसेस हाई हैं कि ब्रेकआउट हो अब क्रूड में, काफ़ी देर से रुका हुआ है रेजिस्टेंस पर. नीचे आ जाता है, हाँ बाइंग बननी है, ठीक है. दिस सपोर्ट एरिया मार्क भी किया हुआ है, एग्जैक्टली आया नहीं. किसने ले लिया तो वेल एंड गुड. बाकी नेचुरल गैस में देखते हैं, नेचुरल गैस में ही बनेगी अब फाइनली बाइंग. एक ट्रेड और यहाँ पर नेचुरल गैस में बनाने की कोशिश फिर से करेंगे. दोनों ही तरह के ट्रेड बन सकते हैं यहाँ पर, बाइंग का भी और सेलिंग का भी वापस से. स्टिल होल्डिंग द रेजिस्टेंस. गोल्ड में क्या करना है अब, उसमें एक सेलिंग थी यार अच्छी खासी. देखें इसमें वापस कुछ ट्रेड बन सकता है. सपोर्ट ले लिया इसने ऑलरेडी. 3410 टू 14 के बीच में एक सपोर्ट था, होल्ड कर चुका है. बाइंग किया तो होल्ड करो. बाकी अभी और क्या कर सकते हैं इसमें, फ्रेश ट्रेड तो कुछ बनेगा नहीं. बाइंग सपोर्ट से आ चुकी है. देखो अगर नीचे आता है वापस 3368.70 के बीच में, यहाँ पर वापस बाई कर लेना. ऊपर गया अगर प्राइस तो फिर 3465-66 वहाँ वापस सेल कर सकते हैं इन 15 मिनट फॉरेक्स चार्ट. थोड़े देर पहले लेवल बताए थे गोल्ड के, ऊपर से सेलिंग थी, 50 पॉइंट मूव किया, नीचे सपोर्ट से सपोर्ट ले लिया अभी लास्ट 3 कैंडल से. प्रॉफिट बुकिंग थोड़ी बहुत चल रही है. 5 पॉइंट अभी पॉजिटिव में ही है. कल भी पता नहीं, कल भी ऐसा ही किया इसने, आज भी ऐसा ही किया. कल भी वहीं साइडवे चला गया था, आज भी साइडवे चला गया. क्या करें इस तरह के मार्केट में, बताओ. रेजिस्टेंस है, सेलिंग आ रही है, बीच में रुक जा रहा है। आना ही है इसे तो आ जा नीचे या फिर चला जा ऊपर। कोई डेटा नहीं है, एक ही डेटा था वो 730 वाला रिचमंड मैन्युफैक्चरिंग इंडेक्स का डेटा। उसके अलावा और कोई डेटा तो नहीं है अभी। नो डेटा शेड्यूल फॉर टुडे। चलो बढ़िया है। ठीक है, नेचुरल गैस भी वापस आने वाला है सपोर्ट पे, तो एक बाइंग यहाँ पर भी प्लान है वापस से। बट इस बार टारगेट बड़ा नहीं रखेंगे, अब टारगेट थोड़ा छोटा ही रखना पड़ेगा, चांसेस कम रहेंगे बिकॉज। तो टारगेट बड़ा नहीं रख सकते उस केस में। तो होगा टारगेट इस बार। ठीक है, तो ये वापस से छोटा सा ही टारगेट रहेगा वापस बाइंग का, ज़्यादा बड़ा टारगेट नहीं होगा। फिर रिपीट कर रहा हूँ, ये ब्लू कलर की लाइन तक ही टारगेट रखना वापस। इसके ऊपर कहीं सस्टेन करेगा तब फिर वापस रखेंगे और ऊपर का, अदरवाइज इतना ही है। पोर्ट से बाई किया है 3408 से। हाँ तो ट्रेल करो फिर, हाफ प्रॉफिट बुक करके ट्रेल कर लो अब, क्योंकि ऊपर रेजिस्टेंस से गिरा है प्राइस, ऐसा नहीं है कि डायरेक्टली सपोर्ट पे आया है, ऊपर रेजिस्टेंस से गिरा है। हाफ प्रॉफिट बुक करके ट्रेल कर लो, ठीक है। अगर कैंडल क्लोजिंग बेसिस पे 15 मिनट की आती है 3445 के ऊपर 15 मिनट की, तब फिर फाइनल टारगेट वही 3468 70 पर रख लेना। बुक द हाफ प्रॉफिट एंड ट्रेल। ऑलरेडी 25 पॉइंट ऊपर निकल चुका है प्राइस। भी देखते हैं आता है नीचे तो अभी, सॉरी, नेचुरल गैस के बाद क्रूड ऑयल, बिकॉज काफ़ी देर से रुका हुआ है ना, ऊपर जा रहा है नीचे, फाइनली एक साइड तो अब मूव करेगा। कब तक एक ही रेजिस्टेंस पे रुके रहेगा, या तो ऊपर ब्रेकआउट होगा अब सीधा एंड देन मार्केट विल गोज टिल 5490, या फिर थोड़ा सा नीचे और आ जाता है तो, थोड़ा सा और आ जाता, थोड़ा बड़ा टारगेट ही मिल जाता। नीचे बैठे तो हैं बायर, जाना तो इसको ऊपर ही है सपोर्ट लेके, अब डायरेक्टली जाए या सपोर्ट एग्जैक्टली लेवल पे आ जाए। यहाँ से होनी बाइंग ही है इसमें फ्रॉम दिस एरिया, कुछ इस तरीके से। ये कर क्या रहा है ना, यहाँ पर ये लिक्विडिटी ले जा रहा है बार बार, ऊपर से सेल कर रहे हैं, नीचे से बायर बाय कर रहे हैं, तो ये लिक्विडिटी ली जा रही है। लिक्विडिटी एक बार में लेके फिर ऐसे उड़ना है इसको, अल्टीमेटली कहोगे तो एक फ्लैग आपको दिख जाएगा ये, बट वो एग्जैक्टली लेवल पे आया नहीं है तो थोड़ा सा रह गया, थोड़ा बहुत ऊपर नीचे। सपोर्ट यहाँ से, जहाँ से सपोर्ट लिया वहाँ से भी स्टार्ट ही हो गया था, बट वहाँ से लेंगे तो एसएल बड़ा कर देता, इसलिए थोड़ा सा और बड़ा टारगेट रखा था नीचे। ठीक है, कोई सुनिए। गोल्ड कहाँ से बाई कर सकते हैं? गोल्ड तो बाइंग हो गई सर, अब तो चांस निकल गया उसमें। नीचे सपोर्ट था 3408 से 3410 के बीच में, वहाँ से बाइंग आ चुकी है उसमें ऑलरेडी, अब बीच में का तो मुश्किल है बीच में बाई करना। वापस बाइंग करनी है तो वापस डे लो के अराउंड मिले, या फिर मिले 3370 75 के बीच में, वहाँ ट्राई करना। या फिर अगर ऊपर जाता है तो 3467 70 के आसपास सेल कर सकते हैं वापस। नेचुरल गैस में बाइंग का प्लान है। देखो पुल बैक तो आना चाहिए मार्केट में नेचुरल गैस में, अब आ नहीं रहा है तो क्या ही कह सकते हैं। अब जो बड़े प्लेयर हैं उन्हीं को इंटरेस्ट नहीं है, तो फिर हमारे इंटरेस्ट से क्या ही फर्क पड़ेगा। बाकी पुल बैक आना तो चाहिए, सपोर्ट तो ठीक ही है, बट हमने परसों भी देखा था वो अच्छा सपोर्ट था, पुल बैक आया, फिर वापस ऊपर से सेलिंग आ गई और फिर गिरता चला गया। तो बार बार जहाँ पर ही पुल बैक आ रहे हैं, कुछ बहुत बड़े पुल बैक नहीं आ रहे हैं। वीकली टाइम फ्रेम पे देखोगे पिछले 3-4 वीक से गिरे जा रहा है प्राइस, कोई सिग्निफिकेंट पुल बैक ऐसा है ही नहीं एक वीक भी की मार्केट कहे कि यार अब तो ऊपर ही जाऊंगा। बट यार still on support, so let's see क्या होता है। बाकी मैं इतना ही कहूँगा, बाकी प्राइस के नेचुरल गैस के बुलिस होने के चांसेस स्पेशली इन इंट्राडे थोड़े से कम ही लग रहे हैं, जब तक प्राइस अब 261 के ऊपर नहीं निकलता है। 261 के ऊपर निकलेगा तभी मैं इसको बुलिस मानूंगा, नहीं तो बस मान लो ओवरऑल तो वेरिस ही है, थोड़ा बहुत पुल बैक आ रहा है सपोर्ट एरिया से। 261 के ऊपर सस्टेन होना जरूरी है मार्केट को, अगर एटलीस्ट थोड़ा बुलिस होना है तो। 15 मिनट इंट्राडे। नेचुरल गैस सेल कर सकते हैं क्या? सेल का ट्रेड मेरे साथ तो नहीं है यहाँ पे। संभूति कुमार जी सिल्वर का व्यू देख लेते हैं, सिल्वर को भी 98,000 का कॉल ऑप्शन गोल्ड में होल्ड है 1580 से। करंट प्राइस कितना चल रहा है सर आपका? 1580 पे लिया था, अभी कितना चल रहा है? 1680 चल रहा है, तो बुक करो हाफ प्रॉफिट और ट्रेल करो। गोल्ड का मैंने बता दिया अभी, सपोर्ट एरिया से ऑलरेडी सपोर्ट लेके ऊपर जा चुका है, और ऊपर जाएगा तो फिर ये 3468 3470 के अराउंड तक जा सकता है, बट एटलीस्ट हाफ प्रॉफिट बुक कर लेना चाहिए। 1450 चल रहा है, लॉस में चल रहे हो। डे लो ऐसा है फिर सर आपका, काफ़ी ऊपर से लेके बैठे हो लग रहा है। प्राइस सपोर्ट एरिया से सपोर्ट ले तो चुका है, बट अभी देखो कि पिछले चार की चार कैंडल बुलिश ही बनी है। थोड़ा पुल बैक आ सकता है, अगर कम लॉस में हो तो अभी निकल जाओ मेरे अकॉर्डिंग, तो बेटर ये रहेगा, क्योंकि आपके कॉस्ट टू कॉस्ट पे आने के लिए प्राइस को वापस 3470 तक आना पड़ेगा। वहाँ तक आ सकता है, बट ऑलरेडी इतना आ चुका है प्राइस ऊपर 25 पॉइंट, तो थोड़ा एक पुल बैक तो यहाँ पर ही बनता है लॉजिकली। तो अगर लॉस कम है तो मेरे अकॉर्डिंग निकल लो, गलत ट्रेड में बैठे हो बहुत ऊपर से बाई करके। बाकी अगर बैठे रहना चाहते हो, पुल बैक का पूरा वेट कर रहे हो, तो फिर 3405 मतलब डे लो इज योर एसएल। उसके नीचे 15 मिनट की कैंडल क्लोज होती है तो निकल जाना चाहिए, फिर होल्ड मत करना। 30,000 लॉस है, आई नो, समझ गया मैं। ऑलरेडी ऑलमोस्ट 100 पॉइंट से ज़्यादा के पॉइंट में लॉस में हो। देखो मैं इतना ही कह सकता हूँ, अब इसमें और मैं क्या कहूँ। मार्केट ऊपर जाएगा नहीं जाएगा आई डोंट नो, ये मैं नहीं बता सकता, मैं सिर्फ इतना लेवल दे सकता हूँ। अब उन लेवल को मार्केट रिस्पेक्ट करेगा तो जाएगा। सपोर्ट एरिया पे था जैसा मैंने बताया, सपोर्ट ले लिया है। चाहो तो मैं लेवल दिखा देता हूँ आपको, बाकी फिर आप अपने अकॉर्डिंग ट्रेल कर सकते हो। यहाँ पर कोई नई पोजीशन तो बना नहीं सकते, तो नई पोजीशन के लिए मैं कुछ कहूँगा नहीं। सपोर्ट पे बाई करते तो ज़्यादा बेटर था। कहाँ गया चार्ट? ठीक है, गोल्ड का चार्ट है, ऑलरेडी रेजिस्टेंस एरिया से वहाँ पर सेलिंग आ चुकी थी। दो दो बार यहाँ पर मार्केट ने रेजिस्टेंस लिया, सेलिंग आई, नीचे आया, सपोर्ट एरिया से सब बाइंग आ चुकी है। आप प्रॉफिट में तभी आओगे जब ये वापस इस लेवल पे आएगा 3468 3470। अब ये ऑलरेडी इतना पुल बैक दे चुका है सपोर्ट एरिया से, डायरेक्टली यहाँ चला जाएगा चांसेस कम रहते हैं। अगर हल्का ही पुल बैक आया तो और लॉस में आ जाओगे। तो अगर कम लॉस है तो निकलो, नहीं तो एसएल आपका यही बनता है नीचे। इससे बड़ा एसएल लेना मत, क्योंकि अगर इसके नीचे ब्रेक डाउन हुआ तो फिर नेक्स्ट सपोर्ट 337270 के अराउंड है। फिर ये 30 का लॉस 90 का हो जाएगा। बाकी कॉस्ट टू कॉस्ट ही आओगे अगर यहाँ पहुँचता है तो देख लो। ठीक है, ये फॉरेक्स का चार्ट है, ध्यान रखना मैं एमसीएक्स यूज़ नहीं करता। सिल्वर ही देख रहे हैं सर, वही सिल्वर ही देख रहे हैं। सिल्वर ही फॉरेक्स ही देखना है ना, मैं फॉरेक्स ही देख रहा हूँ। ठीक है, सिल्वर का भी एमसीएक्स नहीं देख रहा हूँ। आई होप फॉरेक्स से काम चल जाएगा सिल्वर में। संभूति कुमार जी, एमसीएक्स में मैं लेवल नहीं बनाता हूँ सर, फॉरेक्स गोल्ड और सिल्वर के लेवल में एमसीएक्स में नहीं बनाता हूँ। एमसीएक्स का चार्ट मेरा खाली पड़ा हुआ है, उसमें कुछ लेवल नहीं है, तो इसमें मैं कुछ नहीं कह सकता फिलहाल के लिए अभी। ठीक है, चार्ट खाली पड़ा हुआ है मेरा। फॉरेक्स का है, फॉरेक्स का मैंने दिखा दिया आपको। अब मैं इसमें लगाने बैठूंगा लेवल तो टाइम लग जाएगा। रुक सकते हो, थोड़ा सा वेट कर लो, फिर देख लेता हूँ लेवल। पहले एक बार सिल्वर का देख रहा हूँ। ये सिल्वर भी ऑल टाइम हाई पे नहीं, ऑल टाइम हाई पे। सिल्वर भी अपने रेजिस्टेंस जोन पर ही है। ये फॉरेक्स चार्ट में देखोगे तो वैसे इस पर्टिकुलर लेवल से मार्केट मल्टीपल टाइम रेजिस्टेंस ले चुका है, बट इट इज स्टिल ऑन रेजिस्टेंस। लास्ट टाइम देखोगे इस पर्टिकुलर जोन पे मार्केट जब आया था, कब की डेट है, 16 अप्रैल 2025 को एक बार सेलिंग आई थी, उसके बाद दूसरी बार आया था 21 अप्रैल मतलब कल। आज थर्ड टाइम आ रहा है। एक चीज़ ध्यान रखना, इसमें लोअर लो नहीं बना है, तो ये रेजिस्टेंस थोड़ा वीक तो हो गया होगा ऑब्वियसली। ठीक है, फर्स्ट टाइम यहाँ पर आया था कल, सेलिंग आई, लो बनाया, यहाँ पर है लो, ठीक है, ये फिर से आया, हायर लो बना हुआ है, ये थर्ड टाइम आ रहा है यहाँ पर। स्टिल कह सकते हो रेजिस्टेंस अभी भी थोड़ा बहुत तो रहेगा इंटैक्ट, बट वीक है अब। अगर बड़ा लोअर लो नहीं बनता है प्रीवियस स्विंग के नीचे तो फिर ब्रेकआउट के चांसेस काफ़ी हाई रहेंगे, चाहे वो थोड़े कंसोलिडेशन के बाद बने या कैसे बने। सो इट इज़ ऑन रेजिस्टेंस। मेरे अकॉर्डिंग सेल कर रहे हो यहाँ पर तो बहुत कम क्वांटिटी में करना, बाकी नीचे बहुत बड़ा टारगेट मिलेगा, अभी तो चांसेस कम है, बट मिला तो फिर बहुत ही बड़ा मिलेगा, क्योंकि लोअर लो बनाया मार्केट ने तो ही कुछ कर पाएंगे यहाँ पर सेलर्स, अदरवाइज कंसोलिडेशन हो गया तो ब्रेकआउट चला जाएगा। बाकी कहीं नीचे से बाइंग करके बैठे हो तो मेरे अकॉर्डिंग प्रॉफिट बुक कर लेना चाहिए, इसके ऊपर डायरेक्टली जाने के चांसेस कम है। बाकी सपोर्ट देखते हो नीचे डाउन साइड की ओर, तो फिर मार्केट के पास सपोर्ट 32.28 के अराउंड है, इसके नीचे भी जाएगा, इसके भी चांसेस कम है। वैसे सपोर्ट भी मल्टीपल टाइम ले चुका है, इसलिए बड़ा इंटरेस्टिंग लेवल है ये, इंटरेस्टिंग लेवल है, काफ़ी इंटरेस्टिंग। रेजिस्टेंस स्ट्रॉन्ग था, सेलिंग आई, लो बना, फिर सेलिंग आई, हायर लो बना। अब या तो यहाँ पर कंसोलिडेशन हो, ब्रेकआउट हो, या फिर नीचे आ जाए और इस ब्रेक कर दे, फिर काफ़ी बड़ा फॉल हो जाएगा। तो ट्राई कर सकते हो, थोड़ा बहुत तो रिस्क लिया जा सकता है, थर्ड टाइम है, बहुत बड़ी क्वांटिटी नहीं लेनी चाहिए। ये फॉरेक्स चार्ट है, ध्यान रखना, MCX नहीं है। अब देख लेते हैं गोल्ड एक बार MCX में भी। आते हैं भाविन पाठक जी, मॉर्निंग से तो लगाए चार्ट 15 मिनट का चार्ट है, ट्रेड कम बनते हैं थोड़े से, 5 मिनट का लगाऊंगा तो काफ़ी बन जाएंगे, तो ओवर ट्रेडिंग हो जाती है फिर। बाकी जिनको हो चुका है प्रॉफिट अवॉइड करना गाइस, ठीक है, क्रूड या नेचुरल गैस में से, मार्केट साइडवेज ही है। गोल्ड MCX में देखो, फॉरेक्स तो मैंने वैसे बता दिया है। MCX में यही प्रॉब्लम है ना, एक तो मार्केट अभी ऑल टाइम हाई से गिरा है, कोई नीचे सपोर्ट भी ऐसा है नहीं, वो गैप है जहाँ पर रुका है। फॉरेक्स में एग्जैक्ट गैप अप गैप डाउन होते नहीं है, तो लेवल थोड़े क्लियरली मिल जाते हैं, ढूंढने थोड़ा इजी हो जाते हैं। 1 2 3 देखो, ऊपर मैं इतना ही कहूंगा अभी गोल्ड में MCX में ना, ऊपर एक छोटा सा FEG है, दिख रहा होगा आई होप सो, 98,145 से 98,215, यहाँ पर एक छोटा सा FEG है। मुझे लगता है इस FEG के ऊपर जब तक नहीं जा रहा है मार्केट, ये लोअर लो फॉर्मेशन पर ही रहेगा। ऊपर से देखोगे तो लोअर लो फॉर्मेशन कंटिन्यू है, एंड जितने भी ये बीच में FEG बने हुए हैं ये सपोर्ट करते जा रहे हैं बार बार लोअर लो फॉर्मेशन को। तो मेरे अकॉर्डिंग देखो, यहाँ पर एक FEG है, एज अ रेजिस्टेंस वर्क कर सकता है। मार्केट को ऊपर जाना है तो 98,540 के ऊपर एटलीस्ट एक 15 मिनट की कैंडल क्लोज हो जाए, तब एक चांस बनता है, अदरवाइज मुझे नहीं लग रहा ये इसके ऊपर अभी जाने के मूड में है। अगर इसके ऊपर सस्टेन करता है जो मैंने लेवल बताया अभी, तब फिर आप एक टारगेट एक्सपेक्ट कर सकते हो ऊपर के लेवल पे, विच इज़ अप्रॉक्सीमेटली 98,000, 99,000 का एक टारगेट रख सकते हो, अगर इस FEG के ऊपर सस्टेन किया तो। एग्जैक्ट लेवल अगर कहो तो 98,540 के ऊपर क्लोजिंग चाहिए, नहीं होती है तो ये लोअर लो में चल रहा है, उसी में चलता रहेगा। बाकी नीचे और तो कोई सपोर्ट है नहीं इसमें। ठीक है, बाकी नीचे आता है तो वही आपका 96,999, या इसको राउंड नंबर कह लो, 97,000 इज़ अ लास्ट लेवल सपोर्ट का, उसके नीचे नहीं जाना चाहिए, नहीं तो और बेरिस हो जाएगा। तो डेलो इज सपोर्ट एरिया इन गोल्ड MCX फ्यूचर। और तो कुछ दिख भी नहीं रहा इसमें, फिर तो एक गैप फिल करने ही चला जाएगा सीधा, है ही नहीं। ठीक है, तो कुछ ये हालत है MCX में। अब ये मान के चलो ऊपर ये रेजिस्टेंस है, ये FEG है, करेंटली स्ट्रॉन्ग FEG है सेलिंग के लिए। चार्ट दिख रहा है अब? ठीक है, मार्केट देखोगे थोड़ा सा यहाँ पर आपको लग रहा होगा गैप अप हुआ है, सेल ऑफ में चल रहा है मार्केट। फॉरेक्स में ऐसा है नहीं। फॉरेक्स में सपो गैप फ्लैट ओपन हुआ था, फिर बाइंग आई है काफ़ी स्ट्रांगली, उसके बाद सेल ऑफ आ रहा है। तो वहाँ पर न्यूट्रल है एक्चुअली मार्केट। ठीक है, फॉर MCX में थोड़ा प्रॉफिट बुकिंग ज़्यादा दिख रही है, इसलिए मैंने बताया फॉरेक्स का चार्ट ज़्यादा बेटर रहता है। तो अभी के लिए मैं इतना ही कह सकता हूँ, नीचे अभी भी सपोर्ट बना हुआ है 97,000 तक। इसके नीचे गया तो फिर प्रॉब्लम हो जाएगी बड़ी, क्योंकि फिर दूसरा सपोर्ट बहुत दूर है। अभी मार्केट को आना है तो बेस्ट ही है कि इस FEG के ऊपर, इस लेवल के ऊपर कहीं कैंडल क्लोज करवा दे, तब फिर डे हाई वापस आ जाएगा, आराम से आ जाएगा। बाकी अगर FEG में नहीं आता है तो ये लोअर लो फॉर्मेशन देख रहे होगे। ये FEG बनते इसलिए हैं ताकि मार्केट में लोअर लो बनाते रहें या फिर हायर हाई को सपोर्ट करते रहें। ठीक है, दीज आर द वैलिडेशन कह सकते हो आप ट्रेंड के लिए। ये दोनों साइड काम करते हैं, बाइंग साइड भी सेलिंग साइड भी। बाकी नीचे आता है तो फिर से वापस सपोर्ट मिल जाएगा मार्केट को, मिलने को तो यहाँ पर, बट आपका लॉस 30 का 90 तो हो ही जाएगा या 60 हो जाएगा अप्रॉक्सीमेटली, इतना मैं मान के चल रहा हूँ। तो ट्रेल कर लो भाई अगर MCX में कर रहे हो तो, नहीं तो फॉरेक्स का चार्ट लगा लो, ज़्यादा सही है। ठीक है, अगर आप फ्यूचर में ट्रेड करते हो या फिर बाकी अगर थोड़ा सा हैज करना चाह रहे हो तो हैज कर लो, थोड़ा लॉस कम हो जाएगा राना जी। ठीक है, आपने ऑप्शन बाई किया है ना, फ्यूचर शॉर्ट करके थोड़ा सा हैज कर सकते हो, क्योंकि ऑप्शन बाइंग में ऐसा है मोमेंटम अगर आपके डायरेक्शन में हो गया तभी प्रॉफिट होगा, और कोई ऑप्शन नहीं है। साइडवेज गया तब भी लॉस, अगेंस्ट गया तो लॉस ही लॉस। नो नो, नॉट इन US मार्केट, ओनली इन इंडियन मार्केट। बट मैं चार्ट फॉरेक्स का भी यूज़ करता हूँ देखने के लिए, लेवल थोड़े बेटर दिखते हैं, स्पेशली गोल्ड, सिल्वर, कॉपर, जिंक, इस तरह की जो कमोडिटी है ना इंडिया में, क्योंकि इंडिया में इनके चार्ट देखोगे तो वॉल्यूम बहुत कम है, तो कैंडल सीधा गैप अप गैप डाउन ही दिखती है मोस्ट ऑफ द टाइम। तो उस वजह से इट इज़ नॉट गुड, चार्ट समझ में नहीं आता है सही बताऊँ तो बेटर है फॉरेक्स का देख लो। क्योंकि मैं ऑप्शन बाइंग बहुत रेयर करता हूँ, मैं ऑप्शन सेलिंग या फ्यूचर ट्रेडिंग ज़्यादा करता हूँ, तो वहाँ पर मुझे थोड़ा सा बेनिफिट हो जाता है, क्योंकि मार्केट गया भी तो भी प्रॉफिट है, नहीं भी स्लो भी जाता है तब भी ठीक ठाक ही रहता है। बट अगर ऑप्शन बाइंग करते हो तो MCX ही यूज़ करना। ठीक है, ऑप्शन बाइंग में MCX ही यूज़ करना, फ्यूचर नहीं तो ऑप्शन बाइंग में अगर फ्यूचर फॉरेक्स ट्रेड में चले गए फॉरेक्स के चार्ट के अकॉर्डिंग, कई बार ऐसा होगा कि मार्केट फॉरेक्स मूव तो कर रहा होगा, MCX मूव ही नहीं कर रहा होगा, फिर आप कहोगे मेरा कॉल ऑप्शन पुट ऑप्शन मूव क्यों नहीं हो रहा, वो इसीलिए नहीं होता कई बार। बिल्कुल, वेरी सैड न्यूज़ कह सकता हूँ मैं। वेरी सैड न्यूज़। ऐसा भी नहीं है यार, जाओ क्यों ना जाओ, अपना कश्मीर है, जाएंगे क्यों नहीं जाएंगे। आई ट्रैवल अ लॉट कश्मीर, मैं भी गया हूँ कई बार, जाना चाहिए। ठीक है, पहाड़ों के एरिया में ना भी जा रहे हो तो जम्मू कश्मीर, कश्मीर जो मेन एरिया है वहाँ जरूर जाएं। एक टेररिस्ट अटैक से कोई डर थोड़ी ना जाएंगे हम। आते हैं भाविन पाठक जी, निफ्टी बैंक निफ्टी भी सेम ही चैनल पे करते हैं। मैं एक्चुअली 15 मिनट का टाइम फ्रेम का यूज़ करता हूँ ना, इसलिए उसमें कम ट्रेड बनते हैं, समझ रहे हो आप लोग। तो हो सकता है बोर हो जाओ, सुबह से बैठे हैं नेचुरल क्रूड ऑयल में, सेलिंग में मोमेंटम ही नहीं आता है, कभी कभी रेयरली होता है ऐसा, वैसे नॉर्मली आ जाता है। ठीक है, कोई ये ना समझे कि मोमेंटम नहीं आता है, 2 दिन से नहीं आ रहा है बट आ जाता है नॉर्मली। बाकी 7:30 के बाद ट्रेड करो, सॉरी 7 PM के बाद ट्रेड करोगे और बेटर है, US मार्केट ओपन हो जाता है उस समय। कौन सी फ्लाइट में गए यार, ये इतने जल्दी पहुंच गए क्या? कौन सी स्पीड में जा रहा है पता नहीं। थोड़ी देर पहले होम मिनिस्टर गए थे श्रीनगर के लिए, पहुंच भी गए बड़ी जल्दी। वैसे ज़्यादा दूर है नहीं, 1 घंटे में पहुंच जाते हैं, 1 डेढ़ घंटे में फ्लाइट में। बट अभी थोड़ी देर पहली न्यूज़ देखी थी, अभी तो न्यूज़ आ रही है कि ही लैंडेड इन श्रीनगर। पहलगाम के जंगलों में सर्च अभियान जारी, पूरे इलाके में सुरक्षा बल की। पहलगाम में एंटी टेरर ऑपरेशन लॉन्च, आतंकियों के खिलाफ ऑपरेशन जारी। ऐसा नहीं करना चाहिए यार, टूरिस्ट ने क्या बिगाड़ा बताओ। वही 10 से 11 बजे के आसपास बावन पाठ गई। जल्दी भी आ सकते हैं, ऐसा कुछ नहीं है। टेररिस्ट अटैक tourist in Jammu and Kashmir Pahalgam on Tuesday afternoon. Multiple tourists were fear killed and at least 20 injured when terrorists opened fire in a picture square meadow near Kashmir Pahalgam town. The death toll could be more than 20. Anantnag police announced 24/7 emergency help desk. If anybody need, contact details are here. मेरी आवाज़ कम आ रही है सर, बताए इसी बात रहा हूँ, उसमें क्या ही बोलूँ जल्दी। कोई क्वेश्चन है तो पूछ लो, इफ़ यू हैव एनी क्वेश्चन। मैं फ़िलहाल पहलगाम श्रीनगर में हुए टेररिस्ट अटैक की न्यूज़ देख रहा हूँ। बाय द वे मार्केट का कोई लेना देना तो है नहीं, बट फिर भी इट इज़ अ वेरी सैड न्यूज़। I saw some pictures which is very disturbing actually. They just killed, sword in a head. यूएस मार्केट तो ओपन हो गया ऑलरेडी।
Hospital.
आपने आप बोले ना मुझे हाँ
साइड में था
ठीक है
एक इंसान आया उसने उसको गोली मार दी
यहाँ पे
उसने बोला कि ये शायद मुस्लिम नहीं है उसने उसको गोली मार दी
नहीं 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 आप टेंशन मत लो अब बेटा आप यहाँ पे रहो हम साथ में मैडम ये जो वहीद साहब है प्रेसिडेंट आप टेंशन मत लो
मेरे पति का बच्चा लो
हम बचा देगा कोई बात नहीं बेहतर करेंगे दब सिमन युवा डिजाइन किया है
टूरिस्ट अटैक क्योंकि आजकल टूरिस्ट सीजन काफ़ी पीक पर है ये काफ़ी फेमस टूरिस्ट रिजॉर्ट पहलगाम माना जाता है जिसके नतीजे में रिपोर्टेडली कुछ इंजर्स भी हुए कुछ कैजुअलिटी देख रहे हैं आप काफ़ी मदद के बाद इस तरह का कहना
देखिए बहुत ही एक डार्क डे है ये आज कश्मीर के लिए और कश्मीरी टूरिज्म के लिए क्योंकि इस टाइम पे टूरिज्म सीजन जस्ट अब स्टार्ट होने वाला था और ये अनफॉर्चुनेट इंसिडेंट हुआ हम इस इंसिडेंट को अनइक्वोकली कंडेम करते हैं बहुत ही अफसोस हुआ ये न्यूज़ सुन के और जिस फैमिली के साथ जो अभी इनिशियल इंफॉर्मेशन आ रही है और जिसमें ये सुनने को मिल रहा है कि तकरीबन पाँच
सुजीत कुमार जी क्रूड ऑयल पे इम्पैक्ट पड़ेगा कुछ नहीं मार्केट का इस पर कुछ इम्पैक्ट नहीं पड़ेगा आईएमएफ वाली जो न्यूज़ थी उसका इम्पैक्ट हो सकता है हो थोड़ा बहुत या मैं कहूँगा हो चुका है बाकी और तो कोई इम्पैक्ट वाली कोई न्यूज़ अभी है नहीं ओके नेचुरल गैस देखो सपोर्ट पे पहुंचने वाला है इसमें एक बाइंग का ट्रेड बनेगा इस कैंडल पे मत लेना कैंडल ओपन इक्वल टू हाई है नॉर्मल कैंडल चाहिए हमें नेक्स्ट कैंडल पे देखते हैं बाइंग बनती है तो सपोर्ट पे पहुंच तो चुका है ऑलरेडी इट इज़ ऑन सपोर्ट लाइक भी करते रहो गाइस जिन लोगों ने लाइक नहीं किया स्ट्रीम को डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल को पता नहीं क्या हो गया पिछले 2 दिन से मोमेंटम ही नहीं है किस न्यूज़ का वेट हो रहा है पता नहीं क्रूड में न्यूज़ आने वाली है लग रहा है पक्का नेक्स्ट रेजिस्टेंस क्रूड का ऊपर है एक तो यही है जो लगाया हुआ है नेक्स्ट रेजिस्टेंस फिर 5490 के अराउंड
But it's easy to lose focus on, what the market's really pricing in. It's always some forward-looking mechanism into pricing cash flow returns. And this earnings season is going to set the stage for a multiple that has come from, north of 24 times earnings on S&P 500, looking forward to down now to 20 times. And even some of those that have been hit the hardest have really bore the brunt of this major sell-off that we're right in the throes of right now. So NVIDIA, for instance, is down to 22 times, just a turn and a half more expensive than the market, the lowest premium it's had in over 10 years. So it's pricing in a very precarious situation. And this earnings season will either confirm or refute that notion that the market has that this earnings season will be a turning point in margins.
What are you expecting in guidance from companies? We've heard everything from inability to reaffirm full-year guidance with lack of visibility beyond 60 to 90 days. We've also heard ranges of guidance for two sets of outcomes. One, if we did see a recession, and one, if all goes according to plan for some businesses. United Airlines, that was the case there. So what are you anticipating to hear from the guidance and the outlook as companies continue to report?
Well, we've seen a wide spectrum of outcomes and expectations. We think that the confidence interval will widen as corporations have less confidence in the drivers of their business from an input cost standpoint to even demand standpoint, and even some of that guidance being pulled all together, as we've seen with a couple of corporations already this earnings season. I think it will be very fascinating to highlight the companies that reported early in the season, before a lot of the tariff conversation started, and those that report later, and how their tones are different. We've already seen some of that change and just some of the lingo that's being used on a continuous basis through these corporations and the rhetoric and tone they've had with the marketplace. So we're looking at the whole picture has changed as far as what can they have in focus and what can they not really have a lot of confidence in. And that's becoming more and more apparent as we get through this earnings season.
You mentioned NVIDIA a moment ago, Keith, and it kind of brings up this remembrance that for the way up in the rally that we had seen, of course, over the past 2 years of gains for the S&P 500 of 20% on an annual basis for both of those years, NVIDIA was the earnings poster child because it was the core thesis behind the AI trade and the semiconductor portion of that AI trade. And it was a bellwether for earnings seasons. Is there a new bellwether from how you're kind of looking across and assessing the environment right now?
So just taking a step back, how do we look at how the market's pricing earnings going forward? And valuations always are pretty closely tied with margins. What the market's telling us is that there's little confidence in the margins that the companies have made up to this point, and also that earnings have to come down. The market is talking and begging for earnings expectations to come down. Now, will they come down with the actual guidance shoot south of those expectations or come in line is still yet to be determined. But a name like NVIDIA has almost pretty much erased the vast majority of its premium to the marketplace. Now, if you think that the growth and margins at NVIDIA will be better than the marketplace to a degree as it was in 2022 and 2023 and 24, perhaps that's an opportunity. So we're looking a lot and really studying and understanding what valuations for the S&P 500 and those kind of, what was carried below the Mag 7 technology, other names that have outsized returns over the last couple of years, and what that means for the rest of the marketplace. We've seen a catch-up trade, if you will, from value to growth, Mag 7 to other 493, and how that continues, we think will be largely determined by the expectations set this earnings season and going forward in the next earnings season. And when this recession, if it comes, how deep will it be and how wide will it encompass the next 2 or 3 quarters? All those questions will come a little more into focus this earnings season, and we think this is critical for the next 12 months of of market direction.
Keith, great to have you here with us today. Thanks so much for taking the time.
Thank you, Brad.
Now time for some of today's trending tickers. We're watching Boeing, Verizon, and 3M. Joining me now, we've got Yahoo Finance senior reporter Alexandra Canal. Alec, good to see you. First up here, we got to talk a little Boeing here on the day. Boeing announcing a more than $10 billion deal this morning. The company agreeing to sell portions of its digital aviation solutions business to private equity firm Thoma Bravo. Shares were on the move for Boeing here on the back of this deal. They're still holding onto some slight gains here, fractionally as they may be.
Yeah, and it's really a tale as old as time, right? Let's reduce our debt pile by selling off non-core assets. That's the strategy of new Boeing CEO Kelly Ortberg. Now, part of this sale does include the navigation unit Jeppesen, which Boeing acquired for $1.5 billion in 2000. And when it launched to auction last year, it looked for a price above $6 billion at that time, but did see strong interest from potential buyers. That drove the valuation higher. Now, in the background, Boeing's going to have to contend with a few issues, especially when we think about the ties to the trade war. China has reportedly forbidden its airliners from purchasing any of the company's jets. So how that translates to sales, competition, a big question mark here for Boeing. But shares are down about 9% so far this year, slightly outpacing the S&P 500. So there are certainly worse names on the street right now.
Yeah, indeed. Next up here, let's talk Verizon, reporting a larger than expected drop in subscribers during the first quarter. Hit by strong competition, still the mobile network operator topped revenue expectations. We've been keeping close tabs on shares of Verizon here on the day, which had their own warning on a guidance basis here. As we're taking a look at shares, they're holding on to about 0.8% in a move higher right now.
Yeah, and the issue for me is that there's such a limited pool of subscribers, and you have the same big 3, big 4 carriers really fighting for that. So Verizon raised prices in January. There's been intense, aggressive promotions from carriers like AT&T, T-Mobile. So that's going to really limit the pool of subscribers that you have, and this is something that Verizon actually warned about heading into this print. Picking out a few pieces from the earnings call, they did say that the second quarter is off to a strong start. They just introduced a 3-year price guarantee in early April, so maybe that holds on to some of those subscribers there, and we'll have solid earnings for the current quarter. On the trade front, this was an interesting comment from Hans Vestberg, that's CEO of Verizon. He said that a small portion of Verizon's annual $18 billion CapEx spend is exposed to tariffs, just concentrated within imported wireless equipment. So that's a positive. And also interesting that they saw reductions in business wireless accounts due to the, quote, new government and their efficiency work. So perhaps a nod to the Doge layoffs there as well.
Absolutely. We've also got to talk about this last earnings story that we're continuing to track here. 3M maintaining its full-year guidance, but acknowledging risks from the ongoing trade war. The maker of such household products and classroom products like Scotch tape, Post-it notes, saying tariffs could impact full-year earnings by up to 40 cents per share. Shares of 3M, they are still higher by 7.5% right now.
Yeah, and it's currently leading the Dow by a significant margin. And it's interesting to see a stock move higher when you're warning of these tariff risk, a hit to EPS. But 3M is this defensive play. It's a bellwether when we think about the health and state of the U.S. consumer. The fact that first quarter earnings came in above expectations, the fact that they are maintaining that guidance, albeit with some of those caveats, I think is encouraging to the everyday investor. It just shows that at least a lot of the pain that we were expecting in those first quarter results, they did not ultimately materialize. So we'll continue to watch and see what happens there. I mean, on that tariff front, they did see price increases would only partially offset any potential hit. So this is a company to just continue to keep an eye on to see what they say, because it's obviously one that investors are closely tracking.
Yeah, and I just want to clarify, especially because we're mentioning that 40 cents a share. They gave a range, but the 40 cents is the worst case scenario here. I think the range is like 20 cents to 40 cents a share of additional tariff sensitivity.
And we're hearing about
here.
that, right? We're hearing about these multiple, scenarios.
And you have to, yeah.
Yes.
That's modeling.
And it's modeling, and I think it's also good just from an investor's perspective to sort of know what the worst case is, what the best case is, and hopefully we fall somewhere in the middle, if not skew a little better than expected.
And maybe get some relief on the other side here. Thanks so much, Ali. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. The U.S. dollar is rising today, but it's near multi-year lows as global investors pull back from U.S. assets amid a slew of headwinds, primarily tariff uncertainty. So what does a weak dollar mean for American consumers? Here to break down, we've got my Morning Brief co-host, Madison Mills. Maddie, what do we know?
Well, a weak dollar means that the value of the U.S. dollar has dropped compared to other currencies like the euro or the Japanese yen, and that lessens the power of the dollar as a weak dollar buys less foreign currency than it had previously. So here's how that can hit your wallet in 3 key ways. 1, imported goods can cost more, travel to certain areas can get pricier, and gas prices can also rise. So let's kick it off with imports. When an American company buys foreign goods, it typically needs to pay in that country's currency. And this trade war has shown us just how much of our stuff is imported and purchased overseas. Electronics, clothes, even certain cars made overseas. A weaker dollar could raise those prices thanks to currency exchange rates. Let's look at an example of one of those exchange rates through our next focus here, travel. A weaker dollar can mean your vacation budget does not go as far depending on where you're going. A Paris hotel, let's say, costs 200 euros a night. If $1 equals €1, a 2-night stay costs 400 US dollars. But if $1 equals 85 euro cents, you'd need 470 US dollars to cover that same stay, which is $70 more for the exact same room. Our final example is gas prices. Since oil is priced in dollars on global markets, a weaker dollar typically does mean higher fuel costs, affecting everyone from daily commuters to delivery services or even airlines. To sum it up, a weaker dollar means some things like imports, travel, and gas could cost Americans more moving forward. Brad?
All right, thank God I got my Parisian trip out of the way, Maddie, just in time. Appreciate it.
Thank you.
Coming up, rising housing costs weighing on buyers here. What are some sellers doing to help? That's next on Wealth.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
As rising housing costs weigh on would-be buyers' nerves, sellers are sweetening the deal with more concessions. Around 2 out of every 5 sellers offered buyers concessions during the first quarter, according to Redfin data. That's just shy of the highest level on record. Joining us now with more, we've got Daryl Fairweather, who is the Redfin chief economist. Daryl, good to see you. What do you attribute this rise to? Take us into the data.
It's all the uncertainty in both the economy and the housing market. When things change in buyers' lives or in their personal financial situation during that escrow period, that's when we see sellers start to sweeten the deal to make sure that the deal goes through. That might mean covering closing costs, buying down points on a rate, or offering to cover repairs. But all of that just makes it more likely the deal will go through and the buyer will still commit to it, even though interest rates are all over the place, the economy is all over the place. They want to make those deals happen.
And so you started to mention some of those examples of concessions. How effective are they in really making sure that the deals come to a close?
They are quite effective because they represent real savings to the buyers. Covering something like a repair or closing costs or getting the interest rate down all means that the buyer isn't having to spend as much. So it's a little bit different than a price cut. It doesn't show up in the sales price, but it is effectively giving the buyer more money.
So could you quickly define for first timers? I know I have a lot of tabs open. I haven't really pulled the trigger or saved up adequately enough for any of those tabs that are open. But for first timers out there, what's a mortgage rate buy down?
So when you go to your lender, they will offer you different types of mortgage options. And one option is to pay more at the beginning so that you have a lower mortgage payment later on. And it's called points, but basically it gets you a lower rate by just paying more upfront.
And so which metro areas in the U.S. are actually seeing some of the highest concession rates from what you've been able to analyze?
Seattle, Portland, San Diego are all at the top of the list. These are markets where there is still strong demand, but with all the uncertainty in the economy and interest rates being volatile, it is difficult for buyers. In places like Florida and Texas, we see more straight up cancellation, buyers just walking away and saying, this is too much for me. But in Seattle, buyers want to make it happen. They just need a little bit extra encouragement.
Wow. Okay. I'm a little more focused on some of those those hotter areas of the map that we were just showing a moment ago. But as we think more broadly here about the annexation and the kind of guide that the 10-year yield gives us to what mortgage rates and the fluctuations there are, as you're continuing to hear from what the administration is looking for within that 10-year rate versus what is really playing out, how are we seeing that also play out into the home buyer sentiment right now?
Well, right now we are seeing rates climbing, and part of the reason is because of, let's say, the lack of faith in the U.S. economy and our institutions. If the Federal Reserve were to lower interest rates, it actually wouldn't result in lower mortgage payments. It would probably make mortgage rates even higher because it's a signal that the Fed isn't really doing its job of taking care of inflation. So I don't think that's going to happen. I think the Fed will keep interest rates high, and that's what the market thinks too, which is why we're seeing increases in rates right now.
What are the things that first-time home buyers who are looking across everything that we're discussing, from the possible concessions to what the interest rates influencing mortgage rates is looking like, all the way to the hotspot regions, what are the things that first-time home buyers need to mention and prioritize perhaps when they are going into the negotiations and discussions for homes?
Well, I don't think you need a PhD in economics to be a home buyer. Everything that's going on in the economy is really hard to understand, but I would focus on your personal situation. How likely do you think you are to be making as much money as you are right now this time next year, over the next 5 years? Because you need to make sure you're going to be able to make your mortgage payment, not just now, but for as long as you stay in the home. And with all the volatility in the economy, the thing I worry about is people biting off more than they can chew and wishing that they had saved more money. So definitely be cautious and just make sure you stick to your budget and think about what your personal situation is. And also play a little hardball with the sellers. Come in under asking price. Ask for concessions. That's how you're going to get a little bit extra money out of those deals.
Daryl, thanks so much for taking the time, breaking this down for us. Appreciate it.
Thank you.
In Washington, D.C., home showings fell 18% week over week and over 20% from a year ago, a sign that cuts to the federal workforce may be impacting the city's real estate. Joining us now to break down the trend, we've got Yahoo Finance senior reporter Claire Boston. Claire, what does this tell us about the D.C. housing market right now?
Yeah, Brad, it's very interesting times in D.C. This is not Armageddon or anything, but generally speaking, we are seeing signs there that the spring home buying season is kind of off to a slower start. So like you said, showings are down 21.5% compared to a year ago. Some of that is just this past week included Easter and Passover, so the data could be a little funky there. But when I looked at the week before, they were down about 9.5% compared to a year ago. So certainly signs that foot traffic is slowing. And what I think is happening here is just a lot of people are nervous. Doge is really impacting the federal government and people's ability to kind of keep jobs there. We've also got all these other factors like, some people, they have to return to office. So, maybe they're looking to move somewhere. That could actually help the market. And we've also got, of course, tariffs and market volatility going on. So, where the DC market heads from here is, kind of unknown, but, right now it's looking a little slow.
What is the data? Is there clear data right now that we can look across from what's taking place within Doge to assess the corollary between how the DC market and the decline in viewings or showings is having kind of that direct relationship?
Yeah, so unfortunately, we've just got too many different factors going on to really firmly be able to say what is Doge versus, what is the general economy. But, some of the economists that I talked to who specialize in the reason, they do say that they think that Doge is impacting the market here. One thing I was looking at is pending contracts. So that is homes going under contract. We're down around 3.5% compared to a year earlier. It's also falling kind of week over week here. And so that is just kind of showing that, this housing market is not as active as it was a year ago, even though inventory is up. This was supposed to be kind of the comeback year.
This is a big drop in showings. I mean, are we seeing this show up in sales or prices yet?
Yeah, so the interesting thing is that prices are still on the rise in the DC area. But what we're also seeing is that, sellers are willing to cut their prices. We're seeing more price cuts, but also prices are up overall. So there may be a little bit of kind of buyers and sellers. They haven't kind of met yet. We're sort of out of balance right now. Buyers are cautious, sellers are very aggressive. And so that kind of meeting in the middle and that market equilibrium is something I'm really looking for, in the weeks ahead.
All right. I wonder how much people are also looking to see exactly how much the pollen level is impacting some of these sales, as you and I, as we were discussing in the break, are very much vulnerable to.
It's rough out there.
It's rough. Yeah. Claire, thanks so much for taking the time.
Thank you.
Appreciate it. Coming up, everyone, is now the time to buy an EV. We discuss with Kelly Blue Book's lead editor. Stay tuned.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
According to Pew Research, over 16 million middle-aged Americans are part of the sandwich generation, including a majority of people in their 40s. Now, to define, the sandwich generation cares for both their own adult children and at least one aging relative. A new study from Athene finds that those Americans are heading towards a retirement crisis. Here to break down the study, we've got Michael Downing, Athene Chief Operating Officer. Great to have you back in studio on air with us. We should note that Athene and Yahoo have shared ownership. Michael, what are some of the biggest financial stressors that are facing this demographic right now?
Yeah, so one of the more unique aspects of the sandwich generation is not only do they have to plan for their own retirement, they're dealing with an extra expense burden, potentially their parents, through extra long-term care expenses, et cetera, as well as children and even grown children at home. So instead of taking care of one family, it's almost like taking care of three families. And that can put a lot of stress on retirement. And one of the core outcomes is it's made about 75% of those individuals feel like they're off track in terms of retirement planning.
I mean, so you hit on the crux of it, because clearly this impacts your ability to save, or how quickly you are able to save towards some of those retirement targets. And, you know, how have you seen that kind of be a broader headwind to hitting those target date funds, if you will, or the number that you've set forward with your financial planner?
Right. So typically what happens then in that kind of case is that these people can start to fall behind on their savings. Because some of the savings that were going towards retirement, those are covering expenses for their loved ones, and they're considering potentially even deferring retirement or not even considering retirement at all. But there are ways that they can manage around that. There are solutions that I think this generation can really take advantage of to overcome a lot of those challenges.
And so with this, how are we continuing to see this contribute to the retirement crisis? I mean, if we kind of quantify the real impact of this, if we don't have as many in the sandwich generation that are able to get into retirement, what is the longer-term ramification of that as well?
So the longer-term ramification, it'll be yet another generation of retirees that doesn't have sufficient income to last a lifetime. So potentially running out of money, financial ruin.
What are your financial tips for the sandwich generation?
Yeah, so financial tips, and this is coming at it from an insurance standpoint, is a tool that is somewhat understood but underappreciated, is using annuities to really embed inside a retirement planning portfolio. And annuities are often thought of just for retirees, but they're not. The best time to actually start buying them is when you, in this period, this age demographic of 40 to 60, and start building annuities into your portfolio, because they provide two core elements: stability and guaranteed lifetime income. And so the analysis we've done shows that you can actually increase spending power by almost 50% with the same amount of assets. And that really can change the paradigm. So you can make your existing savings last longer and also be very comfortable they're going to last a lifetime.
With regard to those savings, a lot of people who are either in retirement or close to retirement that are going to have to start drawing upon funds that they've saved up over time, they're watching the markets. They're trying to figure out how they should be able to navigate their finances in an unsteady period right now. How are you seeing them go about that calculus for their own finances and retirement funds that they've amassed?
So one of the great solutions they have, and financial advisors can play a really strong role in this, is to, especially when they get near retirement, is use a lot of bridge insurance products to help cushion that volatility. So a very common type of tool is what's called a fixed indexed annuity. And in today's market, with a tremendous amount of volatility, what's great about these products is your principal is 100% protected. S&P goes down 5%, your principal is guaranteed. S&P goes up, you get the upside. And every year, you get to lock in that upside. So it creates an incredible amount of peace of mind in terms of preserving what is often a situation where retirees are one downturn away from running out of money. This insulates and protects against that downturn.
It's really interesting. Michael, thanks so much for sharing. Appreciate it.
You bet.
We should note that Athene and Yahoo Finance are both owned by Apollo Global Management. Coming up is now the time to buy an EV. We discuss with Kelley Blue Book's lead editor. Stay tuned.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free child alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time. Right? Uh-oh. Free child alerts to the rescue, so you cancel on time from Yahoo Mail.
Two hours into today's trading session, and we're seeing some gains for the major averages, and I wanted to put this in a two-day contextual move for you here. We're still net lower for the past two sessions here as we're taking a look at Monday, Tuesday activity, and now we're net lower by about 0.4%. But compare that to the decline that we had seen yesterday during that activity and now trying to erase some of that, and we'll see if it can balance each other out here, but we're trying our best across all of the major averages here as you're seeing fractional declines over both of those two trading sessions put together here, but gains across the board for the Dow, the NASDAQ, and the S&P 500 of more than 2% each. Let's dive into some of the sector activity that's really driving this here on the day as you're seeing all 11 S&P 500 sectors in positive territory right now, led by consumer discretionary and utilities. Consumer discretionary, you're seeing that up by about 2.8% here, and then additionally utilities, that's seeing a 2.3% move to the upside here. So continuing to watch that sea of green, at least within the sector activity and the bounce back that we're seeing here on the day. And the NASDAQ 100, that too, don't adjust your TV screens or your eyes, don't wipe any windshields, whatever you're doing. This is correct. All of the names in the NASDAQ 100 are in positive territory right now. And just for more proof, I'll just put this on an equal view here. Right now, we're being led by Strategy, MicroStrategy, formerly known as, and then additionally Netflix. That too, up on the day by about 7%. You've also got Tesla pushing higher by about 4.5% going into that company's earnings coming later after the close here on the day. You're seeing gains of about 4.6% as of right now. And guess what? You can stay tuned for Yahoo Finance's special coverage of Tesla's earnings today, 4 p.m. Eastern Time. You do not want to miss it. Electric vehicle prices continued to climb higher in March, rising 7% from the year prior. According to Kelley Blue Book, those data, that points come in from Compared to gas-powered EVs, to gas-powered cars rather, EV prices last month were higher by nearly 25% as we see the gap between the vehicle types widen. But there are a lot of financial incentives to buy an electric vehicle. Kelley Blue Book shows the average incentive package for an EV in March was 13.3% of the average transaction price. Meanwhile, 25% tariffs on imported cars are pushing more people to consider whether they should act now. So, is now the time specifically to buy an electric vehicle? That's the big question. Here with more, we've got Sean Tucker, lead editor at Kelley Blue Book. Let's just start with that question. Is now the time to buy an EV, Sean?
If you were going to car shop anyway, regardless of the tariffs, then this is a great time to buy an EV. But I am always telling people, be cautious of car shopping specifically because of the tariffs. The situation is just too volatile to say, yeah, go make a 5 or 6 figure decision right now.
And so with that in mind, what is the decision tree, the kind of checklist that people need to go through now if they are thinking about purchasing an electric vehicle?
You want to be sure that it fits into your lifestyle. I would not buy one. Americans tend to overbuy, buy too much car. We look at range, and the Department of Transportation says that the average American drives about 39 miles in a day, so every EV on the market will meet your daily needs. I would be a little cautious if I were someone who took long road trips regularly, or with hurricane season coming up, I always caution folks, I wouldn't buy one if I were in a situation where I might need to evacuate.
And so with that in mind, as we're thinking about some of the companies that are just looking across their models and their fleets and how they're pricing might also need to take into consideration what tariffs could still be on the table as they're trying to sell new fleets or as they're building them out. What are you hearing from companies and what's seeming to be effective right now in their communication to consumers?
The tariffs are taking time to really impact prices. You'll see a lot of stories indicating, oh, the tariffs kicked in April 3rd. That means every price goes up by 25% on April 3rd. That's not the case. The car pricing is very complicated. There are, the automakers sell to distributors who sell to dealers who sell to you. And at every point along that chain, there's a little bit of flexibility to absorb some of the tariff. And we expect that prices will continue to shift throughout based on inventory levels. So there's not really a single predictable response yet.
And so if buyers are going to a dealership or looking to purchase online and they hear some of these advertisements saying, hey, these are tariff-free vehicles that you're seeing on your screen right now, what are the questions they should be asking when they go into a dealership or have conversation with any salesperson?
Right now, there aren't really tariff-specific questions. The issue of tariff-free vehicles is that most of the cars on dealer lots today were imported at pre-tariff prices, and they can still sell it to you at something like a pre-tariff price. However, if you are the dealer, you know that for every car you sell right now, you're going to have to pay more to replace it. So it is fair for them to negotiate a little bit of a higher price in order to be ready for that world.
And so what about on the standard and internal combustion engine that has really been the driver for markets that EVs are still trying to take some of that share from?
In terms of tariffs, there's not really a major difference between the two at this point. It's a matter of, can you negotiate that price down and would you be satisfied with the driving experience of an EV?
Certainly. And as we're thinking about where there are different commitments from companies to try and build out even more of their manufacturing footprint, sensing, and they've really kind of also been able to look across what was taking place within USMCA and Trump 1.0 to really understand, okay, where do we need to kind of onshore more of our production to avert any of these impacts in the future? Are we seeing that at full force right now, or are we expecting that there will be more announcements and more reshoring of some of those efforts?
We are seeing a little bit of it, but I would caution you to keep in mind that those are extremely long-term decisions for automakers. They're redesigning cars on a 7 to 10 year cycle. If they're building a new factory, they have to amortize it over 50 years or more. So they make very few decisions with a time horizon as short as one presidency. And also keep in mind that under the Biden administration previously, we were already seeing a lot of onshoring going on because of the EV tax credits, which only really apply to cars with an increasing percentage made in America. So the onshoring was already happening, and while it will happen, it will be a lot slower than one presidency.
Sean, thanks so much for taking the time here with us today. We know you'll be watching Tesla's earnings, as we all will be later on today.
Yes, I will. Good to be with you. Thank you.
Thank you. Coming up, we have your bank products playbook. Today, we give you everything that you need to know about high-yield savings accounts. That's next on Wealth.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
U.S. Department of Education announcing it will begin collections of overdue student loan payments starting May 5th for the first time since March of 2020. According to the department, over 5 million borrowers are currently in default, meaning they have not paid in 9 months. An additional 4 million borrowers are between 90 and 180 days past due. The department says just 40% of borrowers are up to date on their student loan payments. The Office of Federal Student Aid will notify all borrowers who are in default in the next 2 weeks. They are then expected to sign up for loan rehabilitation, apply for an income-based repayment plan, or make a payment. If none of those actions are taken, after 30 days, borrowers are subject to involuntarily being collected on through the Treasury offset program, including wage garnishment. Student loan advocates criticized the decision, with the Student Borrower Protection Center calling the move cruel and unnecessary. But the department said it plans to offer resources to borrowers, including an AI assistant, a simplified income-driven repayment application, and additional servicers' call times. Most Americans are currently saving money, or at least plan to save short-term, but 60% of them don't believe they've completely understood how interest rates impact their savings, and they earn under 3% on their money, according to a Vanguard survey. Meanwhile, most economists are anticipating higher inflation as tariff policies set in. That means millions of Americans will see the returns on their savings trail rising costs. That's why experts recommend high-yield savings accounts. Here to break down everything that you need to know about them is Gary Zimmerman, the founder and CEO of Max, formerly Max My Interest, a digital platform that matches people with banks to help them earn the best interest on their cash. Okay, so let's dive into this. Just first, why use a high-yield savings account?
Well, Brad, first of all, thank you for having me back on your show. We think high-yield savings accounts are essential, and the reason is very simple, which is they pay higher interest rates than a regular savings account that you might find at your brick-and-mortar bank. Now, this is really important because, as you pointed out, inflation is still at elevated levels, and if you're not earning at least the rate of inflation on your cash, you're actually losing real purchasing power each month. By contrast, high-yield savings accounts often pay higher than the rate of inflation, and so you can actually grow your money. And because of compounding, your money can grow and then grow on top of itself.
And so with that in mind, what are some of the pros and the cons of high-yield savings accounts versus what many people might be exposed to with just a regular savings account, perhaps?
Sure. Well, most people are accustomed to their existing brick-and-mortar bank, and we think those are really important, right? They provide all sorts of services. In addition to deposit taking, they also provide lending. They might help you with a home mortgage, a credit card. So your existing brick-and-mortar bank is valuable to you, and we're not suggesting that people should switch banks, but rather they should supplement that relationship with online banks that are able to deliver higher yield on the savings portion of their deposits.
So should somebody put all of their money in a high-yield savings account, or what's the diversification strategy among your accounts?
Well, we all need day-to-day money to live our lives, right? Our paycheck comes into the account, we pay our rent or our mortgage, we pay for tuition if our kids are in an independent school. So you need a certain amount of operating cash, and that typically sits in your checking account. But all the excess cash you have, maybe you're saving for a purchase, or pay for a kid's wedding, or for educational purposes. Maybe you want to build up an emergency fund so that you have 6 to 12 months of sort of operating living expenses in cash, that if you were to lose your job or some other catastrophic thing were to happen, you wouldn't all of a sudden have to sell equities and sell at the wrong time. So generally it's smart to keep a reserve, and that reserve should be in the highest yielding place possible.
How often should you be looking for better rates and kind of assessing what banks are offering the best rates that could be better than a high-yield savings account rate that you may have previously signed up for?
Well, it's a great question, Brad, because often people ask me, well, what's the best bank, right? Where should I open an account? And the answer is, it varies, right? Banks basically at some points need more deposits, and at other points in time they need fewer deposits. And so banks change their interest rates up and down to manage that supply and demand. And so what that means is that there's actually no right single bank account for you. We believe that you should open multiple high-yield savings accounts and then keep on top of rates. And whenever you see an opportunity to earn more, you can rebalance funds by moving them from one bank to another. And in fact, that's exactly why we built Max, to make that process really simple.
And so with that in mind, is there a different type of threshold that people should be prepared to have a conversation with a bank around if they're opening up a high-yield savings account?
Well, some banks, you always have to read the fine print, right? Sure. So some banks have minimums, or they'll offer a really high interest rate, but it only applies to the first $1,000 of deposits. That's kind of a teaser. It's the loss leader. Right. You want to look for someone who's going to treat you fairly, right? So one of the things we did on the Max platform is carefully curate the universe of banks, so there are no, minimum balance requirements, no monthly fees from the banks, and really no limits on how much you can keep at that bank and earn top yield.
Really good to know. Gary, thanks so much for joining us in studio.
My pleasure.
The current national average savings rate is 0.41%. That's according to the FDIC. With a high-yield savings account, customers can earn up to 10 times more on their balances. Our very own Casey Bond joins us now with the top rates available at this moment. Casey, what have you found?
Yeah, so even though interest rates are generally trending down, excuse me, we're finding that the best high yield savings accounts are paying anywhere from 3.5 to 4% APY and up, sometimes even more than that in some cases.
And so a lot of the top accounts come from lesser known online banks, which could give someone pause, seeing a name that they don't immediately recognize. What key things should our viewers look out for when researching an online bank to know it's legit?
Sure. So it's always a good idea to research a financial institution before you put money into one. One very important factor to consider is FDIC insurance. So most online banks are insured, but it's always a good idea to double check. Their fee structures should be transparent, easy to understand, and generally they should charge very few fees. Then security measures like encryption, multi-factor authentication, just making sure that they have those measures in place to protect your personal data. And finally, see what other customers are saying. You can look up reviews on the Better Business Bureau, the CFPB, and just see what kind of reviews and complaints are out there.
How do you choose between an online bank that might have a higher rate and perhaps a big known entity that may have a lower rate?
Well, that's really going to come down to your personal banking preferences. If you have a pretty simple situation and you're really just looking to get the best rates, online banks are a great choice. If you have a more complex financial situation, you prefer that hands-on, in-person banking experience, a larger physical bank may be a better choice for you.
Casey, thanks so much for taking the time, helping us break this down just a little bit more here on the high yield savings accounts and the decisions that many people are trying to work through out there. Appreciate it.
Thank you.
Certainly. Let's do a final check of the markets as we're taking a look at the major averages. We are up by more than 2% across the board right now, trying to erase some of the declines that we saw to start the week. Certainly, as we're taking a look at the Dow Jones Industrial Average, we got a little bit more work to do. We saw a decline of a little more than 900 points during Monday's trading session. As of right now, we're up by 800 points, 2% higher on the day. The S&P 500, you're seeing that higher by 2% as well. 103 points added there. The NASDAQ Composite, that's up by about 2.2%. That's it for Wealth, everyone. I'm Brad Smith. Thank you for watching. You can stay tuned for Market Domination with Julie Hyman and Josh Lipton coming up at 3 p.m. Eastern Time. Plus, Yahoo Finance has special coverage of Tesla's earnings today, 4 p.m. Eastern Time. You do not want to miss it.
Are you ready to master the markets and, dare I say, become a better reader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor or you're just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. Podcast that will make you a smarter investor.
Welcome to Stocks in Translation. I'm your host, Jared Blickery. Welcome to Financial Freestyle.
Hi, I'm Bob Powell, and welcome to Decoding Retirement.
Welcome to Living Not So Fabulously.
Welcome to Trader Talk, the podcast that dishes out the market straight up.
Welcome to Yahoo Finance Sports Report.
Welcome to Word Money. I'm Patrick Murphy.
And I'm Dan Coons.
From Wall Street to Main Street to the C-Suite, we are your daily lifeline, because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time. From Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stocks look for a rebound as investors look ahead to tech earnings, with Tesla out after the close. Defense stocks under pressure as RTX says it expects to take an $850 million hit this year from tariffs. The company saying even after cost cutting, price hikes, and some tariff exemptions, it will still feel the pressure of increased levies. Meanwhile, 3M shares are jumping, leading the Dow higher as it maintains its full-year guidance while acknowledging risks from the ongoing trade war. The company is saying tariffs could impact full-year earnings by up to 40 cents per share. And solar energy stocks are higher as the U.S. imposes a 3,500% tariff on solar imports from several Southeast Asian countries. This is the result of a probe started over a year ago under former President Biden that found solar manufacturers were benefiting unfairly from government subsidies. This levy will be on top of the tariff President Trump has in place. That's your Yahoo Finance Market Minute.
Welcome to Catalyst. I'm Madison Mills. 30 minutes into your U.S. trading day. Let's get you the three catalysts that we are watching this hour. First up, we break down the outlook for international equities amid growing calls on Wall Street to sell American assets. Plus, we discuss the state of Fed independence as Trump reignites his fight with Powell to cut interest rates. And we'll look at the catalyst needed to boost Tesla shares as the company gears up to report first quarter earnings while the stock has been under pressure. Half an hour into the start of U.S. trading, let's get you a check on the markets. Taking a look at the major averages here, you got a little bit of a rebound this morning, if we can even call it that. You got your S&P 500 up about 1.5%, your tech-heavy NASDAQ up about 1.8%. All of the Mag 7 names currently up. The question is, will that momentum be able to continue as we kick off the Mag 7 earnings cycle with Tesla reporting after the bell today? But let's take a look over at the bond market as we have seen that Sell America trade happening in the market, putting pressure on the dollar yesterday, we're now seeing bonds catching just a bit of a bid. You've got your 10-year yield down about 3 basis points, your 30-year down just about 5 basis points right now. Finally, let's take a look at Bitcoin moving to the upside, up a little over 3.5%, holding over 90,000. I want to bring in a friend of the show, host of the Trader Talk podcast and chief market strategist at Slatestone Wealth, Kenny Polcari. Kenny, great to have you as always. I loved in your recent note to us, you say investors have not given up.
So that was referring to capitulation, right? Capitulation happens when everybody is just giving up. They're throwing everything out the window, including the kitchen sink. They've just had it. Yesterday's action, while it was uncomfortable and kind of anxious, there were no signs of capitulation. There was no panic in the market. So that suggests to me that, investors are kind of, while it's uncomfortable, they're riding this. They have not given up. And so therefore, they're still finding opportunity.
So then what do you make, though, of, just humor me for a second with the sell America thing, right? Dollar down, sell off in bonds, sell off in U.S. stocks. It's not supposed to happen.
No. So they're creating a lot of angst and chaos in the market just because there's all this uncertainty around Trump and around trade and around tariffs, around China. Oh my God, China is creating all this angst, right? And so therefore what you have is you have investors fleeing into gold. Look what gold has done. It's now trading at 3,500, I think, this morning. It ticked up through 3,500. And that's just a sense to me that people are just flocking to the ultimate safe haven trade. And so what that means is that they'll sell a dollar, they'll sell stocks, they'll even sell bonds just because there's more safety in gold. Period, the end.
And it's interesting, too. I want to get to some of your stock picks because I remember thinking after the back-to-back double-digit rally, you really got to be a stock picker to beat the averages. You still have to be a stock picker in this environment, correct?
Yeah, you do. You absolutely still have to be a stock picker. But look, the market has had a dramatic move lower. There are some great names, mega cap names across a range of industries that have really suffered a dislocation in price. Not because their thesis has changed, just because when people get nervous, they sell what they can and they sell it really quickly just because they want their cash, which then presents an opportunity. So you look at names like, large cap, mega cap names across the space. Walmart, Costco, Coca-Cola, Johnson & Johnson, IBM, Procter & Gamble. Those are all names that are core holdings for a lot of portfolios, and that if those names go on sale, like in this recent downdraft, then you can buy some of those names at a discount. There's absolutely no reason as a long-term investor that you wouldn't buy those names because nothing has changed for those names.
No recession concern for some of those names?
So I'm not in the camp that we're going to have a recession. So part of that reflects me, right? If I was in the camp that thought we're going to have a recession, then I would be more cautious, right? Or I'd be waiting a little bit longer. I'm not in that camp that we're going to have a recession, right? We don't have 2 quarters yet of negative growth. Unemployment is still at historic lows at 4.1%. Incomes are still rising. At least that's what they tell us, right? So none of that points to a recession.
And when it comes to tariff exposure for some of those large cap names, you've got Amazon on this list.
Yeah, but I think the whole tariff thing is I think there's some short-term pain because we're going through that. But I don't think the tariff thing is going to last, 6 or 8 months. I don't. I think, we probably have another couple of months of kind of this turbulence. Look, JD Vance tells us that we're supposedly getting a deal with India, or at least the framework of a deal with India today. If we get that, that will be a positive, right? We just need some balls. We need some not home runs, but some base hits, right? We need a first base, a second base, in order to get the market to settle down. You don't necessarily need a home run in every one. And if JD Vance is right, and we get the framework of a deal with India, then others will look at that. Investors will see what that looks like. And then they'll start to extrapolate on what it could look like for other countries. And I think that's really what we need to get the market to settle down, which doesn't mean it's going to go straight back up. It just means it'll settle down.
Yep, and we're going to talk about exactly that, the movement in India later on in our show. Kenny, you're going to stick with us. Thank you so much. Appreciate it. Let's continue the conversation. Stocks and the dollar moving to the upside today, looking to recover from Monday's rout. The currency, usually considered a safe haven asset, sank to 3-year lows as the so-called Sell America trade intensified. Given the volatility, where can investors find opportunity outside of the U.S.? Joining us on that, Paul Eidelman, Russell Investments Chief Investment Strategist for North America. Paul, great to speak with you this morning. It's been interesting to watch the flows because we have seen outflows from the United States, inflows to international equities. Where do you continue to see opportunity in terms of international exposure that's not already starting to be a little bit overdone?
Yeah, I mean, global diversification has been a big focus for us in 2025. And so I'd say two regions that stand out as being attractive here, in our view, are Europe and Japan. I think in the case of Europe, it's certainly been a performer year to date relative to the United States. But even with that outperformance, relative valuations on a forward price to earnings basis are trading at still a 30% discount to the U.S. market. That's about as cheap as Europe has been since 2001. And I think we've started to see some incremental cyclical catalysts for European fundamentals here as well. Obviously, the ECB has been cutting interest rates, which is a positive. There's been increased fiscal spending from Germany. We're starting to see a credit impulse creep in through the banking system in Europe, which correlates pretty nicely with GDP growth. And that combination or recipe of cheaper valuations and improving cyclical dynamics is often a positive one for investors. I mentioned Japan as well. I think that's another area where on the back of corporate governance reform, we're starting to see better usage of cash from Japanese corporates towards buybacks, improving margins, improving return on equity. And Kenny was talking about a potential trade deal with India earlier. I'd say Japan's also towards the front of the pack, towards a possible trade deal with the United States in the coming days. And if we get a positive there, that could be a kicker for both Japanese equity market performance, but also global equities at large if we start to hit some of those singles that Kenny was talking about and start to improve risk appetite in the market again.
And also just curious how you're thinking about declines in the U.S. dollar, currently on track for its worst month since 2009. How does that frame your investment decisions, particularly when you do look at asset classes that might be impacted by those currency moves?
Yeah, I mean, as a U.S. investor, that obviously improves your all-in dollar returns for non-U.S. equity market exposure. So it's a consideration. We've seen pretty unusual dynamics in the dollar recently, a bit stronger today, but I think some question marks around U.S. exceptionalism and the soundness of U.S. institutions after the attacks on the Federal Reserve yesterday that have just, raised some questions around the U.S. over the short term. But again, if we can start to change this tone, no news is good news around attacks on Fed independence today. If we start to get some trade deals as well and improve the tone on trade policy, I think you could see some stabilization in dollar dynamics, and again, that broader risk appetite for global markets.
And Paul, my guest host Kenny has a question for you. Kenny?
Hey, Paul, how are you? Good morning. Let me ask you a question. Just like when the dollar is strong and it rises and we come to earnings season, everyone gets concerned because that the whole dollar and they transfer foreign profits back, then it's less money and blah, blah, blah. The reverse is true. As the dollar is weaker and U.S. large multinationals transfer those profits back, it's actually a benefit to them. Correct? Yep. And so what do you see? So that will take some of the sting out, I think, in terms of all this nervousness, because having a weaker dollar certainly benefits them. What's your view on that?
Yeah, absolutely. That's a big dynamic for multinationals if you're thinking about the outlook for S&P 500 earnings over the coming quarters. Roughly speaking, every 10 percentage points of weakness in the trade-weighted dollar would map onto a boost of, call it, 1 to 2 percentage points for S&P 500 earnings growth. So there's a lot of push and pull here, some potential headwinds from trade policy, some potential offsetting positives from the dollar. I'd say on balance, our expectation is that corporate earnings growth is likely to moderate from very strong run rates at the end of 2024. But I think as long as we can avoid a recession, which at the margin is our base case here, that's an environment where S&P earnings growth can probably deliver, call it mid-single digit positive results, which I think would be rewarded into this market after the significant sell-off that we've already seen here today.
Right. I think that's exactly true. Let me ask you one more question based on kind of your conversation with Madison when you came in. Given this environment, are you suggesting that the investors should now overweigh their exposure to the foreign markets? Or because typically for me, when I think about foreign markets, I think about 10% of the portfolio should be in foreign markets. Are you suggesting in this environment that people might want to raise their weighting in their foreign exposure?
Yeah, I think there's two layers to that conversation. Number one, we do think that strategic global exposure is really important from a diversification perspective, and that's certainly been a theme and feature of the market so far in 2025. And I'd say at the edges, a modest overweight to areas like Europe and Japan could be appropriate. And that's a theme that's a part of some of our global equity strategies here.
Really quickly, Paul, when you think about barbelling strategies, do you barbell using U.S. Treasuries in this moment or cash?
Well, I think the front end of the curve is looking most attractive to us in terms of valuation. It's still a pretty shallow and flat curve from a historical perspective, and you're getting that safe yield in an environment where tariffs directionally could be stagflationary. I think they would protect portfolios in a recession scenario, but those inflation consequences could possibly challenge the long end and would make points of the curve like the 2-year point or the cash potentially a little bit more attractive for that sort of diversification and ballast.
All right, Paul, got to leave it there. Thanks so much. Appreciate it.
My pleasure.
And Kenny Polcari is going to stick with us. We've got all your markets action ahead. Stick around. You're watching Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Vice President J.D. Vance speaking in India today, calling the U.S.-India trade partnership a win-win, saying, quote, Americans want further access to Indian markets. This comes a day after Vance met with Indian Prime Minister Modi, the White House saying the two leaders made significant progress toward a new trade deal. As the U.S. reshapes global trade partnerships, I'm going to bring in Brad Setzer. He is the Council on Foreign Relations, Whitney Shepherdson Senior Fellow, and former U.S. Trade Representative Senior Advisor. Brad, great to have you on here. We were just talking about how investors seem optimistic today about these negotiations with India. In your view, how optimistic can investors afford to be with these conversations and potential negotiations with India while the record-breaking tariffs with China still remain intact?
Look, I think we still need to see progress on some of the bilateral deals, see what the contours of a deal that is acceptable to this administration, what those contours are. India is important. It's not an enormous trading partner. It's a modest trading partner. But I think the bigger issue is that for negotiations with Japan, with Europe, with Korea, it's not yet clear what the U.S. really wants. That's the reports. That's what the Japanese are saying after meeting with President Trump, Besant, the senior team in D.C. That's what the Europeans said after meeting with the USTR last week. There needs to be a little bit more clarity about what kind of deals the U.S. is willing to do and whether these deals are about taking off all the tariffs or whether they're just avoiding these so-called reciprocal tariffs with a 10% baseline tariff basically being non-negotiable.
And we're getting headlines here. The Minister of Finance over in Poland saying he does not expect a U.S.-EU tariff deal this weekend. More broadly off of that, Brad, I'm curious how you would rate these negotiations. Like, what inning are we in these negotiations as we are getting headlines in about negotiations potentially not coming with some partners, whereas you got the vice president over in India? Where does that leave us right now?
My view is we're in the first inning of these negotiations. Maybe we haven't even started the game, because what the U.S. has consistently failed to do is articulate exactly what it wants from our key trading partners. There's very clearly a willingness on the part of Europe, Japan, Korea, Vietnam, India to see what we want, to see if it's possible to do a deal. But an actual concrete deal, first of all, takes clarity about the U.S. ask. Then it takes a decision on the part of the trading partners about whether they can meet those asks. We already know some U.S. demands, say changing European food safety regulations, are just not going to fly in Europe. So I don't actually think the hard negotiations have really started, because I don't think we're at the point where both sides know what they need to do if they want to get a deal.
And my guest host, Kenny Polcari, has a question for you, Brad.
Well, so Brad, here's the issue with that, because I do agree that we're in the early innings. I'd like to think that we're at least in the first inning, but here's the issue with that. If this continues to drag out, not something I think the administration really wants to see. I think they are trying to get, like I said, a base hit, 1 or 2 base hits, get somebody on base so that they can start to build on it. Holding it up and pretending like we don't know what we want, dragging out the conversation is not going to help the administration, nor is it going to help voters or investors, really, as we become more frustrated with the lack of information. So my guess is at some point it's got to start to pick up speed, don't you think?
Yes. I mean, presumably you'll have some deals start to take shape a little bit before the deadline, the 90-day deadline. But remember that a typical comprehensive trade deal takes 1.5 years to negotiate. So I think at the best case scenario is you have something which looks a little bit like an interim deal. and then there's an agreement not to put the reciprocal tariffs on at the end of the 90-day period. A really big deal, which requires changes in other countries' laws and practices, it just simply cannot be both negotiated and implemented in a 90-day frame. There are ways to work around that.
Right.
But I think the broader point is I think the administration has been spinning a bit too hard here. They want to say there's a deal. They want to say a deal is coming. They want to kind of prop up the stock market, give the stock market a little bit of hope. But the actual negotiations don't seem to be really moving nearly as fast as the administration's rhetoric. So you have this consistent gap between what's coming out of the White House and what our negotiating partners are saying, where our negotiating partners are saying they don't yet know what the U.S. wants.
Well, I think someone in the administration really has to light the fire, because in a year and a half we're going to be in midterms, and I think the last thing the administration wants is to be in the middle of this mess at the midterms. They want to be able to go into the midterms saying, here are the deals that we have so far, here's how it's worked out, here's how it's benefiting us.
I mean, sure, but it's also the case that part of the difficulty here is that President Trump hasn't given clear instructions, in my view, to his negotiating team about what he personally wants, about what he personally thinks is a good deal. He wants to bring bilateral trade imbalances down. The problem his negotiators face is removing a lot of the well-known trade barriers wouldn't get you anywhere close to that goal. So I think there's a lot of, there'll have to be a bit of give on all parties' side. But it also will have to be a bit of give from the president. The president has sought out, it seems to be seeking an outcome that realistically isn't typically the result of a normal trade negotiation.
I do just want to end on something specific out of China, buying soybeans from Latin America, canceling up to $13 billion of soybean purchases from the United States. Does China have a broader capability for repositioning off the back of these tariff policies than the U.S. originally gave it credit for?
I mean, in some sense, yes. I mean, one thing we know is because we fought a trade war with China in Trump's first term, and because of the structure of China's government, China's been preparing for this kind of trade confrontation for the past 4 or 5 years. So they have a detailed playbook. They are using that playbook. Buying soybeans from Brazil is very much part of that playbook. Not taking deliveries of orders from Boeing is very much part of that playbook. Not buying U.S. LNG and energy is also clearly part of that playbook. We also, in a sense, have to figure out whether we can absorb the shock of 150% ballpark, 145 tariffs on most of our imports from China. For many businesses, 145% is just a really big change in the price. And I think we may have overreached. It's a tariff that's too high for a typical business to pay. And in that case, we may find ourselves with some supply shortages if we don't unilaterally adjust our tariffs. So I think the administration took maybe overplayed their hand a little bit with respect to China. But the reality is also China's a state-directed economy and has big state importing companies that buy oil, that buy oil seeds, that buy aircraft, and they can be directed to stop purchases at any time. We knew these kinds of retaliatory steps would be coming.
So Brad, put a bow on this for me. If our investor audience is listening and they're saying, okay, we just heard this guy tell us the game hasn't even started, where does the game end over the next couple of months when it comes to tariff negotiations?
Well, I think the Trump administration needs to make a couple of very big decisions. One, are they negotiating just to take away the reciprocal tariffs, the ones that were announced on Liberation Day? Or are they also willing to do deals that will get rid of the 10% baseline tariff, the tariff that was applied to countries, even which we have balanced trade? We don't know the answer to that question. The Japanese have said, in order to get a really big deal, we want all the tariffs to roll off, the bilateral tariffs, the reciprocal tariffs, the 10% tariff, the auto tariffs, which we haven't discussed. So first of all, how big a deal can the administration do? Second, are they willing to accept some interim deals, steps in the right direction to avoid an increase in tariffs on 90 days, or not quite 90 days, 80 days from now? A full, comprehensive, standard trade agreement just can't be reached in that time. But you can always string out the process. And I kind of expect the most likely outcome is we end up stringing out the process. And then I think the third big issue, because the biggest component of the tariff hike right now is the tariff on China. do they find ways to either get some kind of modest de-escalation with China, or do they unilaterally just have to pull back some of the tariffs, as they did on the tariffs on iPhones and certain other electronics, because the impact on the U.S. was judged to be too harsh? I think the China position, there's a realistic risk that emotion and the desire to retaliate and the fact that the president was frustrated that President Xi wasn't giving him a call, all that led the U.S. to kind of take the tariffs a couple of steps too far. And the administration may need to find a way to elegantly walk those back, because it doesn't seem like we're starting negotiations with China anytime soon.
Brad, thank you so much. Appreciate it.
Sure.
We're going to have all your markets action ahead. Stick around. You're watching Catalysts.
News when you want it with Bloomberg News Now. I'm Amy Morris. Treasury Secretary Scott Bessent told a closed-door investor summit that the tariff standoff with China is unsustainable and that he expects the situation to de-escalate. Sources at the event, hosted by J.P. Morgan, say Bessent added that negotiations have not started, but he believes a deal is possible. The Treasury Department did not immediately respond to a request for comment. The International Monetary Fund lowered its forecasts for world growth for this year and next, warning that the outlook could deteriorate even more because of tariffs. IMF chief economist Pierre-Olivier Gourenchas says uncertainty is a major factor.
Beyond the abrupt increase in tariffs, the surge in policy uncertainty is a major driver of the economic outlook. If sustained, the increase in trade tensions and uncertainty will slow global growth significantly.
IMF chief economist Pierre-Olivier Gourinchas. The IMF cut its projection for global output growth to 2.8%. That's the slowest expansion of gross domestic product since the COVID-19 pandemic in 2020. Bloomberg's Michael McKee.
The IMF saying that it is so difficult to put together a forecast. They had to do 3 or 4 of them. They had to start all over again when Donald Trump announced tariffs. And this is what they call their reference forecast, the one they're kind of going to work off.
The fund reduced its estimate for next year to 3%, a drop of 0.3%. It also warned that the risks to the global economy have increased and are firmly to the downside. Markets seem unfazed by all of this. Stocks are bouncing back, led by big tech. And we do check markets for you all day long here at Bloomberg. The S&P 500 up 2.1%, NASDAQ up 2.4%, the Dow up 2.1%. The 10-year Treasury yield at 4.38%, the 2-year yield at 3.78%. And all eyes are on Tesla first quarter financial results, scheduled for after the closing bell. Tesla shares are nearly 5% higher at this hour. Amazon.com's web services business is reportedly pausing some data center leases. Wells Fargo security senior equity analyst Eric Lubchow says it is not clear whether AWS slowing some leases is an area of concern or just the natural rhythm of the business activity, and the magnitude of the pause also not clear. AWS Vice President of Global Data Centers Kevin Miller says there have been no fundamental changes in their expansion plans. Amazon shares now 3.5% higher. Boeing agreed to sell its Jeppesen navigation unit and related assets to Thoma Bravo for $10.6 billion in cash, handing the plane maker funds it can use to lighten its debt load. Bloomberg's Benedict Campbell says this is a good deal for Boeing.
The company reports earnings tomorrow, so we'll get a lot more details on that. But this is somewhat expected, but it's a good price they're getting, and it gives them a lot more financial firepower, which they'll surely need given the difficult market they're operating in.
Benedict Campbell speaking with Bloomberg TV. The deal is Boeing Chief Executive Officer Kelly Ortberg's biggest move yet to shrink Boeing's portfolio. Shares of Boeing now 1% higher. Boeing is also scheduled to report earnings tomorrow. Defense Secretary Pete Hegseth remains defiant after a second episode of using a group chat to share information about an attack on Houthi rebels. Hegseth tells Fox News he blames the leak on people inside the Pentagon trying to undermine the Trump administration.
We should be talking about the decimation of the Houthis, how we're pushing back the Chinese, how we have a new defense area at the southern border. Instead, disgruntled former employees are peddling things to try to save their ass.
The people who were fired were not some random aides, however. Senior advisors Hegseth himself brought into the Pentagon. President Trump has, so far, stood by Hegseth, but some Republican lawmakers like Representative Don Bacon of Nebraska have expressed their concerns. France President Emmanuel Macron considering dissolving parliament and holding snap elections as early as this fall. A snap election could give Marine Le Pen's far-right National Rally Party an opportunity to gain control of the government. Macron's allies are worried that could erode his majority. The Supreme Court is considering 3 cases testing the separation between church and state, including whether the public elementary schools can use LGBTQ-themed books without parental opt-out. Attorney Eric Baxter told the court this is a required part of the curriculum.
Teachers are required to use the books. The board suggested they be used 5 times before the end of the year. The Sherwood School for Pride Month said that they were going